And we're back Monday morning, June 16th, all day. What's going on, Glenn?
Good. Happy Monday. How was the weekend?
It was a pretty solid one. It was as good a weekend as it could be where I have to go to Wrigley Field.
Yep. Okay. That'll do it. Actually, yeah, my boys were out there too.
Nice. Yeah.
Saturday.
I saw a lot of, I was there on Saturday. A friend of mine is getting married, and he's getting married, and he didn't want to do like a bachelor party thing, and the only thing that like our group of friends could muster up was a bachelor day.
Nice.
So just like brunch in a Cubs game,
Sure.
and then just like grilling at his parents' place afterwards, which is like it was
good.
nice. And I don't, as someone who is gonna get married soon and doesn't want to do anything, I don't want to even do that. If
Right.
someone's like, "Oh,
Bachelor day.
surprise! Like we're going to the Chicago Fire game," I'm just gonna be like, "Dude, I just got sick. Actually, I can't." But it was kind of funny, the idea of like 3 or 4 weeks ago, we went to Omaha for another friend in our friend group, his
Whole
bachelor
weekend.
party, and it was whole weekend. It was like dinners, like we're going to fire weapons at this crazy place, and like all of this thing, 48 hours. And I just couldn't help but think this whole time, like, does he feel less than? And also, I mean, our friend group is very, I will say, mean.
Oh.
And
okay.
so it was
Sure.
said explicitly that he doesn't rank high enough to
get a weekend?
to warrant a weekend. And so
That's
it was,
pretty funny.
but it was fun. Dude, the Cubs fans are the worst. They've always been the
right.
worst. Oh, always. There's like we're in the bleachers, which is also just like if you want to see the worst Chicagoans, maybe worst Americans, bleachers at the Cubs game. They're stacking cups the whole time.
God
Have you
forbid
seen?
people have a good
Have you
time.
seen that? God forbid they watch the game. What are we? What are we here for? The whole time. And I don't, trust me, I don't care about the game at all. So I'll take it.
So
but the whole time, like,
You had a cup stack
the game
that
is
was
going,
not as big as their cup
the
stack.
game is going on. No, but that is probably a very real thing. The game is going on this way, let's
Yep.
say, and the whole time our 10 guys are like this, like, oh yeah, like what about you remember when Andrew hooked up with what's her name? Like, yeah, that was hilarious. And it's like no, and then finally it's like 1 out in the 9th inning, and then everyone stands up and they're
Lock
like,
in.
oh yeah, like time to watch. It was awful. And yeah, there are multiple sections where they're stacking cups, and there's one dude who's like, it's my baby's first Cubs game, and he's hammered, and he's like, look at my baby's touching the cups, like blah blah blah. And I was like, this is like this is what society is. This is like this is what we're here. We're not even here for, really, I don't think, if we're being honest, the game. We're here for grown men to get as drunk as possible and then stack the cups and then measure. It's like that section's cups, they're getting too big, like we got to stack more
And
of
this
them.
is not allowed, right? Like they'll take the cups down.
They came over multiple times, and like we're like, you can't be throwing the cups, like blah blah blah. And like
That, I think, is
and
the
of course
funniest
like
part.
the dudes, it's like there's like a 35-year-old dude in town from Pittsburgh who's like taking a video of the woman like yelling at them for stacking the cups, like,
Can't
oh,
do
isn't this
that.
hilarious?
Yeah.
Like, I'm putting this on Instagram, and it's like, this is the dumbest exercise of all time, and this is why I guess I don't go out. A lot of people say, like people who smoke cigarettes will say like, oh man, I'm growing up in the wrong time. Like, I wish I was growing up in like the 50s. Like, I could be ripping darts anywhere. and I am starting to think like, since going sober, a lot of society just doesn't make it doesn't make sense to me
So
anymore.
maybe you're too early. Alcohol sales declining.
Are
They think permanent decline.
We're in permanent decline.
Yeah, we'll never be as rowdy as
I hope so.
we have been.
I hope so. I mean,
But there's
it's
still
hard
a baseball game.
It's hard. Can you make, as an alcohol drinker, can you make a bull case for alcohol's effect on just society at large? Like, what is the
No, it's a
what are
tough-
the instances of like alcohol actually played a good role in this?
Sister's baby shower this weekend. took me a White Claw to loosen up a little bit around her coworkers.
That is the one thing that, like, although I'm kind of it's been more than 3 years at this point, so I'm pretty far away from it. But the one thing is, we sit down for brunch, and the first 10 minutes is the most awkward thing of all time.
So fun, 'cause
even
you're
though we're
like
like
you're
good friends,
yeah, for years.
it's still just like everyone's
man.
kind of like, oh yeah, like, and like one of them's like, yeah, I just had my second kid, and it's like no one actually cares about that. And so like,
Unless you're bringing him to the Cubs game,
Yeah.
unless he's touching Cubs, it's not fun.
not even a legend, he's just at home with his mom. Like,
So lame.
so yeah, I will give the icebreaker thing
Yeah.
is the only thing. But then my retort would be like,
Just grow up.
we'll just grow up, but also like, do we have to be doing those things?
All right. You're going full just
yeah,
no interaction.
it gets so extreme that it's just like weddings. Do we need to have them?
Come on. Love always wins.
I agree with you. I can't, trust me. I'm in deep psychoanalysis and therapy work to get away from that extreme of just like Frank goes to work, he makes the money, and then he comes home and he plays with it on the internet and doesn't talk to anybody. But yeah, that's what I did. The Cubs, they won 2-1. It was they got a guy in center field. He's got 2 names. Everybody loves him.
PCA.
He's got like red shoes. I tried to watch the U.S. Open yesterday. It was awful, so bad. Did you enjoy it?
I didn't watch that much. It was fun when Tiger was on.
I was gonna say the best part of the broadcast was oh man, is that Tiger? And Callie's like, Tiger's in the tournament, and I was like, I don't think so. And then they showed the stretch where he just like eagled like 4 holes.
Yep.
It's just
So that was pretty
insane.
good.
And then they went back, and it's like, here's 5 guys you've never heard of, and it's raining.
And it's
like,
tied.
Okay.
It's a good ending though.
Yeah, it was a cool ending, but it was just usually I like this guy's up by 3 strokes and he just totally fell apart.
Mm-hmm.
But
Had a lot of those.
this one wasn't so much fun because the guys were literally just like, there's a pool around my ball, like I can't
move
hit
it? No.
No, you can't move it. And then he just like
Shanks it.
I wish I could have moved it, but yeah, that's it. Wait, sister's baby shower.
Yeah.
Okay, how was that?
It was pretty good. She had more friends than I thought.
That's pretty good.
I know. Proud of you, sister. Good job. But it was very chill. Indoor, outdoor, little grill action.
Nice.
She used statistics professor, so they had their games were a normal bell curve of baby weight with her and her husband's weight at birth, and it was like guess the weight, what the baby will be. And then some AI generated photos. And
AI generated photos of the child.
of the child based on parent photos. Guess what it'll look like. She will look like. What else? Yeah.
I'm not a big like what's the idea where like you don't jinx things, where it's like people
Murphy's Law.
No, I'm not a big like don't count your chickens before they hatch
sure.
kind of thing. But like that would, when I have a child, in anticipation of the child coming, having AI generate a bunch of photos of it would kind of freak me out.
Yeah. Ooh, you are not like the pictures. This was not on our bingo card.
But that's cool. Good for her.
Yeah.
Congrats. When's the baby coming?
August.
I don't actually care. Let's
Okay,
get into the platform.
First Cubs game is going to be August as well. Just straight from the hospital to Wrigley Field.
That's sick.
Touch some Cubs.
Holding the baby. The
Yep.
baby's trying to touch the cups, and you're trying to take an Instagram video for like, I don't know who thinks that's cool or fun.
Everybody thinks it's cool.
But some wacky action last night.
Yeah.
A lot of unchanged we're seeing now, but we did have, I don't know if you want to look at Eurodollar, Aussie, or what. You had
We'll have time for them all.
you had the risk off open, and was just talking with our friend Peter about equities and crude. Obviously, if you were watching crude last night, the open was pretty wacky, and you can see here Eurodollar trades like 30, 40 points lower. And then there's a little back and forth, and now we are completely in the other direction. Of course, I'm referencing the escalating war in the Middle East between Israel and Iran, and all of the missiles and missile defense, everything that was going on over the weekend, leading to, like I say, risk-off action for a couple of minutes. And it kind of begs the question here in 2025. I understand why we do it, because there is like the tail risk of like, okay, and now it is World War III, and like now everybody is in this war. But I think back to so many events, and of course, we're talking markets here. I have no interest in talking politics, although a lot of my friends over the weekend, they are Jewish American, and there was a lot of stuff said, and thankfully, as an Irish guy, I just kind of was like, those are all interesting points that you're all warranted to have. But you look at all these events, whether it's the Arab-Israeli conflict of the last 100 plus years, or I always think of like the awful Paris attack of a couple of years ago that happened on like a Saturday or whatever it was. And then I was trading at the board of trade. I think I don't know where I was at that point. I was doing something in markets, and the market opened risk off Sunday night after that attack for like literally 10 minutes. And again, I understand that like there's the edge case of any of these terrorist attacks or these in hindsight, what are end up viewed as like one-off kind of events, becoming something bigger. But it is kind of crazy that crude oil just like opens 76 bid and then is immediately annihilated. Yeah. And it's just like, why are we even doing it? And also crypto was down significantly all weekend.
Right.
And then like the market kicks in on Sunday night, and then by this morning, like everything is up. Of course it could go the other direction, but I just can't help but call out the fact that like we have seen this so many times now. You would think in 2025, so much news aggregated constantly. AI is predicting everything. It's predicting your sister's child. And we can't predict like the first couple minutes of an open after some risk off sentiment from the weekend. It's kind of crazy.
Yeah, I agree. But when we're looking, I definitely hear what you're saying in terms of like equities, U.S. equities in specific, just because, how much of an impact will that have? Maybe none in the long run even. But here looking at these two-sided markets, what is surprising to me is that even with any sort of risk-off tone, even when that goes away, doesn't necessarily mean the euro has to bolster against the dollar here.
Sure.
And so a surprising run-up close to 116 again, and this U.S. dollar really not having a ground to stand on, even though we had 30 points open. That's about it. You could make the case that even if risk-off sentiment in other markets dissipated, that this U.S. dollar could still make up some ground, gain some traction against this inflated euro-dollar market, as we've seen over the past, just since June, all the way from 113 to near 116. And so it is kind of surprising to me that there really aren't that many dollar buyers in this market, regardless of the risk sentiment.
Yeah, that's a good call out. In this market and in the pound market, it is hard right now to make a bull case if you're just looking at the price action for the U.S. dollar. Because to your point, there have been a handful of instigators, I'll say, instigating events for a US dollar bid in the last couple of weeks, and each of them are sold into, or if you're looking here at the euro dollar market, each dip in this market has been bought pretty heavily.
Right.
And last night, yeah, they could only do so much damage. And of course, remember that in Forex, when something like geopolitical risk heightens, you tend to look at currencies as kind of a spectrum of risk. And you might see, especially with if it's Middle Eastern geopolitical risk heightening, the countries surrounding that area that are closer or that have closer political ties, those currencies might get hit harder than other currencies. And then it's a hodgepodge of putting them together, right? And so with this story, as well as the Russian-Ukrainian war of the last few years, it has tended to be risk higher, euro lower, and U.S. dollar seeing a little bit of a flight to quality against a handful of currencies, but for example, not necessarily U.S. dollar seeing a flight to quality against Swiss franc or Japanese yen, because those tend to be on the risk spectrum more risk off. Those might tend to be more of a flight to quality than your U.S. dollar. Maybe bring up that Swiss franc because I was going to say,
because this one is kind of contradictory to what we're seeing in other markets for risk off sentiment lifting. Here, I mean, we've got in the hourly chart, we had no real gap.
No reaction.
U.S. dollar, similar to that euro, starting to capitalize into the night once Europe comes in, taking it all the way back down, and now a bit of a mixed bags, but unchanged from where we were Friday, and that was after, getting beat up pretty bad into Thursday, a slight rally into Friday, but I mean, taking in more data, we're still from Wednesday on.
Another case of just U.S. dollar in the grand scheme of things, and I do think about the long-term political environment in the U.S., and I'm not trying to make any case for like Trump is this or that or like tariffs. Oh my gosh, they're crazy. But the guy has said that he wants a cheaper dollar, and he has now done multiple things and is literally heckling a person who has, access to certain levers that can weaken or strengthen the U.S. dollar. And you look at this price action, Glenn, and it just looks like this U.S. dollar does not want to bounce back no matter what the event is. I mean, I wouldn't have necessarily thought the Swiss franc would be a market that dollar is going to bounce back in, given that I would think Swiss franc would get a bid if the geopolitical risk over the weekend was taken into this week even more seriously, which it has not been digested that way by markets. So this is a weird one. Let's look at dollar yen, because that is one where we have seen a little bit of a dollar rally in the first few hours of this week, as well as the fact that we closed last week back closer to the highs than the lows, which is, again, 145 being the highs in this market. And then if you're looking at the last couple of weeks, really 140 to 142 being the lows. It's this one very dissimilar to that euro dollar market or that dollar Swiss franc market, whatever, or the pound, that the dollar has been able to retain some strength against this yen market, not trading near multi-year or decade-long lows like the Swiss franc. An interesting one, and this one, in my mind, though it seemingly has very little to do with Israel and Iran, this is the best back and forth that we've seen, no matter what the news story is.
Right. Yeah. I mean, similar story on this open where U.S. dollar really can't sustain any momentum. I don't know. It just sets the tone for the week. It's a Fed week here. We already sometimes can see some consolidated markets leading up to an event like that. So how does that set the stage for Monday, Tuesday with this geopolitical risk as a backdrop? I'm not too certain, but I think it would take, we'll see volatility come in most likely unless we see some big news that would spur the U.S.
In the next
dollar.
48 hours, you're saying,
Correct.
leading up to FOMC.
I don't think we have anything slated from any other region that makes any of these dollar pairs all that interesting, except for if there is a dollar component.
Take a look at some of the commodity currencies.
Australian dollar, this one is one where we saw the swiftest move taken out of it from the onset of the geopolitical tensions in the Middle East. Here, just a 1 hour candle to take us all the way back under 65 cents, close to 64.5. And now this morning, the most momentum here in this Australian dollar as risk.
Yeah, this is interesting. This, I think, is probably the reason that this is the biggest mover has to be an equity story to me. Just because SPOOs are going to open up 50 points and everything's going to open up higher. I would imagine China's going to open up higher as well. Just given this action, I haven't taken a look, but this is an interesting one, and I can't help but call out because we've had some people. It's funny, the people have the most opinions, it seems, on this Aussie than anything. If when people are emailing in, it seems like they really have opinions of this Aussie, which is funny just because it's been so kind of boring to me, but good for those people, and especially good for them because I've heard multiple people call out last week when it got up above 65 cents, oh, this Aussie seems expensive. In the back of my mind, I'm like, think about the last several years of Aussie price action. I'm like, man, 65, I wouldn't step in front of it, but I'll be damned if this market, every time it gets, some legs above 65 cents, gets whacked back down below it. Not the biggest range here. We just looked at dollar yen, and that's, a 500-point range in the last week or so. And this is a market that's moved from 64 half, 65 half, not even. And so this is an interesting one, but this one seems more equity tied because I can't imagine why the hell this would be rallying like this going into our open. Maybe there is some Australian news that I'm missing. Probably. I'm always missing something.
But yeah, this one definitely close to an interesting price level. If we get above 65.30 here, that is the high going back to, you've seen this as a resistance level numerous times over the past few weeks here. Last thing I do want to call out, Israeli shekel.
Oh, yeah.
Directly available here. A much harder one, I'd say, to make heads or tails of, but we have seen extreme two-way price action.
You should have led with this. We could have, just because you can see very clearly that big red candle that is last night on the open. Oh wait, I guess I'm looking at Friday.
This is Thursday. The
so
outbreak.
it's not even that interesting actually.
But we do have pretty sustained momentum in the Israeli dollar or Israeli shekels.
Risk kind of leaving this market.
But we're past where we were now.
Sure. But you can see, the big price action was on Friday. I mistook that for Sunday because I would have thought that candle right there would have been Sunday night, where it's like dollar opens way higher against Israeli shekel and then just immediately gives it back throughout the rest of the night. But that's actually Friday afternoon where you saw the big rally in dollar, and then you saw the sell-off in dollar actually before we even closed on Friday afternoon. But yeah, you're seeing still escalated levels. Obviously, the risk is not off the table in this story or in any of these markets, but it is alleviating here going into the first U.S. session of the week. And it'll be an interesting week. Yeah, we have FOMC on Wednesday. We'll cover all of that tomorrow and Wednesday. But yeah, you want to get us out of here?
Yeah, that'll do it for us here on Forex Focus to start the week. But stay tuned. Up next, we got Tom, Tony, and Vanetta on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
Hola.
Did you guys have a good Father's Day?
I did have a good Father's Day. I had a great Father's Day. I put together a swing set on Saturday morning, Sosnoff. Got up bright and early. Well, had to pee, but I got up bright and early. got up bright and early. And you know what? Somebody made fun of me on Twitter and said, because I said I built something this weekend. I took a picture of myself in front of the swing set and I tweeted it out. They said, you put together. That's not building something. And I was like, wow, that's pretty savage. Then he goes, I'm going to go paint the picture. And then he showed a picture of like the paint by numbers. And he goes, I'm going to go paint the picture. It was pretty good. Would you agree? But you couldn't do it. You couldn't put together a swing.
I couldn't put together a swing set?
No.
I think
it wasn't a huge one. It was a small one. I mean, they were only 17 months, so, you know.
Yeah.
Yeah.
I mean, I think I could, but I don't.
8 feet high.
I probably wouldn't try.
Probably wouldn't try.
I just don't want the responsibility of the child being injured.
For the safety of America's children, that's probably the best.
Exactly. And I'm telling you right now, knowing my daughter,
she doesn't want you building it either.
I wouldn't even be asked.
How was your Father's Day, Tom?
We live in the city, and she lives in the city. She doesn't have a yard. I don't have a yard, so
yeah.
So it's not going to happen.
So I did that on Saturday, which was good. But Sunday was dinner with the family. It was beautiful. We go out for Italian food. So
where'd you go?
Cafe Lucci. You know, it's my favorite place in the suburbs.
Ever been there?
Yeah, I know. I try to keep something sacred for myself without you poo-pooing them or ruining them or anything else like that.
Cafe Lucci? What town is it in?
I'm not 100% sure. Maybe Glenview.
Is it owned by the often overlooked soap opera star Susan Lucci?
Yes. That's exactly what it is. She's got to be 100 now, right?
Probably.
I don't know if she's still with us.
Let's see, where Cafe Lucci.
But I don't know. Never been there.
You would like it. Oh, it's Glenview. It's considered Glenview.
Glenview. All right.
Oh, she is still alive. Thank you, John. She's 78.
Yes. Sold 78. She's lying. He's lying.
John said.
What did I do?
Tom's 78 then, okay?
What did I do on Saturday? Oh, I went to the Old Town Art Festival.
You went to the Old Town Art Festival?
Yes.
I think on Saturday?
On Saturday.
Is it Saturday and Sunday?
Yeah, it was Saturday and Sunday.
Oh, because I think Nick went, and I know he was getting back from D.C.
Yeah, I went on Saturday. It was great.
Did you buy any art?
I did. I bought 2 pieces.
So did my son.
Really? Yeah. I bought 2 pieces, and I was surprised. I didn't go with the intent to buy. I mean, I didn't know if I would buy anything. And
you didn't go with the intent to help support artists?
well, I did, obviously. I mean,
you went for the food, didn't you?
No. So, but I've been. So I used to live on Orleans, which is right in the heart of, which is right, literally in the heart of the whole thing. And
40 years ago, you lived in Orleans.
Yeah, a little over 40 years ago, and that was our first place in Chicago. No, it was our second place in Chicago, and so it's right where this was. This is kind of my old neighborhood.
What did they have, some like bike frames there or something? What kind of? They have some bike frames there or something?
Bike frames? No.
Yeah, no.
I actually bought.
What did you buy? Like maybe like a tandem bike frame? I know you don't have one of those hanging up.
No, I bought 2 pieces. They were really nice. I really liked them, and got them delivered last night. And
you had them delivered last night? They were so big you had to have them delivered?
No, they want to keep them up.
Oh.
They don't want you to take them, so they,
So they don't have empty spots.
Yeah, right. So they deliver them.
This is one of one, but I could make you a second one for half price.
Maybe, but they're nice. It was fun. So yeah, I did.
No, my question to you is, how is the art market? Because the last time I went to the Old Town Art Festival, everything was $8,000, and I was like, I want to help support you artists, but at these prices, you're going to need to help support me.
I mean, I think the prices seemed much higher than they've been in the past. I don't think I went last year or the year before, but the price, everything seemed expensive, but the level of I think it's one of the best.
Nice.
Yeah, I think it's one of the best art fairs in the country. It's really nice.
Oh, I'm not disputing that. And then it's a juried art fair. It's a whole big process to even be allowed to show your work there. But it was so expensive.
Yeah, you're right. It's expensive for sure. But it was but there was a lot of really interesting artists there. I was surprised I bought 2 pieces. Anyway, that was good. And
very nice.
Then Saturday night I went to a comedy show. At Coffee.
At Big Coffee. I was gonna say, I saw you guys.
Great.
Comedy.
Cassie was there. Mark was there.
Oh, sweet.
Yeah.
You had some.
Yeah, they live up there.
Tasty representation.
Yeah, it was really good.
That's
Saturday
great.
night. They had a lot of I think they had 6 headliners.
Cool.
That's not, then by the definition, those aren't headline. Like you can, okay, well, whatever.
6 acts is, yeah.
Well, they're all headlining shows in Chicago. They just, this between shows, whatever.
Oh, sure, I gotcha.
That's
Sweet.
it. Sunday I barbecued.
Sunday, what'd you barbecue?
Smash burgers.
That's not barbecuing. You're not barbecuing smash burgers.
Grilling.
Thank you.
Grilling.
You grilled.
I grilled.
You grilled. There's a difference between grill and like short order cooks that just come here illegal they can grill. Like a barbecue is a master. You're not a too soon.
Yeah.
Too soon. Oh, sorry. Too
Try
soon.
to be normal for a second.
Too soon. Too soon. Oh, I'm sorry. I'm sorry.
Yeah, actually, when I make a smash burger, it's on a griddle.
Yeah.
Not
a
Blackstone.
No, I didn't use a Blackstone. I used a griddle. But
what do you mean you used a griddle?
Yeah, why use a perfectly
you
good
did indoors?
Blackstone?
No, outdoors.
You had grooves in your griddle?
No, I have a Blackstone too. I didn't use the Blackstone. I used a griddle. It was good. Yeah, I made lots of stuff. Very
You
good.
don't know how to turn on the Blackstone, do you?
No,
he doesn't. He doesn't.
I did. I was just grilling other stuff.
You're out of propane. Be honest.
No. I was just grilling a lot of other stuff too. Making some sausage,
So
chicken.
instead of using the wide real estate available on a Blackstone, you used a smaller footprint because you were grilling a lot of stuff?
Yeah.
Nice.
I got this smash burger down.
I made smash burgers one day. I don't think I did that good of a job.
You got to have the tools.
I have the Blackstone. I have the tools. I got 2 spatulas. I had the onions out there. I did them on a mandolin. I did them good.
Obviously, you don't know what you're doing, and you need a little $1,000 dressing. You need the right kind of pickles.
Dressing. See, that's
it doesn't matter what you like. It's how the smash burgers are, and then
Have you seen the smash chicken Caesar wraps? Those look good.
No, because that doesn't appeal to me that much.
Because you don't like Caesars? I like Caesar. I think that sounds great, Vanetta. Thank you.
Chicken Caesar wrap, I can eat it if I have to, but it's not my.
See if you
But
have
it's
to.
smash, so it's you do it the same way.
That
as a
sounds
smash burger,
great, Vanetta. See?
Yeah,
But
it
it's
doesn't.
ground chicken instead of ground beef.
It doesn't sound that great.
Sounds awesome.
What
Sounds
if
awesome.
Eat, Drink, and Be Mandy made it?
Then it would be perfect. Then it'd be perfect. Sadnov, Saturday, I was in your favorite place until 1 o'clock in the morning.
Where?
The Admiral?
No, it's my favorite place. I'm at Tom's favorite place till 1 o'clock in the morning. The all-night
Rack?
urgent care for dogs.
Ooh, that's the worst place in the world to be.
Till 1 o'clock in the morning. I walked
Is
in.
your
Wait,
dog
you could go there.
okay?
You could be waiting for 4 hours.
I
Sometimes.
walked in at 10. There was a room full of people.
Came down to the city for this.
No, we have one out by us. I think it's called Bloom, if I remember correctly.
Yeah. All right. So we waited 3 hours.
Yeah, 3 hours.
What did the dog do?
She has a sniffle.
She has sniffles.
So she was one night, saw a little bit of blood, like in her thing that she sleeps in. You know what I mean, with a dog bed. And then that night, Saturday night, we're sitting watching TV. She starts sneezing like really bad, and then blood everywhere. Like it looked like a crime scene. So I say, let's, we're going to London on Tuesday,
So you
right?
put her down.
Hoping. But I go to London on Tuesday. We got to get this dog right before we leave, right? So I take her to the urgent care Saturday night. There till 1 o'clock. They say it's fine. The blood they don't really care that much about. They give her some drops for the nose. Everything's
It's fine.
Everything's fine. Sunday, crime scene again. Like take her to another animal hospital, like at 6 o'clock at night. After dinner. Take her again. They say the same exact thing. Fine. Give her some antibiotics. I don't know. Last night she seemed like she was fine. When I left this morning, she was sleeping, so I let a sleeping dog lie. So I didn't touch it. But that was my weekend. So I had a busy weekend, Saz.
There's nothing worse than the 24-hour emergency care. It is worse than going to the emergency room. It is. It takes all night.
It does take all night.
It really
Wait,
does.
who's gonna watch her while you're gone?
We have a woman who's going to actually sleep at the house. So they're in good
Okay.
shape. My wife won't put him in a kennel. I would put him in. I would bring him to pause if it was up to me and let him stay there for a little while. But that's just me. No.
Kennels are not a bad thing.
What's that?
Kennels is not a bad thing.
No, not. I mean, but they get food made for them. You know what I mean? So they have special diet. These.
No,
these,
but
these
sometimes
mutts,
your dog
these-
can get sick. Like if you take a kid
Yeah.
to daycare, like
Yeah.
your kid will just get sick. And like if you have the choice to keep your pet at home, then that's
I don't think the kennel will make the turkey and rice
I
exactly
understand.
the way the dogs
Believe
like
me,
it.
I've had my dog shanked in a kennel before, but still.
Your dog walks in the kennel now. He walks along the wall. We've already described this. We've seen pictures of him because you have like a daddy cam in there, and your dog is like in a corner with his back into the corner, like he's afraid. You know that. You've seen that.
That's all right. They're good.
Who's watching your dog?
Kennel.
Wouldn't do that to my dog. My dog's special. Oh well.
Anyway,
I'm going to just pivot out of this super hard. Hey, for the first time in over 2 years, Shohei Ohtani is taking the mound tonight. He's pitching again. So
he should, because the Dodgers don't have any pitchers.
Okay.
I mean, they're a good team, but they don't have any pitchers. Seriously, I think all their pitchers are hurt.
Ugh.
And you know what? he's a really good pitcher. Besides the fact that he's a really good player.
Hopefully he stays healthy. The Dodgers, I think, take the mound against the
Aren't they in
Padres
first
tonight.
place?
So if that's
Dodgers, I think so. I think they're either tied with the Giants or the first place or something.
Yeah.
But
did you
they're
guys
doing
watch
okay,
the
is
U.S.
all I'm
Open?
saying, without pitching.
which one?
Did you watch the U.S. Open?
I did. It was. I was happy it was delayed because we had our show last night, and this way I got to watch the end of it. But yeah, I mean, it's too bad the weather sucked for those guys, but it was pretty exciting. You know, I mean, unfortunately for CBS, whoever carried it, you know, none of the big names were in it.
Yeah,
But-
what happened?
too
I had
hard.
never heard of the guy who won. I was like, I don't know her.
Oh no! Well, he was. I think he was also winning the Masters or the PGA. You know, at one point he was. I think he was winning the Masters, or I think maybe the PGA. I can't remember which one it was. But yeah, he's a good golfer. He just bogeyed.
And what is his name?
He just bogeyed the first 5 holes, and then they thought he was out of it, and then somehow came back and won because everybody else fell back to the crowd. He was the only guy
And you
under
still
par.
can't tell me his name because you don't know this man either.
JJ Spahn.
Oh, there you go.
But he, yeah, that putt he sunk on 18. He didn't need to make it, but was unbelievable.
I think it was the longest putt in that
It could have been.
tournament's history.
Could have been, but he didn't need to
win.
make it. He needed to 2-putt. I have a feeling if that thing
Yeah,
didn't
but
go,
did you hear the lore of him? The instant reason I like this guy, and happy Father's Day to him, is he said he was out at CVS at 3 a.m. that
Oh, yeah.
morning because his daughter wouldn't stop throwing up.
yeah,
And then he goes to win the Open.
yeah, yeah. It's funny how, yeah,
If it were you, you would have just let your kid vomit all night.
if it was me, I wouldn't let my kids there. No, that was it's a cool story, but you know, and that's why he bogeyed the first 5 holes probably, and he figured it out.
Yeah, probably.
But whatever.
Did everybody bogey everything pretty much?
I guess. I mean, you know,
Somebody just wrote in that guy didn't win, the golf course won. Kind of true.
he was under par at least.
I think he was the only one, wasn't he?
He was the only one.
Yeah, yeah.
That's impressive.
Okay, pretty bold tweet from your couch.
I mean, I kind of feel like there's some of those greens that a hacker would have, like me or Tony, probably would have 4 or 5 putted multiple greens.
5 or 6 putt. I'm good for a 3 or 4 normally.
But I think breaking 150 on that course would have been next to impossible.
Do you know that Oakmont is the reason that they have the stimp meter? I did not know that.
I did not know that
You know
either.
what? That's
Like
what
how fast, like the measurement of how fast.
I don't know about
greens
everybody else,
are.
but that's what you want to see. I mean, you want to.
Oh,
see
I think golf fans, they would have rather seen nice weather.
Yes,
and they would
of
have rather seen, like, you know, the thing with the U.S. Open is kind of like you remember back in the days when, you know, when Tiger was in it, and, like, you know, it was must-watch TV.
Yeah, yeah.
You know, I mean, these guys, not must-watch TV, but, you know, still, they're all amazing.
Yeah.
All right.
Tom could have done better.
Yeah. Good times.
Yeah.
Hey,
I
we
mean,
got
none
a
of the
great
big
show
names
for you
made the
today.
What?
We got a great show for you today before these 2 local yokels take off across the pond. We are going to be trying a number of innovative things. We're calling it when the cat's away, but just stay tuned for that, just TBD. But Tom and Tony are with us today, and they will be with us tomorrow. And then Wednesday, you're not with, or you are with us? I can't keep the schedule straight.
No. Wednesday we're in.
Wednesday we're in. We're going to be filming from London.
Yeah, okay. So you're not in, but you'll be on the show.
That is correct.
Supposedly.
That is correct.
Yeah, if we get there on time, we're
we
good.
are off. It is a federal holiday. The markets are closed. And then Friday, it's me and the boys, I think.
Yes, you are correct.
That's correct.
Yeah. So just stay tuned for that. Just chaos all around. But we got a great show for you today on this magnificent Monday. The top of the 8 o'clock hour, we have Options Jive with, of course, Kai. Kai kicks off the week with his insights into how the options markets are primed to move. That's going to be at 8 o'clock. 8:40, we got Dr. Jim in the house. The Skinny on Options abstract application. We will see how many people complimented his quaff over the weekend, but he's going to talk about when every options becomes an ATM option. That's not even in English.
It was close though. Give him an honorable mention.
I think it's when every option becomes a ATM option. There you go. But what does that mean?
Don't try to fix it.
What does that mean? Does anyone know?
When every option becomes an at the money option?
Yeah.
Yeah. I mean, it just means like when we're very close. I think it means when we're very close to expiration.
Yeah. Yeah.
Okay.
So like one tick will be in the money or out of the money.
Then 9 o'clock on our market measures, selling in the money puts versus covered calls. Who you got?
Yeah, we've done a study like this before, but people really like it. So this is a modern, updated version. Because people.
So we're just reheating our nachos.
No. We've used a different methodology and different visuals to show it a completely different way.
And then, hey, we got, you guys are taking calls, talking with Tom and Tony at around that 9:30 hour. If you have questions for Tom and Bat, they would love to hear from you. Give us a call. We'll put the number up on screen. And again, that is around 9:30. Have you talked to Scott Sheridan? How is his Asian adventure?
Last time, and I did talk to him the other day. He said it was great.
Okay, great. That's a really wonderful update.
Good adjective.
I mean, I don't know. We don't really
used a lot there.
He's a guy. You're not going to sit there and go, "Oh, how was your?"
Actually, Scott will sit there and tell you like more than most men will tell you. He is.
I'm not going to
He is in touch now. He knows his audience. So maybe he cuts it short.
I go, "How's the trip?" He goes, "Great." Okay, I don't need to ask any more questions.
Why are men?
I don't know. I ask myself the same thing.
Do you guys want your daily dose?
Sure.
I'm a certified yapper. Let's get through with a daily dose. Here is my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Let's jump in.
In today's headlines.
This just in. Breaking news.
All right, everybody. Today's a magnificent Monday. It's June the 16th. It's the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Do you know what I learned today on NPR? I learned on this day in 1911, IBM was founded. That's kind of bonkers.
1911.
Yeah, but they were like punch cards. They weren't like computers as we know them now, but it was still. I don't know. That's
pretty cool. I didn't know that.
Yeah,
okay.
I was like, that's a long time.
On this day, yesterday in 1992, the Bulls won their second championship. Does that matter?
Okay, that is also important history. Mr. Bat, any earnings for today?
Lennar and JBL. Jabil.
Oh, okay.
Yeah, nothing really.
All right, good to know. Hey, first headline of the day. The Fed is meeting this week, but Wall Street strategists don't think Fed rate cuts are coming anytime soon. It was an encouraging week for economic data last week. Inflation is showing signs of moderation, and consumer sentiment rebounded for the first time this year. The unemployment rate is holding at a healthy 4.2%, but there is still a recent uptick in continuing jobless claims. And the Fed is going to meet this week. What does your little skew indicator say about the odds of a rate cut?
I don't know about a rate cut, but if you're looking for the amount of movement we're going to have this week, you only got about 93 handles.
No, well, she's talking about bond movement, right?
I know. I don't know. I said I don't know about.
I mean, right now they're not cutting any rates with bonds 113. I don't think so.
Yeah. What are you doing in bonds for the week?
We're long them.
Ivy rank at 31 has been steadily
we bought climbing. I bought bonds and notes on Thursday and Friday of last week. We'll probably buy. You know what? That's a good question here.
They got as low as 112.22. They're 113.01.
The notes are. Yeah, I mean, this is right where we sold puts in the notes. I think we're gonna sell some more.
Okay.
We've been selling the July 110s. They're 41.42. I'll put a 42 offer in. They're not that crazy busy this morning, but we'll see.
We'll see what happens. Hey, gotta keep it moving here. Investors continue to be unnerved as Israel-Iran conflict fuels oil market rally. On Sunday, crude oil prices were initially up around 4% as the markets were gripped by the escalating threat of a sweeping conflict in the Middle East. I'm not sure if they've settled down this morning. What are you guys doing in crude oil?
We're shorted.
Last night, Sunday night, right, to the upside?
What?
There was a big move Sunday night.
It opened
oil.
higher, and then
That's
we
what I said, 4%. Yeah.
tried to sell it, missed it. We went home short it, so it's a good morning for us.
70 and a half, down 76 cents.
I have not made a trade in there overnight.
I'd be ranked 107.
I know.
Oh my goodness.
It's an interesting sale.
Okay. Keeping it moving. The SEC has axed more Biden-era proposed crypto rules in a flurry of repeals. The SEC has withdrawn now over a dozen rules the agency proposed under the Biden administration, including 2 crypto-related rules that target DeFi and digital asset custody. Also, the EU is set to greenlight crypto giants like Coinbase. Let's just get into crypto and how those markets are moving to start the week.
Catching a bid this morning, 107 on the Bitcoin futures. They traded as low as, I believe, like around 103 or just over 103. So they've caught a bid the last 48 hours or so.
What about Coinbase?
Coinbase is a good question because you always ask it to me. Coinbase, $249 on the bid. That's going to be up around $6.50 or so, $249. But the market's up too, about 1%, almost 1% across the board.
Tom, what are you doing in digital assets?
I haven't really made a trade in any of the digital assets in a couple of weeks. I think they're too expensive right now.
Well, they've been hanging out in this range. I mean, the low of around 102, the high of around 112, and 117.
I mean, anywhere in the hundreds right now. I just feel like I don't like the risk reward. So whether it's 102, 105, 110, I'm not selling a one lot. So like whatever I'm long in digital assets, I'm just holding. Like I haven't sold a single dollar's worth of my crypto assets, but I'm not adding to anything.
That was your note you just got filled on.
Oh, okay, good.
A slew of companies is seeking to launch ETFs tracking the price of crypto token Solana. They amended their filings with the SEC on Friday. The amendments are intended to address the queries of the U.S. markets regulator, but there is no sense of urgency on the SEC's part to move forward with the launches. A person familiar with the matter told Reuters. How come they're so advanced and moving with the quickness on some aspects, but they're dragging their feet on others?
I don't know. I don't know how much, honestly, I'm not sure how much interest there'll be in a Solana ETF. I mean, I'd rather.
Because they're not really interested in the Ethereum ETFs?
I mean, I'd rather have it than not have it, but I don't know that there'll be a hell of a lot of interest in it. I don't think so.
Okay. All right. You do you. Poor Solana.
Well, we just don't get a lot of. We don't get a lot of inquiries or requests for, hey, when are they going to come out with a Solana ETF? I mean, obviously, we'd rather have it.
U.S. President Trump approved Nippon Steel's $14.9 billion bid for U.S. Steel on Friday, capping a tumultuous 18-month effort led by the companies that survived union opposition and 2 national security reviews. Trump signed an executive order saying the tie-up could move forward if the companies sign an agreement with the Treasury Department resolving national security concerns returns and then directly wiring funds into the Trump family account. No, I'm just kidding. What are you doing next? It's over.
I think it's, as we've said many times, I think it's over. I don't know.
It's up $2.5, $3 or something to 54.
Yeah, I know, but I don't know when it officially stops trading, or there's zero.
I don't know either.
There's zero chance of a higher bid. So it's the out of the money calls, I'm assuming, are going to be like next to nothing, like pennies. I don't think it's tradable. Honestly, I would strongly suggest you don't touch this unless you think the deal is going to fall apart. But there's nothing going to come in higher.
Markets are real wide.
Yeah, it's virtually untradeable. I wouldn't trade it.
I'm not sure how this is allowed just on the basis of an executive order, but that's above my pay grade. I thought that Congress would have to get involved, but the companies also did agree to a golden share that they would issue to the U.S. government. So that also raises question about how much control the government will have over this deal. So you can't really trade X right now, but you could trade like Alcoa. I don't know if you're trading that or anything else.
I don't know if that's a good. I don't know that that's it.
Hey, I am trying. What are you doing?
Yeah. I mean, I wouldn't trade Alcoa thinking that you're trading, no.
No. Okay. Hey, in other news, keeping it moving here. This is interesting. AI software deals have accounted for 75% of tech M&A so far this year. Tech deals are one of the few bright spots in an otherwise gloomy M&A market. They accounted for $421 billion of the $1.67 trillion in global deals announced in the first 5 months of the year. That's crazy. And they're around 25% of total M&A is just tech deals, and that's up from around 20% last year. And again, the bulk of that is in the AI space, so you get sexy things like data infrastructure.
Yeah, it seems like.
What are your thoughts on? Go ahead.
I was going to say, it does seem like every deal is on data infrastructure. Occasionally they'll throw in a Dave's Hot Chicken or something like that, but it does seem like most of the deals are AI and data
is
infrastructure.
Is this good for the progress of M&A, or is it too overweighted?
It's hard for me to say. I don't really, there's been some M&A in the financial space. I mean, I think we get a little, just the sheer numbers in the data infrastructure space are just huge. So I think that's it. I don't think it's overwhelming yet.
You guys doing anything in CoreWeave this morning? CRWV?
No.
Okay.
Virtually untradeable.
It is virtually untradeable. Meta was up around $5, but everything's up a little bit.
Yeah, everything's up. Market's up big.
Yeah.
But most of the stocks like you're thinking of are pretty much, or a lot of these new stocks are pretty much untradeable.
The U.S. Justice Department, the Antitrust Division, is reviewing whether Google's planned acquisition, speaking of M&A, of a cybersecurity company called Wiz would illegally limit competition in the marketplace. The deal, valued at $32 billion, would be Alphabet's largest acquisition. It would integrate Wiz into Google's cloud unit, but again, now facing more government scrutiny. What are you doing in Google to start the week?
I do not have a Google position.
I don't either, but it's not surprising with Google IB rank of 22, earnings coming July 22nd.
Yeah, I just don't have a position right now. Stock's been super strong generally, and it's up about 15% recently. So no, I'm not in Google.
Here's a crazy story. Reddit is the second most cited source in Google AI overviews, but that might not mean much for its bottom line. I think Reddit fumbled the bag here. They negotiated a $60 million deal with Google to be allowed to scrape their data for their large language models, keeping in mind that Google paid Apple $18 billion a year just to be allowed on the phones. I think Reddit drastically undersold themselves. And what we're finding is the people, when you're seeing these search the Reddit search results come up in Google, people aren't logged into their Reddit account. Reddit can't monetize or track the extra traffic that they're getting per se. They can't really do anything with the extra traffic that's beneficial to their bottom line. So what are you doing in Reddit?
I don't have a Reddit position right now, but we do trade Reddit a lot.
Reddit's well off its highs of 228 or so.
But it's also off its lows by a lot. We just don't trade that much Reddit.
The lows were, let's just call it in the 90s.
Do you think that they undersold themselves to Google?
It's hard to say because I don't know when they made that deal, and I also don't know how long that deal was for. So sometimes you make a deal just to get your, like, I don't know if you're seeing all the details that go into that deal. A lot of times companies like Reddit do that so that Google will put them on the map, and then the next deal they cut will be for $2 billion. See, like in order, if they charge too much for Google could have gone someplace else. And I think they needed this relationship with Google to blow up their own stuff. So I would say, I think it's a little unfair to say they made a bad deal. They might have done it for free just to basically be hooked into Google forever. So I'm not sure it was a bad business deal. Yeah, it might have been a good deal.
Pop trivia, do you want to guess the number one most cited source in Google AI? It's a website. You've probably never used it.
It's a website. Number one most.
And it was real popular back in the day. I guess people still use it.
Is it Yahoo?
No. That's a good guess, though.
I have no idea.
BuzzFeed?
No, it's Quora.
Oh, I never would have guessed that.
Yeah, I know.
Never.
Anyway, keeping it moving here.
I don't know how anybody can use Quora. It drives me crazy. It's so hard to get an answer from Quora. Like Reddit's so much better.
Yeah, I think Reddit is better and it's easier to find stuff.
Yeah.
But Quora has like paywalls, so there's that element in part to Quora. So. Hey, this is crazy. The boss, the CEO, Alison Kirby of British Telecom, says advances in AI could deepen significant job cuts that are already underway at the British Telecoms company. Kirby told the newspaper that British Telecom plans to cull 40,000 jobs and strip out 3 billion pounds of costs by the end of the decade, but that those numbers do not reflect the full potential of AI. So she's saying these already very drastic cuts are going to get more drastic as we learn what we can do with AI. Do numbers like this shock you? Because you don't think AI is taking people's jobs, but this lady says, "Here, hold my pint."
No, don't confuse what I said. I don't think there's no question that AI is taking jobs. What I said was that it's also unfair to say that AI is taking jobs without saying that AI is creating jobs, because I feel like AI is creating more jobs.
Okay, so find me one of those headlines, please.
I think AI is creating way more jobs than it's taking. So when you just did a piece talking about all the new AI firms and all the new data infrastructure firms that are all related to AI, that is hundreds of thousands of jobs, and those are all being newly jobs created because of AI. And so you're going to lose some people at British Telecom and places like that, and you're creating a whole new set of jobs in the AI world. So no, I think that these headlines are very misleading, because is British Telecom going to lose some jobs? Of course. But then is CoreWeave going to create a few thousand jobs? The answer is of course.
One door closes, another door opens.
I think it's actually
but the skill set of that workforce does not quite align.
That doesn't matter, because the skill set, smart people will gravitate. The skill set will change.
Yeah, right. Listen, I remember when the floor went all electronic. And
of course. The skill set didn't change. They just moved into the retail space, or the professional space. It doesn't. Good jobs are good jobs, and they will always shift. So I think these headlines are really misleading.
Hey, the Washington Post is investigating a cyber attack on email accounts of some of its journalists. There's been a possible unauthorized targeted intrusion affecting journalists via their Microsoft email. Oh, no, girl. The intrusions comprised journalists' Microsoft accounts, and then they could have granted the intruder access to work emails. Not sure what Microsoft is doing, but the stock has hit new highs. So
yeah, new highs, up about $1.70 or so, trading 476 and change. Remember, it got as high as 480, so it's just off its new high, which was made 2 days ago.
Amazon is reorganizing its healthcare business in its latest bid to crack the multi-trillion-dollar market. They're reorganizing the business into 6 pillars in order to simplify the structure. The change comes after Amazon lost a handful of top health executives in recent months. They struggled to find a consistent strategy after acquiring PillPack and One Medical, as well as launching some of their own services. What are you doing in Amazon?
I currently do not have an Amazon position.
IV rank of 16 says it all.
Ugh.
I don't have a position there right now.
Okay.
Yeah.
Boeing is trimming its projection for 20-year jet demand. Boeing says they expect global demand for air travel to increase by more than 40% by 2030, driving the need for thousands of new jetliners in the next few years. But according to its 20-year demand forecast, they are still revising those numbers. The Paris Air Show is happening this week. The company expects demand for 43,600 new airliners through 2044. European rival Airbus also revised up their own 20-year commercial demand forecast. They did find the data recorder from the 787 Dreamliner that did crash in India. They are still investigating.
Boeing IV rank is 17, trading just over 200. One of the few stocks that's up very small, about 50 cents or so. Don't know
what are you doing in Boeing, Tom?
Earnings July 30th.
We got a little tiny bit long it. What's Boeing doing this morning?
Up small, 50 cents, maybe a little bit less.
We got a tiny little bit long it last week on the basis of I thought it got a little oversold. You know, now I've been reading about that Air India crash.
It did trade under 200, but 195.
Yeah. I was reading about the Air India crash all weekend, and now it looks like it was catastrophic engine failure, not pilot error. And
so you're saying you were wrong in your snap judgment?
Yes,
yes, that's what he would say. I'm going to learn to keep my mouth quiet about that.
Yes, I would say my snap judgment of listening to other Boeing pilots was a little premature, and now I think it was catastrophic engine failure, which is crazy because that's very rare, and if never. And
well, some say it's the issue that the whistleblower who was unalived was warning about. So if you want to extend,
well, I'm getting on that same plane tomorrow.
Wow. You're like my wife. Is there any way we could say we? Yeah, we. We are getting on that plane. We.
Well, usually.
I mean, like when something good happens, like, if she buys a toy for the grandson, she bought the toy for the grandson. We bought the toy for the grandson. We are getting.
So do you say my kid or our kids?
Our kids.
Oh, you do?
Yeah.
Really?
Oh, right now I'm going to say that. Sure.
All right. Hey, I got to keep it moving here. I got more stories. Let's see. Oh, this is great. A guy has scored 120 free flights by posing as a flight attendant before getting busted. Listen, I have a new rule. If your crime is hilarious, you should not get in trouble for it. God forbid a man have some hobbies. Basically, he used to work in some capacity for an airline based in Dallas. They wouldn't disclose the airline, but both American and Southwest operate out of Dallas as well as like a private airline. And so he had like badge numbers and he knew how to get into a portal. And so these were just specific flights for flight attendants. He wasn't serving as a flight attendant. But anyway, he got 120 free flights.
Where is he going? 100? Where is he go? Like,
Anywhere he wanted to. It was free.
I know, but
Yeah,
why?
whatever you wanted. Like, it was
I don't
free.
know why.
Yeah.
I can't
Like,
give you
so.
that.
Like if I told you you could fly.
We're not going.
Where are you going next weekend?
I go anywhere I want to. I don't have kids. I do what I want.
I know, but I'm just saying, where is somebody to go on 120 free flights?
Maybe he wanted to see all of America's national parks.
No, this is not. This something doesn't check out here.
It was over the course of 6 years.
Oh,
so,
okay, got it.
Okay. So anyway, pretty crazy there. Hey, in other news, Shake Shack thinks it's time for a slogan. They've had a hard time succinctly capturing why people love their food and beverages, but they're working on creating a slogan. They tapped the minds behind Arby's. We have the meats. And like America runs on Dunkin', and McDonald's has I'm loving it. Taco Bell has Live Mas. But what's the slogan of Shake Shack? Shack, S-H-A-K. They hired a chief communications officer last year whose responsibility includes creating a catchphrase. Ask ChatGPT what it thinks. I don't know. But I like Shake Shack, so.
I don't know.
Yeah, I don't know what it is either.
Yeah, I mean,
we don't talk. Well, they don't really have. Well, that's what they're saying. That's where they're spending millions of dollars on consultants.
Yeah. Good for them.
SHAK, Shake Shack.
Yeah,
what are you doing?
123 and change. Kind of hard to tell if it's up or down with the market so wide. In pre-market, the bid ask is $10 wide. So I don't know if the stock is looks like it's unchanged right now. August 7th, our earnings. Ivy ranks only 14. It's been on a big run from around 75 up to 123. Been going sideways the last week or two.
Well, speaking of Live Mas, Taco Bell is unleashing new menu additions. They are debuting the Crispy Chicken Taco, Crispy Chicken Burrito, and Crispy Chicken Strips. Starting June 17th, Crispy Chicken Tacos and Burritos will be available at Taco Bell locations nationwide for a limited time. Taco Bell's obsession with its crispy chicken recipe has garnered it some success on sites like TikTok. The crispy chicken nuggets, Real Talk, made it into fitness TikTok because the macros on those nuggets are insane.
Well, I will just tell you so far that my, the people I watch are not crazy about this.
I'm going to have to disagree, give you a little pushback here. My strip mall eating son-in-law, who is from Indiana, tried these and said they were pretty good.
No, they didn't get bad reviews. They just
Okay.
It depends who you put them up against. Like if you put them up against Dave's Hot Chicken,
All right, well, two different things.
they're not even in the ballpark.
Yeah, but that's not. I wouldn't even consider that the same category, though.
What do you mean? They're chicken strips.
No, but one is spicy, like Nashville
No,
chicken.
no.
But
You
you're
can
just
do
saying
it-
just
you-
because chicken is chicken, that's not the same.
Even against like Raising Cane's, which I think are crap. These things
Things is
didn't work.
horrible. I haven't had these, but I got to say that.
How about you form your own opinion and have your own original thought instead of just trying to follow the sheep on TikTok? How about that?
Why do I need my own thought when I got Luke and Wayne and Mandy?
Okay,
I got
I'm
them
gonna
all.
just keep it moving, Boomer. You can now get tickets to a World Cup match for as low as $6, featuring stars like Lionel Messi. The 32-team FIFA Club World Cup kicks off Saturday with Messi's Inter Miami taking on an Egyptian club. But despite the biggest clubs in the world playing games, interest is tepid. Tickets for several matches can be bought on resale site StubHub for less than $10, including fees. Who wants to sit outside in Miami in July? Be so for real. I don't know.
I like the hot weather.
Big teams like Bayern München are going to play the Messi's team, Miami, the Paris Saint-Germain. And these are big if you're into football, but FIFA is having trouble selling tickets. So the final will be at the Meadowlands, like the World Cup final game will also be held at the Meadowlands. So do with that what you will. I'm skipping to the last story here, John. Caitlin Clark returned to the court with custom sneakers dedicated to her dog Bella, and she promptly goes nuclear, just straight lights out, tying a career high from deep, and she hands the WNBA defending champs their first loss. Caitlin Clark's Nike Pro Tro PEs are called the Bellas in honor of her dog Bella. I love everything about this.
I watched her. She's good.
Yes, she's very good. She was out with, I think it was like a hamstring.
She is.
I watched her.
Injury,
She's good.
But she's back.
She really is
and
good.
She's not messing around.
She's head and shoulders above the crowd. She really is good.
And for a while there, the Pacers were 8-0 when she was in attendance in their playoff.
Yeah, she's very
finals.
close to Halliburton, I guess. They're
BFFs, they're besties.
well, yeah, they're her boyfriend, his girlfriend. They're all like BFFs. Yeah.
So the series is tied 2-2 now. But, I mean,
I know.
all the good offers are
SGA went off in the fourth quarter the other night. I thought Indiana was going to put it away. Indiana's like a 10-point. I'm sorry. Oklahoma City's like a 10-point favorite tonight.
I know. I mean, but we have a bet. You guys want to be friends and call it off or something like that, or
what?
We have a bet. Don't we have a bet?
Yeah.
Okay. So do you want to just call it off so we can remain friends or something like that?
Are you scared?
No.
Hey, finally today for my viral video
It'll be
of
over
the
by
day. This is pretty great. Kids' toys have just been, I don't know, taking it to another level. But if you were a Midwestern kid or you grew up around a lot of lakes, like I did, one of your most integral skills is learning how to back up a boat trailer. And you got to start them young. Watch this baby. This baby's better than Tom. Watch this.
Everybody says money can't buy happiness, but it can buy me a boat. It can buy me a truck to pull. It can buy me a Yeti 110 ice down with some silver bullets.
That's pretty good.
Everybody says money
Tom, can
can't
you
buy
back up a boat trailer?
happiness.
That's a remote control car, but that's good.
It can buy me a truck.
The Sounds could not do that.
It can buy me a Yeti 110.
I could drown in that water.
That's.
I'm not going in a pool.
Saz would have a life preserver on.
I don't know what I'm going to do. I'm not ready to go swimming.
You were literally going on vacation.
I know, and I'm going to a beach, but I don't know if I'm going to go in the water.
Oh, you have to. You have to at least go in up to like your knees or something like that. That's what all the grandparents do, at least up to their knees.
No, where I'm going, they don't take you to the shore. They drop you off in the water.
Like poop in a pool
By
or something like
helicopter?
that?
What?
No, they just drop. They go close, but not. They can't go to shore, so they just drop you off. You have to swim in.
So there's not the hotel that has a beach?
Right, where I'm taking a boat to. No, there's not. They just take you to it's like a cove, and
Will they give you like a blow up life preserver?
I don't know.
Have with you or something? Some floaties? Maybe you should put some floaties up. Bring them with you. Bring them with you. Don't blow them up. They pack real thin. Take them with
Maybe
you.
I will.
Hey, listen, I'm putting some bags under the plane so I can put them in my bag.
Maybe. Oh God. Maybe I will take a floaty or a version. What do they call those things that you sit on?
A raft?
Not a raft. Those snake things. Those snakes.
A snake?
You know, a pool snake, whatever they're called.
Pool snake.
A noodle?
Okay.
A noodle. That's it. A noodle.
Oh my God! I had no idea what he was talking about. Trouser snake, pool snake. My head was going in so many different directions.
Noodle. That's what I need.
Tom wants to go to the pool to sit on all the snakes.
That's what I need.
You find the best snakes in the pool.
I need a noodle.
Yeah, you do.
Yes, you do, because the water's going to be cold. We're going to take a quick 90-second break and come back. We got more Tasty Live and Confirm and Send next. We'll be back in 45 seconds. Maybe.
A snoodle.
Yeah, noodle.
A noodle.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. tastytrade. Make your move.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. Before we do, let's take a quick look at the market. Sadnoff, even the S&P is up 39, completely different than what you saw last night. They actually opened, they opened down at 6,000, which is 71 handles lower.
They did, but they didn't really. Well, you could have probably done a little bit under 610, maybe, but that's about the closest.
Well, they obviously traded down to 6,000, right? I mean, if you had it,
they opened there.
Yeah, if they hadn't been in, you're going to get filled. I mean,
I don't know about that.
If you're going to put that in there, yeah. But even the S&P's up 39. I guess my buddy, my Taiwanese source, Aaron, who said sell the 59 puts on Friday afternoon on last call was correct. You
in what?
My friend, my Taiwanese source, Aaron, on last call, I said he
wouldn't have liked it last night when they first opened.
No, it's not how you start the race; it's how you finish. So I don't know if apologize to Aaron.
Never.
NASDAQ up 178. That's not the leader in the clubhouse on a percentage basis. It's the Russell up 24. Dow up 271. And volatility in a lot by 4%, 88 cents. Sadnoff back down to 2078. You remember volatility got up to 23 or so on Friday. Bonds unchanged, well, down 113.07 after trading down to 112.22. And up to 113.20. They're kind of mid-range to 113.06. Oil, that's another big one. So enough trade up to 75.50. Look at these two big moves higher over the last 48 hours. But now oil's down $1.36. Let's see if they change the prices at the pump to the downside this time, as oil is down 2%. Gold down $16.30. That had a reversal too. Gold was up earlier, now lower by $16. Silver up 19 cents. Nat gas up almost 10 cents, 9.5 cents. Sadnoff, Lennar, and Jabil for earnings. I don't think you're going to care about those. That's all I got, my friend.
Let's do it. We'll confirm and send emails that came into us overnight.
Ready.
It is Monday, June 16th. Tomorrow, travel day, but we will be doing the show in the morning. Mm-hmm. Let's do it. I noticed there's no IVR for /HG on the Tasty platform. That's copper. Why is that? I think copper is a pretty popular commodity.
I mean, popular is subjective. I mean, it has had 17,000 contracts traded today, so I guess that definitely markets are good in there. It's a very big product, but why is it? Because there's no ETF for copper to make a good IV rank.
Yeah. So let me explain. The way we do IV rank on Tasty is we use option prices to determine. We use efficient option prices to back in to a Black-Scholes formula to figure out what IVR should be. It's kind of a derivative of our own little crazy thing. For all commodities, we use a corresponding ETF. The reason we do that is because the overnight market for futures options gets way too wide. Like last night, even in crude oil, the market on some options was a nickel bid at $6.
Yeah, it was ridiculous.
It was ridiculous. And every single night it's like that because nobody wants to make markets overnight.
And that skews the P&L in your account too.
I know. But nobody wants to make markets overnight. And so the markets aren't efficient. So the IVRs will be all screwed up if we use futures options. So what we do is we use listed options, which aren't open overnight, to create we use highly correlated, like for ES, we use SPY. For bonds, we use TLT, that kind of thing. Mm-hmm. And across the board, we have an ETF for virtually every futures product. The only one we don't is HG. We've considered using FCX, but it's not a tight enough correlation for us. And we want something with a correlation that's at least 0.8 and preferably 0.9 or higher. So in some cases, we're at 0.997. So that's the reason we don't have HG on the platform, an IVR for HG on the platform. You can look at FCX if you want, but again, on Tasty, we feel like we're the only firm that does IVR right. Well, no other firm uses that logic of using a equity ETF to figure out IVR. So super important. I think we do it that way. The loan underlying that suffers is HG. And you can use FCX in the intro.
Nothing's perfect.
Nothing's perfect. Let's go next slide. Sometimes when looking at different strikes in a liquid underlying, I'll notice the bid-ask differential can vary among strikes. Should I avoid the strikes? Should I avoid the strikes where the spread is at the larger end of the range?
I mean, I don't know. So I would say that what's the volatility of the product? If it's still high, I would then look, as I always do, at the bid ask of those options. And then if there's not a lot of trade in those options, yeah, I would probably look to avoid the whole product itself, not those strikes. Now I have, especially on my podcast, talked about products that don't have the best liquidity, and you'll see one strike, usually a $50 wide strike, that might not be as widely watched, have wider markets than the dollar wide strikes that may have penny or nickel wide markets. And for that reason, I might make it a little bit wider just because the pricing is going to be disseminated a little bit better. But everything trades at fair value. So I don't think you have to avoid it if it becomes a buying power issue for you. You just have to go in above or below the mid and then walk the order down. The mid price might not be exactly what's disseminated on the screen.
You know what? Sometimes if you have a liquid underlying and you notice the bid-ask differential can vary among strikes, then don't worry about it. As long as most of the strikes are really tight, that means the strike that just looks weird for the moment is probably just off because there's a public order in between the markets or something like that. You're good to go. You'll be filled somewhere close enough. I wouldn't worry about. You don't need to avoid the strikes. Trade the strike that you want. As long as the underlying is liquid, you don't need to avoid any strikes. If the other strikes are good, then don't worry. The high frequency firms will be there on the strikes that you want.
But your mid price, it might be.
Just move it a penny or two off mid price. Let's go next slide. Is there ever a reason to do a naked put or call versus doing a strangle?
Naked put or call versus strangle. Sure, if you have a directional bias, it makes a big difference. Remember, a naked put is going to be bullish. A naked call is going to be bearish. If you're non-directional, you can do both with high implied volatility. If you think the stock is going to stay in a range, if you're bullish or bearish, then you would use one or the other.
Yeah, I mean, of course. Our studies have found that you're better off if you don't have a strong opinion. You're way better off using a strangle. But if you have a strong opinion, I mean, we sell naked puts all the time. We sell naked calls occasionally, but 100%. Yeah, I mean, there's a lot of reasons for only doing a naked put if you're bullish, or only doing a naked call if you're bearish. But if you're indifferent, it definitely pays to do a strangle. Let's go next slide. I'm looking for some negative delta. Are there call spreads in products like ES and NQ a good way of doing it?
Sure. I mean, ES, NASDAQ basically have a one-to-one relationship with each other. I mean, ES is the one that when they talk about the market, they're usually talking about ES, but NASDAQ is right there with it, probably with an 85-90% correlation to ES. So yeah, no, it's definitely a good way. I mean, spreads are going to give you a little less delta. Naked calls are going to give you more delta. But yeah, for sure, great way of doing it. I mean, as long as the IV rank is relatively high, I mean, I would definitely do that too.
If you're looking for negative delta and you don't want to use futures, you don't want to use equities, short call spreads in ES and NQ are a great way of doing it. It's minimal capital requirement, very capital efficient, plenty of liquidity, easy to get fills, one tick around mid price for sure. Just subtract your long from your short, get your delta, and you know exactly what you're doing. 100%. I would use those. I would use call spreads in ES and NQ over the micro products for sure. I mean, over the options, the micro products. Let's go next slide. In the 0DT options, do you think it makes more sense to trade directionally against the move, like be a contrarian, early in the day, or to trade with the move? That's an impossible question.
Yeah, I mean, subject to your own assumptions with the market. I've had, from our research, we look a little bit before the opening. I've had other people say they love the opening prices. I mean, this is so subjective to your own style of trading. Just know that they're very liquid. So the world is your oyster. 0-day options.
If you're trading 0DTs, there's no way we can tell you if it makes more sense to trade directionally with the move or against the move. I mean, we're contrarians, so we generally fade the move, but like they're opening up 40 handles this morning. If you're asking me if I knew whether I should buy them here because they're going to go higher or sell them here because they're going to go lower, I mean, nobody in the world knows. No platform, no AI, nobody can tell you that. So it's either a bet that you make, you have to have that feeling yourself, or you can go non-directional. But early in the day, late in the day, none of that matters. Nobody knows the answer. Let's go to the next slide. And the last one. Is there a rule of thumb I can use in deciding if my deltas have gotten too big relative to my net lick?
My delta's gotten too big to my net lick. I mean, I listen, another one that's hard to quantify. I mean, when it's going right, you're going to love your delta and think that that's the proper delta to have in a position. When it's going wrong, you're it's going to be too big. You're going to hate it. You never realize how big small really is. I mean, we've come up with some parameters to look at, which I think we've gotten away from a little bit because the market's been so strong and leaning a lot more neutral with the overall, not leaning with a little bit of short delta, a little bit of short beta. So I don't know. For me here, I don't think there's a big rule of thumb. Are you going to come up with a percentage here? It's so hard to say. I mean, there's no delta you can have that's the right delta if it's the opposite of what the market's moving. I mean, if you do all your position sizing, doing 1 to 3% on all your positions, after that, what can you do? You keep rolling up the untested side, you're going to stay in your range. If you're staying mechanical, you're going to stay in your range.
Yeah.
The thing that you set up is on opening.
I mean, I'll give you a rule of thumb, though, just because that's your question, because there is no really perfect answer here. But I'm gonna convert to
You're right over there. You want some water or something? You want a cup of coffee? What do you need?
I got something stuck in my throat.
You need something? You have a do not resuscitate still, right?
I know. I got a stupid pistachio nut stuck in my throat. Pistachio nut's going to be the...
Yeah, if you get nuts stuck in your throat, sounds enough. It's hard to talk.
Yeah, I know. So I'm going to give you a crazy little rule of thumb here. The rule of thumb for me is if you're going to convert to notional, you never want to be more than, between 3 and 5 times the notional value of your account. So let's say your account, just as an example, has $100,000 in it, right?
Mm-hmm.
And you want to start thinking about deltas. So that would be the equivalent of, I'm just ballparking it, okay? A little less than 200 shares of SPY. So that's 200 beta weighted deltas. Now, that's 100 grand. Now, if you want 120 grand, actually, I probably wouldn't go much over 300 grand, okay? Or 400
You're
grand.
being subjective with your own.
I understand that. So what I'm saying is on a $100,000 account, I mean, you're talking about somewhere between 600 and 800 deltas to me would be probably my limit. Now, if you take that down to a $10,000 account, that would be 60 to 80 deltas. If you take it up to $1 million account, it'd be 6,000, 8,000 deltas. If you're asking me kind of what got too big relative to my net lick, those numbers of 3 times your notional are too big for your net lick, or 4 times notional, too big for your net lick. If you're 1 time notional and 2 times notional, you can deal with that. If you're half of notional, no problem. So that's kind of my answer. Rule of thumb.
Let's take a quick 90-second break and come back. We got more Tasty Live with an option jive next. This is Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
It's option jive.
Tomas, that's right. It is time for a little bit of option jive. And we got our friend Kai in the house. Kai, how are you?
I'm doing great. How are you?
Doing well. Thank you for asking.
Happy Father's Day. A little bit late, but I saw you build something for your grandson.
Yes, that was my grandson in the picture too. He's on your right, my left there. I think he's a little big for the swing set, but
no way.
No, that's the father-in-law. I'm just kidding. I mean the son-in-law. I'm just kidding. You're a good man, Kai. You're a good man. Yes, thank you. Yeah. You want me to build one for your kids now or something like that?
I don't have a grandkid yet. My kid is too big for these.
I think so. Well, what do you got
for
us today?
How long it took you to finish the project? How long?
Thanks, man. Thanks. It took about 8 hours. 6.5, 8 hours to build. I had lunch in there too, so
I could have done it in 3.
I could name that tune in 2. Yep. All right, what do you got for us, Kai?
All right, a little bit of summary from last week in the market. So here we go to the first slide. Definitely the first observation is VIX increased quickly above 20 level. I didn't check 5 minutes ago. It definitely dropped below 20 right now. But last Friday, it pushed the VIX really fast all the way up to 22 and dropped back to 21.5.
Yeah, this morning it's back in the
1967. Yeah. It got as high as 22, like I said. Yep.
Mm-hmm.
Yeah, it opened a little higher last night and then dropped all night long.
Yeah, I saw it last night.
Yeah.
And also, of course, second most important thing is crude oil. We saw the largest single day and also the weekly upside move since 2022. So we're going to show the data later on. This is a pretty rare big move to the upside. And the third one is dollar kept going down. So euro and pound and some other currencies has exceeded to multi-year highs. Euro, I believe, was back to, I don't remember, it's in the chart.
Yeah, 1.1665 right now, up 0.5%.
Bad timing. Bad timing.
Yeah.
For going to Europe tomorrow. Euro's higher and British pound's higher.
To Europe, yeah.
Well, the good news is you're long a company that's trades in British pounds. The bad news is you're going to London. Mm-hmm. So no, it helps a lot more. Trust me, you'd rather have the pound higher and pay more.
Yeah.
Cool. All right, so last week, go to the next slide. So last week we're down a little bit thanks to Friday's movement. So S&P only down 0.5%. For all the major indices.
What did we close down on Friday? I don't even remember now. Why am I spacing out?
Yeah, we closed down Friday. It was just this.
Yeah, but what did we close down on Friday? I can't remember. What was it? Do you remember?
I think it's 1.2, 1 point something percent.
Yeah, remember they sold off on the close. We're down a little over 60 handles.
Oh, were they? Okay. Mm-hmm. Okay.
Yeah. So look at this number. We already knew this. So the last week we traded within the expect move, right? We expect move was next. Let's go to the next slide. It's 1.5 or 1.6%. At 1.4%, right? We only move up 0.5%. One of the reasons is that Friday just came all the way back down. And this week we started with a little bit higher VIX, 20.8. Right? This morning you just said 19.7 or something. So the expect move for SPX 1 to 10 points, 1.8%. So let's see. What do you think? It's going to be another quiet week like last week and this week, or it's going to be more volatile?
No, I don't think it's going to be more volatile. Anytime you have a triple witching week, I always sell volatility. I'm surprised.
Oh, that's right.
I know there's some Fed stuff, but I just don't see it on triple witching week. I don't think there's going to be a lot of volatility.
It seems to contract. I mean,
that's what I would say. I'd rather buy contraction this week.
Okay. Good to know. All right, next slide, the IBR change, just like what we talked about in the first slide, the implied volatility and also the implied volatility rank across the market increased last week. So pretty much everything except the natural gas and Bitcoin, which you don't think is that important. Crude oil, gold, euro, all currencies implied volatility increased.
It's actually a pretty interesting chart right there. I mean, we all know it from trading, but that's an interesting chart. And crude oil really is the one that pops up there. I mean, crude oil is down 88 cents right now, but IV rank over 100.
Yeah, I mean, you can do whatever you want there. I mean, we're having a good day today. We had a crappy day on Friday.
You can do whatever you want in there. Just keep it small because crude oil is a big product.
Yeah, just keep it small.
Yeah. All right. So some interesting move from the major assets. The first one, volatility. Can we go to the next slide? Yeah, VIX crossed 20 again. So again, just some reminder, background information. The VIX median in the past 20 years, 17 handle. We've been trading below 17 for quite a while, or roughly near 17. And VIX above 20 is about 30% of our currencies. So it's not extremely high. This is kind of a relatively high level. It's great time to sell premium, somewhere between 17 to 20 or 25-ish. This is the best time.
All right, agreed.
Yeah, some background information.
We talked about that last night.
Oil.
Anything between 20 and 22 is like sweet spot.
Yep. So this crude oil is up 7.3% on Friday, and the actual range is much, much larger. So if we only take a look at the 7.3%, so last time we saw this such a daily big move to the upside is March 2022, and only 39 currencies in the past 20 years. That's less than 1% probability. And talking about weekly, we were up 13%. And the last time we saw such a big move to the upside is October 2022, also 2022, and still less than 10 number of currencies observed. So that's still less than 1% probability. So pretty large move on Friday and also the last week.
Yeah, crude oil also has call skew in there too, which makes the out of the money options the call options quite expensive. So something to play there either with the strategy or you can try to look at it for a directional play. Now, if you're bearish, it makes a nice play.
Are you contrarian here right now, Tom, or you want to?
Yeah, wait? I mean, we went home short crude oil, so I didn't like the opening last night. But I knew something was up when I saw that. Even with the opening up $3.50 or something last night, my P&L didn't move much, and I thought that was really weird. So I thought that was like a sign.
Oh, you sold call?
Yeah, like they didn't jump. They just didn't explode premium last night. So, and now it's like $4 lower, $4.50 lower.
Oh, that's nice. All right, next one is currency. So dollar, if you look at a dollar ETF or index, the dollar was down nearly 3%. If we look at the euro versus the US dollar, increased to 1.16. I think this morning slightly higher. You said at 1.165 or something?
Euro, US dollar. Yeah, this is the highest level since in like 4 years. Yes.
Yeah, this is the highest level since September 2021. Yeah. So this is a really high level. Also, the pound. I think the pound is the highest level since beginning of 2022, just a couple of months.
Yeah, since
January 2022 or February.
Yeah. Yeah, it's crazy. The level of the pound right now is nuts. Yeah, well, it's a good thing for us. I don't care. Bad thing for buying dinners this week.
Ooh.
Every silver lining.
That's right.
So the last charts I want to show is gold. So gold and silver, they both climbed to the multi-year high. Gold is actually getting very close to the all-time high that we saw last month. And silver is like a 13-year high back to 2012-ish. But this is not the point. The point is I want to show for in the next slide, the gold-silver ratio actually dropped to 90 to 93 level. So right now it's 93. I checked on yesterday.
No. So, last night it was 95. I think
94-ish. I checked before yesterday's market open. Or it literally is a Friday market close.
Gold is 34.35 and silver's 36.47.
Yeah, I'll check it. Saying it's probably 34 and change.
Okay, so even though gold and silver both rally all the way up, but the ratio dropped. Main reason is the silver actually increased much faster.
Yeah. I'll get you actual number.
All right. Next slide. The top 5 and bottom 5 largest move to the upside and to the downside in the S&P 500. Most liquid one. So Oracle up 21%. Definitely the biggest news last week. And the next 3, 4, 5 stocks that I even didn't list that here are mostly related to energy. So they're up 10 to 13% last week.
Yeah, just looking at the UAL, because that's the one that you have up there. It's up about $2.25 or so. So it's going to take back some of that 11% move. But that's your big mover. Airlines were big movers all last week, and obviously
to the downside, yes.
To the downside, yeah. Boeing too, and Lulu, which is one of your favorites, Tom. My friend, you did wonderful there, but we got to take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell, Sad, not the moment you've been waiting for. We'll be back in 90 seconds.
Yeah, Kai, it's 94.13.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. crypto. We got it. We get it.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with the opening bell here in about 3.5 minutes. Even the S&P's have been steady, Sadnov. They're up 37 and change. Really haven't had too much two-sided action, at least in the equity markets. They've been
No. Since this morning, it's been
wrapped around $5 move from top to bottom, right?
Yep.
Yeah, pretty flat. Volatility down 80 cents.
Yep.
About 15 cents off its lows. NASDAQ up 174. The leader in the clubhouse to the upside is the Russell. That's been the weakest of the group as of late, but the Russell up about 1%, up $21 and change. Dow up 237. Bonds down 3 ticks, 113.04. Pretty much mid-range for the day. They trade down to 112.22 up to 113.20. Bitcoin up 14.75, Sadnov to almost 107 to 106.8. Oil down $1.08. I didn't think I was going to say that this morning. That oil would be down last night, traded all the way up to
doesn't
$7.
surprise me.
What's that?
Doesn't surprise me.
It's down already. That it
does not surprise me.
Completely reversed from overnight action.
Does not surprise me.
Yeah, I looked at the option markets. We talked a little bit about them. There was nothing.
Oh, it sucked last night.
You had to just sell a future or buy a future if that's what you felt doing. But that was untradable markets overnight. Down 1.5%. Gold down $20. That's had a good market already of almost $50 from top to bottom. Just a skosh.
And that was up $20 too last night.
Yeah. And listen, you could have done the opposite of just about any market last night. And
that gold silver ratio that Kai was just talking about, trading over 95 last night. It's 94 this morning. That's $1,000 per one lot.
Right. Big move.
Yeah, it's a big move.
On a product that used to move on a relationship between the two, $500 would be a big move. Now you're getting $1,000 move.
You're going to see some weird trade out of us for the next 2 days because Tony and I are both going away for the next 2 weeks.
I've lightened up on a lot of my positions.
I'm lightening up too. So if you're wondering why I'm not as aggressive, I'm definitely long. I've been bullish on Apple, so I'm definitely long Apple, and I've been bullish on bonds, so I'm definitely long bonds. But the rest of my positions are pretty much to do about nothing.
Mm-hmm.
I have crude oil and I have gold. I'm short gold. I'm short crude oil. I'm probably short a few of the indexes, but our deltas are pretty flat here. We have no earnings plays on. I'm short Meta. I'm short Microsoft. Long Apple, like I said. Long Boeing. I don't know about anything else that jumps off the screen at you.
No, and there's really no earnings for the rest of the week either.
Yeah. I am going away with almost 100 different positions on, but I'm pretty good at managing all my crap on the road. I just
gives you something to do too.
Gives me something to do.
Keeps you out of the sun a little bit.
Gives me a lot of excuses when my wife wants to do something. Like I
gotta watch my positions.
No, that doesn't work anymore.
She got wise to that one? That's a bad one. You want me to call you just to make sure? Is there any time you want me to call you? There's your bell, by the way. Your volume must be off. You want me to call you at some time?
Oh, my volume.
The day just to give you an out in case you need it?
I don't really need an out. I create plenty of outs on my own. I
have that skill set?
Yeah, I give us 24 to 48 hours together before, it's yeah.
Even the S&Ps are up 37. Let's see what the buckers are on the downside. Obviously,
you do get I can't believe I'm already sick of you. Don't you get that?
No, I don't.
Really? I feel like with you, I'd be saying that every 24 to 40 hours. I can't believe how sick of you I already am. I'm being realistic.
You're being honest. Being honest.
Being honest.
Right.
I don't know how she does it.
Well, I don't know. I sent you a Happy Father's Day note.
You did.
Best. Yeah, you're the best work
respond.
wife I think anybody could ever have.
I'm a good work wife.
Yeah. So
yeah.
You're not sick of me yet.
Yeah. No, I'm just a good person.
Oracle down $2 and change. Volatility products are leading the group, but you can see here, not that many stocks down over $1 here or so. So let's take a look at the upside. It's going to be pretty broad based. Meta up $20, Roku up $9 and change, Netflix up $7. RCL up $6.80, no longer going bankrupt. Carvana up almost $6. Tesla up almost $5. Reddit, we talked about this morning, up $4. PLTR up almost $4.
By the way, can I tell you how much I absolutely despise two stocks? Roblox. Put a chart up of Roblox for a second.
Sure.
RBLX.
Mm-hmm. Oof, I didn't get in the way of this.
Oof.
89 and change.
Oof. Oof is right.
Oof.
This is
99.83 is the high, Sadnov just made it this morning.
This is what I call redunculous.
Mm-hmm.
Okay. I think PLTR is the same thing. Just I don't want to. I'm going to roll up some puts right now and out of spite.
142 and change was the high. Just made it 142.11.
But this Roblox. Now, I am short call spreads and long put spreads in there, so I have every right to be
annoyed. Yeah, sure.
Upset.
I'm looking at the markets here. They're not that great. No volume.
Roblox sucks.
I'm sorry.
But I don't like it. It sucks.
Yeah.
But we've gotten to the point now where it is incredibly interesting. If you're interested in doing something, I mean, you just saw that. I mean, it's hyperbolic.
Yeah, hyperbolic. I still think you would use something with the defined risk.
Okay, so what do you want me to do?
Put spread 105.95, trading for around $5.
Well, I'm short the 105 call spread. Can I just sell that? Because I already have that on.
105 call spread?
I'm short the 105 call spread.
Yeah, you could do that too. Ivy Rank's only 24, so I was trying to go in a different direction.
205, 206, 207.
It's got earnings August 7th, so you're not concerned with that in July.
No, I'm not concerned with that.
Some odd days to go.
I mean, the earnings are obviously going to be great. Now I'm looking at this. I just put an order in to sell this. Now, this is how bad the markets are in there. I just put an order in to sell it at 206 because that came up as mid price, and now mid price is 185.
Mm-hmm.
So I have no idea what the price is. So I'm trying to do a little price discovery here.
Again, is the wide markets, which I talked about with you on the confirm and send just a moment ago. You gave me a little poo-poo. You didn't give me any kind of props here.
See, and there's no way that anybody would know. So I did a little price discovery to see, hey, where should I be filled?
Yeah, mid price was 199 a moment ago. Mid price is 214 right now, and you got filled at 203. So mid price, the natural bid is 180, 185. The natural offer is 215, 245. Now mid price is 204. There's no way to know.
There's no way to know. I have an offer in at 207, and
now the mid price is 179 when you got filled.
And I just got filled at 207.
207. 179.
Okay.
The mid price.
So I'm pretty good right now. I got my trades on for the day. Biggest loser so far is...
Trades on for the whole day? You're done?
No.
8:34. What do you think? You're going on vacation already?
No. Trades on in that particular stock.
Oh, I'm just listening to what you're saying. I should listen to what you're thinking.
What's wrong with you? All right, let's figure out what else do we got to do here.
What else do you have to do, Sadnov? What else do?
That's a damn good question. Biggest loser is Meta, and biggest winners are Apple, crude oil, natural gas.
Meta up $18. What happened here?
Gold. Google be Google.
Apple catching a bid up 46 cents. What a pig.
They're killing premium today, Mr. Batista.
They are killing it across the board. Yes.
They're myrtleizing it. And myrtleized, by the way, if you're new to Tasty, is one of our own words.
Well, it's been used since the 30s, but sure, if you want to say it's our own, sure, go right ahead.
Yeah. I know that because I'm short Qs and...
Because you know what it feels like to be myrtleized, that's why.
I'm short Qs and spiders, and we're up money in both of those categories.
Mm-hmm.
I will sell a little. All right, flat.
Wow.
You know how long it takes to get flat?
That was
about 3 seconds.
Yes.
You
traded Qs, SPY, Reddit, Roblox.
Yeah, I just rolled up puts all over the place. So now that you can crash and burn now, market, because you got me to roll up
puts.
Yeah. Got my deltas flat.
expiration week, Sadnov, what have you gotten your statistics yet for what the Thursday into Friday? Remember, you got a short week here too, right? We're closed on Thursday.
I do have the statistics. I will give them to you in 1 second. I got to go. Give me 1 second. Thursday into Friday.
Volatility by 96 cents now.
Yeah, hold on 1 second. I'll give them for you. Let's see. I have them. I hid them somewhere. June expiration. Are you ready?
Sure. Now this will be Wednesday into Friday morning's print.
That's correct. I have the last, thanks to one of our viewers, Brad, I have the last 27 years, which he said are very, very neutral.
Okay.
The last 7 years, though, have been incredibly bearish, 5 down and 2 up. The last 27 years have been 13 down and 14 up. The average down move is about $9. The average up move is about $10. And the average move's about $9.50. That's the last
nothing, yeah.
That's the last 27 years. The last 5 years, though, in 2024, down 1. In 2023, up 27. 2022, down 16. 2021, down 34. 2020, up 45. And the 2 years before that were basically unchanged, but small red.
So basically, if it doesn't move, it's going to move big.
No. Basically, even though they say 5 of the last 7 years are down, 3 of those down years were pretty much non-events. So 2 big ups and 2 big downs.
To put into perspective, you had a 22 handle move today.
Yeah, basically, bottom line here is not much.
Mm-hmm.
Not much. And I think when you think of the biggest move of them all was 2020, that's when we bounced off of the COVID lows. And then the biggest down move, 2022, that's when we were kind of in a bear market. So I would say that you don't really get a read off any of that stuff, but it's good to know.
Even the S&P's up 46 near their highs.
Yeah. So Tony and I go to London tomorrow. Go to London tomorrow night, and we do the show from London on Wednesday. So we will be doing regularly scheduled program on Wednesday. Thursday is a holiday, and then Friday. Who's doing our show Friday? John, who's doing our show Friday?
Mike and Nick.
What?
Mike and Nick.
Mike and Nick are doing the show Friday morning. Tony and I are actually going to do the show from London at 1:30 in the morning, Central Time. So if you're up really early and you need your fix, we're going to be on at 1:30 in the morning Central Time. We're going to be talking to customers, throughout Europe, and looking forward to that. But it'll be a start that is, instead of 7 o'clock start, it'll be 1:30 a.m. start. Mike and Nick will have our time slot. Everything else will be the same. And we'll be on with Angie and Rich, and we'll have some fun with those guys. And our show in London is Friday night during Triple Witching. So hopefully we'll create a lot of chaos is what I'm hoping for.
Let's try to do a little bit more of that right now with skinny on options.
Can you handle
abstract application? What's that?
Can you handle Dr. Jim this morning?
Nothing makes me happier on a Monday than having Dr. Nothing says Monday like Dr. Jim. So let's see what he has to say right after this. We'll be back in 90 seconds at Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried.
We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show.
I don't want you to buy me a Rico
Well, that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's.
I was going there when you were pooping yellow.
Oh my God.
I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You got to stop.
No, you know that's true. Sadnov, you know that's true.
God. There's not a chance.
My guys that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken Parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman, said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, "Well, thank you very much."
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny, since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She
that could do her
probably
grocery
needed
shopping.
somebody to reach the top shelf to get something
And she
to.
picked Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Nothing says Monday like my man, Dr. Jim. That's right, Mr. Monday. Slap you in the face just like that. How are you, Dr. Jim?
Man, what's going on? So, guys, you guys got to carry me today, man. Like, this is not a good day.
Oh, what's the matter?
This is not a good day. When you guys fly to London, can you please reroute the plane to go west instead of east so you can say hello to Rafael Devers in San Francisco? We just traded a future first ballot Hall of Famer to the San Francisco Giants yesterday. And we got back Tom Sosnoff and Tony Batista. Like, I don't understand what we're doing. Guys, help me out. What are we trying to do here? Like, what is the objective? Nobody trades away first ballot Hall of Famers quite like our Boston Red Sox. Mookie Betts, Chris Sale, and now Rafael Devers gone.
I'll stop for a second. I don't think Chris Sale's going in the Hall of Fame.
Are you serious? Of course he is. Wow.
I'm not sure about Rafael Devers either. But there were some weird trades this weekend in the NBA. What was it? 4 first-round draft picks for the kid from Memphis. I'm like, what the hell? What are people doing? Yeah, Rafael Devers. That was an interesting trade. But I mean,
haven't they learned from the Saints? Remember the
Yeah, but you know what? Sometimes
the Saints. What's up with the Saints?
When Mike Ditka traded he didn't trade. He traded all his draft picks for Ricky Williams.
Yeah.
but not.
I remember that. I remember that. Yeah. I remember that. Yeah.
It just didn't work out, is all I'm saying.
Well, Ricky Williams didn't work out because he was too high all the time.
Right.
Yeah.
He had a little bit of an issue. Dicka forgot to ask him about smoking pot before games.
I'll tell. So Rafael Devers has definitely got me in a bit of a funk. But let me tell you what doesn't have me in a funk. So over the weekend, so I got to enjoy some deep dish pizza from a little spot here in St. Pete that rivals Chicago pizza, guys. I was shocked. Now, when it came in the box, my boy told me, he's like, listen, dude, this is some of the best deep dish you've ever had. I'm like, hey, man, I was in Chicago
when you say it came in a box, you ordered it frozen or you had it there?
No, but hold on. No, well, yeah, when it came out of the microwave, I looked at it. I'm like, this is unbelievable. So I opened up the box, though. It was uncut, guys. It was uncut. That's how you know you're dealing with some pros.
All frozen pizza's uncut.
All right. Give me the name of this place. Give me the name.
Honestly, you are Monday. Your name should be Monday. All frozen pizzas uncut.
I'm just saying. Have you had the DiGiorno Supreme?
You may tell me about his degrees and everything else like that.
I want the name. What's the name of this place?
Cece's?
No. The name of this.
What's the name?
The name of this place is Cappy's. Cappy. Look it up, man.
Cappy.
I'm pretty sure the owners are from Chicago. Like they were born and raised.
Dude, the top looked disgusting.
I think they lived on Ravenswood.
Cappy's Pizza in Seminole Heights.
Well, there's a few locations, but I mean the main location is in Tampa, actually.
What,
like
did he tell you your hair looked good or something like that? Is that why you're giving this guy a little plug or something like that?
I get that. Tony, I get that so much now I can't keep track. He probably did.
Oh my God, this is like pan pizza for goys. This is
for the mullet crowd.
I can't believe you think that Crappy's Pizza is Cappy's. Sorry, I thought it said Crappy's. Oh my God,
Listen, so let me give you. So I gave Tony. So I have to be fair about this.
No. This doesn't fly.
No. Listen. I gave Tony the pecking order over the weekend. I'm gonna give it to you, Tom.
Go.
So this is. It's above Lou Malnati's. It's not even close.
No.
It's on par. It's on par with Art of Pizza, but it's a notch or two below Pequod's. So it's not quite up to Pequod's yet. But I mean,
I'm gonna send a text. I'm gonna send an email or text to my girl. Eat, Drink, and Be Mandy, because she's in Tampa and she does all the Tampa restaurants.
Dude, there you go. She knows what's up. Oh, 100%.
I'm gonna check. I'm gonna send her a message right now.
Oh, you guys are on. You guys are on a DM together?
No. But I'll send her a message and ask her if she can review this place, and I'll send you her review because she's Tampa based.
Let me know what she says.
Yeah, she's Tampa based.
Yeah.
Let me tell you what.
Yeah, there you go. That's it. I want the Cappy's HQ in Tampa.
I trust her. I don't trust you.
But remind me, because I can't keep track of you guys and your debates and college and blah 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 blah.
Yeah.
So which side of you was on the cut side and which side of you was on the uncut side? I can't remember.
It's not like a side. I like my pizza cut.
If you're gonna get it delivered, everybody misquotes me. If you're gonna get deep dish or pan pizza, even pan's a little less, but
whatever.
Deep dish for sure. If you're gonna get deep dish pizza delivered, it should not be cut.
Oh my God.
100%. That's what I'm saying.
Oh my God. So you have a big giant knife and you're gonna do it yourself?
Of course.
It's not that difficult.
It is. You need a good.
I know for a man like you, I know it's difficult, but it's not.
You need a big.
You have one. You had many sent to you.
I know. I have one, but it's in the other office. We have to go get it. It's like, I want one of those things. You need the big giant knife that cuts pizzas. You can't do it with like a. It's like
you mean a double handle guy? You need
double handle. Yeah, double handle.
Yeah.
But listen, Jim. Okay. When it comes to your taste in food, any kind of food, you don't even get a say. Okay.
You stick with me, man, and I'm gonna take you right to the top. I mean, I delivered in Charlotte. So I delivered in Charlotte just like Rafael Devers would deliver against the Yankees. Like when you needed somebody to step up clutch, who do you turn to as a Red Sox fan? Rafael Devers. Well, those days are gone. But if you need somebody to step up clutch when you're on the road and you need a restaurant recommendation, you look to Dr. Jim. And man, I took you to that place in Charlotte. It was phenomenal. It was absolutely phenomenal.
You know, he took us this. You weren't with us. He took us to this place in Charlotte.
God.
Let me tell you right now, on a scale of 1 to 10 in any other big city in America, it'd be out of business. Like, I mean, that's how bad the food was.
I think they are out of business now. I think they went buck. I think they went out in 2023.
Like his memory.
At least you're honest.
Like his memory is not that good. Like he's like, man, I used to come here when I was like teaching in college, and then we get there and I'm like, no. This is the last time you're ever picking a place.
Well, Cappy's is where it's at, guys. So don't you worry. Like whenever the
I'm
road
talking
show
to my
leaves,
girl. I'm going to
Tampa,
find out what she says about crappies.
You let me know. You let me know. All right, let's do some finance.
Yeah.
Because I got to go watch some Rafael Devers highlights to cleanse my palate. All right, guys, are you ready?
Sure.
When every option becomes an at-the-money option. Tony, I think I actually heard you say this the first time many years ago. Now, I might be misquoting you again. I'm not sure. But I think I heard you've said before, when volatility increases, every option becomes an at-the-money option. Is that your line?
When volatility increases during.
It's correct, by the way, and I'm going to talk about why it's correct.
I know. Yeah, I said that there are many more at-the-money options than normal when volatility is high, because usually you're going to look at the, wrapped around at the money and consider it at the money. When volatility is high, that spread gets so much wider. It could double or triple. I mean, there could be 2, 4, 6, 8 options that are considered at the money that have 45 to 55 plus deltas being at the money. Yes, so that was me.
Yep, that's 100% right. And we're gonna walk through the math as to why that is the case. Tom, do you have a response yet? It looks like you got something.
I found it. Eat, Drink, and Be Mandy's got Crappy's Pizza. She's reviewing it already.
Oh, really?
Yeah.
Oh, okay.
Wait,
okay.
She's reviewing it already? What do you mean?
She's already done a review on this place.
We'll let you know on the break.
Okay.
I mean,
we'll let you know what she says.
Yeah. I'll tweet it out.
She's done a review.
I kind of want to know now. Secrets don't make friends. Like, I need to defend my place.
No,
live.
It looks like
you guys misrepresenting me in the market measures.
We'll play it later. I'll send it to you. It looks like she likes it, but again, she's from Tampa.
Okay. Anyway, when every option becomes an at-the-money option. All right, so let's talk about the math as to why this is correct. So here we go. A large chunk of our daily analysis is spent on the Greeks that are output from the Black-Scholes option pricing model. Obviously, we do this every day. And of special interest to us is how changes in implied volatility might impact the Greeks that we analyze. So today, we're going to explore how changes in implied volatility impact delta, which in turn can alter the entire option chain. Because that's essentially what we're talking about here, right? When volatility changes, if we're going to be talking about the moneyness of an option, whether it becomes more at the money or less at the money, whatever, we want to know the change that the implied volatility has had on delta. And so that's what we want to focus on. So John, hit us here on the next slide. And so what we're going to be focusing on today is a second level Greek called Vanna. The Greek that shows how delta changes when implied volatility changes is called Vanna. Now, as you can see, the actual equation for the derivative of the Black-Scholes option pricing model, first with respect to price, that's delta, then with respect to implied volatility, that's Vanna. It's quite complicated. There's a lot of things happening here. But as you actually kind of lift up the hood and kind of take a look at what's going on, what's really fascinating is to figure out why more options become at-the-money options when implied volatility increases. It all lies in that last term. Like, it's all kind of housed in the final term of that equation. Similar to this weekend, like when the deep dish pizza arrived, I'm like, all that matters right now is when I open this box, is it cut or is it uncut? Because if it's cut, like, I know I'm dealing with amateurs. Like, I know I'm dealing with, I'm dealing with a DiGiorno crowd. But I saw the uncut and I was like, this is where it's at. Tom, you know what I'm saying? Tony knows what I'm saying.
I know what you're saying.
And so, that's right. So the final term in this equation, if the final term is positive, that leads to a positive Vanna. Now, we're going to talk about what that specifically means here in a second. But if the final term alone is positive, you can kind of forget about the rest of the equation. The rest of the equation is obviously, it matters for the magnitude of the Vanna. But in terms of the sign is all that matters in determining what the impact is going to be on the option chain when volatility changes. Positive term, positive Vanna. Negative term, negative Vanna. All right, John, here's here on the next slide. So this is where it begins to get really interesting for us, and this is how we can begin to use this. the impact on calls and puts. Now, before I work through each one of these 4 little boxes that we have here, because I want to talk about out of the money calls, out of the money puts, in the money calls, and in the money puts. The main thing you need to remember here is that if Vanna is positive, it's going to have a positive relationship with the delta on that option, meaning they're going to move together with changes in volatility. If volatility goes up, delta is going to go up. If volatility goes down, delta is going to go down. If Vanna is negative, there's going to be an inverse relationship between volatility and delta. So volatility up, delta down. Volatility down, delta up. So let's work through each one of these 4 boxes. So an out of the money call, the final term is positive. So that means you have a positive delta. A positive Vanna, I should say. So what that means is, again, volatility and delta are going to move together. So if volatility increases, the delta increases. And then if you have an out of the money put, the final term is actually negative. So the final term is negative, the Vanna is negative, you now have an inverse relationship. An increase in volatility is going to lead to a decrease in delta. Now, let's go to the right-hand side, the in-the-money options. In the money call, final term is negative, Vanna is negative, volatility increases, delta decreases, again, the inverse relationship. And then in the money put, final term is positive, Vanna is positive, volatility increase, delta increase. Tom, did you know all this? Is all of this internalized? Yes, it's all just, I mean, it's oozing from your pores, right?
Yes.
I mean, this is what you traded this morning, right?
He actually invented this.
I did not invent this. When you say this is what I traded this morning, I haven't really opened any trades this morning other than selling some puts in the ZN. Everything else I did this morning was an adjustment. Oh yeah, I sold some call spreads in Roblox. That's it. RBLX.
Well, I heard you were getting myrtleized again. This is the second straight Monday of myrtleization for you.
No, actually, he has a positive P&L. Don't listen.
No. My P&L is good today. Because the volatility expansion on Friday took some money away, and they give it back today.
Yeah. Mm-hmm.
Yeah, the market giveth and the market taketh away, and the market giveth back.
Yeah, I'm pretty much at the mercy of volatility most days. When it contracts, I pretty much make money, and when it expands, I pretty much lose money.
Right. Yeah.
I mean, it's almost like you're a volatility trader. It's almost like you're selling premium with high volatility.
Almost like that.
So it's almost like this Vanna stuff might be important for you because this is showing you how changes in implied volatility are going to impact the deltas across the chain.
Well, I just told you how they impact it. When it's up, I lose. When it's down, I win.
That's right. No, but I'm just saying, I know you're going to spend most of your day watching Rafael Devers highlights.
I make.
Yeah, there you go. All right, so what does this mean, though? How can we use this? All right, John, hit us here on the next slide, because I actually am going to be watching Rafael Devers highlights today. So when volatility increases, the Vanna of the option causes out-of-the-money deltas to increase and in-the-money deltas to decrease. Thus, here's what all of this means. All the math and the boxes and the myrtleization, it all comes down to this. The deltas across the option chain, they flatten out. They flatten out. This is what it means when volatility increases, every option becomes an at-the-money option, which, of course, is a bit of a hyperbole because you're still going to have out-of-the-money options and in-the-money options. But it's exactly like what Tony said when we kicked off the segment. He just said, yeah, when volatility is high, I see more options within that 45 to 55 delta range. That's 100% right. And here's the reason why. When you have an out-of-the-money option, call or put, it doesn't matter, the delta is going to increase if volatility increases. So if you think about that from a probabilistic standpoint, that just means there's a higher probability that that option eventually moves in the money. That actually makes intuitive sense because now you have higher volatility, bigger moves. There's a greater likelihood that the moneyness of that option will flip from out of the money to in the money. Similarly, on the other side of the fence, the same thing is true. If you have an in the money option, a call or a put, it doesn't matter. The delta is going to be 70 or 80 or 60, whatever. If volatility increases, those deltas actually drop. So those deltas go down because now there's a greater chance that those guys flip from in the money to out of the money. And so this explains why, if we get the VIX back to, 25 or 28, when you look at an option chain in Roblox or Chipotle or whatever, you're going to see more at-the-money options than you would otherwise. And this is the reason why it's all kind of lying underneath the surface with this Vanna calculation in the option pricing model.
Sosnoff, say something profound for Dr. Jim.
It is. No, I mean, it's interesting. I don't think about things that way. Are you watching this crude oil move?
Yeah, I'm looking at it right now. Crude oil down $3.13.
Wild.
Everything's done, Sosnoff. Everything moves faster.
I mean, it's wild. I mean, I've been short crude oil. I'm just saying it's freaking wild. But the deltas
What's it down to?
68. It dropped $3 just now.
Wow. Yeah, that's a big move.
Look at this gold move. Same thing.
Yeah, gold down $39. Much less of a move. I mean, more of a normal move in gold than you would say in oil, right? I mean, oil's down almost 4.5% right now. It was up almost 4%.
Yeah, I'm just rolling down calls to stay. I want to stay on the short side of everything. It's not that easy.
Markets move and things change, man.
Damn straight, but
man, that's some crazy stuff.
Yeah. Sorry, Jim. Go
All
ahead.
right, so let's get him. No, you're good. Let's get him a few takeaways. I mean, that's it. I mean, this is the math. This is it. You know, I mean, you've got your Vanna underneath the option pricing model. You've got your uncut deep dish in St. Pete. Like, I don't know what more you need from me. Like, I've pretty much. I mean, I've overperformed.
It's deep dish is not. It's pan pizza.
Yeah, it's pan.
I know they may even call it deep dish. I looked at your silly site. They sell New York style and they sell Chicago style. They have no idea what they want to be. They just want to get. And your pizza didn't look anything like Mandy's pizza. So Mandy's pizza must have been done a long time ago. It looks like yours is pan pizza. I'm not gonna say what it tastes like. Obviously, I haven't had it.
Looks like duty.
Well, I'll tell you what, duty calls. I got to watch these Rafael Devers highlights. So we lean on the Greeks every single day to help make trades and adjust our positions. And Vanna is one of the higher order Greeks that helps us better understand the dynamics of Delta. And it also illustrates what is meant by every option becomes an at-the-money option when volatility increases.
Kidoki.
Yeah, it's a good piece.
So don't forget, you guys got to reroute the plane. Go over to San Francisco. Just say hi to him. Just say we're still thinking about him. We really miss him. Maybe he'll come back, and that kind of stuff.
He ain't coming back.
No, probably not.
Are you ready to take a quick 90-second break? Even the S&P is up 65. Not even the whole story. The NASDAQ has taken over as the leader in the clubhouse, up 305.
Bonds rallied, up 5.
Bonds rallied. You are correct. 113.
Russell has not moved, unfortunately. Russell's stuck in the mud here.
Russell is stuck in the mud. Still up 1%.
This is a crude oil move. It's just down 3. Now it's down 250. It's moving all over the place. VIX down big too, down $2.
You ready to take a quick 90-second break?
Yeah, which is 10%. Yep, sure.
Good job with you, Mr. Pan Pizza. We'll be back in 90 seconds with a market measure.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want can't fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this market measure. Sounds not sponsored by the CBOE.
Yeah, we got a lot of stuff. We got a lot of stuff going on. You want to tell people what we're doing next?
Sure. We're going to take your phone calls, 855-238-2789 or 855-BE-TASTY. Light them up. Phone lines are open. I got 4 or 5 lines open. We'll do it just around the bottom of the hour. Nothing's off limits. We would love to hear from you. Give us a call.
Yeah, we got Scott out for another week, so he'll be back before Tony and I get back. So he'll be back with Mike and Nick and Liz and Jenny, who's ever doing the show, and he'll be back next week. You know, so I had to go look up, because of all Dr. Jim's, yakking, I had to go look up my girl Mandy, who's a food critic in Tampa, who I don't really know. I just follow on TikTok, and because she's good. And she liked his pizza.
She's good. You like a lot of things that she likes. She eats a lot of fast food stuff, right?
I mean, she just does funny reviews. They're good.
Yeah.
She's always nice. She's not like a mean reviewer.
Okay.
I don't
reviewers. Follow her.
I got mean reviewers too. Some of the mean reviewers are really funny.
Her pizza didn't look anything like his pizza. I'm gonna say that right now.
But she's a local Tampa. She's not gonna rain on any local restaurants because it's not her thing. So I'll give, but Dr. Jim has the worst food taste I've ever met of anybody in anything. I mean, he's like, I would call him like middle America, but he's not even, I'm not sure. Like Bojangles is his favorite restaurant. Bojangles, what's the other place?
Favorite biscuit, the Bowberry biscuit.
No, what's his favorite restaurant? Bonefish is his favorite restaurant. Right. Dr. Jim's scary. Anyway, the Bat and I are leaving tomorrow on a jet plane.
We're leaving on a jet plane.
Leaving on a jet plane, yes. And we're heading to London, and we'll be there all week until we finish our show on Friday night, which will end late Friday night or midday Chicago time. But we'll be at Earth H in London this Friday, and it's Triple Witching. It's June 20th, Triple Witching. We can't wait. Doors open at 5. Show starts at 6. It is pretty much all full, but we still have some. Actually, we have a little bit of space left. We haven't shut it down yet, so we would love to see you because it's Friday night in London. Probably traffic is, in my opinion, it's the worst traffic city in the world to get anywhere.
That
It's
doesn't bode
unbelievable.
well for somebody who's.
Well, nobody there drives, so thank God.
Then why is traffic so bad if nobody?
I don't know. Because there's people like me that take a cab. I don't know.
Okay.
I'm still trying to figure out London, and I've spent 8 months of my life in London, and I still can't figure out the whole city. But doors open at 5. Show starts at 6. It's an amazing venue. It's going to be a fun show. It's the Bat, myself, Rich McDonald will be there. Ange will be there from our show over there. Also, Craig and Vince will be there from the SIBO and the CME. So we got a whole gang out there. It's going to be awesome. And we're going to cover lots of different topics. We're going to trade as much stuff as we can. And we're going to be absolutely all over the place. And can't wait to see you guys on Friday night at Earth in Hackney, London.
I'll be there.
Said I can't wait to see them. I can. If I didn't see you, I'd be fine. Tony's not going on vacation with me the week after that, thank God. So he's going to be with his own family, his real family.
Your wife keeps texting me, asking me to come. Can I please come? Can I please come? I mean,
maybe that's the case, but I don't need you there. And I'm going to be hanging out with Michael Jordan, just so you know.
I know. I hope he's still there. still there.
So I'd rather hang out with him.
I hope he has a noodle for you.
I'll ask. Anyway, we're looking forward to this trip. Friday night's going to be London, and then the following Monday is going to be Milan with Rich, Dylan, myself, Andrea. It's going to be, we're going to do this show, have it translated. It should be an amazing event in Milan. We've never done an event there before. We're curious to see if, how big the Tasty audience is in Milan. It's a cool city. There's lots of option traders in Italy. Let's see how it goes.
No bait and switch, Sosnoff. I won't be there, but you've got Rich McDonald and your other boyfriend, Dylan Radigan. That
we got plenty of talent.
Place of just me.
We got plenty of talent.
Right.
We'll be at a place called Fabrique in Milan. I don't know a lot about Milan. I've only been there twice, and both times I got lost. Once I tried to drive out of Milan, and it took me, this is before there was like.
So you continue to make stupid mistakes, don't you? I mean, you tried to drive in London, you tried to drive in Milan.
No, I didn't try to drive in Milan. When we were,
you just said I tried to drive.
I tried to drive out of Milan. So I was there with my wife. We were there.
So you were driving in Milan?
No. So I was there with my wife. We were there for a couple of days. We flew in, and then we had plans. We were going to drive down through Tuscany, go to whatever, and Tuscany, Florence, Siena, and then end up wherever.
Over to Tuscany.
So anyway, so the last day we were there, we rented a car to leave, to drive, through the country.
You were driving in Milan. You would be the best witness in the witness protection
I never had a
program,
car
until
I left Milan. When I left Milan, I rented a car, and then
I rented a car in Rome and drove down to Positano. It was easy. I had a great
trip. It's about you. Does everything have to be about you? So I rented a car.
I am a pseudo-only child.
This is before they had GPS, really. I didn't have GPS, so I had a map.
Yeah, I had a map too.
I had a map.
Yeah.
Getting out of Milan with a map and
map a peck of cools.
Oh my God. I remember my wife started to look at the map. She's like, I don't speak Italian,
Oof, I don't speak Italian. I don't read.
I don't read Italian.
Oh my God. She's just like you? I can't be, no. You're just giving her a bad representation, but go ahead.
Like 3 hours later, we finally make it out of Milan. somewhere, but a big city.
I like to get lost with your wife for 3 hours.
Anyway, Fabrique, Milan. We'll see you there Monday night. And then that's it for me. Tuesday, I go on vacation for a couple days. All right.
Chances we get to see the hot dog legs again. From you. I mean,
You want to see my legs?
The hot dog legs, you take the picture on the boat, the hot dog legs. Is there any?
I'm not going to show you my legs. You've hurt me now. And I don't feel like.
Impossible.
I don't feel it's appropriate.
Impossible. I wish it was.
I don't feel it's appropriate.
Even the S&P's up 68, so nothing.
Yeah, they've been kind of.
I didn't have that in your cards. No way.
No. I didn't have that. But I also, I wasn't short. I mean, I'm just short.
I know.
I was short Meta, and that sucks. And I'm short Microsoft.
Yeah, but you had long Delta and Apple, so that's helped you.
But I'm long Delta and Apple.
Yeah, Apple up $1.47 now.
Yeah, Apple's been good.
Not too much down, so what are the airlines doing? Because they got hurt the most.
Down stuff. Let's take a look.
UAL's up $3.73.
Yeah, I don't have any stocks down except UNH on my screen. That's it.
And UNH was catching a little bit of a bid, wasn't it? Yeah, it's 3.
Yeah, it's on the high end of its range. Don't have much that's down.
Meta up 19, Microsoft up 5.
Yeah, my Meta call looks like a little premature.
Anyway, let's go. Market Measure sponsored by the SIBO. Then we're going to your phone calls, 855-238-2789 or 855-BE-TASTY, the bottom of the hour.
Yes, beautiful. Selling in the money puts versus covered calls. Selling in the money puts versus covered calls. What do you think?
I mean, if you're using the same strike, it's going to be put call parity. It's going to be the same exact thing. I mean, within pennies of each.
If you're using the same strike, they're going to be the same thing. But
So
when
because when you say in the money, like I'm usually with a covered call, I'm usually going at 30 delta. I mean, if you're going at 50 delta on a covered call and you're going with an in the money put of like 70 delta, then the in the money put's probably going to be better.
we do get a lot of questions from viewers that ask about, why should I do a covered call? Why don't I just sell an in the money put?
It's the same thing. It's the same thing. If there's a dividend,
Okay, let me rephrase the question. If you found a stock that you like,
I would usually do a covered call. I would not sell an in the money put.
Okay.
But I
Why?
think they're the same. Probably habit of just always doing it that way.
Isn't selling an in the money put require less capital?
Yeah, probably. Yeah.
So I think the advantage of selling an in the money put over
Plus
covered.
it's one click versus two. I mean,
I think the advantage of selling an in the money put over covered call is less capital, better fills.
Yeah.
I think the P&L advantage of a in the money put versus a covered call is virtually nil.
Yeah.
Nil.
Yeah.
They're going to be exactly the same because they are synthetically the exact same trade. Now, what if you had the choice of selling a put or buying stock, selling a call, but they weren't the same strike?
Then I would probably default to selling the put just because it has a higher probability of success. I know I could make more money with the covered call, but because it has more delta to begin with. I mean, I'm usually a 30-ish delta to 50-ish delta guy, where a covered call, I'm usually selling a call that has around a 30-ish delta. That leaves me 70 long delta. So if I'm more bullish, I usually go to a covered call. If I'm more neutral to bullish, I usually go to naked put.
I find myself to be pretty much the same way.
Mm-hmm.
Okay. Let's go next slide. So in the past, we discussed the similarities between a short put and a covered call and showed how to use the delta of a short put and the covered call to create a positional equivalency between the strategies. Now let's do a back test of a covered call and an in-the-money short put to see how well the theoretical equivalence holds over time. Now, as Tony and I said, the theoretical equivalence to us is going to be almost perfect.
Sure.
Because synthetically, these are virtually the same things. But This is not to be confused with the choice that you can make between doing a covered call on a stock that you like, which gives you a little bit more upside, and selling an out of the money put, which gives you a higher probability of profit and uses less capital. Those are two choices you can still make. And our preference there is to use the short put. Here, our preference doesn't matter. Maybe it's either way. We usually do the covered call, but maybe we would do the, in the money put. We don't usually do that. Let's go next slide. So we did a study and we sold a 70 delta put and versus buying 100 shares of stock and selling the 30 delta call.
I mean, this is going to show almost identical results. Matter of fact, what you're going to see here is the slippage between the two, like from the study set.
Let's go to the next slide. The results differ by a small amount, which over the past 10 years, which shows the strategies are equivalent in practice as well. The slight differences in actual P&L are not due to differences in exposure.
Yeah, there you
so
go.
You can see here. There you go.
Yeah.
Just because a lot of people ask this question. Covered call 70%, short of the money put 71%. That's really doesn't. These numbers are exactly the same.
Yes, they're exactly.
The average P&L per trade, virtually the same. The largest loss, virtually the exact same.
Mm-hmm.
Okay, they're absolutely within pennies of each other.
Yeah, I think the difference you're seeing here on that extra small profit of $9 on the short in the money put that it gives you in the extra 1% is the markets being wide and mid-price. Maybe, over this study has a difference of $9 where the stock, which we're looking at SPY, penny wide usually, and the 30 delta call, penny wide usually, has much less slippage between the two. So that's the difference, I believe.
Okay, let's go to the next slide. Data-prone differences in P&L mean that in practice, as traders, we can generally safely ignore the differences as opposed to accepting some fundamental difference in strategy. In other words, if you realistically trade these two strategies side by side, the actual difference you will see in your results is almost imperceptible.
First time I'm seeing that word.
First time I've ever seen that word used.
I haven't
in a
looked it up.
sentence.
I'm not going to lie.
What is the Latin definition, please? Imperceptible. Yes, the actual difference you'll see in your results will be almost impossible to see or perceive.
Mm-hmm.
Let's go next slide. So some of the takeaways. Theoretically and practically, selling an in-the-money put is equivalent to selling covered calls on a stock that you own. Yes. In this segment, we are using equivalent to refer to the risk and return of a strategy or how it performs over time. There may be some differences between strategies when it comes to management and capital usage. Yes, all this is correct if you're selling a 70 delta put or if you're buying stock and selling a 30 delta call. However, what we usually do when it comes to covered calls versus short puts is we buy stock and sell, let's say, a 30 or 35 delta call or 25 delta call, whatever you want, or we sell an out of the money put, not a 70 delta put,
right,
but we usually sell a 30 or 35 delta put.
Right.
What that does is the put gives you a higher probability of profit and requires less capital versus the call side, which you can make a little bit more money on.
That's right.
That's your choice.
Good job. Good job out of you. Good job out of the team. And I need a good job out of you out there. 855-238-2789 or 855-BE-TASTY. Light them up. I got 4 or 5 lines open. Love to hear from you. Faster you call in, the faster I can make him be quiet. We can get to your questions. We'll take a quick 90-second break and come back. We got more Tasty Live with your phone calls next. 855-238-2789 or 855-BE-TASTY.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television.
Skinny waist,
Body yada yada
face,
yada
big bang,
yada
blah,
yada
blah.
yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, stay a while. Take your jacket off.
No. I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
do that.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes.
Never do.
How do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short. This is moving so fast, and I like it.
Yeah.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Damn.
Wow. Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back back, my friend. You know what that means. Time for a little bit more Tasty Live from you, our viewers. I need you to call in. The number is below, 855-238-2789 or 855-BE-TASTY. See what it says, call Tom and Tony right there? Give us a buzz. We'd love to hear from you. We've got about 4 or 5 lines open. So while we wait for those calls to come in, I do see you, Wisconsin. I'll get to you in just a moment here. Even the S&Ps are up 73.50, Sadnov, trading near their highs, just a skosh under their highs of, 1 point right there. NASDAQ up 334. That should lead in the clubhouse by 1.5%. Russell up 28 or so, up 1.3%. Everything's up a little over 1.25%. Dow up 590. Volatility in by a massive $1.51. That's a 7% move to the downside, back to 2015, flirting with going under 20 to 20.05. All's good again, Sadnov. The water's fine. Bonds are up 8. Gold is down 42 now, flirting with going under 3,400. Just rallied a little bit to 34.10. Still down 1.25%. Oil back down $3. It was up over $3 last night, down 4.5%. It was up 4.5% last night. Oil down $3 and change. Sadnov, there'll be no movement in the pumps. Believe me, they jacked them up and then they'll slowly bring them down. 855-238-2789 or 855-BE-TASTY. We'll go straight to your phone call, so please light them up. I see Wisconsin. I see Nashville. I still got 3 or 4 lines open. Love to hear from you. Mark in Wisconsin. Mark in Wisconsin. What's up, my man?
Hey, guys. Great show as always.
Thank you.
Tony, I commend you on putting together the swing set. In fact, if and when I have grandkids someday, I may need to contract you to come up and build a swing set.
You got it, my man. You got it. I'm looking for a career after this career, one that I can just enjoy the solitude of myself, not having to correct somebody all day long. Has gotten tiresome over the last 14 or 15 years. So I might look at, did you like my grandson is standing right there to my left in the picture. That's my grandson who I made the swing set for.
Awesome. So I did have a more serious question. So recently I'm seeing more of these income strategies, ETFs. These are the ones that pay the monthly dividends, like off a particular stock like Tesla, MSTR, and Plantier.
Mm-hmm.
And it's my understanding it's a covered call strategy that focuses on one stock. Just the yields on that is pretty unbelievable. I guess the question is what are your thoughts on, is that something that is sustainable, or is it something you just wouldn't even touch with a 10-foot pole?
Well, let's here. You tell me if you didn't know what the stock was, just for a quick second. I just went with the Tesla one because you mentioned it. I'm looking at TSLY. I'm going to put it up on the screen here for you. It pays a 40-cent dividend, which is gives you about a 58% yearly dividend here. So here's the stock just from this year. I'm just going from this year. It started around $16. It's about $8.50. I guess if you factor in those dividends, you're still well under what you could have done just looking at Tesla itself. And again, maybe this is not a good example. Maybe there are other better ones. Tesla's more mid-range, 330, got as high as 450. The only advantageous thing about TSLY would be that it's much lower priced. But for me, you can do a lot better just doing a covered call for yourself. Maybe Tesla's going to be out of your reach because it's a $330 stock, but there are other dividend-paying stocks that are a lot more steady than this. Sadnov, what's your take on it?
Well, I think the way you have to look at it, Mark, is that everything
it's a
is
monthly
just,
dividend, by the way.
No, I understand.
50 cents over the last 6 months. That was
it's a pure bullish play. I mean, if you're super bullish in Tesla and you don't want to do it yourself, sure, go ahead. All of these things they're all pure bullish plays. The last time we saw this kind of a product was the end of 2007, early 2008, but they were all closed-end mutual funds doing virtually the same thing, all these covered call strategies. They weren't individual stocks. They were more like, sectors and stuff. But there was like 150 of them. And by 2009, there were 0. So they had all gone out of business. Listen, anytime you get anytime you get a rate that is some multiple of risk-free rates that's that high, obviously you're in a decent stage in a very explosive market. And how long does it last? I don't know the answer.
Now the 50-cent dividend, the one that we looked at for Tesla, TSLY, I'm going to give you the flip side of this now. So that would have given you $3 in dividends coming in, and the stock's down $8. So that would have been a net $5 loser. Just quick math off the top. Now I'll give you another one. BITO started the year closer to 24, and it's 21.5. And it pays the same type of dividend, 56%. It's a $1 dividend, so you would add $6 worth of dividends there. I'll count June in there. So you're ahead.
But there's still a lot of risk in all these things.
There's a huge amount of risk in them. But that one you're ahead. The other one you were not ahead. So it really comes down to being bullish on the product and getting the direction right. I guess that's the point I was trying to make. I tried to find 2 different ETFs with the same amount of dividend on a percentage basis between the 2. Pick your poison. One works out great, the other one doesn't. Matter of fact, if you looked at BITO in April, the beginning of April, you would have been behind the 8 ball. If you did it in April, you're really way ahead. So again, it's all about being bullish in the product.
Yeah, that makes sense. I guess from what Tom was saying, eventually, if we have a serious downturn in the market, you could see a lot of these ETFs go away.
That's correct. Now, you could do a covered call in them, too, instead of just outright buying them. That would help you a little bit, right. Maybe get you to almost even in TSLY, which was directionally wrong, and get you way ahead of the curve in BITO. So, again, I think it comes down to the strategy, too. If you can do something in there, I think you're going to want to use options with it, too. That's just my take on it.
Well, awesome advice, guys. Thanks.
You got it, Mark.
Good luck in overseas. Show them how the Americans do it. Okay, guys?
You got it, brother. Thank you so much for your time. Appreciate it. And listen, that's not my advice. That's just how I would trade them. Nashville. I got George in Nashville. Thanks so much for calling in. I got 3 or 4 lines open. Give us a buzz.
Yeah, my pleasure. Can you hear me?
Yes, sure. Got you good.
Oh, okay. So just 3 little quick things, and then I'll get to my trading question. A, Tony, I understand your frustration with correcting people. I spent 26 years as a Chicago policeman correcting people's behavior, including my own. 2, I just finished 10 days in the United Kingdom. I flew the 787 round trip from Heathrow. That airport has improved 1,000,000% over the last 5-8 years.
Awesome.
And pre-time, we crossed paths because I live 15 minutes from Franklin. But anyway, my question goes to today's option was, were you selling the 70 Delta put?
Mm-hmm.
I guess I was looking at, if you sell the 50 Delta put, you get double the extrinsic value.
Okay.
And I don't know, it just seemed to me it'd be easier to make profit quicker, or am I wrong?
Well, if volatility contracts and you sell the 50 Delta put versus doing a covered call with buying the stock and selling the 30 Delta call, even though you're starting with 70 Delta on the buying the call, buying the stock, selling the call, and you're only starting with 50 Delta, 50 long Delta by selling the put, I would agree with you. If volatility contracts quickly, you'll have more profit in a shorter term period with the naked put than you would with the covered call, even though you have more delta there. But I still think, and I think the math would show that, since you have more delta on the covered call, if the stock were to have a sustained rally, you'll make more money eventually on the covered call than you would the naked put. But I think in theory, if you're going to look at the naked put at 50 delta versus the covered call in a high volatility bullish scenario, I like your selling the naked put than I do the covered call. Going to use less buying power, and I think, like you said, if volatility contracts quicker, you'll make more money. Covering at 21 days, we never go really into get that extra kind of oomph to hold the covered call. So I agree with you, sir. I think you're watching it right.
Okay. All right. Thanks, guys. I really appreciate it.
You got
Enjoy
it,
your
man.
trip.
You got it. Good luck.
787 was a great flight.
Thank you. Appreciate it, man. Appreciate your time. That was good info on Europe too. Appreciate it. We're gonna go to Orange County, California. Sadnoff, I got Sammy. Sammy, what's up?
Hi guys. I hope you're doing well. Looking at, it's actually been a pretty decent and great week with a lot of reversals today and profits coming in or unrealized gains for myself coming in on crude oil, bonds, and notes. As we head into Wednesday with the FOMC meeting, any thoughts from you guys in terms of trades? Personally, I'm still selling puts. I'm long on notes and bonds, and that's the position I'd like to maintain or keep. But curious what your guys' thoughts are.
Sure. I'll go first so you can have the correct answer, and then Tom can go immediately following me. I said, 6,100 was in the cards. We're 6101.02 right now. I think you could start lightening up a little bit on the market. I don't care if it's Wednesday or whatever for the news or anything else like that. I think that you should be looking to lighten up a little bit on position, especially if you listen to the bat and carried some delta to this lofty number of 6,100. I don't think we're going anywhere down to the downside, but I think volatility probably uptick a little bit here. We've seen a little bit of volatility contraction a little too quick, which would mean if we have volatility expansion, then the market's going a little bit lower. Tom is going away for almost 2 weeks. We usually have a nice whippy market in those times. I think you can have the same thing that you've had moving forward. So for those factors, that's the way I would.
Yeah.
Sosnoff?
I think your question was more about bonds and notes than it was broad market, right?
Right. But I actually see Tony's point of view because volatility, no one holds a crystal ball, but it's interesting to see how vol has contracted today so quickly.
Oh, yeah. I think, it also got pumped up kind of artificially not artificially, it got pumped up on Friday. But I'm gonna agree with them in the sense that it's probably, I'm not lightening up on my short vol positions. I will say that. I'm keeping all my short vol because A, we don't have a ton of it, and B, I think this is just the infancy of the potential vol contraction here. And I'm also, like you, my biggest position over the next couple of days is just going to be short puts in the bonds and the notes. I'm going to hold on to that as well. I'd like to see the bonds get up over 114. They tried to sell them off this morning. They didn't do a very good job. They're back up a little bit. I'd like to see them up over 114, maybe 114 and a half, where we can maybe take some profits this week. And as far as premium goes, I think you just have to be short it. Delta in the market, I'm not getting short today, that's for sure, but maybe midweek.
Right.
Maybe midweek.
Yeah.
Today's just too strong. It's early, but the market's strong. Volatility's weak. I'm not going to sell into this thing today. I'm going to give it a little bit here.
And I'm the world's worst commodity trader, so I can't comment on bonds.
No, as very balanced perspectives, I kind of figured keep my unrealized gains now and see how the delta plays out, how volatility expands or plays out in the coming days, and go from there.
Yeah, sure. You should. That's a good approach.
Thanks, Tom. Thanks, Tony, guys. Thanks you. And have safe travels, Tom.
Yeah, appreciate it. Thanks.
I'm going away too. You can say safe travels to me too. I'm the one that has to carry his bags. We're going to go to Texas. I got Eddie. Eddie in Texas. What's up?
Guys, I just got one question for you. Have you guys ever looked at one specific metric in market measures, which is the percentage of days in a trade that a trader can expect to be green on, say, a strangle on 45 days out?
Yes, we've done a couple. Yeah, Eddie, we've done a couple on that. You'll have to look in the archives or drop a note to our research team to find out, exactly which study. But in the last couple of years, we've probably done that study or versions of that study like 2 or 3 times.
Yeah. And
yeah. We've shown basically, how often you're going to have a negative P&L, like average right out of the chute, how often you're going to have a positive P&L, what time, at what level during the life cycle of the trade, what's the likelihood it comes back from negative to positive, what's all of those statistics. Yeah, we've done them all.
Okay, I'll look a little deeper. Thank you, guys.
Say it again.
Say it again, Eddie.
I'll just keep looking. Thank you.
Sure. Thanks,
Awesome.
man.
Thank you. Appreciate it, man. We're going to go to Bulgaria, Sosnov, Bulgaria. I've never been. Ross in Bulgaria. What's up?
Hey, guys. How we doing?
Good, man. How about you?
Yeah, all good. Thank you very much for taking my call again.
Sure.
Thanks, man.
So I'm still ingesting the tasting methodology, and I have a few questions on strangles, as I've been getting really hammered lately on them. I put one in Lulu, put one in Oracle and CL, and those were outliers, I think. So currently I've rolled my CL strangle, and I think I've made it too tight. It's rolled both in time to August, and it's now at 68.72. So I was wondering, when I put myself in such a position, what would you guys suggest as how to proceed with this trade and how to protect for eventual huge up move in relation to the geopolitical risks?
So hold on a second. You're in August 15 options?
Yeah. Yeah.
So remember, that future's trading 67, not 68 and a half.
What I would do, Ross, anyway, because you're too tight and there's too much time to go, I would buy back your strangle and recenter it. You could do it as a single trade on Tasty. You just you buy back your 2 short strikes and you just recenter.
I'm just going to use any strikes here.
Yeah, you can just use any strike.
Something like this.
Because the volatility is so high in there, I just buy back what you have and recenter to 2 new strikes, neutralize your delta, and you don't even think twice about it. You'll do it for a debit, but don't worry about that. You're not losing any money by doing that. It's whatever you have right now. All you're doing is just recentering, taking all the delta risk off.
Because you're left with 2 short options. Positive.
Yeah, and you still have your short premium trade on. You see what happens.
Yeah.
So would you do that in August again, or?
Yeah. Your August is how many days to expiration is that?
August would be 60 days.
Yeah, you could do August. Sure.
Yeah, 32 days.
Yeah, the vol's real high.
And I have a really bad one in Oracle. It's 109. It's 140, 190, and currently the price is at 211.
Yeah, that's the kind of thing you can't let it go that long. You have to do the same thing in there. That was probably a pre-earnings trade, and
I got hammered on the last 2 days.
Yeah. You've let it go too long. So now what you got to do in there is essentially this. If you still want to trade Oracle, what's the IV rank in Oracle?
23.
Okay, if you still want to keep the position Oracle, and you've got to basically do something like you've got to buy it back. It's going to suck, but you got to buy it back and then sell like the 170, 250, and that would neutralize the trade, or 175, 250. Something like that. That would neutralize the trade, and I would do that in August. Well, you can do July there if you want.
Okay, thank you very much, guys.
Yeah.
And I'm thinking of coming to Milan to see you live, so I'm pretty excited about that.
I hope you do. It's going to be a great show in Milan. So, yeah, it's a short flight from Bulgaria. You can make it. That'd be awesome.
It's super cheap. I'm going to take my wife, make a weekend out of it.
Beautiful.
Smart.
Beautiful. Be sure to introduce yourself, Ross. Be sure to introduce yourself.
Thank you.
Thanks, man.
Thank you, guys, again.
Thanks.
It's so nice. Have a great day.
You got it.
Thanks.
Dallas, Sammy, Dallas.
Hey, guys, can you hear me?
Yeah, gotcha.
Hey, Tom, quick question. How come Tony is not your Italian translator?
That you broke up.
Hold on, Sammy. Say that again.
Say it slow.
How come Tony is not your Italian translator?
How come Tony something not?
How come Tony's what?
How come Tony is not your Italian translator?
Sammy, you're killing me, man. I can usually understand everything, but for some reason it's gurgled. John, what is he saying?
Sorry, can you hear me now? I was on car speaker, but I guess.
Now I can hear you. What were you saying?
How come Tony is not your Italian translator?
How come Tony's not going to Milan? Is that what it is?
Italian translator.
Oh, how come I'm not Italian? I only know like 2 words. I know.
Oh, how is Tony that? Oh my God!
I only know chiude la porta, so I can tell everybody the last person in to close the door. And giallo is a color, yellow. That's all I know.
He's the worst. I'm a better Italian than him.
That is true.
Okay, all right. Sorry. So another question: is there any drag in CME bond futures?
No.
What was the question?
There's no drag. Okay.
Is there any drag in the CME bond futures?
No.
And the answer is no, because the interest rate carry costs are already built into the bond futures.
Mm-hmm.
Okay. So, I mean, when I roll, I mean, it would be for credit usually, or would it be for debit?
It just depends. You don't know. Sometimes it's a small debit. Sometimes it's a small credit. Just depends on what interest rates have gone to over the last, quarter. But it doesn't impact your P&L at all. Whether you roll for a credit or a debit, don't worry about it. There's no drag. It's not like holding. You can hold bond futures forever. There's no drag. It's not like holding like volatility futures or something like that.
Even if bond futures are different prices.
Right. Even if they're different prices, it doesn't matter. There's still no drag. It's just cost to carry minus dividends. That's all it is.
Yep.
Okay. All right. Makes sense. Thank you.
All right, Sammy, thanks.
You got it.
Sorry, I couldn't hear him when he first said that.
Nor could I. Sosnoff, even the S&P's up 72 and change with really no downtick in sight all day long. NASDAQ up 325. Russell up 35, Dow up 513, volatility 2020 just off of its lows, down $1.41. Big spike lower here after that big spike higher on Friday. Bonds are up 6, all good in the world again. Sosnoff, say something with some parting words that leave us captivated.
Well, we're like I told that other caller, we're going to keep our short premium for sure this week, and let's see what happens today. I'm not selling them today. I feel like doesn't.
I gave you 6,100. I gave you 6,100 at 58 or 59. I mean,
yeah, you gave me 6,100. You gave me 6,600. You gave me 3,200. You gave me. If I took all the numbers you gave me over the years, I'd be in an insane asylum. Okay.
We're gonna take a quick 90-second
You'd be
break.
institutionalizing me if I listened to all your numbers.
We're gonna take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny and all.
I gave you a 6 on that hole. Okay. Just take it and run.
We'll be back in 90 seconds. This is Tasty Live. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried.
We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show.
I don't want you to buy me a Rico.
Well, that's nice of you.
It's very nice of him. but I don't need him to buy me a Rico Benny's.
I was going there when you were pooping yellow.
Oh my God.
I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You gotta stop.
No, you know that's true. Sadlov, you know that's true.
God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman, said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, "Well, thank you very much."
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny, since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She
that could do her
probably
grocery
needed
shopping.
somebody to reach the top shelf to get something
And she
to...
picked Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
everybody, and welcome to the TP and J Show. I'm lucky to have TP filling in for Liz today. She is at Kentucky for her son's college orientation.
Oh, wow.
Yep. But anyway, I'm Jenny Andrews. This is Tom Preston. He's joining me today. He's a crowd favorite, so thank you for coming on today, TP.
Oh, happy to do it, Jenny. Yeah, and I didn't know she was heading down there for the college stuff. I know her son is getting older, and, you know, I remember when you guys were talking about your kids, they were so much younger. And, yeah, my daughter graduated from college.
Oh, congratulations. How was the party, TP? The last time you were on, you were talking about the party.
It was a lot of fun. We had about 40 people over. We did not do the ice sculpture because it was too late. So by the time I talked to you and by the time I actually started looking up some of the stuff, they didn't have time to do anything kind of interesting. And you know what I'm realizing, Jenny? It seems like most of that is like not home-based, but they're small companies. They have a freezer or something and some molds. And you can be your own little ice sculpture company. It's awesome.
Talking about home-based companies, I order so much on Etsy. Like now, if you want anything made on a 3D printer, you can find it on Etsy.
Okay, can I just say, and Jenny, I know you think I'm kind of old. I already get that. But I carry a handkerchief everywhere I go. And I swear that's why my wife married me. Because when we were dating and stuff, and I had to blow my nose or whatever, they pulled out a handkerchief. She thought, oh my gosh, that guy is really prepared. Like, if we ever have kids together, if he needs to wipe up anything, he's got the tools. So long story short, it's hard to find decent handkerchiefs like at stores, whatever. So I ordered some a few days ago on Etsy, and they say they're a little more expensive. They're like, I don't know, $7 or $8 a piece, I think. And they say they're really nice cotton. What's the word? Pima or whatever it is, Supima, whatever it is. So I should be getting them this week. I can give you a report at some point when I'm on the show next.
Let me know, because my dad uses handkerchiefs, so I always get him some for like Father's Day or holidays. Let me know.
Your dad sounds like a very cool guy, by the way.
Hey, all the men in our family, my grandpa, my father-in-law, my dad, they're all handkerchief guys.
But does your husband carry them? No, your husband.
No, he doesn't. He doesn't.
Well, see,
But I like it, TP. Let me know, because I've always just bought them at like Target or wherever.
Yeah, no, they're fine, but they get thin, and they're not, anyway.
So Etsy, why don't we jump into the platform? Let's jump into the platform, TP. I don't know if you're familiar with this song. Liz and I sing it sometimes. There's a rally in the alley, get your stocks. There's a rally in the alley, get your stocks. There's a rally in the alley. There's a rally in the alley. There's a rally in the alley, get your stocks. Are you familiar with that song, TP?
Yes, I've heard you guys sing it. I know there's what is it from? There's if you're happy and you know it.
I don't even
know. I don't know what happened. The S&Ps are up now. Jenny, what is this? I was having, and my 2025 is going along pretty well, trading wise. We're talking about just trading performance.
Yeah.
And it was looking pretty good on Friday. Thursday, Friday, and I'm not commenting on anything else going on, but whatever. And then suddenly the S&Ps are back up. What is this?
I don't know, but I don't know. Thursday, our kids, your daughter, my son, they're about the same age, year apart. Mm-hmm. So he started a trading account when he turned 18. On Thursday, and they've seen ups and downs, right? Since in the last so many years. On Thursday, his account was looking so good last week. He said, Mom, I want to close all. So Thursday, in his account, we literally closed all, which was crazy because I've never done that before, but we closed all. And on Friday, we looked like geniuses. He was like, high-fiving me, way to go, Mom. Look at us, look at us. And now today it's like, now he's mad. Now he's mad. He's like, oh man, why?
It turns out on Friday, Mom, you're really not that bad after all. And then Monday, Mom, why did you do this to me? You've ruined my life.
I could have had so much more money.
So, Jenny, I want to just ask you really quickly. I know you have a lot of topics that you want to cover today. But what I found interesting last week, when the missiles started flying and all that sort of stuff, the S&Ps dropped predictably. Of course, people get scared. Crude oil rallied predictably, and gold rallied predictably. What I was looking for was a little bit of flight to quality. Bonds dropped sharply. The 30 years dropped very sharply. Bitcoin rallied. So I will ask you, is Bitcoin now the safe haven of choice over treasury bonds?
I don't think so. I don't think so. But I don't know. It's becoming, I guess it is becoming more accepted everywhere. More and more firms are saying, "Oh yes, now we're accepting crypto," or now we're so maybe. I was just talking about this morning. I was on a walk this morning, and my husband said, "What do you think of Bitcoin?" Because a guy who's really important on my team said when Bitcoin hits 150,000, he's going to retire. So he's like, "I need to know if I need to start looking for a replacement." I don't know.
But it's back to 106.
Yeah, but last night, so when I went to bed last night, it was like 104.
What's it now?
Yeah, it's almost 108 now. It's almost 108.
Yeah, so it rallied up. And we had a nice sell-off over the past couple of months. I don't know, and I'm not an economist. I don't trust economists necessarily, and I don't necessarily look at the big, geopolitical, economic things, but it seems to me that given the decentralization of Bitcoin, in other words, there's no central bank, there's nothing really about it, that there's no authority over Bitcoin at this point, that when you get a lot of global unrest as what could have happened in the Middle East, things seem to maybe kind of not going crazy right now. I mean, they're still bombing each other. But that Bitcoin can be a way for everybody to play. In other words, there might be restrictions. There might be people who say, no, I don't want to be a part of the U.S. Treasury. I don't want to be a part of the U.S. government, right? And because what is more central authority than U.S. Treasury bonds?
I mean, me personally, I'd rather buy Bitcoin than gold. You think of like the old flight to quality as gold, or I don't know. I'd rather buy Bitcoin than gold. That's for sure.
Well, and it's certainly more for smaller investors. It's more affordable. It's more affordable. You can buy a tiny fraction of a Bitcoin. Right? You can participate in Bitcoin with a couple of $100. I don't think you could do that with gold. I mean, if you buy a small amount of gold, Jenny, you can't buy an ounce, right?
Hey, TP, were you on the road with us when we gave out gold bars? Like, literally, you can buy like mini gold bars at Costco, and we bought them and gave them out to our to the audience. They would win gold bars, but they were small, very small.
But the frustrating thing I have about that, Jenny, and we can move on. I don't want to stick on this too much, but the premium, because you and I are traders, we know what the price of gold is. When we go either to Costco or to a coin dealer and you see the premium over spot, it's like, I don't know if I want to play that game.
That's true. That's
so
true.
I'm just saying Bitcoin is a lot more, I think it's more accessible to people. I think it's more accessible to more people than gold is, or bonds.
And there are a lot of products now. I mean, I used to have more Bitcoin, and at some point I said, you know what, I'm just going to get rid of all my Bitcoin, and the money I have tied up in that, I'm just going to use instead and sell puts in IBIT. And I just consistently sell puts in IBIT, which is great if Bitcoin's not like skyrocketing up. But we have we have a put spread here in IBIT too, but IBIT's kind of nice because you can take in premium every month. It's not bad. The actual Bitcoin options are like really big, so you'd have to have a really big account to use those, but this is a smaller scale.
So I just wanted to ask you, because that's what I've been watching. I'm actually writing an article for the next Luckbox magazine that's coming out this week about, what's going on with Bitcoin versus bonds. And I just think it's interesting because I watch this stuff every day, and I've watched this stuff every day for 30 years. And it's just, that to me seemed unusual.
Well, I mean, is there, like, if you have a research team run the correlation, like, over the last few years, is there a correlation with bonds or not? Or maybe sometimes there's not, there isn't. I don't know. Do you know?
Well, there is. I mean, there's generally when people are scared, there's a tendency to buy what. Yeah, I mean, bonds tend to go up. There's not a very strong negative correlation between bonds and S&Ps, but it is negative. It's not as negative as, let's say, the VIX, right? When the VIX is almost a perfect inverse correlation to the S&Ps, right?
Well, no, but the bonds and Bitcoin, like, have you guys run the Bitcoin? Yeah, bonds and Bitcoin.
I haven't looked at that. I haven't looked at bonds versus Bitcoin. I mean, bonds have been kind of flat. Bitcoin's been rallying, and that's the whole talking about, advisors, the traditional advisor, a certain percentage of money in stocks, certain percent in bonds, thinking bonds are safe. Not necessarily,
And we've kind of always said that, you can't just assume bonds are safe.
No.
Yeah, you can't just think like, oh, I'm going to put my money into something safe and put it in bonds and think that's safe.
No.
Do you know Liz and I in the fall we are speaking at, it's called the Risk Management Convention or Risk Management Conference. So we're speaking to all, like, you talk about advisors. I'm thinking the audience will have a lot of advisors in it. It'll be interesting. We've never spoken at something like that before.
No, I think that's great. I think it's a great idea. It expands the audience to new people that maybe don't know us yet. And I think I don't argue against investment advisors specifically. I just wish they would use smarter strategies. I wish they would become more knowledgeable. I understand, Jenny, that not everybody wants to trade. Okay, not everybody wants to do what you and I do, but it's just because you don't want to do it yourself shouldn't mean that you accept sort of just what I consider high capital intensive 50-50 bets. Okay. Right. And so one of the questions, so Jenny, I have a question for you is, does an account get too big? And whatever too big is, I don't know. But does an account ever get too big for an individual where hiring a registered investment advisor can make sense?
Okay, that's a really good question because, and Liz and I talk about this, we haven't really talked about it on the show, but we talk about it with each other because it's hard. As your account grows, as you get more money and you put more money in your account, it becomes difficult to scale up. It does. And at some point, so the two of us, if we have money on the sidelines, we'll usually put it in BOXX or put it in TBIL or put it into some kind of product that is going to earn money for us, but we're doing it ourselves. We don't necessarily, I don't know that you have to have an advisor, but do you have your money separated where, it's at places your money is FDIC insured up to a certain amount? Do you have, some in your name, some in your wife's name, some in this account, some in that account? And then you yourself can put that into something that's earning money, even if it's not actively traded.
So, and I wonder if it's, the money that I have, and I have a largish account, like you have a largish account, and I think our histories are kind of similar. It's not like we inherited a lot of money or any money. The money
I never inherited any money.
Right. The money that I have, the account that I've built up, I've done just myself through trading. So I understand the process. There's always something to learn, but I know what to do with more money. And I think, yes, if you've maybe inherited money, maybe you sold your house and now you've got a big slug of cash and you don't know what to do with it. Maybe you sold a small business and you don't know what to do with it. And you've never stepped into this stuff. I understand that there's a learning curve, that it's not the most obvious thing to do, right? Oh, sure, just trade the S&Ps. Well, what? Trade, do whatever IBET. Oh my God, IBET, what the hell's IBET, right? And so, but I don't think that has anything to do with account size, okay? I think you have the same questions if you have $2,000 in your account versus if you have $20 million in your account.
You see, we have some very big traders. Like, if I pop into Twitter here and I go to Jack Tucker, so Jack Tucker every day is, 10 lot. He'll go to 30 lot, 40 lot of trading these SPX trades. Look, collected $11,500 today. We see him every day collecting thousands and thousands and thousands of dollars. So he scaled up this strategy where I might be doing a 3 lot. He's doing 30 of them.
Right. No, see, and this is my point. You can't do this with bigger accounts, right? I just I scale up, right? So if I'm having a pretty good year and my size, size is incrementally larger. But here's it's not a paradox, Jenny. I don't know what the word I'm looking for is, but if you want to hire an investment advisor, registered investment advisor, great. But if you have $2,000, you're going to have a hard time finding one to pay attention to you. Okay. If you have $20 million, you're going to have them falling all over themselves to get you. But if you have a small account, maybe you can open up an account with an RIA. Great. But you're not going to get any kind of great service from them because they earn their money off of a fee. Okay, I get it. But they don't make anything off a $2,000 account as opposed to a $20 million account. So my point is there are way more people with smaller accounts than big accounts. And for a lot of those people thinking, gee, what's the advantage of learning how to trade now? So that if you do get an inheritance, if you do sell your house and get a big slug of cash, if you do make a lot of money in your job, that you know how to trade it. You don't have to hire an investment advisor. You can do it yourself and save the fees associated with it. Anyway, that's my 2 cents.
I agree. I mean, the fees. I see my, a friend of mine, when her husband passed away, she got a large inheritance and she gave it all to this money manager. And what she was paying him in fees was like crazy every year. Crazy.
And I understand why people want to do it. I get it. Like I said, Jenny, not everybody is us. Okay. And that's fine. But I just think it's unfair to say that, well, if your account gets too big, maybe you hire an investment advisor. That seems to me very what's the word? It's selling your own product. In other words, your account's too big, Jenny, let me take over. I won't talk to you, Jenny, when you've got $2,000. Like, all right, thanks, Jen. Nice to meet you. Here's my brochure. Go earn some money. But if you have a lot of money, I'll fall all over myself for you. I just don't think that's helpful to anybody.
I mean, people can learn how to manage a large sum of money. I sat on a board once and we had a large sum of money to invest, and we would have people come in, give their presentation, trying to get a chunk of this money. And I'll never forget when the short put fund people came for their presentation, and they assume like that nobody on the board knows what they're talking about. And so I'm throwing questions at these guys that they couldn't even answer. What delta put are you selling? How far out in time are you going? Are you closing at a certain day? But all they're really essentially doing is going into SPY or SPX and selling out of the money puts, and that's the short put fund. And they were charging a fortune for someone to invest in their fund in fees.
You know what? If I were a more personable person, if I were friendlier, yeah, I maybe it's because I'm jealous, Jenny, that these investment advisors can go attract all these people and I can't. I have to do it myself. Maybe I'm just jealous, but anyway, I just like to see Jack Tucker and the Polish Warrior and all these people that are on our side. And maybe it's not the majority of people, maybe not, I don't know, but it just shows that they're doing it.
One time Liz and I were contacted by someone who put a lot of time and effort and work into this. We met with him, and he had put hours into this. He wanted to create a Jade Lizard fund using SPX. And wanted, to know if we wanted to go in with him on creating this Jade Lizard fund. And, Liz and I were like, you know what, we're happy doing our show. We'll maybe we'll call you one day. And then we kind of forgot about it. But, yeah, it's like, we know, and anyone could go put that on themselves, save themselves.
Oh, sure. Well, and, excuse me, being a registered investment advisor is a whole job in and of itself. You go through this reporting, and it excuse me, it's you have to file things with the NASD and SEC or whoever. It's complicated, and it's not easy, and I get it, and they earn their money in that respect. But if you are investing in a Jade Lizard fund, if you take the time to learn what the fund is doing, you might as well do it yourself.
Do it yourself. Now, back to the question of what do you do with the money that's not at use? I mean, do you ever just, let's say you've got, I don't know, $100,000 sitting there that you're not using. Do you do you buy BOXX? Do you buy BIL? Do you buy TBIL? Like, do you put it in any of these?
Generally not. Without going too far off the rails, I mean, I might sell a few big, wide SPX boxes or buy boxes.
So would you rather, and this, I get this email, and I've had people on both sides. Like, I have people who say they would rather put the big, wide boxes on themselves than buy this.
Yeah, well, it depends on the interest rate. It depends on, so I don't know that much. I don't know anything about BOXX. Jenny,
I think it's supposed to be as if you're putting on the box, right?
So in other words, it's SPX boxes.
And I mean, since and I know we don't spend a lot of time talking on this kind of stuff, but if you have money that's not at use, if you put one on, how far out do you go?
Oh, whatever, 59 days is fine. So open up, and let's just explain what I'm doing. So I will go in, I will buy the 6,000 call.
And then we sell the 7,000?
No, let's go back to
the 6,100.
Hang on, let's go to the 6,000 call. Yeah, sell the 6,100.
So you have a $100 wide, 6,000.
And then sell the 6,000 put. And then buy the 6,100 put.
So this would be worth
a giant box. And so
it's only $9. I mean, I would think it'd be much less than the $99.
Well, it depends. It depends on where you get filled. And this is not a beginner trade, okay? Because you have to work the order and you have to be able to calculate the embedded interest in this box. Because what it does, this is a quote-unquote risk-free trade. At expiration, it will be worth 100 points. Okay, so my profit, if I buy for $99.30, will be 70 cents, right? Or $700 on the trade. So my point is
just $70.
70. I'm sorry. So I'm doing it It's
But you see
100, right?
The markets are wide and it's bouncing all around. So like to make this worth it, you'd have to figure out,
what the interest is, right?
Yeah.
This is an interest rate trade. So it's 70 divided by 990 is your interest rate earned if you hold this to expiration.
Mm-hmm.
So I'll look at this sort of thing. So let's delete this. I don't want to get too much into this.
Yeah, I don't want to like scare people into this, but I think like a simpler way is to buy BOXX, I think, but I don't know what the fees are associated with this. Or there are these that like TBIL or BIL that you put your money in and you just keep getting more of them.
Yeah, I don't know what these products are, and if I don't know what the product is, it's especially something that, I guess this is pretty liquid. It trades 400,000 shares a day.
Oh, I bought this where you buy, your P&L doesn't change, right? Your P&L doesn't change. Like if you look at net P&L for the year, it's like zero, but you just keep accumulating more. So let's say I buy 100 of these, and then every time it goes up and down, if I'm reinvesting dividends, you just keep getting more and more and more and more.
Yeah, my bias is to Jack Tuckerize the trades, is to go from a 2-lot to a 3-lot to a 5-lot to a 7-lot to a 10-lot.
Okay.
As the account gets commensurately larger, I'll take a little bit more risk in bigger products. That's what I personally do. And so because I know that's how I've built up the money, and there's no sense in turning back now.
Okay, that makes sense, TP. Speaking of building up money, I have a question for you.
Yes,
so
ma'am.
We've had like the IPOs lately, and I don't know if it's because we had a period of like not a lot of IPOs. Now we've got IPOs, and they're all on fire, right? So you have IPOs like CoreWeave, CRWV, that has just gone from 39 to 156. There's a new IPO from Friday. I bought it today, Arrow Group, and it opened at 12 and now it's 33. And I bought it today, and who knows, like it could go back down, but I thought these IPOs have been going crazy. Now my question for you, and maybe not all of them, but many of them have. And then CRCL, Circle, that one IPO'd at, where was it open? 69, and now it's 160 in a week and a half. So my question to you is, if someone buys some of this, if you get to a point where you've made so much money on it, but you still want to keep it, you can collar it, but you can only collar it if you have 100 shares. So let's say someone bought less than 100 shares. So let's say someone bought 50 shares here at $69 or $79, and now it's 160, and they think, well, geez, I don't want to sell it, but I want to protect my profits. You can easily collar 100 shares, but if you don't have 100 shares, what do you do?
So first of all, it assumes that there are even options on these things. Like I don't think
there are now. They do have them.
On CRCL there is. On Arrow, I don't think there is yet.
Well, Arrow just came out Friday, so they don't have options yet, but they do. And I mean, here, like OKLO, this is another one where it's been out. I mean, it was not a recent IPO, but it had a recent run from 22 to 68, and like there are plenty of people who have this, but maybe don't have. You need like the round lot of at least 100 to collar it, and so we're getting questions. How do I protect this? Protect my profits.
This is where you have to step into the deltas. Okay. Now, if all you have in your account is the IPO stock like OCLO or CR, what is it? CR?
Yeah, we go CRWV because
let's look at CRWV. Okay.
Okay.
So let's open up. Let's open up the 46-day. No, those are probably. Let's open up the 32-day options.
Yeah, I think we have to stick with monthly, so they're not liquid enough.
Right. So let's go to 32 days. So if I have, let's say, 70 shares of this, okay, and I want to hedge it. So I will go to maybe, what would I do? Let's say I want to.
I have not opened these options yet today. Look at the insane put skew.
Yeah. I'm sorry, Jenny. The option market disagrees.
Right?
The market's not feeling very bullish on what is this thing? What's the name of it?
Core weave.
Core weave. They don't like core weave. Let's go back into the options, though. And this is how I would treat it with a big caveat. So if I go in and look at the delta of the 175 call.
Okay, 37.
Okay, 37. If I sell that and I buy let's say the 140 call, or buy the 140 put, I would generate about 70 or 69 deltas, short deltas, right? About 60.
Yeah, but if you don't have with these stocks, TP, if I don't have 100 shares of stock, I'm not selling a call, because these stocks, they don't stop.
This is my point. If you go back to that trade page for a second. So this is a traditional caller, 1-to-1, right? I sell one call, I buy one put. And lo and behold, this is how I would hedge 70 shares of stock. Now, what I would do to make the math easier, let's say I had 700 shares. Okay, that's a round lot. That's 700 lots. So if I did 7 of these, sold 7 calls, buy 7 puts, I could be completely hedged. Mm-hmm. But if I have sub 100, what happens if crow weave, whatever, goes up to $200? What I'll have is net 30 shares short.
Right.
Okay, because that 75 call will go to 100 deltas. Let's just make it really simple. Goes to 100 deltas. Stock's at 200 now, goes from 156 to 200. The 175 call now has 100 delta. I have one of those, and so I'm short 100 deltas, long 70 deltas. I'm short 30 shares of stock net. That's my exposure. Is that too much risk for someone to take? The person has to answer that question. I don't know.
I don't know what, it's like, what do you think is going on in this IPO world where these new IPOs come out and they just, they're going crazy. And so that's why AIRO today, I thought, well, might have opened at 12. I'll buy it at 30. Why not?
Well, see, and I think part of this, Jenny, is with the S&Ps back to record highs. Okay, it's the money has to go somewhere. People are still putting their $100 a month into their 401ks,
right?
And most of that goes into the S&P funds, right, or the index funds, right? But there's still money flowing out there. Bitcoin, you're talking about your husband's worried about some person who's long Bitcoin making too much money. That person may bail out at 150. There are people, Jenny, who might have bought Bitcoin at 50,000. Now they think 106,000 or 108,000. I'll take my money. And I want risk. I'm used to Bitcoin risk. Right. What has Bitcoin risk? An IPO. Okay, I mean, look at CR. I can't get the names right. CRV. CoreWeave. Look at the volatility in that. Okay, it's got 115% volatility.
It's crazy.
So now let's go back into that. Into that caller for a second, Jen.
Okay, and look at the collar. And now, so when I know you did the collar delta to delta, but usually when I'm putting on a collar, I'm trying to do it for free. So I would look at, well, okay, if I sell this 170 for $9, then I can buy the 120 for $9. I'm trying to put it on for free, like where I'm not paying a debit for it.
Right. It's now that you're getting a little bit more short deltas, right? So you have 99 deltas. I want to take it let's now take it the next step. Part of the problem is if all I have in my account is that IPO stock, I would need to put up probably at least a couple of $1,000 on this trade because it's not covered. If I have 70 shares of CRW,
you don't have 100 shares.
It's not considered a covered call. The margin system says, wait, Jenny, you don't have enough shares to cover that short call that delivers 100 shares of stock. So what you could potentially do is buy an out-of-the-money call against it. Okay.
Yeah.
So buy it cheap, something like the 70, 90, the 170, 195 call spread. Sell that call spread. Maybe I push my put down a little bit further out of the money, so the debit isn't so big. But that's something that I might consider doing. And my deltas are now smaller, so I'm less hedged. But there's no easy way to hedge 70 shares of stock.
No, and I've got this question. Let's say someone started with 50 shares of stock on one of these IPOs, but they made so much money on those 50 shares of stock, they want to protect it somehow, but they still want to stay in. Would it make sense to buy an additional 50 at these higher prices so then they can collar it? Now, this collar doesn't look appealing because your put is so far and these puts are so expensive. But there are some products where, and I threw in collars on my Oklo stock where it wasn't terrible. Like, yeah, I could buy the 60 and sell the 85, and I still have room up to 85, and I'm protected here at 60. Like, this collar makes a little more sense to me. But if someone has the question, I don't have 100 shares, should I buy the extra shares so that I could start collaring it? What do you think of that?
So I would simplify the question and say, all right, the stocks run up. My Oklo has run up. My CoreWeave's run up. My Arrow's run up. Whatever. And I have 70 shares. I have 30 shares. I have one share. Okay, because a lot of people are buying one. You know, now that you can buy not round lots, you can buy one share. It's great. It's awesome. More people are playing. But you're not hedging that. If you don't, I don't like the idea, well, I'm kind of nervous about it, but I don't want to close it. No, if you're nervous about it, just close it. Take your profits, move on to the next trade. Move on to something. Now you know what an IPO is. And honestly, you got lucky. This wasn't anything knew about Oklo or Arrow or CRWV or anything. You just got lucky. Don't think there was any skill in that. Don't think that you can hedge it now and game your IPO. No. If you want to keep it. I hope it goes up 10 times as high. I really do. No, and I mean that, Jenny. I hope you make $1 million on the IPO. But if you're worried about it, close it, move on to the next trade.
And I know Tom will say, I've heard Tom say, sell half and hope it was the worst trade you ever made.
Yeah. Well, yeah, sell half. So you get 70, okay, sell 35 shares and hold on to the next 35. Or just keep the stupid thing and hope it runs out.
Do you have anything that you say, like, I'm going to buy and I'm going to keep this, I'm never going to get rid of it?
No. Because I don't have a relationship with the symbols. Okay. I don't care where my money comes from. I don't care if I make money in NDX, in bonds, in Bitcoin, in Oklo, in whatever. If I look at mine, I'm having a pretty good 2025. If I look and see where all the symbols, it's a big mishmash of symbols. I don't care. So I don't hold something just to hold it. There's a reason. Now, maybe I'm different. I'm not sentimental in that respect. And I think that's a very dangerous thing for a trader to be.
Now, if you're over here, when you looked at this, when you looked at these put prices, does this say like, ding, 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 look at these put prices? Maybe I should do something here?
Yeah. So I'll look at, CRWV, and if I didn't know anything else about it, and if I didn't know it was an IPO, and I wouldn't know, I don't really follow IPOs that much. All I would see is CRWV. The first thing I would see is the markets are a little wide. The first thing I would do is click on the right-hand side there and look at the extra information and see my stars, see my 3 stars of liquidity. That's not bad. So if I close that, I would say, yeah, the put skew is pretty steep. The market is bearish, so maybe I'll sell a call spread in here.
Oh,
just
really?
To agree with the market. Yeah, just to agree with the market. I don't know. The market, the option traders hate this. Yeah, if I can get, that 10 points. Let's do the 85.90. I would pull it down a little bit closer, maybe.
I think.
Something like that. The 70.75 or the 75.80, something like that. Because I'm just saying that the skew is pointing to the downside. That's all I see here, Jen. I don't know.
And how often is the market right? I mean, we see this all the time. Like, we'll see something with huge call skew. Now this has huge put skew. How often is this right?
I don't know. I mean, we don't have the tools to test that because capturing the skew information takes a lot of data space. In other words, it's a huge data demand. But I would bet against CRWV based on the skew alone.
Based on the skew alone.
Sorry, Jen.
No, I don't have it anymore. I had it and I got out of it, and I've been selling puts in here, but my puts last week, these 100 puts were about $1,000. 2 weeks ago, and now they're only $285. It's tough to keep rolling them up.
Yeah, I would. I mean, this is part of the problem of if I were trading this, I would just keep it. I would buy 100 shares. Just if I wanted to do it, I would, and that would be a very, very small percentage of my account value. This would just be I would treat it as a cheap long call, even though it's $156.
So that's interesting. You say a very, very small percentage, and that was another question I got. With these new IPOs coming out, if someone wants to get into one of them, how much should they allocate? Let's say let's just say in someone's account they've got 10,000 in this, 10,000 this, 10,000 this, 10,000 this, and then there's a new IPO. What do you think they should throw into that? I would say $1,000. If you're trading
$10,000 worth of risk in the S&Ps, I would do maybe $1,000 of risk in an IPO. Much smaller. Smaller. It's because you can't trade this stuff. Right. It either goes up or it doesn't, or gee, okay, I'll sell a call spread in there. It's not, you don't have the flexibility with it. And they're harder markets, they're wider markets. It's like, do I have a reason to trade CRWV? Not really. It's not that I know I can make money, but I can make money reliably doing other stuff.
That maybe is not as risky with it, not as crazy of a vol.
Well, and I don't have to think about it. I don't have to understand it. It's like, sure, will I sell a CRWV? Maybe I'll try to sell a call spread in there today just to see who bites, see if I get filled. But it'll be a small trade. I would never do a 10 lot in here.
Yeah.
I would never buy 1,000 shares of CRWV, right? Now I'd buy 100. I wouldn't buy 70, but I'd buy 100. Something like that. And when
you trade, do you try to keep it like that? Keep it at
I keep it. It's a speculation. I wouldn't take my paycheck and bet it on the lottery. And I know
Right.
some people do, and I don't think that's a good idea.
Right.
And
No,
so,
I mean, we know you're not going to stay in the business if that's how you're going to approach the business. Yeah.
And so if I have a $2,000 account and I want to buy, some shares of CRWV, okay, but I don't think that's a great way to learn about trading.
And we have one right here. I see this Weeble. That was one that didn't go like that IPO, and it skyrocketed and hasn't done anything since.
Right. And so
here's something though for your cherry picks. Puts in here are not bad. Look, the 10 puts 90 cents, $168 buying power.
Yeah. So the way I would look at that, where's my theta? I earn $1.65 of theta on $168 of buying power.
Yeah.
That's 1% a day. That's a high theta return on capital.
Right.
Yeah, I would try to sell that at 90. Sure.
Yeah. Sure. We have ours are short. We have it was higher. We've got this 12.5, 10. And I'll leave that and I can roll it, but I'm going to sell these 10 puts for 90 right now. I just can't believe the buying power is so low.
Let's see if you get it. I'm curious if you get those at 90.
Well, there's my 90 offer.
They're responding to you. Wasn't it? It was 85 bid. Now they increased the bid to 86.
Yeah, they're like, bring it down to 86 and you can sell it.
They're trying to lure you in, Jenny.
I'll give him 88. I'll give him 88 and we'll see what happens. Ooh, failed at 88.
Take a fill. So yeah, and so this is what you saw was just live price discovery. Okay. So you wanted to sell the puts. You didn't know where they were. They were what, 85, 95? Oh, yeah. They went down to 85 bid now.
Yeah.
Yeah, they were 85, 95. You went in at 90. And so you didn't get filled. And yeah, it's taken down to 80.
Now it's 89 bid. Now someone was just 89 bid.
85 bid.
Look, 89. There's an 89
bid. Oh, they're playing with you, Jenny. They're trying to get you back in. They're testing Jenny. You do not want to test. Don't piss off Jenny.
Oh, funny.
You are going to lose. You buy that put, you're doomed. Jenny is going to win on that short put. Don't bet against her.
We never really got to Twitter, and we only have 10 minutes left. I know we saw Jack Tucker, but I'm just going to make sure we get to everyone. Oh, I'm going to make sure if there's any pressing questions that people have. Oh, look, Jack Tucker again, and added another tranche. Now he's got another tranche going in, another 10 lot.
I love that. Way to go, Jack. I love that. That is awesome.
Oh, okay. This Frank Walsh is on our YouTube chat, and if someone on YouTube chat has a question, Frank will share it with us here. So this is coming in from Harsha on YouTube. How to recover from big losses? I sold APP 510 put in February when the stock was 510. After a few panic adjustments and whipsaws, lost $80,000 on that single trade. All my gains from 2023 and 2024. Harsha, I'm sorry to hear that on a single trade on one put. Let me take a look at APP. Is that App Lovin'? Yeah, App Lovin'. It's a wild one. So look, he sold the 5-something put and it went down to 300. So you figure if you have one put and it goes beyond your break even $100, that's $10,000. So $80,000 is a lot for one trade.
Yeah, it's one put shouldn't be $80,000, is it?
No, he's got it. No, if he lost $80,000 on that single trade, I'm guessing he had a lot more contracts, many contracts.
So
he sold the 510 put in February. So in February, yeah, I mean, probably right at the top if he sold the 510 puts. But again, you sell the 510 put, you're probably getting $20 for it. Your break even's probably around $490, and at this level, $370, you're out $10,000 on one put.
Yeah. So let's scale it to one put. Okay. if you are still long this, if you get assigned on the short put and you're long the stock, I don't know, maybe you are, maybe you aren't. But if you're long the stock and I'm down $10,000, I can go in to the 4-day options, and I would sell, let's say, the 385 calls, and I would take in, $400 for that call.
Yeah.
And yeah, it's not 10,000, but it's a chunk of 10,000. And if I can get that in 4 days, and if I do this every week, chip away at that $10,000 loss.
And I don't know what he has anymore, but for me personally, if I'm getting into one of these, like if we're looking at, CoreWeave, or we were looking at some of these crazy ones, because this was a crazy one. If I'm looking at these, I will only sell as many puts in here as I am willing to take that amount of stock or can afford to hold that amount of stock. So if I am looking at, maybe I'll sell the 355 put, I'm only going to do that if I'm willing to take 100 shares of stock in APP, or I can afford to take 100 shares of stock in APP. Otherwise, I'm not going to do it, because these we see some of these have wild moves. And if I end up taking the stock and I have it, and I say, like, kids, one day you're going to get willed this app loving stock because I got in at 355 and it's 255. I'm not going to trade so many contracts that I couldn't afford to trade it.
And the problem is too, it's a $370 stock, so it's a big margin requirement even for 100 shares. I mean, relatively large. So is there an easy way to make, is there a game plan to make the money back? The only thing you can do, there are two things you can do, is if you're long the stock, just mechanically sell out of the money calls against it. Collect some premium, collect premium. Maybe you get a run up and you sell the stock out at a little bit higher price, and you just get out. Don't think you have to make that money back in APP.
Yes,
okay.
That's what when you have a loss, you don't have to make it back in that product. Make it somewhere else.
And I've been saying that for years, is the money doesn't care. The money is as green in CRWV as it is in APP, as it is in bonds, gold, Bitcoin. Money doesn't care. So don't think, you can't make a silk purse out of a sow's ear. Okay? You get a losing trade. If you think you can make some money in APP, go for it. But don't think you have to make it back in APP. Sometimes it might be better. Take your loss in the short put, move on, learn your lesson. You traded too big in APP. One trade wiping out 2 years of profits. You traded too big. Don't do that again.
And I've seen people, and I saw this with my friend in Tesla, where he was selling puts in Tesla every month, like making money on them. And he was like, wow, these Tesla puts every month, I'm making money on them. So he kept getting bigger. And then he got so big, too big, where he couldn't have afforded that position. He couldn't have taken that stock. He couldn't, it fell, blew through him, got a margin call, and wiped out, same with him, about 2 years of profits.
Right.
Getting too big. That's what getting too big can do. So we say it every day, trade small, trade often. Make sure when you're putting on a position, you understand the notional value of that position.
So Jen, were there questions about the VIX you wanted to cover?
Oh, you know what, TP? I'm gonna bring you back. I don't know. I'm gonna have to check your schedule, because next week Liz is gone Thursday, Friday. I don't know if you can come on those days.
I'd be happy to. I think I can.
I'll email you. Okay, good. So what do we have here?
Liz is taking another day off. Unbelievable.
But okay, you're gonna feel bad now. She's going to the Mayo Clinic for her eye.
Oh no! For what? Well, we have to talk about it,
but everyone knows. Our viewers know. A year ago, she had something happen to her eye. She sees quadruple vision out of one eye. It has never gotten better. She's gone to a million doctors here. She finally got into the Mayo Clinic.
Good luck, Liz.
So that's next.
Let's keep our fingers crossed.
And I don't know what this is. I have no idea. But if someone put us on there, short stick roll.
It's Twitter. It's Twitter.
Short circle. And Bob, the earnings this week, Lennar. And I posted TP. I posted here's my view. I look out at my window and I see the city, but I'm not there.
That's very cool. Is that your condo?
Yeah, it's in Michigan City. So we're directly
So it's across the lake.
Across. Mm-hmm.
That's very cool. That should be your background.
Be here than there.
That should be your background, Jenny. Like Jenny, like floating above the Chicago skyline.
Funny. What else do we have on Twitter too? Let's see. Ajit comes in every day and he sends in, and TP, you might find this useful. You can follow Ajit on Twitter because you're always looking for trades for your cherry bomb. Every day he comes in with high IV symbols with high IVR, today ACN, AVAV, KMX, and Nike.
Yeah. No, that's very helpful. Here, if you go back really quickly into the platform, you can see exactly what Ajit is doing and play along at home. Go into the watch list, and so what you can do now is you have Tasty Fast Movers up there, and that's a curated list of stocks that are moving around. In the middle of the screen, you see that IVR number. That's the IV rank, and if you click that, you can sort high to low. Okay. Now this is Tasty Fast Movers. If you click on the watch list name, you can go into 52-week near low, for example, if you're thinking about something to buy. So if I click on 52-week near low, USO.
Here are some of his CarMax, Nike.
Right.
These were a couple on his list. Mm-hmm.
So this is how use the platform to find trades. And just like Ajit is pointing out, does he know anything about these stocks or symbols? My guess is no. But all he cares about is the IV rank, which means that if he's willing to take risk, he can be rewarded for taking risk. That's what a high IVR says. I don't know whether these stocks are going higher or lower. I don't know. I don't really care. All I know is if I sell premium in them, I'm being rewarded. That's all that matters.
All right. I was on that list. I saw crude 94 rank in crude, crazy. But I know crude had a crazy move Friday. You take a look at the mood crude is having. It's coming back down a little today. I got caught in it. I had some iron condors on in crude last week, so I got blew right through it. But are you doing anything in crude right now with the 94 rank?
I will probably do so. I don't know what I would do in there right now. I haven't looked at crude. I closed out positions earlier last week, obviously not knowing anything that would happen on Thursday and Friday. I just took positions off. I have an iron condor in UNG in Nat Gas. Okay. That's up a teeny tiny amount in the energy, and that's been flat. That hasn't gone anywhere, and it's a 53% IV rank. If I go into US,
do you ever look at a chart and think like, "Oh, this looks like Head and Shoulders," or do you ever do that?
I do not, and if you do, more power to you. I don't. I'm not a big pattern guy like that, so I don't say Head and Shoulders or what's the one that I saw, hanging baby or whatever.
Oh, the abandoned
the abandoned baby. These terrible names. So I do not. So I don't look at a chart and think, oh yeah, that means the stock is going to do this. I might look at a chart to see whether something is how far it's moved.
Right.
Like it's a massive percent move up or down or something like that.
They're kicking us off. We're getting the hook.
All right. So Jenny, that's my 2 cents for this Monday.
Thanks for coming.
But I'm making money today, so I can't complain. Good luck for my account, Jen.
Always a pleasure. I will email you about next week in case you're free any of those days. Yeah, because the Mayo Clinic was kind of a last minute surprise. Yeah. They just call and say, "Oh, you're in. Come now." We'll see you next week.
You gotta do it. You gotta do it.
Yeah. Okay. Have a wonderful day, TP. Enjoy your summer.
Thank you, Jen.
Bye. Everyone, remember to trade small, trade often, laugh with us, learn with us, and watch the TP and J show. See you tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler and, of course, Mr. Ryan Grace in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddies, Mike and Ryan. The boys, we're back from our DC trip. How are you, Ryan?
We've returned in one piece. I'm doing well, and I'm impressed. Every time you open this show, you've got that down.
Oh, yeah.
I can do it in my sleep now.
He probably does dream about it.
Speaking of, today is my 10-year anniversary. It was actually yesterday. I got the little notification, which I don't even know where it comes from in our system somewhere. But yeah, so
this is my
Congratulations.
Thank you. I know. Spent a decade.
Yeah, it's been a lot. Congrats.
Grown up here.
Really?
Good chunk of your life.
Yeah, they've taken so much from me.
Your soul.
My soul. Oh my God. It's built in this place. Yes. So
That's awesome.
10 years. Pretty crazy. So
Where are you at, Mike?
I am.
You'll be 11.
I'll be 11 in a month.
All right.
Yeah. July.
Are you over that? You're
July.
I'll be 12 in November.
Nice.
That's assuming I make it to November.
Yeah,
That's
yeah, yeah,
true.
yeah, yeah.
Yes.
But
yeah, we have our reviews coming up. I hear rumblings, that you might be.
There's whispers.
There's whispers. There's whispers. No, you can't get rid of a Grace brother. These is the two. Man,
I don't know, but yeah, November 2013.
Yeah. There's actually a lot of people that have been here for 10 years, I would say, or getting close.
It's kind of incredible.
Yeah.
Yeah.
Because most people are like you're here for a year, you move. You're here for a year,
Yeah.
you move. Like that's the status quo in our society. But yeah.
Yeah, I feel like I don't have a lot of friends that are.
Yeah.
Over a couple years.
I'm for sure outside of like you and Katie and Ryan. Like I'm for sure like 3-4 years is max out of my friends.
Yeah.
Except for my friend that works at Microsoft. He's been there forever.
Oh, yeah.
But he's got a nice little.
Yeah, those stock options.
Yeah.
Those are.
Mooning.
Package.
Yeah.
That's a good one. Yeah,
Mhm.
yeah. But anyway.
Congrats.
Oh, congratulations. Yeah.
Thank you.
I wish there was like some fireworks or sparklers or something
Yeah.
going off. Fill this whole room with smoke.
Yeah.
Yeah, maybe like next year I'll be able to like pick what lunch it is. Remember we used to
That'd
do
be
that
fun.
for birthdays?
Oh, yeah.
Hey.
Thank you guys. Thank you. Keeping it back. Thank you. Appreciate it.
I didn't know we had sound effects.
Yeah.
Now that I know, things are going to
Oh yeah.
heat up a little bit.
There we go. There we go. We got more. I love it. But yeah, it's a fun event. I've gotten a ton of feedback from people, so thank you for everybody that came out and hung with us.
It was awesome.
It was fun. It was a good change. Had some beer and wine. We had some food. Got to hang out for a couple hours. Yeah, there we are. Look at us.
That's us battling the FTC for the 25K rule. Just before we walked into the office, barged into the office.
Yes.
But yeah, it was a fun little time. Thanks to everyone that came out.
Yeah, it was fun. What'd you think? That was your first tasty event, right?
Yeah, it was the first one that I've done in a while. We did the
and the last too.
The crypto event, yeah. First and last.
One and done.
We did the crypto event back in January at Bad Coffee, but I love the in-person events. It's great to put faces to names or to screen names. It's awesome to chat trading, markets, options, crypto, you name it, with everybody in person, whether it's before or after the event. Great to see the turnout. So super thankful and grateful again for everybody showing up.
Yeah. It was a lot of fun. There he is. There's Ryan. The most well-dressed man. I mean, this man, he's a GQ model.
Oh, well, I don't know about that. I mean, I appreciate the kudos, but the mustache probably has to go for that.
No. We're keeping that. You gotta keep it.
There we go.
Throw it out. Yeah.
Curl it.
Yeah.
Yeah, this was fun.
Yeah, it was a fun venue. Cool spot.
Yes. I like the smaller ones.
Yeah.
Because you really get to mingle and talk with people. What's our next event that we have coming up, Mike? Is it Seattle or San Diego? I forgot which one.
Seattle.
So it'll just be the three of us.
August.
So no Ryan, unfortunately, but.
Yeah, but
maybe next year.
The boys, the older boys, are going to London.
Yes.
Milan.
Yes.
In a couple days here. But yeah, August 10th, Seattle at the Crocodile Theater. tastylive.com/events. You can sign up for free now if you'd like.
Didn't we do it last year?
The Crocodile? I feel like it sounds familiar.
I think we did. Yeah. So.
But yeah, London event June 20th. Tom, Tony, and Rich. And then Milan, Tom, Rich, and Dylan.
Yes.
June 23rd.
Yes.
That'll be awesome.
Tom's favorites. Rich and Dylan, special children.
Yeah.
Special children.
I like how you describe them as the older boys.
The older boys. But yeah, lots of events on the horizon. So check out the tastylive.com/events page, and you'll see any and all that are listed there.
Yes. Yes.
Coming to a town near you. So I guess the market is ignoring a lot that's going on. What's the word here? Up 60?
Yeah, I mean, it's been a swift reversal back. We've basically reversed the entire move that we saw on Friday. E-minis are up 63 right now. They did have their roll, so we're trading a different contract at this point, but they're just under 6,100 here. You've got the NASDAQ up 312, the Dow up 386. You got the Russell up 25, everything up between 1 and 1.5%. They've been super strong all morning, not a downtick in sight. We're 5 or 6 handles from the highs, but it's been a steady climb. Oil, which looked like it was going to be up 5 or 6% in the open last night, is now actually down. We're down below $70 a barrel. 69.46 is near the lower end of the session here. We got as low as 67.84. All the geopolitical stuff happening in the Middle East, kind of looked like it was going to be a rough open on Sunday, but as has been the case for most of the issues that we've experienced over the last number of years, it's just been a buy the dip opportunity. As you can see with volatility, it's reversed the entire move. We're back to 20 and change here, down $1.36, a little over 6%. Even bonds are rallying a little bit. They didn't rally into the sell-off on Friday, which was kind of a weird contrarian type situation. You usually think, you got bombs flying around, bonds usually rally, fear kind of rallying in bonds, rates coming down. That was not the case. It's happening a little bit today. The move in gold, also kind of a contrarian move. You had a rally into all the things that were happening last week. It's now giving it up a little bit here, 3,400 and change, down $33. Silver has been very, very strong. It's sitting and parked kind of at highs here. And then Bitcoin back on the scene. It looked like it was going to be a risk-off situation on Friday. Now bouncing back. You got Bitcoin back at 170,000 or 107,000, not 170 yet. I'm sure it's
not yet.
Not yet.
Next month.
Just be patient.
Yeah.
It's been kind of chopping around and consolidating, as they would say in the stock space.
Yeah, trading sideways here after that big relief rally, big move to the upside in May. Once we got past a lot of the volatility, and you saw that come down throughout April. So I think you're going to continue to chop here. I think the trend still is higher. There's a lot of reasons to believe that when you look at the market, and certainly the price action is pretty conducive to it. Seeing some conflicting reports of de-escalation, potential negotiations between Iran and Israel mediated by the United States, maybe not until after there's some tit-for-tat retaliation. You do have the U.S. is moving another aircraft carrier into the region. So things are ramping up, obviously, but how does this really impact the macro outlook for U.S. equities in the U.S. market? Aside from, in thin, illiquid conditions, you get a pop in volatility, and you quite often see that kind of materialize in crypto, given it's 24/7 first. But I think you've got to look at the price of oil here, and certainly look at the response in equities to gauge the situation. And the market is pricing in a de-escalation.
Yeah, I also think you have to kind of put some weight on just this week is a funky week. I mean, obviously we had all the stuff that happened last week, and then the potential de-escalation that's happening right now. You have G7 meeting on Wednesday. You have an FOMC meeting, and then you've got Thursday market holiday, and then Friday expiration. So there's a whole lot happening this week that, is... I expect there to be some chop, but it's a lot going on this week.
You're looking for almost a 100% probability of no change in interest rates at this Fed meeting.
Well, I think the biggest, part of the meeting is the projections out in time, and just seeing if those 2 rate cuts are going to stay on the table, or if there's any sort of commentary there. So, I mean, a lot going on. At least we don't have any earnings to worry about, but it's been there's been some earnings like moves in some of these stocks. You look at like Palantir is one that's going up every single day, $5-10, and Nvidia is.
Ooh, that's a good one right there.
Palantir, you like that one?
I'm just looking at the chart.
Well, yeah, it goes up $5 every single day. Nvidia, another one that's like back at highs. Microsoft's chart. If you haven't looked at this in quite some time, it's strong. So
straight up,
it's definitely been. There's been the moves underneath the surface seem to be bigger than the indices themselves, even though those are moving too.
Yeah, it's crazy too because just 2 months ago the world was ending.
Yes, for the 10th time.
Yeah,
is
in recent memory.
Yeah, there's probably more of those, but yeah. It always seems like the world's ending. It seemed like the world was ending this weekend.
Yeah,
if you are on Twitter or any news outlet.
But yeah, SPX expected to move through the end of the week, only 78 points, even though we have interest rate decision, expiration Friday. It is kind of ominously low. But yeah, I think Ryan, I think you nailed it. I mean, looking at the spike in oil all the way up to 76, that screams escalation. But today's move from the drop from 76 down to 69.
24 hours, everything can change.
Yeah. Yep. But yeah, we will see where we end up. That is for sure. But yeah, I actually did make an adjustment this morning in AMAT. So Applied Materials, that was an earnings trade. I had the 175, 185 diagonal spread, and I just rolled out that short call a week. It was expiring this week. I rolled it out to next week for 85 cents. So that would be the second roll. Basis down to 740. It's basically a scratch right now. But if we continue to rally up to 185 or just another rally like this today, I'll take it off and it'll be profitable. But earnings trade gone wrong, managed into a scratch.
Yes.
That's all I've done though. Kind of waiting around, seeing if we can get some price extremes to look at.
Yeah, I've been playing catch up a little bit this morning, so I haven't had a ton of time to do anything, but I closed out of a number of positions last week into this move. Relatively flat, leaning a little bit short, I would say overall, but I got a lot of powder dry. If you got some trade ideas, you can throw them in the chat. If you got anything crypto related, throw that in there too. Questions, feature requests, anything on the wallet app that we have on the right side here. You can see that up on the stream as well. Are you surprised by the strength in the crypto markets?
No. I think anytime you get on a Saturday or over the weekend, you get reports of missiles flying in the Middle East, it's unfortunate.
Yeah.
But I am a buyer of those dips.
Mm-hmm. You were, and I can attest to that.
Yeah.
Because I saw you furiously
buying $10 here, $10
there. Yeah.
We've seen this before, right? Now, this is an escalation, certainly, but it's presented an opportunity. I can remember when Solana got absolutely smoked. It was almost a year ago, I think, when you saw this, and that presented an opportunity closer to $100. I just don't understand, aside from short-term volatility and a strengthening of correlations, what this has to do or how it impacts the future of this asset class from an investment perspective over the long term, right? We were talking about this in DC. Like, why would there be any impact? Obviously, there wouldn't be, but like, what would be the reason that the price of something like BitTensor or Ethereum is lower, aside from it's a risk asset?
Yeah.
But it doesn't have anything fundamentally to do with, obviously, tensions in the Middle East or rising geopolitical risk.
You'd almost think it'd be bullish.
To some extent, yeah.
As an anti, for lack of better words, as an anti like monetary system asset.
Yeah.
You would think that, any sort of geopolitical problems would be bullish in the crypto space. And the first move is probably reactionary, which is what we saw kind of on Friday and into the weekend of that. The initial pullback is just a risk asset. You're kind of just liquidating in that sense. But I think overall, the story obviously remains.
Yeah, I think over the long term, especially if certain conditions lead towards lower interest rates, towards quote unquote money printing, and those conditions loosening, then it's definitely supportive of crypto. But at the same time, when we look at the longer term correlations in here, there's not that strong of a correlation. I think you want to own this for a variety of reasons with a longer term time horizon, whether that's 1 year, 3 years, 5 years, whatever. So to me, within the trend that we're currently in, and given the macro setup that we have over the next couple of months to quarters, I think you use some of this volatility at times as an opportunity. Doesn't mean that you can't get extended one way or the other, but I tend to view these sorts of kind of headline risks as opportunities to add a little bit to an Ethereum position or to a Bitcoin position or something that's a little bit farther out on that risk curve.
Mm-hmm. Very nice.
You have to take profits at times. Let me add that.
Yeah.
But you do get, these opportunities to buy dips.
For sure. Bitcoin futures right at 108 right now, up 2,600. Yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video streaming live. I've got the Cherry Picks newsletter link pinned to the top of the YouTube chat. I'll put in the Tasty Crypto newsletter link as well. You can sign up for both of those for free. And yeah, if you have any trade ideas, questions, crypto questions, let us know, and we will answer them shortly. Should we pop over to the slides and walk through the landscape we're looking at?
Let's do it.
Lovely. June
All right.
16th.
Here's your Bitcoin update, my friends. Not much has changed, believe it or not, from the last time that we did this and from the numbers that we put together over the weekend in the Tasty Crypto email newsletter. But we got Bitcoin trading just underneath 108,000. That narrative of Bitcoin over everything, Bitcoin market cap dominance, that remains here. You can see that on a relative performance basis when you look at Bitcoin year to date, up 15%. Everything else that we're going to run through here is down. There might be a couple of tokens that have outperformed, but I struggle to find much. Certainly of those that you can trade at Tasty Trade today, Bitcoin is the outperformer. I will note that on the daily, given some of the volatility here, we did see a shift from bullish to neutral. We'll keep an eye on that. ETH has traded a lot better recently, a lot stronger. We'll see that with the ETH BTC ratio. So even though Bitcoin market cap dominance is still about 65%, ETH has traded a lot better against Bitcoin, seeing some strength here, up 6% in the last week. Still down year to date, 35%. But what's interesting about this as well is that Bitcoin's volatility is near the lows on a 3-month, 6-month, 1-month period. ETH's volatility is starting to rise. That might be a precursor to more upside. Often, again, as we've talked about on the show, we do see a positive correlation between price performance and volatility in crypto. So keep an eye on that. Implied vol is about a 50 IV rank we'll see here over a multi-month period for ETH versus basically zero.
Zero for Bitcoin.
So just wanted to call that out. That said, not much has changed, getting a little bit of a bounce post that volatility and subsequent sell-off that we saw over the weekend. So starting the week with a little bit of a bounce here.
ETH really didn't go anywhere into that sell-off.
No, it really didn't. It's been holding on to 2,500 for the most part.
Yeah.
So a good bounce off of those.
It looks like a buyout chart.
Yeah.
If you look like the last month, where U.S. Steel to be bought for $55 a share, and the stock kind of floats around there. There's a little bit of arbing and there's a little bit of risk premium baked into it, but that's what ETH looks like. It's been very, very tight, just choppy range. It's like one of those. It's trading like there's an event coming up, sort of thing. So I hear
building all of this energy.
Coiling, as Mike would say.
Coiling for an upside explosion blast off mode at some
up
point
only.
in the future.
I love coiling. But US Steel, the premium's gone in these options. So this is actually happening, the US Steel.
Yeah.
Yeah.
But
we've looked at it many times before where there's still premium in the options, which tells you the deal is not official. But you look at US Steel now, you look at the 30-day, the 60-day, there's no premium anywhere. So it's basically a done deal.
Yeah.
Unless something changes. Crazy.
Yeah.
But yeah, nice to see Ethereum coming off the lows. We were hoping for that, stacking some longs at 1,400, 1,600.
Mm-hmm.
I still think there's a bit of upside here. Now, that doesn't mean it happens immediately, but if you look at this next 3 to 6 months, certainly ETH is on the radar. A lot of ways you can play that. You can do ETH A options or some of the other Ethereum ETFs that have liquid enough options markets there. You can trade the volatility in there, or you can just buy dips in ETH and unload a little bit of it on a pop. We'll look at the expected moves here on the 1 week basis when we look at implied volatility in just a sec, but well within reason or statistical probability, you can get back to 3,000 pretty quickly here. So ETH trading a lot better. Solana has been weak. XRP had a little bit of a jump. It's flat. It's unchanged on the week, but over the last day or so, a little bit of a pop in there. But as you can see, there's not much that's traded very well against Bitcoin. We got that signal in Bitcoin Cash last week where momentum shifted to bullish, and that has since exploded up 15% week over week. I can't explain why. I don't know what the catalyst is there, but sometimes you see this price action in the market and you just want to ride that wave. And so Bitcoin Cash has traded really well. Aave is another one. If we jump to the next slide, you'll see this is an outlier in terms of momentum, back up towards 300. It was 250 a couple of weeks ago. So there are trades to be had at times. That's been a bright spot. Another bright spot here has been Compound on the third slide. You can see that's up 20% or so recently. Whether that continues, who knows? But sometimes, again, you get these signals and you really want to pay attention. Not seeing anything that stands out to me anywhere else of those tokens that we track that are available to trade at tastytrade. To that point, though, we are actively working this month to add more tokens.
Sweet.
So we'll make some announcements as to what those symbols are soon. You're going to see some more memes, some layer 2s, more DeFi-related governance tokens, maybe Uniswap, for example. So we've got a handful more. We're going to continue to work to expand the product offering.
Awesome.
So that's the performance update. Again, theme has been and remains Bitcoin over everything. That flips at some point, not seeing any real true evidence of that aside from, ETH is trading a little bit better. So to that point, ETH versus Bitcoin on our next slide here. That's up about 4% in the last week, 7% over the last 3 months. Momentum has shifted to bullish on the daily basis. So there are some, I would say, encouraging signs for the ETH bag holders out there, myself included. Solana weak against Bitcoin, weaker against ETH. Doge as a proxy for meme coins or alts that are going to be a lot more volatile at times, right? This thing can absolutely rip, and it has. You saw a big move to the upside in May, and then you saw it come right back down. So trade accordingly, but no real signs, again, that it's alt season or that there's a rebalancing or rotation underway. But we'll keep an eye on that. So that is relative performance. The next slide we've got here is our volatility dashboard. As I mentioned, Bitcoin vol has been low, is low, staying low, maybe presents an opportunity to buy cheap call options or cheap put options on the tail if that's your thing. On the flip side, ETH vol is climbing, not quite at the middle of the range on a 1 year basis, but getting up there. These aren't crazy volatility levels. You'd probably need to see ETH implied vol closer to about 90% to get you an IV rank of 100. But you're moving, you're certainly moving higher here. Realized volatility picking up just a little bit, but realized volatility for Bitcoin is in the 30s. It's not very volatile.
Yeah. If trading around ETH, like if you're using ETH A, you would expect volatility to continue to expand on an upside move, especially because you've seen so much downside. Like Bitcoin seems to have the volatility regime in Bitcoin, I'm sure it can come back and have that explosive volatility, but it seems to have kind of contracted overall, I would say over the last
absolutely
year or so. I mean, that it's been much, much lower. ETH, I think, with the kind of catch-up trade, if there is one, you're going to see some vol in there. You might be looking at some of those call options in ETH a little further out in time. ETH A, if you're looking at trading those in a equity portfolio.
Absolutely. Not saying that this will happen, obviously, but historically, we have seen ETH move very, very quickly, both up and down, right? You can kind of have this sideways movement for a while, and then you get a catalyst. Maybe it pushes you lower. You're down 50% in a week. It's painful. But there's a lot of exuberance that kind of pops into this market when you get these 25, 30, 50% upside moves. So wouldn't be surprised to see, a very volatile move in ETH. It's characteristically what it's done. No real change in terms of expected moves on the Bitcoin side. This range is pretty much where we've been trading. Yeah. So like when we look at even the vol that popped up here over the weekend, like it's all just kind of random. We're not seeing anything structurally change. The Bitcoin range has been like high 90s, low 100,000 to
which is well inside
115.
The implied
Absolutely.
is even higher than realized, even though it's low.
Yeah.
I mean, like it's gone nowhere. We've chopped.
Yeah, your weekly move in there has been, 6 to 10% at times. So it's nothing insane versus what it can do. So ETH, on the other hand, could get you back up to 3 real quick. Solana, we've been right around a $15 expected move on a weekly basis. It's been real choppy to lower. The rest of this, again, I'm not seeing any signs here today or any signals from any of these dashboards that I track that indicate, there's a pending change or anything like that. So we'll see. We'll keep an eye on it. We put out our market update on Wednesdays as well. So if you're not on the email newsletter, get over to tastycrypto.com, sign up for that, and you can get these dashboards. We update them about 3 times a week. But guys, that's where we're at. I mean, with relative performance, as we've already talked about, Bitcoin is outperforming year to date. There's not really much else that's in positive territory. Ripple is in positive territory, but on a relative basis, it's under. So that's your Bitcoin update for June 16th.
Beautiful.
Lovely. I think when you look at, I really like the analysis of the Bitcoin versus Ethereum implied volatility because Bitcoin is near the lows. Ivy rank 2.6, 48% in July. It's the lowest I remember seeing it. But that can present opportunities for upside trades, especially like long leaps, like long call leaps. Like you're getting low IV to buy them if you assume that the stock goes up and implied volatility goes up along with it. That's your best scenario for something like a long call leap. And these are not that too they're not too expensive.
Not notionally, a couple $100, but relative to the actual price of it, it's you pay a 5 or 10% premium to be 50% out of the money, which isn't. You've mentioned it a couple times. I've gotten some emails on it, so I think it's a good thing to talk about. But when you're playing this, when you mention like buying out of the money calls and even tail calls, I think you've mentioned like the 85 strike, 90 strike, anything like that. It's not necessarily a play to get to 90. It's a play for the option prices to increase, and that happens via move up, which typically with something like Bitcoin that has kind of this volatility, upside volatility skew, you get this pop in volatility, you get a little bit of the price appreciation, which increases your delta, which then in turn increases your gamma, and your position can multiply on a relatively small move compared to when you look at the option, right? So if you're looking at the 100 strike options or the 90 or 95, it's 100% out of the money or 50, 60, 70% out of the money. It's a huge move over a small period of time. But if you were to get like a 10 or 15% move up, that came with, you know, a 20 or 30, 40% increase in volatility, those options are going to double just on that move higher. And that's the sort of trade that you're looking at as like an asymmetric bet, because the move down, that same 10 or 15% down move, probably doesn't change the option price all that much because volatility is at lows. It's really that vol play.
Exactly. Yeah, in the same way that you're trading volatility or you're selling vol, you're selling option premium here, you have a view in vol terms. I have a view in vol terms on the upside, right? I don't think that in 100 days you get to a 95.
Well, you have the price view too.
Yeah, I mean, I think maybe you go up.
Yeah.
But I'm looking at an option that if I look at the 95 call in November, it's 54.5% implied volatility. If you do get a move higher here, maybe Bitcoin goes to a new all-time high, not a guarantee, right? There is a probability that the option price doesn't change or even goes lower, but I'm betting or trading the idea that that implied volatility, that's 54.5% of the 95 strike call in November for IBIT, that goes to 60, 70, 80%, that it bounces quite a bit, and that option maybe doubles, triples, quadruples in price. That's the trade. It's not, man, I hope that I time this perfectly and that in the next 158 days, the IBIT ETF is 100.
Yes.
It'd be great, but that's not the trade here. The trade is I'm trying to buy cheap premium, cheap upside, and sell it if that implied volatility goes up on a delta move.
Yeah.
So you need the delta move or you need some speculation to the upside. Quite often we do see some FOMO that comes into the market here. This is something that can see a squeeze at times. It's very illiquid on the upside. And what I mean by that is there are no sellers. You can look at on-chain fundamentals, metrics. You can see that not a lot of people that hold this move it around, right? So a good chunk of the supply has been illiquid and has been stagnant, hasn't really moved. And so maybe in the event that you do see higher prices, what would that look like? Okay, it's a break of maybe 110 and you run to 120, 125, just throwing out arbitrary levels there. But you get out of this sideways consolidation, you see another pop higher. I think implied vols go up. That's the trade idea. We'll see whether or not that works. You can also figure out ways to reduce your cost basis, as we talk about on this show all the time.
Yeah.
So one of the other things that I like to do in here is on a very short-term basis, trade strangles. So
against those.
Yeah, or just as a way to, right? I mean,
generate some sort of short vol.
Yes, because I own a bunch of upside exposure that should offset any, smaller loss in the short term should you get a big move that would result in that short-term position taking on some water and being under, in a sense, in terms of losing. So you get a down move, I'll sell a put.
Yes.
You get that pop, I'll sell a call. Leg into a strangle, whether that's the correct approach or not, that's how I like to maneuver in this market and bring in some premium there. And quite often you're able to go out and you're able to, with 4 days, let's just say 4 to 8 days, you could go in, you could sell these on Thursdays, Fridays, come in, hopefully there's nothing crazy over the weekend. But you can go in and you can sell if I'm just looking at the deltas right now, let's say it's around a 10 to 20 delta strike. And you're going to be able to bring in about 25 cents per strike or per option. So the strangle gets you about 50 cents. And that's on a 4-day basis or 4 to 8 day basis 1 week against whatever long calls you own, or if you're going to bet on the downside, whatever long puts you own. And these are at very low volatility levels still. Yeah. So you do get this expansion of volatility, or we move back towards kind of a 50 IV rank in IBIT, then you're going to be able to go a little bit farther out, obviously, on a per strike basis, and you're going to collect a little bit more for that. It's a trade I like. It's something that I've been putting on. And on the downside, if I do get a sign on that short put, or let's just say it's in the money at expiration, I might hold that, take the ETF shares, and then sell a call against it either at the money or slightly out of the money, at least in this market environment.
So to monetize, when you're monetizing these upside kind of trades, and you do it at some point, if you do get that upside move, you get that pop in volatility. Is it is there a point where you close your upside tail participation and move it into spot? Like, is that what you like to do in terms of like trading around this position? Because you buy these, 100 strike calls, let's say, and you're not expecting, maybe you are, but let's say we're not expecting that to happen in 100 days, and you double or triple those options. Do you close that and roll into IBIT shares or spot Bitcoin? Like, is that how you kind of navigate around this trading?
I'm not really thinking about it that way. Possibly, maybe I'd look to rotate some capital into something else. Maybe it's ETH or something that's underperformed.
That gives you that volatility.
Yeah,
too.
I'm just simply looking at this one from a volatility perspective. So in terms of when do you close the trade? Well, if I'm buying something where the IV rank is 0, maybe I look to take profits in that if the IV rank were to go to 50. Or, given that that's on a rolling basis, there's some things that can skew that calculation. So I'm not just going to go off of IV rank. But if I know that I bought an option that has an implied vol of 55%, and I know that on a 1-year basis or a multi-year basis, we can see implied volatility in Bitcoin or IBIT go to 100%, then if I start to see this trade back towards 60, 70, 80 maybe, it's probably a gift. I'm going to take some money off the table. Do I put that into spot Bitcoin? Maybe. I might just look to use that to trade anything else. Maybe I put it into ETH or Solana. Don't really have a plan there, but have this position on because I'm greedy, man. Not only do I think that Bitcoin prices are going to trend higher over time, you're going to get chop and you're going to naturally, as you see, historically, you've had some decent sized corrections in there. We just had one in April, but I want that upside kicker. I want that leverage. I've been in this market long enough to know that, while it might not happen that frequently, you want to be positioned for the crazy shit.
Yeah.
Right? And the way to do that is to own really cheap upside, understanding that it might not work. It could expire worthless. You can also close it before that happens, right?
Yeah.
You can have a number in your mind where put this trade on. If I lose X amount of dollars, I take it off. That said, I want to have that exposure in the event that headline hits that XYZ central bank is buying Bitcoin. This fund is now in it, whatever it might be. This regulation has passed. I think there are a lot of potential catalysts that could incite some upside volatility here.
Yeah.
And I just want to have that optionality.
Yeah, I hear you. And I pulled up the 80 strike calls, and which one were we talking about? We were talking
95.
about 95. We could do the same sort of exercise here, but I just went to view the option on chart, and I looked in November. You could look at even further out options. You're going to see kind of the same thing. But our initial move up to like 100K in May, you see these options when we went to 110, they double or triple. And that was that's a volatility event. You can see those options are back to kind of $2 where they were trading before that initial run up. So you have this sort of like, you stay at 110 and these options really don't decay because volatility is already low. And then you get this pop in volatility and they kind of explode. And so when you have this, it's an asymmetric bet over a period of time where your upside on the trade, so to speak, is maybe $100 or $200. Your downside on the trade is 10, 20, 30 cents. So it's a bet that in a vacuum you'd always want to take. You'd always want to have that,
absolutely
5x potential to a 1x bet.
And I think it's dependent on market conditions too. I wouldn't put this trade on if we were in a nasty bear market. Like, I'm hoping for a bounce. No, we're clearly in a bull market. I think that that's going to persist for some time. There's reason to believe that. There's a lot of supporting kind of variables there. And this is the position that I want to have in that environment. But there's absolutely a point in time where you want to be short. You want downside exposure. You don't want to look for any bounce whatsoever, and you want to try to make money on the downside. I just don't think it's today.
Yeah. And the nice thing about these, like Nick said, the nice thing about these options that have 160 days, like this $1.40, I don't see this going below $1. Like even if we chop around here, it's just because the possibility of a big move to the upside is there, you're not going to see these really decay all that much. Yes, they can, but on the same token, you are also at one of the highest strikes. And I think that that idea is kind of a nuanced idea where if you have this product like IBIT or even like GME, AMC, these products that can rip higher in a short period of time, what you'll tend to see is like right now you're looking at the 75 strike at $3, $4, the 80 strike at $3, and then the last two are $1.50-ish. If you do get that pop from 61 to 70, and let's say it happens this week, for an example, and you get the IV increase and the premium increase, the 90, the 95, and the 100 strike are going to be trading for a very similar amount. They're all going to multiply. So it's like even when you have the tail move, you see kind of a flattening out of the tail premium.
Yeah.
But right now you're paying at least half the cost of strikes that are closer to the expected move.
Yeah.
So it's a nice place to be if it happens in a week or two, because you're going to get that asymmetric premium to the upside, and then they'll open more strikes, and that may go away in that sense. But right now, trading those higher strikes or buying those higher, longer dated strikes, it seems like, and again, we're not playing for it to go to 95 or 100. We're playing for it to go up 15, 20% in a week.
Yeah.
And you'll get the multiplication there.
The volatility on the tails increases a lot, and you could see it and this is with volatility super, super low. You can see we're sitting at like 51 and change for the closer at the money volatilities, and you can pull up implied volatility on the trade table. And then as you go further out on the tail, you got 54, 55%. It's a smile on the tails, and that increases even more when you shift, like if you've watched our I think it's called like basics of volatility or volatility smile and smirk, something like that. We did a whole segment on smiles and smirks volatility. When you push the whole smile up, they're all going to increase, but those back tails are going to increase the most.
Yeah, you have a relatively flat surface right now, and you want to see that steepen.
And that typically happens when you have these upside moves where the tails just explode. So.
Yeah, and I think, look, on the flip side, too, if all of a sudden you saw selling in mass and you can monitor volume, open interest on a per-strike basis on the option chain, if you see that, that's information, right? That is positions being dumped for one reason or another. I don't think it's necessarily random, and maybe that tells you something. But as you guys have mentioned, there's a lot of asymmetry that's built into this, and that's kind of the exposure that I think you want in this specific asset class. You can make that argument around, owning kind of asymmetric upside in something like crude oil, given what's going on. But volatility has probably priced most of that in, given we have had some events.
Mm-hmm. Yep.
Love it. All right. I see some questions in the YouTube chat. You can pop over to that now. Speak to us on Apple. Yeah, Apple's annoying. I have the 210 calendar. We literally need a 10-point rally in the next 3 weeks, let's say. There's no more premium to sell against this. It's just a long option for $180.
Yeah, I got.
If we get a 5 or 10-point rally, it'll be a small winner.
You unfortunately won't have that same tail volatility as if this was a Bitcoin option.
Correct. It will
hybrid
not.
option. This one is.
It's more of your conservative classic.
Yeah, you can
just delta move.
Yeah.
Crypto's also rising because of stablecoin news, says Ian. Do we have any?
Yeah, absolutely. So there's legislation that's making its way through Congress related to stablecoin markets. I think it's the Genius Act. Don't quote me on that. But it's all progressing from what I've seen. I think you will get some legislation at some point, and maybe there's already been something that's come out. I haven't seen any news, but we had the Circle IPO.
Yeah.
Clearly, there's interest there. You will see more and more large financial institutions participate when there's a framework or there's rules that they can adhere to. I think that's very bullish for liquidity, for participation, for global adoption. It's super encouraging.
Yeah.
Once you get stablecoin legislation that presumably passes, next up is a crypto market structure bill, and that should then open the floodgates if you have progress there. Now, the timelines are unknown. You listen to some people, talk to some others, and they're hopeful that it could get done by the end of the summer. We'll see. At some point, though, I think that it does happen, and it's going to invite a lot of participation, a lot of capital that's been on the sidelines here waiting for regulation before they can participate. And, I think, again, it's going to only continue to support markets here in the crypto industry.
Ethereum trading ETH.
Yes.
So how would we trade this to the upside? Finance account is looking at a put credit spread 17.14, but the credit's only 30 cents. I mean, I think if you're trying to play an upside move in these things, diagonal spreads are going to give you a better bang for your buck. So like long August, the 20 strike, short the 23 in July, something like that for $1.50. You have less risk on that trade, monetarily speaking, but if you get the rip higher from 20 to 21, 22, 23, you'll make more than that put spread. So, yeah, I think playing the gamma and the delta move is how we would trade it.
Yeah, you could do put spreads to finance call spreads. Your call spreads are going to be wider. I will say one of the great things here is that you can get a lot of exposure here pretty cheaply just by buying a wing. So, you know, if you're looking at selling puts, basically cash secured, you get a little bit of margin relief there, but you can cheaply buy puts. So you can, you know, relative to the spot markets, which are all cash secured, you know, you can get, and it's almost, you need what, 150-ish shares basically to get exposure to one ETH coin, spot coin. And I just do that by the price because there's no yield here yet. Hopefully sometime. But you just take the price of Ethereum, divide it by the ETF, and that'll give you the number of shares. And so, you know, even if you're just looking for a more capital efficient way to be long spot, you could buy in the money calls and get a lot more exposure for a lot cheaper. Poor man's covered calls, you know, selling $5 wide put spreads if you want to have like a decay component to it. Selling those put spreads to finance long calls or call spreads is another way as well. But yeah, a lot of ways that you can leverage up here.
Yeah, definitely. Mr. Patel, great to see you at the DC event. Yes, likewise. This is a cool venue.
It was a cool
venue. They had Asahi cans just chilling. Ooh. And the athletic beers, they had it all.
They got that non-alcoholic stuff if you're into it.
That's good.
Taking a little breather from the booze.
Yeah.
For everybody.
Yeah, taking a little break from the sauce, so to speak. That's good.
Buy cheaply and win bigly. That's the new phrase.
I like that.
That's the new phrase.
Sure.
But yeah, I have an iBit strangle on. I've had it on all year.
No, I don't have anything there. Got to do something.
Ooh. Hey, you got to get in there. But yeah, the nice thing about iBit too is like it's been pretty range bound. So selling premium in there has been great. And right now I've got the 32-day 60, 67 strangle. But like I've said before, like I just won't have I won't have downside I won't have short delta in here. So if we do get that move from 61 to 7 or 67, let's say, and I start to pick up short delta, I'll just shift the whole thing up. I'll move it from 60, 67 to 65, 75 and just keep moving the whole strangle up to make sure that I don't have upside risk. And really all I'd have to avoid is a massive blowout to the upside overnight where I couldn't make an adjustment. But I think we'll be okay there. A couple more here. Are you still in the New Zealand dollar trade?
It's a good question. I have not looked. Let's see where we're at right here. TCFX. So I go to my positions. I still have that. I'm losing on the Aussie dollar, which I will say, because I'm short the Aussie dollar, long the New Zealand dollar. If I wanted to make this a little bit more capital efficient, I could close these two out and just do the long New Zealand dollar, short Aussie dollar pair, which is available.
New Zealand dollar looks pretty good from a momentum perspective, Nick.
Well, my peeps in the chat gave me that. You think I came up with that?
Daily, weekly, bullish signal. We've got a bearish signal on the monthly, but we're trending higher. Could flip to neutral. We'll see.
You trade some of the... Are you a currency guy?
No, I'm just looking at my indicators that I use for crypto. And you can apply this to everything else. I just want to be on the right side of the trend. Daily, weekly, New Zealand dollar is looking okay.
Beautiful.
Is that Kiwi? Is that what they call it?
I would go with that.
Yeah.
I think so.
Aussie dollar. Let's see.
Yeah, isn't the Aussie dollar Kiwi?
You're asking the wrong guy.
Yeah. To answer the question, I do still have it on. I should probably take this. I should probably take my $20 and run. The one-click close.
There you go.
See you later.
Colin
Beautiful.
said he followed your Boeing trade. You really are in the Matrix.
Ooh.
Yes. I have seen things. That was a good trade.
Do you have dreams? Do you wake up after a dream and you're like, and you just go straight to the platform?
Yeah, I used to have dreams. Like it was like, white picket fence. It was like, like freedom, all those things. Now I have night terrors. I wake up, sweats.
Hatman's in the corner.
Yeah,
Tom's in the corner.
Yeah, Tom's in the corner, like with a whip. But yeah. No, I did have dreams. It's more in my 20s where I had dreams. Now I just,
But then you put in a decade here.
Then you put in a decade here, and all you get is nightmares and night terrors and sweats.
It's part of the journey.
Yes.
Part of the journey.
Yes.
Yeah. Any other? So
you were right on the Kiwi.
Ryan. For New Zealand dollar.
Yes.
So what's the idea behind Abe? Because I saw that was the lock of the week in the email.
Biggest move.
Yeah.
Too. Oh, it was in the email.
Yeah, so initially I put on a trade. I've since gotten out of it, but a relatively quick trade over a couple weeks. On the follow page, you can track that just because of the momentum shift there, kind of the signals that we derive from it. But in terms of what it is, so Aave is the biggest lending protocol for Ethereum, other chains or L2s on Ethereum. It's DeFi, and it's a real use case, right? And you can look at this protocol, you can look at applications that leverage it in the same way that you look at Uniswap, right? It generates revenue, there's fees, it has users, you can track these fundamentals in real time. And because it's real and that it's a use case, disintermediated kind of lending, or if you want to borrow against your Bitcoin, your ETH or assets that you hold on chain, you can do that. So you can use this as collateral, as property for a loan in USDC or another asset. You can go and use that then in DeFi, generate subsequent yields. It's all managed in terms of you have a certain loan to value, right? There are risk controls in place. It's all automated. But because it's a real use case in DeFi and you have potential regulation that's going to open that up a bit more, you can put an actual value to this. You can look at the cash flows in some sense or the revenues that are a function of the fees. And I think when you look at the DeFi space, whether that's Uniswap or you look at Aave and you start to look at an environment that regulations permit value accruing to the token holders in the form of fees being passed through or dividend or something of that nature, then in some ways you could say that a lot of this stuff is undervalued, right? In terms
just from that yield.
In terms of the price that it trades at versus the revenue or price to earnings in some ways in which you might look at it. And so that's one that's on the radar. I think Uniswap is another one. It's trading a little bit better here. But these are tokens that represent real use cases in DeFi that have a lot of users, have been around for a long time, and again are real.
Beautiful.
What was your line? Bigfoot and Bitcoin.
Oh, we were gonna do a raise of hands. Who's
two things you don't believe in?
Yeah, who believes in Bitcoin, and then who believes in Bigfoot? Yeah, maybe they're one and the same. Yeah, but I guess one's at almost a new all-time high.
Amazing.
Well, that's it. It's almost noon. Got to get out of here.
Yes.
Have some lunch. But yeah, if you want to reach us on Twitter, you can certainly do that. I'm at Trader Mikey B, next to Trader Nikki Bat. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. I've got the newsletters in the YouTube chat. I'll pin the Tasty Crypto newsletter to the top of the YouTube chat right now, so you can click on that and sign up both free. But yeah, nice little rally in Bitcoin, and hopefully that discussion on IBIT strategy and just ways to trade around the IV versus the price of the product. Hopefully that's helpful and insightful. But yeah, have a great rest of your trading day. We will be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
We
are back. It is Monday, June 16th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, I looked at my ticks yesterday as the market opened up for the first time since I went on a little bit of a break Thursday, Friday, and I couldn't help but notice the S&P 500 was basically where it was when I left on Wednesday, so I assume nothing much has happened.
No, we didn't flirt with another major war in the Middle East at all. That definitely didn't happen. Back and forth, back and forth. Grass is growing, paint is drying. All is well.
I guess there's no war. Looked like we were wrapping up to war last week.
Certainly looked like for a second there.
And the headlines over the weekend, some of the videos would certainly seem to indicate that war is going on, but the market just doesn't care. Reminds me of that old song, Josh, as we go to the headline, war, what is it good for? Apparently for stocks, absolutely nothing. Same thing for bonds. We've round-tripped everything here from basically last Wednesday. You could wipe out Thursday, Friday's action at this point in time, which is kind of odd to say. I guess the reaction function, Ilya, for dip buyers here through the end of this quarter remains as strong as ever. You and I didn't have a chance to talk on Friday, though, as we would typically do, and look at the calendar for the week ahead. And this is a pretty interesting week, so it's worth looking at what lies around the corner. I would note that there is no notation here for Friday. There is only one thing for Friday. It's UK retail sales. So I suppose if you're trading 6B futures, that's of note. But the rest of the week really is just Tuesday, Thursday-ish. Wednesday is the big kahuna with the Fed meeting. Ilya, the market's pricing in no rate cut effectively for this week. Less than a 3% chance right now. Same thing for poly market, if that's something people look at. Either way, what is the Fed going to tell us this week as they give us a new summary of economic projections? Growth, inflation, the whole 9 yards.
That's really the thing here, is what they're actually going to do as far as rates is an afterthought. Nobody's expecting them to do anything. They're not expecting to do anything. That's not where the action is. The action is in the summary of economic projections and the tone with which they are delivered. So there's the policy statement, there's the summary, and then there's how Powell talks about all of it in the press conference. Those are the moving parts here. And we've seen basically since April's, let us call it conflagration, that the calculus hasn't changed very much as far as the total amount of easing that's on the menu between this year and next, but the internals of when that easing is going to arrive, that's actually been quite volatile. It's seen quite a bit back and forth. So if we look at the market even just right now, we're priced in for about 100 basis points through the end of next year, which is right in line with the summary of economic projections that the Fed gave us in December and again reiterated in March. I doubt they do anything different this time. But if we look at the makeup of when those rate cuts are supposed to arrive, there's been a real live debate as to whether that's going to happen, let's say, more so this year, less so next year, or vice versa, and just how bad the economy is and just how much easing you need up front. Obviously, there's been some reshuffling back and forth here, and the real question for the Fed will be just how much of a sense of urgency do they have? Are we really going to wait until September and then maybe October, that late October meeting, maybe December, to get a second cut? That's kind of where the market is now. September, then December for 2 cuts. Maybe the economy is looking a little bit dicier than that. And actually, the retail sales numbers that we have coming up, they should be very, very interesting in this context because, as we've talked about, the really big question isn't tariff this or tariff that, so much as are we going to have a drop-off in the appetite from U.S. consumers? Because they are the economy. They are 68.5% of GDP. And we already saw them soggy in the first quarter. So the real question is, are we going to have them soggy again in the second? There's competing evidence in this direction. But certainly the retail sales numbers for April were not encouraging in this sense. If we get something soggy again for May, even as the inflation picture, as we saw last week, was relatively benign, let's say, give or take, then we're looking at a much more worrying setup for the economy. And then the question becomes, is the Fed going to maybe move sooner? If not, probably a troubling environment for the dollar, probably a troubling environment for yields. Bonds probably go higher. And stocks are in a really interesting spot here. The reset from the, let us call it war, not war thing at the end of last week has left us in an interesting place where we've kind of recovered everything, but we haven't crossed any bounds that would suggest that there is a breakout topside. In fact, we're still kind of anchoring at 6,000, let's say, on the S&P, if you want to take that as a baseline. So lots resting on this Fed meeting this week.
Yeah, you mentioned the retail sales report tomorrow. It's a fascinating breakdown, which we'll see at the end of the show when we look to the calendar and pull some of the other events on here, which the subcategories of retail sales are considered medium. And for the week ahead, we only show the high-rated events on the IG calendar. But in terms of those, retail sales ex autos actually do up by 0.1%. And then the control group, which is the input used for GDP, is due up by 0.3%. So tomorrow's data, if it comes in right, on the screws or what's expected, if you're a bull, you'll have something to point to that the economy is holding up. If you're a bear, you'll say you have something to point to. I don't know what color it adds if it comes in given the expectations. So the Fed then ultimately becomes the arbiter of how they're interpreting the data.
Yeah.
And will we get cuts signaled over the next few months? I mean, we get to July and then the calendar gets really quiet until September.
Yeah.
And so we could be looking at no cuts potentially.
Other than Jackson Hole, of course.
And they're not going to announce a cut there. So let's talk about
Jackson Hole will be more a lens tuning exercise.
Ilya, on Wednesday, the market closed at 22,112.25.
Yes.
I took 2 days off. We're now at 22,160. The news doesn't matter, apparently.
Take a look at a 4 hour or an 8 hour, either or. Because I think
chopping around,
this becomes instructive, right? You have your little freak out. It turns out the freak out is probably localized, and you get back to basically the starting point before that freak out, that swing high before those two big red bars take you sharply lower, and you're basically at the range top. Not quite there. You're still sort of testing that spot where you tried to roll over off the high. And if you were going to be rounding a top, this would be a real kind of begrudging way of doing it. But what you don't have here is the market going, oh, well, as long as the war is all clear, then it's off to the races. And maybe it is, but it's not what we're seeing here. Having said that, you do have a break of the series of lower highs and lower lows off that top. And if you were to drop a little trend line there, the momentum of the down move is basically sapped. Now you're just back into wait and see mode. So no immediate bearish momentum, but no immediate hawkish or a bullish breakout. So you're kind of left watching and waiting for the Fed to do something and for the retail sales number to surprise if it does.
Yeah, I mean, I think right now there are two ways to approach this with fresh eyes. It's either a continuation pattern here that's moving sideways after an extended period up. So correction perhaps in some of the overboughtness on these lower term timeframes that's now since dissipating and momentum's kicking back in.
That's a technical term, by the way, overboughtness.
Yeah, maybe it's a head and shoulders pattern. Left shoulder higher head.
Could be
a right shoulder, although it's not a lower right shoulder than the left, so it's not perfect. But nonetheless, you're down below 21,700. You have a more credible case for a top. In between, it's a lot of chop, and it's only a 15.6 IVR. I think that's the most remarkable part of this whole saga here, looking on the other side of it. We've basically erased the pop and vol. It's off, not that we like to quote the VIX in percentage terms, at least I don't. It's off by more than 7%. Same thing for front month volatility futures. They're in substantially as well, off by over 5% here, more than a full point still. Although worth noting, when Westwater and I wrote 5 futures this morning, the front month VIX or volatility futures were off 1.2 points, and now they're only off 1.11. So that is a little bit of a vols coming back in here a little bit over the course of the past few hours. I digress, though, Ilya. Whatever we saw last week, the market has judged that this is contained.
Yeah.
Perhaps a point of interest here for those that aren't following this as closely as perhaps I was over the last few days. Putin, who's supposed to be Iran's big backer, Russia's supposed to be Iran's big backer, has effectively told the Ayatollah that he's on his own, that they'll provide them safe passage to Moscow, but they don't have the ability to provide any substantial military support. And I think we're not going to see, and Hezbollah said they're not getting involved, right? And the Houthis have said they're not getting involved any more than this. So it being a widespread regional conflict right now, we're not there.
No, we're not there. And it's an interesting thing that happens in geopolitics, where you're the alpha wolf until you're not. And it seems like a lot of the proxies that maybe look to Tehran as a patron are now, and some of the allies that looked at Tehran as maybe a partner, are now looking at this and going, they've drawn blood and there's no response. There's fire and fury, but it looks like they're weak. It looks like they're not going to step up and put up a real fight. Okay, this is not the winning side. Let's back up. And you're starting to see it really across vectors. I mean, obviously, there's been no shortage of critiquing Israel in recent months, and you can have whatever opinion you wish as to sort of what the politics of it are. I'm not speaking to that. I'm suggesting merely that the level of critiquing has not extended to this action. When you look at, let's say, the European powers, when you look at a lot of the kind of international community that might have said, oh, this is beyond the pale, the way they have with some of the actions in Gaza, they were supportive here.
Well, I mean, from the EU's perspective, right, hasn't Iran been supplying Russia with drones, those Shahed
very much
drones,
so.
Which is making their more difficult in protecting Ukraine. So,
and complicating their immigration situation with migrant flows by stoking all manner of terrorist activity all over the place,
particularly in Syria
or North Africa. Sure, particularly in Syria, absolutely. In fact, interestingly, some of the biggest supporting voices for all of this have come from Syria. Interestingly enough, there's been no shortage of video footage of Syrians celebrating this because, of course, they've been on the receiving end of Iran's meddling for quite a few decades.
I mean, the market here, we went through this last April, and then again kind of in October. At the start of the month of October, we can just take a trip down memory lane because that's the whole point of having these charts with all this history on them, right? Mm-hmm. What did we do in October? The market sell-off, right? Or September, I suppose. It was only a few days. Oil was a lot more dramatic, just to pull up the memory bank here, because oil wears this a little bit more aggressively than anything else. So we go here, October, right? You have that big spike higher in oil prices. Go from 66 to 78 in the span of a few days. In ES, in that same time span, this is early October. We don't do anything. 100 points, 50 points maybe. And so, April last year, which this is the first Iran lobbing bombs at Israel, okay? That was quickly rebounded. We got off that. Israel is able to defend itself. Iran is just doing this to save face, okay? Same thing here in October. This just seems a little bit more than saving face, right? They're attacking various cities and civilian infrastructure now, including power plants. So, but Israel's also defending itself.
Yes.
So we're kind of now in this, as you like to say, you benchmark a risk, and the footage, and it's going to be horrific. It's terrible seeing people get killed if it's in Gaza or Tel Aviv or Tehran. It's like, that's human bloodshed.
Nobody wants to see any of that.
But the market is saying, like, this is not going to be something that poses a significant disruption to global trade.
Yes.
Or widespread conflict right now. And I think perhaps something indicative of that is if all these people who are on Twitter saying that, this is going to lead to World War III, Russia's going to get involved. Russia had a lot of interest in Syria, and they let the Assad government get run over. So I don't know what...
They're a little bit busy.
And there's a little bit of a...
They let Armenia get run over too, and that was kind of a precursor when the second Nagorno-Karabakh war broke out, and obviously most recently there was a little bit of a follow-through in 2023 where essentially Armenia had to sue for peace and basically lost the disputed chunk of territory. Russia was their security blanket. The presumption was that it was Russia that would come in and safeguard them, if anything. And Azerbaijan came, and Armenia went to Russia and said, hey, we're going to need some help. And Russia said, yeah, a little bit tied up, trying to not collapse utterly in Ukraine at the moment. So lose our number. And not surprisingly, Armenia very quickly turns to the U.S. and goes, oh, man, we had this all wrong. But that gave you a preview of just how much Russia is going to be trying to step up for kind of more distant pockets of the sphere of influence. If you're not going to step up in Ukraine, or in Armenia, rather, because you're in Ukraine, Armenia is on your border. If you're not going to step up there, you're not going to Syria. You're not going to Iran. They're on their own.
And they're not going to Israel, where many of the major cities have significant Russian diaspora.
That's right. And the relations between Israel and Russia are not nearly the relations that there are between, let's say, Russia and the U.S. or Israel and the U.S. Israel kind of exists in a middle space. Obviously, the U.S. is the primary ally, but they don't have a terribly contentious relationship with Russia, largely because of that huge diaspora of Russian speakers, people very much like myself, that are Soviet emigres. So you have that's about a third, if not more, of Israel's population. So huge amount of people. And so the contact there is not necessarily friendly, but cordial.
I'm reminded of an old Chinese joke that was told to me by someone that we used to work with who was from mainland China, whose father, I think, was in the PBOC in some capacity.
Safe.
And safe, okay. And I recall her telling me once, I was asking her about the risk of war with, between the U.S. and China. And she said, oh, well, there's an old Chinese joke. A Chinese president asked his general, okay, I want to bomb an American city, but I don't want to kill any Chinese, expats. So find me a target list. And the general comes back and says, well, all of our kids are in the American universities, and after they graduated, they're starting businesses in America. And so now their families are living there. And so there's actually, there's nowhere that we can hit America. And so then, the Chinese president says, okay, drop a bomb in the middle of the ocean, right? Yeah. And that's just, so China would never attack. And her point was China doesn't have an interest in attacking America because so many Chinese people are here. And that kind of, if you read through the Russian newspapers this morning, like that is one of the opinion pieces that you're seeing. It's like there's no interest in Russia to get involved to help Iran because there's so many Russians in Israel. So the markets judge this. If you're following the information closely, I pretend that, yes, Josh, that is considered a joke from what I've been told. If you've been following the situation closely, I joke at the start of the show that I haven't been paying attention to the news. The stock market's unchanged from last Wednesday. But the contours of this becoming a big geopolitical hubbub right now. The headlines are going to be terrible. The images are going to be terrible. The video is terrible, right? All of it's awful. I think we just got to trust the price action here. Oil is more than 7% off of its highs from last week. Gold is coming in. Stocks are up. The dollar and the yen are two of the lagging major currencies right now. Until further notice, this has been benchmarked much faster than the previous conflicts, I would say. But it has been benchmarked, which is horribly cynical. But nevertheless, that's what the market's saying.
Yeah. I mean, at this stage of development, right, obviously this is a war. And so you never know. Wars are completely asymmetric. You can't get in there and say, oh, I definitely know that XYZ thing won't come up again.
Sure.
And obviously, Israel was not after regime change here. Not sort of
maybe not initially.
Not
other things.
Yeah, well, I mean,
other things.
They're after regime change, hypothetically, whereby they do these strikes and they kind of hope Iran's restive population stands up and uses the regime's weakness against it. But they're certainly not going after the supreme leader himself. They're not.
If I may offer a quick citation here, Netanyahu on ABC News in an interview that just aired as Futures Power Hour started said he doesn't rule out eliminating the Ayatollah. So
of course he doesn't. Of course, but actions speak louder than words. Nobody rules out anything. I mean, our president doesn't rule out taking Greenland by force. Is that going to happen? No. And so when we look at sort of what they're doing here, it seems like a localized thing, unless, and we of course know Iran is kind of famous for this, there is some sort of asymmetric response that isn't missiles, because Iran operates a vast international network of clandestine folks in all kinds of places doing all kinds of things. So we don't know what this is going to evolve to yet, and won't, possibly for a long time, because as long as the regime remains in place, they have levers. Those levers can be used to activate who knows what, who knows where, out of the clandestine assortment of tools. And so this could yet pivot in a different direction, but as it looks right now, it appears contained. It appears to be a local firefight that doesn't really threaten the broader story.
So there is that. Just want to, before we hop off the Israel-Iran story here, at least in the equity sense, because there are some other things we have to touch on. There was the talk of a 10% tariff between the EU and the U.S., a 20 to 25% tariff between Vietnam and the U.S. Our friend Mr. Westwater has pointed out that over the last several days, the Iranian strikes against Israel have been happening between 11 p.m. and 4 a.m. Israel time. It takes about 1 to 4 hours to get the launchers in place once it's dark. So we're probably going to see some more headlines and images tonight. We need to see what happens, of course, if the market's going to react. But right now the market's telling you that we know this is coming. Iran's been telling us all day long that more things are coming. But perhaps a lighter note here. The Iranian foreign minister says, Aragachi says about an hour ago, all it takes is one phone call from Washington to silence someone like Netanyahu. This could pave the way for a return to diplomacy.
Oh, somebody's looking off ramp.
Aren't these guys the same people? So they went from death to America to please save us? I don't know.
Yeah, death to America. We'll never have a deal. We'll never give up our nuclear program. Hey, so if you ask nicely, we'll come talk though.
Ilya, what do we always say about these World War III threats?
Yeah,
always buy the dip.
Well, you can't trade on the presumption of Armageddon, because in Armageddon, assets are not tradable. So
counterparties are vaporized.
Yeah,
it's very difficult.
If your thesis is Armageddon, your investment assets are canned beans and ammo. And if you're trying to make allocations in these public markets, then Armageddon is not a scenario you can really trade for.
So we have all this news today. We have the Iran-Israel story continuing to unfold. Of course, we have whatever's happening in the U.S. markets pertaining to some of the other headlines here. There was talk of EU-U.S. tariff rate around 10% coming into play, although at the G7 meeting, EU officials have pushed back against that. Over the course of the day, though, we've seen here, as by the way, many of these contracts are now rolling over into the U5 here. You've seen that in ES and Q. Now across the bonds, you're going to see it in the currencies as well out to that September expiry. The market here is largely unbothered. Ilya, last Wednesday, we closed at 113 and 9 ticks. We're at 113 and 3 ticks here. We're holding our 1 month moving average. The tariff headlines, though, when they come out today, I think those are the interesting ones, particularly as they pertain to what happened with Vietnam and the EU. That was this morning a little after 10:30, and that kind of top ticked the day for bonds. Maybe, okay, we're not going to get the 10% tariff rate with the EU, and hold on right now. The tariffs that we have with Vietnam are currently 10%. You're saying that when we come to a deal, they're going to be higher than they are during the pause window? That's interesting. That does interest me, though, Ilya, because we are coming up to this July window for the tariff deadlines in about 3 weeks now. And so time is indeed running out. Notice that we don't see this gigantic rally in bonds today as oil prices pull back. So I don't know if we can say with any degree of certainty that bonds were reacting in any inflation sense the past few days, in a safe haven sense the past few days. Bonds just don't seem to care at all whatsoever about the tariff news, about the Iran-Israel news net. How do you approach this moving forward when you go into a Fed week this week where we know, of course, the Fed is not going to give us a rate cut?
I think you look at this and you say, well, look at where you've been going since mid-May. It's been begrudgingly higher, but higher. Series of higher highs, series of higher lows. You look at where stocks have gone in the same exact period, and it's basically sideways. We have had no real upside progress since about the same time that the bonds formed their low. And I think you get the sense that what's going on here is this belief in markets that the Fed really should be cutting, that the optics aren't letting them cut, that the president is once again yelling on social media about how they should be cutting, probably delays them further. And so you look at this and you say, okay, well, the markets are seemingly starting to get to this mindset of the Fed's going to be late. That means more easing later to catch up. That should be going in the long end. It should be fueling speculation that the Fed is going to be more aggressive but more delayed. And so that should give you more weakness in the dollar. It should give you more strength in gold. In the bonds is probably where you have the most kind of risk-reward attractive way to express that idea, because the bonds are obviously closer to their lows, and gold is closer to its highs. The dollar has already fallen quite a lot. So if you're going to look for a way to express this idea, and I'm staying short the dollar, I'm staying long gold, but the bonds are probably the most interesting way to express that idea. That they had an interesting kind of back and forth on the news from Iran, where they initially rallied on the risk aversion and then sold off because crude oil spiked. So it looked like the markets were saying, oh, well, if we're going to sustain a crude oil spike like this, then who's cutting what rates when? No, that's not going to happen. But obviously crude oil has come back in, and the bonds ultimately don't make a break. They hold this kind of begrudging upward trajectory that we've been seeing since late May for about a month now. So in my mind, this is the kind of dip that looks like a buying opportunity over the past 2 sessions.
So we're seeing, by the way, just as worth noting here, oil is no longer down like 3%. It's down 1.5%. And a new missile alert just went out in Israel suggesting that people should shelter if you're there. So we're going to get these headlines again coming across 5, 10, 15 minutes. It takes about 12 minutes for these ballistic missiles to travel from Iran to Israel. I know way too much about this conflict right now. But we do have other bond news. We did have a 20-year bond auction here today. There's 10-year tips tomorrow. 4.942% for the 20s. It's much better than last time. It doesn't tail through. It's exactly on the screws, believe it or not. And the bid to cover ratio is 2.68, higher than the 2.59 over the past 6 averages. So all things considered, when we look at ZB and we go to that 1 p.m. Eastern candlestick here, you don't necessarily see that much selling off different than what we were seeing going into it. I would think that this is just related to the general news of the day. The auction itself is good. It's not bad at all.
No.
Net.
Totally soft.
This is more about what we're seeing unfold over the session, which is now the Nasdaq's up 1.5%. So people are jettisoning whatever safe haven positions they have. Gold sell-off is deepening, now off over 1% itself. I wouldn't say necessarily what we're seeing in bonds is, the dollar's losses here too. The yen is off by 0.1%. Talk about a real abandoning of safe havens all of a sudden. Even the yen is losing ground versus the dollar. So with bonds right now, it's a 23.4 IVR at the long end here. It's not terrific. It's not substantial. We didn't see a huge spike in bond vol the last few sessions. Unlike what we saw in oil, what we saw in equities there, the high IVR was 26. It's nothing. So this may not be an interesting place to play. And if you have a longer term structural view like Ilya and I do, if you think a Fed meeting this week that's a little bit more, we'll say, just not willing to lean dovish just yet, though there perhaps are reasons they should, they're always late. How long have we said that, Mr. Spivak? They're always late.
Well, but by design.
By design. But if we think about the reflation argument from September, they cut twice, bond yields rip higher. Why?
Yeah.
They're pouring gas onto a pretty decent economy right now. And so you get higher yields. Maybe a Fed that doesn't give us what we want in terms of the cuts, not that the market's expecting it, but it doesn't even signal that they're close. Lower growth expectations, lower inflation expectations, you continue to get those yields to come back in. Even if we're staying range bound on like the notes and in the bonds, which the notes have been, this has just been chop city for basically all of 2025.
Yeah. I mean, this is where it's the most interesting, because if you look at what the bond market itself thinks, break-evens are falling. And they've never really recovered since April's lows. They crashed with stocks from mid-February into April to really kind of underscore that the worries about the tariffs in that context were growth concerns around the kind of haphazard implementation of the tariffs that we saw. And that's not my opinion. That's what the business confidence surveys and the consumer confidence surveys say that the markets ultimately looked at, and which inspired that sell-off. So when you look at that and you say, okay, you had this growth scare, not surprisingly, inflation expectations fell in a growth scare because a weaker economy produces less growth, produces less demand pull on inflation. Stocks have obviously recovered almost all the way back, but break-even rates have not. They're still basically where they were. And so the market is saying there is a growth thing that's a problem over the medium-term policy window that the Fed cares about. They should be cutting. And so as long as the market thinks that, any kind of delay in cutting basically says, oh, well, you're not responsive to what the market's telling you you have to do. What's the release valve? The markets have to expect that you're going to eventually come around, and they're going to punish you by repricing assets to tell you you're off sides. And that looks like lower yields at the long end in this context.
We've got a lot of chop here. I'm still leaning the short iron condor here in notes. I still have the short put spread on in ZB. Likewise, playing for that bullish reversal. Although again, no sticking power here. Maybe it's because of those higher oil prices it's prevented from lifting off, as some might say. Gold is breaking its fever here, though, and I think when we put it in totality of all the macro news, gold lower, oil lower, stocks higher. It's a pretty good day for risk. What we had on Friday was technically the highest close ever for gold futures. So we're coming back in. I've taken the bearish falling wedge interpretation off this and instead put back on the symmetrical triangle, as it appears we're breaking out a little bit more at this point in time. Volatility here, it's up technically. We did hit a high tick of 56.4 today, and that is the highest volatility since May 27th. But currently it's only 42.4. The vol is disappearing again. Ilya, lower vol, as you and I know, have experienced so many times. When the vol gets sucked out of the gold market, it's like sledding uphill. It's really difficult for gold to get any significant breakout going on. And it's why the past few sessions, when you saw IVRs in the low 30s expand up into the 50s, gold prices were able to move up. So consequently here, this might be a double, dare I say, triple top. That's not really a thing. Maybe this is a left shoulder head, right shoulder coming together. But either way, there's kind of a range top near 34.75 or so. And if we're looking at the news and we think that this is a path towards, this is so silly, escalation to de-escalate, then maybe we round off the highs here. So we're closer. You have rationale, technical rationale, right? And volatility rationale. Vol's compressing and getting sucked out of the market. We've pivoted away from an area where we failed multiple times in recent months. Maybe the buyers up here are exhausted. Maybe the central banks don't like it close to 3,500 in the front month futures. I still like leaning long. No surprise there. But again, duration matters here. So if you're going to be long, you might want to have something a little bit longer in your pocket if we're due for a geopolitical deflation kind of environment, which we've seen occur. It doesn't upend the broader uptrend, but it just means a few days or a week or so of retrenchment.
Yeah. I mean, I think you look at this and you say, right, you're basically testing the top of the range, but you've kind of pushed through the previous swing highs, and you're retesting back at them without pushing back through. So I think the overall structure here is still looking broadly bullish, unless you, let's say, get back to something like 3,300, and then you're looking to say, okay, well, maybe the upside breakout has failed. Possibly. 3,300, 3,200, you'd go, okay, the series of higher highs and higher lows off those bottoms in May, that's been violated. That doesn't necessarily mean that you're breaking down, but it does suggest that the immediate upward impetus has lost momentum. We're not even there yet. So I'm staying long. I don't think there's any reason to do anything different here.
Nothing to do anything different here. In copper, there's a bit of a rebound today. You have the arrow drawn here on the chart because my expectation was that we're just range trading, and we still are. We haven't breached the highs yet. Not thrilled by the fact that we have this long lower wick from Friday, back above the 1 month, and today, even though we opened below the 1 month, we rallied back through there. The short call spread I have on here in copper might need to be cut short. I'm going to let it hang for a little bit, though. I'm not super enthused. Silver prices, they are hovering. If there was ever a place, Ilya, to look for silver prices to hover after a breakout, the yearly high that we had last year in October, we've been catching that as the silver support all of a sudden. We could even redraw another line going back to the highs that we had in late March prior to our Liberation Day. And even that wick that we had on Thursday pulls back into that and we bounce. So you're seeing some former highs being treated as support right now as silver kind of winds up here following a breakout. This looks like an accumulation phase, right? There's accumulation, there's distribution. When you're hovering above former resistance turn support and you're not moving, it probably means that just there's some money changing hands. People are getting out, people are buying in, but you're coiling. So I'm going to read this like it's something that still wants to run higher for the foreseeable future. Give me below 35.50 and we can have a different conversation.
Yeah, I mean, this looks pretty straightforward. You had a resistance, you've broken it. On the backfill, you see these long wicks where you're failing to break back under and you're holding those levels. It's like the market is screaming at you. In case you thought I didn't see the breakout, I saw it, and I'm telling you that it's going to hold because I'm sitting directly on top of it and I refuse to break down. I'm recognizing the level. So if you've been long, I don't see any reason to get off that horse.
The structure looks nice technically. So gold, I mean, when this all kind of makes sense, gold pulls back, silver advances, copper advances, the threat of global supply chains being upended and a broad regional war wrecking the energy markets and wrecking global trade as a result, right? Because if it costs more to ship things, that the cost of everything is going to go up, including commodity prices, because it requires energy to pull those things out of the ground and transport them and keep them safe during transport.
That's right.
But let's just say we're getting off that, then copper prices go back to their tariff talk and global growth, and silver continues to ride the waves of global growth on off again, depending upon how the tariff news is evolving. Either way, though, right? Silver prices, volatility is coming a bit. It's coming in gold. Silver's holding its ground above key breakout levels. From a technician's point of view, I think that's pretty promising. And I think we should continue to treat silver as something that looks like it wants to run from bottom left to top right, because that's what it's been doing for the better part of a year and a half. And holding that perspective long term has, I wouldn't say let us down, because silver just traded to its highest level since February 2012. Either way, though, Ilya, this is the one that I really want to talk about today. Last week, before I shut my computer for a few sessions, but not my phone, obviously, I asked you and Radigan, is it time to fade the move up in oil yet? Because one of our overtime trades, as cynical as it may be, has been that these geopolitical flare-ups don't really run that long. And good thing that you and Radigan arrived at the vector of no, it's not the time to do so last Wednesday, because Thursday, Friday, and even with the open today, saw us push from 67 up to a high of 75.50. We're at 70.21 now. We've given up a lot of the gains. Obviously, this is geopolitical induced. We're off the highs in volatility here, 115.89 high IVR on Friday. It's now 898.2. Are you ready to sell calls here and fade the move in oil?
I think you have to be exceedingly careful here, because the price action is not really telling you that you have something actionable right here, right now, just because of how choppy everything is. But I am getting mighty, mighty close, because what you have done is you've broken back inside the preceding range. And that's probably the most kind of immediately telltale sign. But look at the sort of, let's call it, the more liquid, more apt contract here, which is, I think we're already looking at August. And look at the April 2nd high. That's sort of your line in the sand. You're testing back through that now. That's kind of your most immediate reference point for resistance become support here. You broke out of it and you're kind of almost back in. So if you confirm that you're back in on the close today, and then you get a little bit of fuzz as the market tests that, it could be time. Incidentally, if you look at the 4-hour or the 8-hour, it already looks like it's time. And so as we get nearer the close today, it may actually be the opportunity already. But it's getting there. It's very, very close. It looks like you've broken back in. It looks like the breakout has already fizzled. And what's really interesting is you have that slight green candle here on the 4-hour. You're retesting the underside of that support now as resistance, and you're holding right there. That's telling. So maybe you wait for another few hours here and see if in fact that retest holds, and sell into that.
Yeah, if you don't want to trade, and listen, I've seen some people, and I've had this conversation with people in person as well. You know, when I've come to tasty events in New York City, like I'm not really comfortable trading oil when there are geopolitical headlines. I get it, right? Because you're trading around something and life hangs in the balance, and so then you can't trade energy right now. Just to be clear, because oil is ground zero for all this stuff. And the headlines are impacting this most. And so as we see over the past hour, Israelis told to go to shelters, Iran telling on state TV, this is going to be the biggest wave of attacks that Israel has seen thus far is on its way. And oil prices get a little jumpy. We're $2 here off the low. And you could easily see a move back higher, and then the market gets a sense of what's actually occurred and the extent of the damage, and will we continue the tit for tat, or are we actually going to try to de-escalate? And if we try to de-escalate and the Strait of Hormuz isn't going to be closed, ultimately, that's what this oil move is really all about, whether or not 25% of the global energy supply is about to see a blockade.
Right.
What's interesting about that, though, you know, in the 2000s when that was threatened, in the early 2010s, the U.S. and Western Europe were the biggest buyers of oil from Iran. And so we had an extreme vested interest in ensuring that the Strait of Hormuz stayed open. We are no longer the biggest buyers of oil from Iran. That's China. China has a vested interest in making sure that the Strait of Hormuz stays open. They do not want Iran to close it down.
Right.
So there's a lot of layers to this thing right now. So if you don't want to trade the headlines, then step away from oil. But keep in mind the headlines are impacting this. I myself, cynically, it's all terrible. War's bad. This is probably an over-exaggeration.
Yeah.
Exaggeration is already over, but it's an exaggeration. Sorry, Josh. Don't want to get the grammar police on me, Ilya. So let's see where we close. If we close below the April 2nd high today, the market's telling you this thing is done.
Probably. Yeah.
Natural gas gets a bump. They're a big, Iran is a big exporter, although have we done anything here? We remain range-bound. We've been range-bound since the middle of May. We're going into the middle of June now. We're halfway through, actually. 385, 3.42. If we're going to break out, look for a move above 385. If we're going to break down, we have a zone here that's been going back to October, November, December, January. That's been both support and resistance over the past many months, right around 3.35 or so. If you really want to get bared up, you're probably going to have to see that lost. So there's something to work with right now, but it's big volatility induced because of the headlines. Again, gap open higher, holding the breakout. Maybe there's a geopolitical push in the short term. We're only seeing it just now in natural gas. Oil had that kick up last week. Maybe this runs for a few days. Maybe it breaks out. Maybe we go back above 4. But I wouldn't be looking to fade the move higher just yet, as it were. There's still a decent amount of vol here. Westwater's been doing the short put spread. Last week, I got filled on the short put spread down here in natural gas. I'm going to hold on to it, given what we've seen in the action in the market as we move away from these range lows once more.
I don't have anything on here at this point. From a macro narrative, this thing is not consistent. It sort of has a life.
No.
It sort of has a life of its own. And so I'm looking elsewhere, but it is an interesting setup. And if you're not in it yet, then there's that range. You see it there on the screen. those are your marching orders, essentially. You're a little bit close to the top of that range to be, I think, initiating something now that looks like decent risk reward. But if you don't have it on yet, then you can sort of clearly see if you pull back to, let's say, 340, 350 here, then maybe you have something to buy. And if you break out and let's say climb north of 420, you have a breakout. And then it's go time.
If we ignore this brief breakout high that we had back in March, you can make the case that we've really been riding a pretty clean descending trend line the last few months. We have a lot of touch points here. March 4th, March 20th, we'll call it April 3rd, and then once again, May 12th. So that's why 385 is so in focus for me, because in clearing 385, this thing's really going to run. You break the downtrend, you're breaking the recent consolidation. And I think then we're talking about, this looks then like a fantastic little triangle that's breaking out. It's a little late in the triangle for it to break out. Nevertheless, why do we care about the Iran news here? Iran produces about 6.5% of global gas. There are a bunch of export bans and sanctions in place, so that's basically all consumed domestically. But Iran's had problems with power supply. So one would presume if they're going to continue to provide power to their people, and a lot of their energy infrastructure has been damaged as a result of Israel's bombs, then they're going to have to import more gas, which just puts strain on the global gas market, right? It's additional demand that otherwise wouldn't have been there in excess of what we had previously priced in. So short-term geopolitics can push this thing up. I don't know if it fundamentally changes the big picture here, but it's a good reason if you were looking at a short put spread near the bottom side of the range, the flows have helped overall. Before we get off, Ilya, we do want to take a brief look at the currency markets here. This week, there's obviously a whole host of items on the calendar that can move the market, not just the news, but what we're seeing overall in terms of a BOE rate decision, a Fed rate decision. Today, the yen gaps open lower, so the dollar is down versus everything else except the yen, and the yen is the weakest across the board here. Yep. Safe havens being jettisoned. The yen didn't even get a huge rally around all these fears last week. Which I think that just goes to show, we've talked in recent weeks, I don't want to touch long yen because of the positioning right now. Everyone and their mother is long yen. And who was left to buy last week? I think that's kind of, when you see one of these headlines that sparks that big move in crude, and then you look around and say, okay, well, how come some other assets aren't moving? Gold certainly moved, stock sold off a bit, but the yen couldn't get up, barely got a few pips higher because there's no one left who wants to get in. So this looks heavy.
That could be it. That could be it. It could also be that the yen really takes most of its cues from the bonds, and the bonds didn't run anywhere. And so if you're expecting that you're going to have a run-up in the bonds, you would be expecting that you'd have a run-up in the yen as well. And so I've been long this for a while, so I'm not itching to do much of anything, and I'm long it in spot because the J6 contract is just a little bit big for how I manage risk. It's just a lot of exposure. It's large, and I like to be able to put on something small and then see if it works, and if it doesn't, get out with a small loss and sort of poke at the market until it tells me that the timing is right. And then lean in, then size up. And so at this stage, all of my exposure is in dollar yen on the spot side. And of course, that auto rolls. There's no contract expiry to think about there. It's a 2-day roll, and the platform does that automatically. So do check out tastyfx with those auto rolls. It's on the platform now. But when you look at all of this, from my perspective, I'm just sitting and waiting. I'm sitting and waiting for it to decide what it's going to do in this digestion period. What I'm definitely not doing is adding anything else.
The only currency with an IVR north of 40 right now is 6C. A week or two ago, I cut short my short call spread, and I guess that was a good decision in hindsight. though if this Canadian dollar rally is driven in part by people looking for a proxy for oil, energy is 11% of Canadian GDP, and I know the correlation between oil and the Canadian dollar, at least in the dollar-CAD pair, has not been as strong in recent years, but that's in part because the dollar has behaved more like a petrocurrency. And so when you look at the Canadian dollar against other major currencies that haven't seen a big increase in energy output like the U.S. has since the shale revolution, it's still behaving like a petrocurrency on its own right. So if you're looking at like Euro CAD or CAD yen, it's kind of the same influences overall. I digress. Calendar for tomorrow. Retail sales in the U.S., I mentioned before, the control group is expected to come in better than expected or better than last time, whereas the headline is expected to fall off. Pick your narrative, I suppose, unless there's a big swing one way or the other, like control group misses or retail sales headline beats. We're going to get an upgrade to the GDP Now forecast. That next one comes out tomorrow morning, so we'll have some things to chew on. Ilya, you and I will chew on things in a few hours' time when we're back for overtime right after last call, so I will see you there. For everyone else, good luck trading until then. There's more Tasty Live coming at you, of course, after a brief break. Dr. Jim Schultz with From Theory to Practice up next here on Tasty Live.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today. You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Man, welcome to the Rafael Devers-less edition of what it is that we are trying to do. I still can't believe it. I'm still actually in shock that the Red Sox traded Rafael Devers yesterday, the face of the franchise, to the San Francisco Giants for Josh Fabian and Chris Vecchio. And so it's one thing to trade him, But to get a Josh Fabian back, like, that's tough, man. That's the hardest part about the whole thing. So thank you for being here with me today to help to drown my sorrows with me and lament my pain. It is only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show in real time. You can celebrate if you're a bull, of course, commiserate if you are a bear. Now, some housekeeping. We are extra long today, all the way to 3:15 Eastern, 2:15 Central. So if you have a question for me, I would get it in the chat box very, very, very soon. I'm going to try to get to as many as I can later on. I know the last couple of shows, we've gotten kind of, lost in the weeds. We've been watching Rafael Devers highlights. We've been doing all this crazy stuff that obviously we don't have to do anymore. And so we're going to have a lot more time today. So we're going to be freed up to do some other things that we've been trying to do for quite some time. And so we're going to get to as many questions as we can here in just a bit. So, all right. So Josh, go ahead and bring us into the market. Josh himself says that's a losing trade. I agree. In fact, I've never seen one that loses more than that trade. EME S&P's up 59 on the day. Risk-free instrument, also known as the NASDAQ futures, up 315. That is an extremely high-risk product if you are brand new to the show or brand new to the markets. I say that it is risk-free in jest because it is actually extraordinarily high risk in theory. In practice, we know that's the safest spot for your money to be. Boomers up 370, Russell 2000 futures index up 25. Got the bonds down 14. You got the notes down a couple ticks. You got oil down today. Man, that's been some crazy stuff. We're going to take a look at some oil charts here in just a minute to see if we can find some abandoned babies or some abandoned Rafael Devers or something on the charts to help us make some sense of this move. You got UB40 down 19 ticks. You got the Shifties getting smacked around today, down 40. British pound is up, euro's up, volatility also getting smacked around, down $1.20 on the future volatility, and then the spot volatility. The old VIX down $1.62. And so that's a pretty big move lower in volatility. But man, I'll tell you, so Friday's move in volatility in the market, obviously Friday was a pretty big down day. Let's take a look at Friday really quick. Let me bring up, hold on. I was kind of doing some Errol Coleman analysis just a minute ago, looking at like some 2-minute charts, like some tick charts. So let me get some other things going on here. So let me get a daily chart. Let's go like 6 months. Yeah, so Friday, we can even zoom in a little bit. So Friday, you can see obviously that's going to be right here. Friday was a pretty weak day in the market. I kind of covered it up there with my yellow scribbles, but that was a pretty weak day in the market. And then of course today has been really obviously with the Israel and Iran stuff on Thursday night going into Friday, and then today, I mean, all is well. Like today, I think that both sides have been kind of de-escalating the conflict, which is great from a global peace standpoint. And maybe it's the end, maybe it's not the end. I mean, these things have a way of kind of reversing course on a dime, but that would be really, really good if it is the end of the current conflict. I understand that it's a complicated thing, but today the market is looking pretty good. Friday, though, it was down quite a bit. So volatility, the reason why I brought this up is because I wanted to remember that on you can see that. So on Friday, so Thursday, I mean, volatility closed at like 18, high 17s, 18. And then Thursday night, obviously, it gaps way up. You can see, the VIX shot all the way up to 22 on the high, and now it is kind of in full contraction mode. So now we are kind of headed back down lower, which, again, we've talked about this many, many, many times before on the show. But volatility likes to contract. It likes to live on the lower end of the range. It likes to be in this kind of comfortable, grinding lower type of state. That is where, volatility normally kind of sits. And that's why, if you look at a chart of volatility, if I just go out like a couple of years, I mean, you look at like a daily chart of volatility, you can see it for yourself. I mean, this is not my opinion. This is not my conjecture, right? I mean, obviously the deep dish pizza I had over the weekend here in St. Pete over at Cappy's, it's on par with most Chicago deep dish. Also an objective fact. But with what you see on the screen, this is just data, man. This is not my opinion. You can see volatility likes to live on the lower end of the range. And so there's market dynamics behind this. There's the VIX construction. There's positive drift. There's Brownian motion. There's so many things we've already talked about so many times on the show that I'm not going to get into that right here and right now. But then, of course, every once in a while you get taken out to the woodshed. right? I mean, you kind of get hammered there with a little VIX spike. Now, again, this VIX spike from last August, that does not count, apparently. But sometimes you actually get VIX spikes that do count. Like sometimes you actually get a little something back for your trade. I mean, not last night. I mean, we got, Ryan, whoever he is, and Jordan, whoever he is, which is nobody A and nobody B. But every once in a while, you actually get a little something back for your money. Same thing in the VIX pits here, which of course is happening, or I should say has happened, here and here. Right, like this is actually perfect. This is perfect. So like this is like the Rafael Devers part of the trade. This is what we got back. Or no, maybe this. This is what we got back. So if you need like a visual representation of the Rafael Devers trade, like if you don't follow baseball or like, whatever, you're like, I don't really, explain this to me in VIX terms. Here you go. This is Rafael Devers. And then here, let me get it actually, hold on. Let me get a different color. This is Rafael Devers in the Diet Strawberry. And then this is who we got back. This little candle down here. This guy. And then this guy. These are the two pieces we got back. There were two other pieces too, but that's like this guy and this guy. So these are all the guys we got back. Nobody trades away Hall of Famers better than our Boston Red Sox. You're in this with me now. We have to do this together. And so this is essentially where we are on the Rafael Devers situation. But nevertheless, I digress. It is an extra long show today, so you are going to be obviously pleasantly surprised, or maybe not surprised, to know that the tangents are going to be even longer and more numerous than they might otherwise be. So, all right, let's go into I see you guys in the chat, man. I see Harold in the chat. Nothing like sweeping the Yankees and then we lose Rafael Devers. I'm sure Harold's got some things to say about that. I may take a look at that quickly before I block him. But I see Richard Price in the house, Emmett's in the house. Man, Rob Banks in the house. Man, uptick, downtick in the house. How about that? Org Danu, Paul Heyman, Sam L. I mean, I appreciate you guys, all you guys. And the other ones I wasn't able to kind of glance at right there. But, okay, so let's take a look at what's going on in the portfolio. Obviously, a pretty good day in the portfolio. I mean, if you look at, our daily action, I know that the P&L Open Bros are going to come for me, but I don't really care about the P&L Open Bros. So we're just going to scribble all that out because it doesn't matter. But if you look at the P&L day, that's a pretty good looking day. Breslow should have called me first because I can handle 15 to 20 minutes worth of Devers' contract. Like, here you go, man. We got a little Oracle downtick. We got a little, BBY uptick. Like, it's all starting to come together. Like, there's no reason to just, ship off all the talent. Like, you got to consult with me first. But Oracle, man, look at Oracle getting smacked around today. Not unlike the shifties, not unlike, volatility. And so Oracle, they must have had their third earnings call and it didn't go so well. Kind of like, Hangover 3. Was there a Hangover 3? I think there was. And it was brutal. Like, it just kept getting more brutal. Obviously, Hangover 1 is, amazing movie, iconic, very funny. Hangover 2 really fell off the table. And then I want to say there was a Hangover 3 that, and the fact that I'm not even sure, that kind of speaks to the quality of said movie. And so Oracle down $4 today. This is going to help us out a lot. We have a strangle line. You can see 180, 195 on the strangle for Oracle, and Oracle down to 210. So that's good. Obviously, we have more work to do. Obviously, we need Oracle down about another 10 or 15 points. That would be really, really good. But this is a good start. Like, we'll take it. And we're going to sit tight and do nothing. I mean, we're in August here. You can see there's still 60 days to go in this contract. And so very, very long time to go in this contract. We're going to sit tight. We're going to do nothing and just let this guy kind of cook on the back burner. And so that is the Oracle commentary that I'm sure you were curious about, just given the action today in the market. And then, man, other than that, there isn't really, like I can't do a Rafael Devers home run trot because he's gone. Like I couldn't do it if I wanted to. He's not even part of the team anymore. So he's gone, right? Can I do a Jarren Duran home run trot? I guess. Can I do a Roman Anthony home run trot? I mean, he kind of needs to hit a home run before we can do a trot, right? Can I do an Anthony home run trot? I mean, just the name itself kind of warrants at least some kind of victory lap. But if I look across the board here, there's not a ton happening that requires our meddling. There's nothing that we need to do in here that's going to require our adjustment or anything. I mean, MCL, 65, 67, oil is obviously still over 70, but man, it's down today. And if the situation overseas continues to de-escalate, I would imagine oil's going to head even lower. Now, who knows? Maybe that means it's going to 75, 77. I don't know too many people who saw it back down to 70 on their bingo card today. Of course, all the internet gurus had it. Like, I understand that. But just regular people that are trading actual real money, I'm not so sure. Like, I'm not so sure that anybody had it on their bingo card today. And so, I don't know. I would say that if it's going to continue to de-escalate in the Middle East, we're going to see, 67, 68. I mean, we saw 68. We saw 67, I think, right? I mean, 67, I want to say maybe 67, 90. Hang on. If I go in here, I mean, yeah, look at that. So this thing was down to, the low was, 67.85. So I was pretty close. 67.85, and it has since rallied back up over 70. So a huge range for oil today. $8 range. Friday you had a $7.50 range. And so, we could be we could be due for, we could be in store for, none of those kind of sound right or feel right, but they're already out there. We could be staring down the chutes at, that's a little bit better, some wild oil days. I mean, that would make sense to me, just given the, the tensions abroad and just how much oil supply does come from that region of the world. And so we're not going to do anything with the oil, though. We just made an adjustment. I'm going to sit tight. Let's see if it can't, settle down, and that would be good. And then, you've got your Bank of America, you got your Best Buy, you got your Nike, you got your Starbucks. There's not really a ton to say here. I mean, I'm going to muster up 6 minutes, but that's probably the most I can do. Bank of America, we're still down on the position. We bought it at 45.60. It's 44.60 basically, 44.55. And so we're down a couple of beans on that trade. And so that's what you sign up for, right? Like when you buy shares and you just sit tight and you're just listening to Bank of America earnings calls, like this is what you're doing, right? You're just going to collect the 18-cent dividend that Bank of America is going to pay you. I think if you're actually a Bank of America shareholder and a Bank of America customer, they just like waive your late fees. They don't even give you a dividend. They just give you like late fee vouchers on your checking account and credit cards and things like that. And so they find a way to not really, pay their shareholders, not unlike the Red Sox find a way to never pay their superstars. It's very similar. Again, there's so much overlap today, guys. It's really, really ridiculous. But that's Bank of America. Best Buy. You've got Best Buy 100 shares, and this, again, was a busted earnings trade. I talked about this just recently. We broke down the basis. I think it was just last week. We broke down the basis, kind of went through the whole deal. We're still down a few bucks in the trade, so I'm going to sit tight. Let's do nothing. Let's see if we can't, benefit from having the clean delta to the upside, and see if, a big run higher in Best Buy can help us out. And, I'll go to we got a Best Buy right around the block, man, right around the corner. And so I'll go up there a couple times, maybe, go through the aisles, maybe make it look like I'm going to buy something, and then, of course, order on Amazon in the parking lot. But maybe the foot traffic alone would do a little something for the bottom line. And then Nike and Starbucks. Nike is also a busted earnings trade that we're going to sit tight on right now. I don't want to sell any calls against Nike. I'm going to wait until it maybe moves up a little bit more, although the up move today is kind of nice. I mean, $1.22. Yeah, hold on a second, because we've got so much time. We have too much time. Way too much time. Giving Dr. Jim an hour 15? Man, that is a mistake. I mean, is it as big of a mistake as trading Rafael Devers? It's probably close. I mean, it's like, man, you're talking a 1A, 1B type of thing right there. So if I go into, let's go to the history tab, because I know that I was assigned on this position. So I want to see, I think I got assigned at 69. I want to say that rings a bell. It was just a couple months ago, I think. We haven't had this trade for too long. Yeah, there it is right there, 69. That was right. Okay, so 69. Again, the blueberry game, it's on point. We do fresh, we do organic, we do the jet fuel laden stuff, we do frozen stuff. Like, we're getting it from all sources. And so March 21st, we bought Nike at 69. And so that's helpful for me to know. So now what I'm going to do, this will be much easier than the Best Buy thing, I think, to figure out the basis. So the shares that I have in Nike, so like if I go to my positions tab and you see, the shares here, it's currently selling at 61.71. I've got my shares. I guess I could have just looked right there. The trade price is 69. I didn't know. Wow, this is new information. Not unlike the Rafael Devers trade last night. This is very, I was shocked. Absolutely shocked. We were sitting in the movie theater, and I was watching How to Train Your Dragon with my kids, and my wife was there, and her dad, who lives in Florida too, was there. And so for Father's Day, we just went out to see How to Train Your Dragon, kind of the live action thing with the, kind of the real people, and then obviously the fake dragons. I mean, some of them looked pretty real. But man, it was a really, really good movie. We love the animated one. My kids love it. So I'm sitting there, and I'm obviously watching the end of the Red Sox game, of course. And so the Red Sox complete the sweep of the Yankees. I'm like, we're back, we're over 500, blah 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 blah. And then by the time the movie was over, I just glanced down at my phone, and Rafael Devers traded to the Giants. I'm like, this is unbelievable. Like, this is crazy. And so, that was new information to me last night. But new information to me right now that might be a bit more relevant. But nothing is more relevant to my personal world right now than Rafael Devers getting traded. The trade price, when you have group by order chains, I suppose, the trade price when you are assigned is going to line up with your assignment price. I did not know that. Like, I thought, if I buy shares, like in Starbucks, for example, like this right here, that is the trade price of the actual shares that we bought, that 92.18. So that makes sense to me. Like, that is what it should be, right? That's what I would expect it to be. But when you are assigned, the trade price actually shows up here on the positions tab too. That's really, really nice. We see the same thing in Best Buy, because I know we just worked this out recently. The trade price of 85 is also the assignment price. And so there's a neat little shortcut that we discovered that I'm sure many of you already knew, but I just figured it out. Not unlike the Devers trade. So that's what I got for you. So if I go to Nike though, let's see, if I go to activity, go to Nike. So we go back. Okay, so here we go. So I know the assignment, from what I can remember just a few minutes ago, the assignment was on 321. So we did a trade on 320, which was, we did a Super Bowl. Yeah, okay, I remember now. So here it is. Here's your Super Bowl right there. And there's your 69 put that ended up being the culprit for the assignment. So on 320, we did the trade, Nike crash, boom, bangs. We end up buying shares at 69. Okay, so let's keep that in mind. So 69 is my basis. Or I'm sorry, I shouldn't say my basis. 69 is the starting point for determining our basis. We are now going to determine the basis here together. So 69 is the purchase price. Now what I want to figure out is, I've got my 45 cents from my original trade. So that was my Super Bowl, 45 cents. And then we sold some calls against the shares. So we sold this little round of calls. Sold calls for $1.51, bought them back for 75 cents. I'm no Julius Spina, but that looks like it's a positive 76 cents in our back pockets. So that's pretty good. We did the same thing on March 31st to April 3rd. We went $1.28 on the short call. We bought it back for 46 cents. Again, I'm no Julius Spina, but that's what? That's 82 cents. So I'm going to say that that's 82 cents. Again, you can never be sure, so we'll put the approximation symbol. And then lastly, we did the same thing again. I mean, look at this, man. This is some good stuff. We then, on May 12th to May 30th, May 12th, we sold the call for 85 cents. On May 30th, so just a couple weeks ago, we bought it back for 19 cents. Again, no Jacob Perlman, but that looks like 66 cents. Is that right? Yeah, I think that's right. So that's 66 cents. So now what we need to do is we need to add all this up. So I'm going to branch this off. This is how I would typically do it if I was just hanging out by myself. So let's do it. That's $1.21. That's $1.48. And then you add those two guys together, and you get $2.69. All right, beautiful. So now what I need to do, obviously, is take this number and subtract it from this number. So 69 minus 269 is going to be what? 66.31. So that is my basis on Nike. So when I look at Nike being at, 61.70, I'm down about $5 on the trade, like a little bit less than $5 on the trade. So the basis is really helpful for understanding like where I want to potentially sell calls, where I want to potentially add some new short premium against the position and things like that. And so I think for us right now, I don't know that I want to do anything today. Nike has earnings again on June 26th. We've had this position. Wow, we've had this position that long? Man, that's really crazy. That's really crazy. So June 26th is Autumn's birthday. And so I feel like that's some kind of sign. Although I do feel like the Devers trade is a sign going in the other direction. So maybe maybe I'm delta neutral after these signs. I don't know. Let's see. June 20. Oh, that's only like a week and a half away. Which is a good reminder. I should probably get her something. If I go into, let's see here. Okay, I'm not going to do anything right now. Let's sit tight. I may sell some calls against my shares right before earnings. I'm not going to do anything right now, though. So, all right. So there's the Nike position. And then, I mean, Gilead. Well, look at Gilead. Wow, we're doing all right in Gilead. Look at this. Gilead, we're almost at 50% of max profit. I'm going to sit tight. Let's sit tight. Let's let that guy cook. And we'll just we'll see what happens. And, of course, you've got SLV. That's our bazooka short, or our little one lot, right, in the money short call. It's working okay so far. And then, of course, you've got Wolf, which is going to zero any day now. But we're going to hold on. We're going to hold on hope that maybe that they will reverse the Devers trade here in the next couple of minutes. So, all right, let's go in here. Where are you guys at, though? Man, we've got 45 minutes for you guys. Let me try to get to as many of you guys as I can. And let's just do it, man. All right, so Daniel Perkins in the house. What's up, Daniel? Boy, the Sox sure do make it hard to be a fan, don't they? Man, they do. I got to be honest. Personally, if I could talk about this for a few extra seconds. What a day to have an extra long show, too, by the way. I don't know that I necessarily hate it, to be honest with you. I'm just in shock. I'm in shock that it happened. But, man, he was pretty selfish. And it's like the third base thing, the first base thing. If you don't follow Red Sox baseball, you may not know what I'm talking about. But, I'm not going to get into all that because that would not be a good use of our time. But anyway, he made it very clear that he was not necessarily a team first guy. Now, did the front office mess it up? I think so. I think there's a lot of blame to go around. But it's like, man, you're the face of the franchise. You got to put your ego aside. I mean, that's kind of what David Ortiz came out and said today, and I totally agree. So I actually don't hate getting him out. The problem I have, he's an amazing hitter, obviously, especially in the clutch. The problem I have is what we're getting back for him. We got nothing. We got peanuts. They weren't even fresh peanuts. You gave me some fresh peanuts, now we're talking. But we got the shells on the ground at Texas Roadhouse. That's what we got back for Rafael Devers. That's pretty crazy stuff, man. And so I'm just kind of blown away at the lack of getting anything back in return for him. And so, but I'm excited. This makes more room for Roman Anthony. Maybe make some room for his brother, Anthony. Let's get him on the roster, too. And, man, there you go. But thank you for being here, Daniel. I appreciate you. Or Daniel's in the house. Greetings from Italy, Dr. Jim. Hope you had a wonderful weekend. I did. I had a great weekend, barring the Devers trade. But, yeah, great Father's Day. The movie was great. Really awesome weekend just hanging out. So I appreciate you there, Roy Daniel. Sam L's in the house. Says, what's going on there, Dr. Jim? Hope you had a great weekend. I did, my friend. Thank you so much. Sam L goes on to say, Doc, how should we prep for Uncle Jay this week? Oh, that's right. Man, I totally forgot about that. Should we cut our diet? Because he sure ain't cutting rates. So when you say cut your diet, you mean cutting or start cutting? I think you mean cutting. And I'll tell you what, that might be the move. It might not be the move. I don't know. But I do know that just thinking about it seasonally, this is normally the time of year when it's we're all in straight cut mode. We're all in let's get rid of the dad bods, let's do all these things and let's get ready for the beach. We usually start in June, finally get ready in October when obviously it's starting to get chilly outside. And so that's just basic bro strategy. But the tricky part is, man, if you go into a June with a bulk cycle where you're cutting, that's a power move, man. If you're saying, look, I'm going into hibernation mode, it's 97 degrees outside. That is a straight power station if you make that move. And so, man, if you can do it, if you can pull it off, man, more power to you for sure. 100%. But, yeah, I forgot, man. Powell's Wednesday, right? Yeah, that's crazy. Man, I totally forgot. And so help me out in the chat, guys. What are they? Are they projecting any chance of a cut this meeting? I'm assuming not, right? Are they is it 100-0 or 99-1 or whatever? I think the first cut is being projected in September. The first cut in a while. Did that cut in January? I don't think so. I think the last cut in November. I think so. The last cut was at the end of last year, if I'm not mistaken. It was that bazooka 50 bips cut, which didn't really make any sense. And so I think that was the last one, though. And so now we've got, I think September might be the next slated cut. And so it's going to be all about Powell's commentary. It's going to be all about Powell's language. And all I can say is I've been doing this a really, really long time. I started trading in 2007. I've been studying the market since freshman year of college, so 2000. And in all of my study, in all of my live trading, in all of my research and the dissertation and this and that and blah, 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 I've studied a lot of markets. I've studied a lot of economic data points. This FOMC print, it stands alone. It stands alone as being the most important economic print that I've ever seen. I've ever even thought about. And so we have 2 days left, guys. 2 days left. You've got 48 hours to get rid of your Rafael Devers jerseys because they're useless, right? Get rid of like your Arby's coupons in your wallet. Well, I'd probably use those in the next 48 hours. But just get rid of the meaningless riffraff that's, hanging around the edges of your life and do the things that really matter, right? Like get to Fenway, maybe see a game, give John Henry some more of your money, like things like that. And so, Samuel, I appreciate you, my friend, but yeah, Wednesday is not going to be good. Paul Heyman's in the house. What's going on there, Paul? Please explain your research knowledge of stealth trading strategies for options. Yes, Paul. So great question. And I might disappoint you a little bit here with my answer because I have nothing to say about stealth trading for options, which is what you specifically asked about. So and I talked about this last week with Errol actually on Wednesday for today's assignment. So in my dissertation, my whole dissertation was about institutional trading. And it was specifically about when institutional traders like hedge funds, pension funds, insurance companies, like they're coming in with, tens of thousands of shares like to fill in a given order. When they go in to fill an order, obviously, they're going to oftentimes absorb all the liquidity that's sitting on the book at that price. And so they frequently have to walk up or walk down the book, take all the liquidity, and then they end up getting a worse transaction price as a result of that because, if it's called the NBBO, the National Best Bid and Offer. If the NBBO, the highest bid, lowest offer, if the highest bid and lowest offer only has, let's say, 5,000 shares, like at each price, and I'm coming in with, a 30,000 share order, I'm going to get 5,000 filled at 60. I'm going to get 5,000 filled at 59.98 and then 59.96 and so on and so on and so forth. And so my average transaction price ends up being worse unless I engage in kind of some stealth trading, which is a big topic in academic finance. And like I was talking about on Wednesday with Errol, the seminal work in the stealth trading branch of finance academic literature, to my knowledge, was done by Sugato Chakravarty, who was on my dissertation committee. Really great guy, brilliant guy. And he was on my dissertation committee. He was one of the ones that signed off and said, yeah, Jim Schultz, let him free, cut him loose in the forest. What could possibly go wrong? What could possibly go wrong? And look at where we are here today. It's unbelievable how wrong they were back then. But really brilliant guy, right? Really sharp guy. He did the stealth trading, the seminal work in the stealth trading world. And so I read about some of that as I was preparing for my own dissertation and kind of understanding like how institutions would split up their orders. And I mean, this was like 15 years ago now, Paul. So I don't remember, like that wasn't the main part of my dissertation. I just remember looking at the data set that I had access to. One of the things that was really fascinating was there was no rhyme or reason to how or when a big player would engage in stealth trading. Obviously, they had their own proprietary things that they were using, whether they were algorithms, whether they were models, whatever they were using. I didn't have access to any of that. All I could see was kind of the trader ID number. Like, so I could see, like, for example, if a trader had a 60,000 share order, right? And they came on and I could see the trader ID was number 1234. So I could see 1234 like filled, 20,000 shares and then 20,000 shares and then 20,000 shares. And so I could see the trader ID and I could also see an order ID. So there was an order ID that kind of linked up. It allowed me to group the actual pieces of the whole trade package together in the same trade package. So I was actually able to see, I don't know how we got access to this data, but it was incredible. I was able to see like when they broke it apart, when they didn't. And I measured all of that in the dissertation. But again, it wasn't like a main part of the paper. It was like a supplementary table that I provided for like descriptive statistics and things like that. And so but it was fascinating to see sometimes there was no stealth trading. Sometimes they would take a week to fill, a 100,000 share order. Sometimes they would take a week to fill like a 10,000 share order. Like it was really interesting to see. There was no rhyme or reason. Obviously the bigger orders, you'd see more stealth going on, but not necessarily always the case. You'd see some small orders where they split it up. And I'm like, man, this is really, really fascinating. And so that's all I can really say about that there, Paul. I never even answered your question. And I still muster up about 6 minutes. Josh told me 99.8% no cut. Thank you, Josh. That's really helpful. I'm excited about your new tenure with the Boston Red Sox. And so I appreciate you, my friend. 99.8% no cut. Okay. So I would assume that that's 100%. So good stuff. All right. Let's see where we at. Sunflowers in the house. Dr. Jim, ES is in contango, which is normally the case. No, that's normally the case. What in the world is that, and how do I trade it? Okay, so ES. Okay, so first of all, you have to understand that right now, because triple witching is on Friday, right now is a super heavy roll day. Like everybody's rolling from June to September, and it's Monday of roll week. By the end of the day tomorrow, like everybody's gonna be trading September. Only the stragglers will be left trading kind of June. By the end of Wednesday, like there'll be no volume left in June. The biggest day of roll week, triple witching week, is the Monday, and so this is gonna be where all the roll is gonna be happening. But like if I look at like ESM, so if I go to ESM5, that's gonna be June, and then I go to ESU5, that's gonna be September. So right now you can see that M is trading at 60.35, and then September is like 55 points higher. That's pretty normal for the equity indexes to be in contango, where the later dated months are going to be priced higher than the nearer dated months, or I shouldn't say months, but quarters, because the financial futures trade on quarterly expirations. And the reason why that is the case is simply because you have a couple of different elements. Number one, you have the positive drift that's baked into the market. Number two, you obviously have dividends that the indexes pay. And so essentially, if you want to remain short these indexes like forever, like indefinitely, there's going to be a cost to carrying that position. Like you have to absorb the weight of, the positive drift, but mainly the dividends. Because the positive drift is that's more of a theoretical thing where it's not actually like cash out of your pocket, but dividends most certainly are. And so dividends are going to be the primary component of the cost of carry when it comes to the pricing differential between a June future and a September future. It's not that often that we'll see financial futures in backwardation, where the actual, like right now, September would be less or lower than June. That's very, very uncommon. We'll see the same thing in NASDAQ, of course, if I bring this up really quick. If I bring up like NASDAQ, we're going to see contango probably, I haven't even looked at this. I would say it's probably 250 points or so. That's kind of where the NASDAQ normally lives, 250, maybe 300. Let's see, where is it at? Okay, so yeah, it looks like, oh, look at that. It's about 230. Yeah, so it's almost like we've been doing this for a while. So right now you've got 230 points of contango in NASDAQ. How can you trade this sunflower? I don't think there's anything there. There's no arbs there. Like you're not going to be able to ooh, man, let me just, let me buy June and, sell September, and kind of, buy low and sell high and just keep doing that. Like you can't do that. And it's not going to be like free money or anything like that. And so I can't think of a way to beat the system here and kind of take advantage of, the different pricings. I would just treat it a lot more simply from the standpoint of, just make sure if you're trading futures that right now, you're moving all of your activity over to September. Like June's pretty much done and dusted. It's only got a little bit of juice left, and then it is going to be, pretty much officially done. And so that is how I would comment on the contango. Contango is very normal. That's what we would expect to see. In fact, I don't even know. I'd have to think about. I'm trying to think. Under normal market conditions, you're going to see contango in the equity indexes for sure. When the market is super hot and super high and going higher, you're going to see contango in the equity futures for sure. If we get a big drop, like if we get a really, really, really big drop in the market, which we've gotten a couple of those just in the last, 6 or 9 months, would you then see backwardation? Man, I think that it's possible, of course. You would need to see a huge drop, and it has to get to a point where kind of the dividend yield and the risk-free rate, the difference between those two, and so you'd have to kind of think about. I think the dividend yield would have to be greater than the risk-free rate to be in backwardation for the equity indexes, and so this could. Now that I'm thinking about that component and the cost of carry, that is a big part of this. If interest rates go lower, like when the Fed finally begins to cut. Will we potentially then now start seeing backwardation more regularly? I think so, actually. And so the fact that I say it's very common to see contango, it's very common to see, September higher than June, December higher than September, and so on and so forth. That's mostly a product of the interest rate environment that we're in and interest rates being higher. Back when we were in the ZIRP world, the zero interest rate policy world, it was very common to see backwardation now that I'm thinking about it. It's all coming back to me. I mean, Celine Dion nailed it, man. It was like 25 years ago. She absolutely nailed it. And so now that I'm kind of saying this out loud, it's mostly going to be an interest rate phenomenon and the relationship between the interest rate and the dividend. But I don't know that there's anything there that you can like trade. And so, yeah, uptick, downticks in the house. Says, I'm going to miss you, Dr. Jim. Yeah, I'm not going anywhere. Sadly, I'm not getting traded to San Francisco. Although those are my people, man. Those are my people. Like, if somebody belongs in San Francisco on the Tasty Network, it's probably me. Like, when you see me and you just, like, think about Dr. Jim as, like, a thought experiment, you're probably thinking San Diego. You're probably thinking, I don't know, maybe French Riviera. But then maybe a close third would be, like, San Francisco. I mean, those are my people, man. And that's where my father-in-law just moved from, actually, and he's here in Florida. And he loves it out there. And so I haven't talked to him about the Devers trade. He's not really a big baseball guy, so that's good. Rob Banks, good day, Dr. J. Excellent job as usual this morning, man. I appreciate you very much. We talked about some Vanna with Tom and Tony. We talked about, how all options become at-the-money options when volatility increases. And so I thought it was okay. I thought it was decent. And then, of course, I had to school those guys on deep dish pizza, which is embarrassing for them. Like, that's embarrassing for them. Like, it makes sense that I've got to school them on options. Like, that's what we've come to expect. It makes sense that I've got to school them about, different goings on in the world. Like, that makes sense. But deep dish pizza, like, that's supposed to be their wheelhouse. Like, that's supposed to be untouchable. And I just came in and showed them the ropes this morning. I mean, Tom thought he was going to land this haymaker on me with his girl on TikTok. That's this food reviewer, whatever. Like, eat clean and be Mandy or whatever it's called. Eat, drink, and be Mandy. And she loved my place. In fact, her exact words were, "This is perfection." Perfection. And she was from the South Side of Chicago, man. She grew up like going to White Sox games. I'm like, yeah, I'm sorry, man, but your girl, she's on my side too. And so RC's in the house. Giants fan here, Dr. Jim. I came to say thank you, man. You're welcome. You're welcome. And you know what else is really funny? And you have to tell me if this is true. But he came out and said, Devers came out today and said, hey, I'll play whatever position helps the team. Like, put me at first base, whatever. I'm like, man, like, there may have been some expletives underneath my breath when I read that. I'm like, this guy, man. And so, I mean, he was just not a team player. He really wasn't. Not his whole career, just the last year or so. And so maybe you have a different experience. Obviously, it's just like anything else, right? Like, if Tom traded me to, like, I mean, I don't even know, like, I guess like TD or whatever, right? Like, I'd get a little fire under my rear too. Like, I'd get a little something and we'd be on like 12. And so he might do the same thing. And so I hope he does for you guys. He's going to be, I mean, he's a great hitter, man. He was very clutch, very clutch. And so I'll be very curious to see if he's similar for you guys. RC says Devers can hit, he can, and apparently he'll play first base for you, which that's going to be a huge liability for you. So that's going to be the one part about him that you're not going to love necessarily. But Emmett Morrison in the house, what's going on there, Emmett Morrison? Josh said I lost him at Celine Dion, and that's okay, man. Like that's where you and I differ. Like, that's just going to be irreconcilable differences right there, and that's just the way it's got to be. Emmett says, hey there, Dr. Jim. What are your thoughts on buying 0DTE calls or puts after 1 o'clock to catch any end-of-day moves as the day traders cover their positions? Yeah, I know that the Tasty Research has looked at this and kind of shown, like, if you're going to sell some premium early in the day, if you're going to buy some premium, 0DTE premium later in the day makes sense. The selling early in the day makes total sense to me because if you wait too long, there's nothing there. Like, I actually would argue there's not much there to begin with. And so that's why I don't typically love it. And again, because I trade on the show, it doesn't make sense for me to do it at 2 o'clock going for a 4 o'clock close. Like, I got that. So anything I do will usually be overnight going for the next day. So it's not really a 0 DTE. It's more like a 1.25 DTE. That's going to make a lot more sense. But if I were like trading in the morning, I don't know. I still don't know how much premium I'd personally be selling in the morning. It doesn't make a lot of sense to me, just based on all the other things that we know, based on, the reliability of the early part of the cycle, from 45 days to 21 days. Now, if you want to get a little bit creative, if you're like, hey, 45 days is great, but it's a little bit too slow. I want something that moves a little bit more quickly. I 100% understand. So maybe you splash around with, getting in at 21 and out at 7, right? Again, we're just thinking outside the box here. So just to be very clear, like, I don't know if this is a good idea or a bad idea, but it's just, this is innovation. This is, sticky notes on the wall, and it's kind of like, who are we going to get to replace Rafael Devers? Well, we can't get one guy, but we can recreate him in the aggregate, right? So let's get Scott Hatterberg. let's get that other guy, and let's get that other guy. And it's all about getting on base. Like, I've seen this movie before. You've seen this movie before, right? So we got Josh Fabian. We got Chris Vecchio. Now, who else can we get to replace Rafael Devers in the aggregate? We can't do it with just one person. Very, very similar idea when it comes to, thinking about and thinking outside the box with these different spreads. If you want to get in at 21 out of 7, give it a shot. Like, to me, that makes more sense than 0 DTE. So that's just a quick comment on the short premium side of it. What about buying premium? Okay. I personally think if you're going to buy premium in 0 DTE, you got to buy it in the morning. You got to buy it in the morning. Now, I understand what the research has said, but this is just my take. So I don't have any hard stats. I don't have any data to give you. I don't have an options jive reference. I don't have a bibliography handy. Like, this is just my own lived experience, right? My own anecdata. So take it for what it's worth. I would much prefer to do that in the morning, though, to give myself more time for the trade to work, right? Because the biggest enemy in a 0 DTE world is time. That's the biggest enemy, which is so different from the way that we typically trade. That's usually our greatest ally. Like, that's usually the thing that we're banking on, right? And so that's not usually the thing that's going to be up, that we're up against. But if you're buying premium in a 0 DTE world, the thing that you're up against the most is going to be time. Okay, so if I start sneaking into these trades at 1 o'clock or 2 o'clock, there's only a couple hours left to go. Now, is it all standardized? Of course. I mean, the prices are going to go down because there's not much time left and things like that. And so, again, if you're not trading huge, it may not make a difference either way. But I don't know. For me, just intuitively, I think anything done 0 DTE, I would do it in the morning. I would do it between 9:30 and 10 Eastern, 8:30 and 9 Central. And so that's my take. Just don't tell Tom I said that. But I don't think, even if you told him, I don't think he's going to get rid of me because he knows that I'm emotionally fragile right now. So, Tom, I mean, he's a good dude. And so Harold's in the house. What's going on there, Harold? I made it a little bit late. It makes sense. I mean, it's been a tough weekend for you, man. Real tough weekend for you. He said a sweep won't bring me down, especially if the team in the division just traded their star player. I think that's what you meant to say. Well, we got a Giants fan here. We do have a Giants fan here. And yes, I'm absolutely going to miss watching Devers homer off of Cole, just over and over and over and over again. And so I'm going to miss that a lot. But sadly, those days are over. And then RC says Harrison is okay, but he can't throw strikes. Perfect. That's exactly what we need. Is another guy who can't throw strikes. Amazing. I feel much better, RC. Thank you for letting me know that. Let's see here. Andrew Cortado is in the house. He says, Dr. Jim, thanks for explaining Vanna earlier. Do you have anything published on this in the Tasty archives? I don't have anything published on it. Okay, so if you go, I've done some things on Vanna before. So if you Google, Tasty Vanna, you'll probably find some segments I've done before. There is a segment on the in the crash course that's already on the YouTube channel about strategy management on the Greeks. I did some first order Greeks and I did some second and third order Greeks, and Vanna is one of those. And so I did talk about Vanna for just a few minutes inside of there. And so those are a couple different ways that I've talked about Vanna. This other way, I mean, Vanna becomes, Vanna can be really, really powerful, especially in the final week. Like before expiration, like this week, like Vanna and Charm, you may have heard like Vanna flows and Charm flows and things like that. I've talked about Charm flows before with Tom and Tony on the Skinny on options, abstract applications. And so that's just the simple fact that at the beginning of like a triple witching week, if you don't get that down move that a lot of the put buyers are wanting, I mean, it's tricky because a lot of them are buying the puts as insurance for their long deltas, so they don't necessarily want it. But if you don't get that move, then the deltas on those puts dry up, so the dealers don't have to hedge as many shares, and that causes a lot of upside momentum going into the end of the week. That's why typically triple witching is more bullish than it is bearish. But I've never actually talked about the Vanna flow, so that could be another segment that we could do on Vanna, which I think would be maybe interesting. And so let's see. Oh, RC says we gotta steal. You 100% gotta steal. I mean, you absolutely fleeced us. There is there's no doubt in my mind. And so let's see. Sam L says, Doc, St. Pete Deep is rivaling Chicago. Look at you hitting your macros one slice at a time. That's correct. you got to do it, man. It's the only way to be done. So again, I was really fair about this. I tweeted about this. I sent it to Tony because he needs an objective take, right? And I know that he highly, highly respects my palate and my ability to judge food fairly. And so it's above Lou Malnati's. It was on par with Art of Pizza, and it was below Pequod's. I mean, that gives you everything you need to know if you live in Chicago or have been to Chicago. Like those are, Lou Malnati's is obviously, that's like a chain, right? Art of Pizza, I think they only have like one location or two locations. Pequod's only has one location. Pequod's, in my opinion, is the best pizza in Chicago. And so, that's my thoughts. Emmett says, I had Pequod's for dinner last night. There you go. So Emmett, let me know. Like, what do you think? Is Pequod's number one in Chicago? Obviously, that's a hard thing to say. So many places are so great, but Pequod's, in my opinion, is very, very good. And so, let's see here. Oh, Richard Price in the house says if one puts on a $10 wide, 45 days to go credit spread with the short option at 30 delta, and it works, and your short option is down to 12 delta, but you still have 30 DTE and you feel the move is not yet done, do you roll to higher delta in the same expiration, or do you roll out early? Okay, this is a very good question. And I'm actually going to be able to take your question. I appreciate the detail and the specifics very, very much. But I'm going to zoom out just ever so slightly from the specifics of your question. That's going to be a bit more applicable to, a lot of situations that come up like this. You put on a defined risk strategy, a vertical spread, and it works. What do you do? Do you, A, keep it on, B, close it early, C, roll up the strikes to try to go after even more money, or D, don't roll up the strikes, but just roll out to the next cycle to keep the trade on because you don't feel like the move is over, things like that. You basically have those four options. Okay. C and D. So basically the two that you laid out in your question, rolling up the strikes if it's like a short put spread, or rolling down the strikes if it's a short call spread, to kind of chase the move, to stay in the move and pick up more premium. And if the momentum continues, you make more money. I do not like that move. I do not like that move at all. And the reason why I don't like that move is simply because, a lot of what we do on the network, and I wholeheartedly agree with this, is, kind of taking a short-term contrarian nature to whatever price moves might happen in the market. So when the market goes down, we look to get long. When the market goes up, we look to get short, just generally speaking. A lot of us kind of, apply that differently with how we actually trade and how we actually feel specifically about that. But just generally speaking, that's how we view, and that's definitely how I view. Now, that may not be how everybody views. Chris Vecchio may be more of a momentum trader. I'm not sure. I can't put words in his mouth. But I know, that's how Tom trades. That's how Tony trades. Like Liz and Jenny, even like Errol. I know, and I think Jamal is a little bit more of a contrarian too when it comes to the short-term movements in the market. So when I think about rolling up a short put spread when the market goes higher, that's not contrarian. You're chasing the move at that point. Rolling down a short call spread when the market moves lower, again, you're chasing the move at that point. I don't like that because there's so much back and forth. There's so much ebb and flow. Some might even call it mean reverting price. I don't know who said that, but it's a smart dude or dudette, whoever it was. That feels like that's going to run counter to what you're trying to do. So I don't like that idea personally. That's not what I would do. Okay, so C is off the table. Well, what about D, just rolling out in time? I don't dislike it as much as I dislike C, but I don't really love that one either, because now you have a winning trade on the board and you're looking to keep the risk on for an even longer period of time, kind of to squeeze a bit more juice out of the orange. To me, that's being a little bit too creative. It's being a little bit too innovative. And I just got done talking about thinking outside the box and all this kind of stuff. Well, now we're back inside the box. So now we are back inside the friendly confines of Fenway Park. And it's like, hey, listen, we got rid of Devers, but nothing's going to change. We're going to finish right around 500. Don't you worry about it. And so now that we're back inside the box, right, we got to think about the simple fact that, we're managing winners early. Right? We don't typically like to go for home runs. We don't typically like to go for triples and doubles. We're typically hitting singles with the winners and take the winners off early. If you take a winning trade and leave it on for longer, you're not doing that. You're running counter to that. And so I don't really love that move either there, Richard. So rolling up or down the strikes to chase after more premium, I don't like it. Rolling out in time, I also don't like it. I would much prefer to see you either A, take it off because you have a nice profit, it's economically significant, you want to redeploy the capital, or if you feel like the move is not done, just leave it on. leave it on and go for your original profit target, like 50% of max profit, let's say. And so that's how I would view that trade in that situation, Richard. Hopefully that is helpful for you. And so let's see. Emmett Morrison says, I'd argue that the White Sox are a close second. For what? I can't recall what I must have been talking about there. Maybe a Devers trade location destination. Oh man, that would have been brutal for him. But let's see. Stephen Bivens in the house. Stephen Bivens says, I've been using inspiration from your talk on kurtosis to place my hedges way out further than I normally do, using an imprecise gut feeling. I love it. Of around the expected move, less than 16 delta and second sigma. Is there a more precise way to use this information? Okay, so a couple of things. So I love the. So thank you so much for checking out the kurtosis talk, and thank you so much for implementing that in your daily trading. Like, I think that's amazing. I really do. The spirit of my kurtosis talk, though, I think you're talking about the one that was recently released on YouTube and the one I did earlier this year at Live Bash. The spirit of that talk was not so much about the hedges, and it wasn't so much about, like, buying low delta to protect your portfolio or whatever. I don't generally love that strategy. The spirit of that talk was actually more so focused on what's happening in the middle of that distribution that does not, get talked about nearly enough. Like, it doesn't get talked about nearly enough. If you look at a kurtosis curve, a distribution that is positively kurtosed, what you're going to see is you're going to see the fatter tails. You're going to see more outlier moves. That's part of positive kurtosis. But you're also going to see a more narrow distribution up around the mean or the median, depending on how much skew there might be in the distribution, right around the middle, right? And so what does that mean? Like, how do we interpret that? And this is what I really tried to focus on in that talk. That means that there's going to be more observations around the mean, so around the current price, than was otherwise predicted by a normal distribution. Now, what does that mean for us as traders? That's amazing news. Like, that means if I'm selling premium, like, I have a chance to get a lot more non-events, get a lot more nothing burgers. And this is exactly what we see whenever you do look at a market measures or an options jive, and you look at the stats and you look at the research. We always see the pop going in was 68%. The pop coming out, the actual realized pop, was 74%. Like, there's always a little kicker. There's always a little extra juice. Now, for the longest time, we all thought, and myself included, I'm like, okay, that's all from overstated volatility. That's all from overstated implied volatility, and there being extra juice in IV, fear being exaggerated, blah, 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 blah. Okay, that is a factor, and maybe the biggest one, but it's not the only thing that's happening. The simple fact that there is positive kurtosis in in market pricing, at least historically there's been, that leads to this greater peak in the distribution. So there's going to be more of a magnetic pole, if you will, of the different observations around the mean, keeping them close to where the market is right now, allowing short premium to work. It would also allow, like, a lot of scalps to work and things to work kind of around where the price is right now. And so that was kind of the spirit of what that talk was about. So in terms of applying it to hedges, should you go further out, should you go closer in, I'm actually not the best person to ask about that, because that is not my forte, and I actually don't think it's that effective as a hedging mechanism, because the research has shown it's going to be a drag on your portfolio over time. Now, again, to be fair, you might be thinking, but I'm sleeping. Man, I'm sleeping 8.5 a night because I've got these $5 puts. Hey, you got to do you, boo. Like, I can't tell you what to do. Like, that's gonna be your call, and I totally understand the value of having that peace of mind. And so, some people say it's not just all about P&L, and I can respect that. Can totally respect that. But let's see. JDD says oil is frustrating him. Yes, oil is some crazy stuff, man. Look at it now. It's back under 70, back to 69.75 or thereabouts. Pretty crazy stuff, man. Pretty crazy stuff indeed. Scramble everything. There he is. It's Dr. Jimmy time. What's going on, my friend? Front-loaded pike push-ups really giving my shoulders a pump. Man, that sounds brutal. How about that silly Oracle? I know. We going to get it back into the 200, 205 range? Man, I sure hope so. That would be super, super nice. It is really funny that on an otherwise, like, super strong day, I mean, look at the indexes, man. Like, yeah, they've had a little bit of, there's been a little bit of weakness, I guess, for like a second or whatever. But I mean, they've just bottomed right back, and it looks like they're gonna close them near the highs. But I mean, who knows what's gonna happen in the final hour of trading? But man, Oracle is like it's a stick in the mud, man. Like, look at that. It's the only red on the screen for me. The only red. And so that is some pretty crazy stuff from an Oracle standpoint. But I don't know, man, but that would be nice. Be very welcomed to see Oracle back between 200 and 205. And so let's see. Adverse MVP says de-escalation, world peace, bear market, S&P 8,000. Who knows? All that is certain is bonds will fade. That's I don't know if that meant to be sarcastic or a troll, but it was well done, my friend, because that's how I'm reading it. We don't know anything, but I know this. And so, yeah, I'll take the other side of that trade 100%. But thank you, Adverse, for being here. I appreciate you, my friend. Let's see. Harold, yes, that's correct. You got Devers for Tony Batista and Tom Sosnoff. That's correct. And not a proven Tony Batista or a proven Tom Sosnoff. We got the AA versions of Tom Sosnoff and Tony Batista. Like, we got the 1982 versions of Tom Sosnoff and Tony Batista when they were like, all right, which one is lower again? The bid or the ask? Like, that's the version that we got, man. That's brutal stuff. That's brutal, brutal stuff. And so, ranchers in the house, Oracle's a real stick in the mud, 100%. That's what I just said, actually. That's some pretty crazy stuff. Scramble Everything says, almost as bad as the Niners giving up 3 first-rounders to move up and take Trey Lance. Yeah, I don't follow football. I mean, I follow my Dolphins, obviously, and my Eagles. But that's and my Chiefs. But that's pretty much it. And so I can't compare to that trade. But that sounds like it was not a great idea, though. Robert Smith in the house, former running back from the Minnesota Vikings, possibly. Bad situation. Many died in the war, agreed. But the U.S. focused on rising market to all-time high. Trump's market, no human life value. Perhaps not, my friend. Perhaps not. RC says, let's see. Oh, that Shanahan doesn't get nearly enough. Oh, yeah, because you're out in San Fran. Yeah. Don't even get me started on the Niners management. Brock Purdy and CMC saved Shanny from that disastrous draft. Now CMC is a shell of himself. That's true because I think he got hurt last year, right? Didn't he hurt both ACLs or like both knees or something? That's pretty crazy. So let's see. Scramble says hopefully they pick up Salah. So more football talk. Let's see. The defense should be improved. No scheme. Sounds like some Red Sox stuff. Joel James. Here we go. I can't wait until Joe Dirt is hosting the show. Yeah, I don't know. We're getting we're getting close. I mean, if you look back here, like there's a lot of things happening back there. Like there's a lot going on back there that you guys can't quite appreciate here on the show because you're kind of in 2D space. But man, we get this thing out in like 3D. There's like a triangular shape that kind of comes off of the back there. And so at some point we'll do some kind of ponytail or something. But let's see. Let me see. Sparky Dog says let's not go Super Bowl on Nike earnings this time. Yeah, we may not. Let me see if I can find a different way to light some stacks of cash on fire. I'm sure I can do it. Let's see. Archer Bowman says some Lulu puts. Man, does Lulu have earnings today? Lululemon. Tony Batista. This is his jam, jelly, and oftentimes the whole donut for Tony Batista. So Lululemon, nope, no earnings today. IV rank is 24. I'll pass on this for now. I got to keep my powder dry for Wednesday, man. I got to keep my powder dry for this FOMC business that's happening on Wednesday. Because again, I don't know if you've ever traded in FOMC before, but even if you have, it's nothing like what you're about to see. Like what we're all about to see and what we're all about to face here on Wednesday, it's going to be like nothing that's come before it. And so Joel James, Dr. Jim, would love to see you run a leap trade on something, and discuss how to select them and when to exit and any other gimmies and gotchas that might exist with them. Yeah, I don't do a lot of leaps, man. I really don't. I'm not even doing these like behind the scenes and like stealth accounts and stuff. Like, nah, they just don't really make a lot of sense to me. I'll do a poor man's covered call, poor man's covered put, something like that, where, you might be, I'm just on Lululemon right now. Go out till like September with like 95 days to go or something. Right. And then it gives you a couple chances to sell premium against it. Like you sell in July and you sell in August. I might do something like that. But I'm not going to be doing like a 360 or something like that. Because people buying like, the June 18th, 2026 for 367 days to go. It just doesn't make a lot of sense to me. I mean, I see so much more potential and so much more opportunity in the shorter cycles. But I can respect the fact that some people don't want to trade the shorter cycles all the time. Some people don't always want to be in at 45 or 21 or 30 or whatever. And so they want to do 50, 60, 70. I think that's totally fine. I don't think there's anything wrong with that. And so, but the leaps, it gives you a lot less flexibility with your capital. And so some traders love them. Some traders are probably just making money hand over fist with them. But it's never really been something that's appealed to me. So I'm going to pass on the leap suggestion there, Joel. AJ Bucky's in the house. Jim, I have a question. If you have a vertical spread where both options are in the money, should it not trade $5 to close the two options? Well, yeah. You said $5 spread, right? Yep. Yes, it will be $5. Well, actually, okay. So let me take that back. So a couple of things. So number one, if you have a $5 spread and it's fully in the money, if there's a long way to go to expiration, so like let's say a couple of weeks, it won't be $5. It's gonna be less than $5. And so because there's still time left, there's still some chance that it actually moves to not being fully in the money. So you shouldn't have to pay max value to close out today, if that makes sense. Like, you remember that if it expires in the money, fully in the money, it's going to expire for the maximum value of the spread, which in this case is $5. So if there's still 3 weeks to go, even though it's fully in the money, it can't sell for $5 because there's going to be some chance that it actually won't land there. So it has to be some number less than 5. Now, depending on the severity of the in the moneyness, it could be 450, it could be 4, it could be 375, could be 472, whatever. But there's going to be some savings, if you will, off of the maximum value. Okay. Now, the other piece to this, though, is what if you get to expiration? So what if you get to expiration day or like the day before and you are fully in the money, maybe by a wide margin, and you go on there and you actually see that it's marking for more than $5, which might be what you're asking about. You could have been asking either way, so I wanted to make sure to address both. If you actually ever see, which this happens kind of regularly, especially on expiration day, if you ever see it marking for more than $5 and something like appreciably more than $5, like $5.50, $6, $5.35, whatever, just understand that is simply a product of the wide markets that are happening in those options specifically. You will not have to get out for too much more than the $5 theoretical max. Now, if it is really far in the money and you are an expiration day, you might have to get out for 501. You might have to get out for 502, right? That is, all kidding aside, the difference between theory and practice, because you need to encourage and entice somebody to take the other side of that trade. And so no one's going to take the other side of that trade if there's no edge, if there's no advantage to them, especially if the other side of that trade is a, liquidity provider, a dealer. It's not another customer. It's not another, retail trader, which sometimes it's retail trader. But a lot of times on expiration like that, there's no retail trader that's looking to take the other side of that trade. And so unless you're giving, the Sosnoff estate, the Batista estate, right, the Mallman estate, like they need a little something, right? Again, that second Range Rover, it ain't going to buy itself. So the money has to come from somewhere. And so it might be 501 or 502, but it's not going to be 525 or 530. And so hopefully that helps there, AJ Bucky. Let's see. Oh, Sparky Dog says we have a 0.5% chance of a cut in September. Yes. Josh hooked me up with that information earlier. And so Tiago says, Dr. Jim, what's with these nuclear stocks? Oklo hit 73. Man, I don't know. Oklo. I didn't know that this was a nuclear stock. I didn't know that there were nuclear stocks, to be perfectly frank with you all. Let's see. Excuse me. Let's see. 350. Yeah, I mean, it's up a lot today. Let's look at a chart of Oklo. Wow, look at that. Okay, so it's come down even. Wow, so this thing was up to 73 today. And now it's back down to 67. I mean, I would say, yeah, I don't know there, Tiago. I didn't even know this company existed until 25 seconds ago. But that means it's probably time to do a little something here. So I'm thinking, yeah, $67 stock. We go 60 days out. Man, yeah, this thing is, am I going to get crushed on margin? Hold on. If I sell a 95 call, Okay, so that's not too bad. Wow. Okay, so I actually think, Thiago, I'm going to sell a strangle in here, right at the expected move. So we'll do 95.45. Yeah, it's only $2,000. It's pretty good. I was afraid that it was going to be like 5,000 or 6,000 or something just crazy because maybe the stock is in play and like, they're ratcheting up the margin on this. But this is really not too bad. It's only about 7% of my account. I'm working with about 30,000 in this account. And so trying to size appropriately is typically staying between 3 to 7% on undefined risk. I mean, from time to time, we may ratchet that up to 8, 9, 10% at times, but I really don't try to go above 10%. I really try not to go too far above 7 most of the time. And so I really like this trade. $8 credit, man. That's nice. The IV rank is 32. That's not too bad. I mean, it's not the greatest I've ever seen, but the last thing I want to double check though is, are there any earnings? Yeah, there's no earnings coming out for Oklo anytime soon. So this is going to be my trade there, Thiago. I mean, you could play it to the downside by maybe, being a little tighter with your call. That would work. And then let's see. Yeah, you could be a little tighter with the call. You could move the put down more if you wanted to. That would also work. Yeah, let's try 803. See if we get filled in Oklo. Good old Oklo. All right, let's see here. If I do let's see here. All right, so we got filled at $8. So there you go. So we got in some Oklo. Some good stuff. Okay, so we're into Oklo. Thank you so much there, Thiago, for the suggestion. And now I know who to blame if it doesn't work out, which is better for me. So Emmett Morrison says, yeah, very small chance of a cut. Yes, thank you, Emmett. Appreciate that. James Swanson, loving the spot Forex. Oh yes, man, I gotta do some Danish kroner. Oh man, we'll probably do it. If we don't do it tomorrow, we'll probably do it Friday because we have more time. I'm like afraid to click on the Tasty FX. I haven't even clicked on this yet. I think I'm all set and ready to go though. I may not be, so I'm not going to stay in here too long if it just keeps loading. I'll have to play around with this kind of before the show, just so I'm not just completely leading you guys through. Oh wow, look at that. Nice. Oh man, look at that. Got myself $1,500, man. Oh yeah, we're gonna be lighting some of that on fire real quick. Oh yeah, I've got to find some Danish kroner though. I forget, it's something KK, I think, right? Yeah, okay, I gotta look at that. I gotta play around with this, but man, that's some good stuff. Yeah, we'll splash around in there. Don't worry about that, James. It's all coming, 100%. Let's see. Howie Egg says, I am sure the dream team of Ilya and what's his name will talk about the rate cuts for 30 minutes tonight. Yeah, Ilya and Chris, they are the dream team, 100%. I mean, we just got Chris back for the Rafael Devers trade, so he's my new favorite player. And so 100%. And so Andrew Cortado's in the house. JDD is in the house. Says sometimes it's hard to tell when he's being serious. I hope you're not talking about me because I'm always dead serious. Let's see. James Swanson, Earth, Wind, and Fire says September. Oh, yeah, that was one of their jams, I think, right? Emmett says just assume he isn't being serious and you'll be fine. Hey, you got to keep in mind, it's edutainment. That's what Tom told me when he hired me in late 2015. He said, listen, I'm hiring you for edutainment. He's like, I want both. And I was like, all right, I can probably give you the edu side. The tainment's going to be a bit of a struggle, but I'll try. And so, I tempered expectations from the beginning. And so the fact that he gets B- day in and day out, like that's what he expects. It's 100% what he expects. And so that's what he gets. Let's see. Lone Sofa says your dissertation isn't online as you stated. It's not? Oh, well, I didn't say it was online. I said it was at the library at the University of Memphis. Now, maybe they moved it online or maybe they threw it in the trash. I'm not sure. Did you actually go to the University of Memphis library and check it out, like look for it? That's crazy. You should get the $20 that's in there just for doing that because I guarantee you no one else has ever done that. And so, man, that's crazy. So, I mean, it should be there. Maybe you could – I don't know. Maybe you could search on the University of Memphis library catalog. Maybe. I don't know. I have a copy of it. Not that you necessarily want to read it. I think you just wanted to see if it was at the library. You could score yourself $20, which is, of course, what you should be doing. I have a copy of it on one of my other machines. Not that I could get it for you. I think it'd be hard for me to dig out. But you should be able to find it in Memphis somewhere. So let's see. Emmett says Chris and Ilya will continue their conversation from Futures Power Hour, which I'm sure was a very, very good one. And let's see. We'll see if Dylan is able to get a couple words in. Wow, you mean to tell me that Dylan is the one that can't get a word in? That's incredible to me. Wow, that's amazing to me. Let's see. I said it was online as well. Did I say that? I don't. If I said that, then I misspoke. I meant to say it was at the library, like the physical, like paperback at the library. I know it was there when I left Memphis. Like when I left Memphis, it was there. Like I saw it there. Like I went up there to check it out because I thought it was really cool, obviously, for it to be there. And so I was like, or maybe it may not have been there as soon as I left Memphis, but I went back because Autumn's family is all from Memphis, so we were there regularly after we first got married. And so like it was there at one point, and then I was like, all right, like I just said my goodbyes, and similar to Rafael Devers last night, like I knew that was the last time I was ever going to see that, and so maybe it was gone. I mean that was 2009, right? So that's 16 years ago. That's a long, long time. And so, but you should just ask Grok to find it for you. Grok will find it for you. Like, don't worry about it. And so let's see. Who else we got? Lone Sofo says he doesn't like listening to the garbage from Tom Sosnoff and Tony Batista. Pretty sure you're just talking about Tom Sosnoff. Well, don't read his cherry bomb then, because that is some hyper garbage. From Tom, of course. The TP cherry bombs are amazing. So the cherry bomb, like 80% of it, incredible. But the Monday mornings, man, you can delete them upon arrival. Pure garbage. And so let's see. Sunflowers in the house. Andrew Cortado's in the house. Grumpy Mike's in the house. Man, Jay Hallsworth in the house. Man, I appreciate you guys. Adam Armfield, but I got to go. I got to get you guys to Tim Knight. And so, man, we did it. We made it all the way through the show. I can't believe it. Guys, come back tomorrow. We got an extra long show. Come back on Friday. We have an extra long show. I need you guys to be here, especially since Rafael Devers left me. But if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Stephen Atlanta, thank you so much for holding.
My pleasure, guys. And let me go on record as saying I think you've got Tasty Trade is the best brokerage, and you guys have the best content, and I'm not here just schmoozing. Y'all are the best on the planet, period, for what you do. Go on record as saying that. Tom,
Thanks.
You were the great disruptor when it came to forming Thinkorswim and then Tasty Trade. You're an innovator.
I appreciate you calling in. Good stuff as always. Thanks, man.
Hey everybody, Tim Knight. Welcome to a new week. It'll be 3 days of trading, Thursdays off, and then Friday. as we'll be on again. So another annoying day. Yeah, this market is really something. So we had a nice hard tumble on Friday, and the bad news kept coming on the weekend, but we went up. And so we went blasting higher and peaked around about 90 minutes into the cash session. And since then, we've been slipping. We're getting near the cash session's lows on the small caps, although we're still up 0.87% on the RTY. The incur is the strongest, about 1.33%, and the ES is up about the same as the RTY, less than 1%. So I say annoying because the Russell was below the Fibonacci line, critically important line at 2150, and it got above it. And it did so for about 20, 25 minutes, and it slipped below it again. So it's teasing us a bit. That'd be the polite way to say it. I'm still taking it easy until Wednesday because we've got to get the FOMC out of the way and kind of see how the market reacts to that. As I said repeatedly last week, the dream scenario would be they drop the rates, kind of release that tension, and the market eventually goes, no matter what the initial reaction is. Because, if they cut and the market zips higher, that's no surprise. That's what they want. Will it last, though? That's the question. In a way, if they do nothing again, that would be kind of bothersome because then it'll see it well. They'll get them next time. But out of my hands, we'll have to see what Mr. Powell does. Let's hop through the charts. Got them ready for you. And we'll begin, as always, with the spider. And we just got just a little below the peak from last week, the Wednesday peak we had last week. We got close to it, but no clear breakout or anything like that. That may well wait for the FOMC. So we're just kind of lingering at a sub 1% gain right now. IWM really annoying me today, but to my eyes, the stop loss here remains at 213.30. Pretty tight stop, and we didn't pierce it today. And as I said, we're near the day's cash session lows. Was really expecting some follow through from Friday, but did not happen. The cubes up pretty strong and quite close to lifetime highs, but sorry to be so repetitive on this, but it's an important point. We have not violated the broken trend line. We're close to it. It keeps pulling prices in like a magnet, but it hasn't pierced it. So this may be a pivotal week. We'll see. Last week seemed to be, the jury is apparently still out on this because we, as I said, got no follow through at all. We opened down across the board Sunday, but they almost immediately started going up, and then it was into the green in no time. And we've been there ever since. Semiconductors have been especially strong. I've gone ahead and adjusted this trend line to be a little more honest. Here's the lifetime high. Here's the lower high. We have broken above the trend line. We have not quite busted the prior lower high, like so. We'll just put a line right there to mark it. Excuse me, I'm going to be a little bit picky about this. I prefer that to be dashed. So make sure that works. Sorry, okay, yeah, that works. Good. Okay. Anywho, we have not busted above, so we still have the lower highs in place, but yeah, we have broken above that trend line because AI, quantum computing, technology in general, semiconductors all remain very strong. Speaking of tech, here's XLK, lifetime high. There's no, there's nothing subtle about this. It's a lifetime high, intraday at least. We'll see how it closes, but that has pushed above the prior high set back. Where was it set? Back around right here. Yeah, in February 19 of this year. Overseas, EEM, emerging markets, continue to be strong. The cup with handle pattern that's completed serves it well. So that is pushing above that dashed blue line, which was the top of the pattern. And although I will say Mexico, which I've mentioned as a potential exhaustion candidate, seems to be doing just that. We peaked on this last week on Wednesday, as with so many markets. And since then, it's been pretty much down, 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 down. So even on this very green day, Mexico's down almost 2% below that dashed red line. Now, oil, of course, has been a major mover in recent days. There continues to be a lot of conflict in the Middle East, and oil spiked higher on the Sunday open. Even at its peak, it didn't even quite match what we saw last week. So we had the initial shock on Thursday evening. That peak is still higher than what we got, even with more missiles flying back and forth. And as the day wore on, it went less and less green and into the red. So here's USO. So as you can see on Friday, so keep in mind Thursday evening is when crude oil went crazy on the futures. The cash market, USO, couldn't really realize that until Friday. So Friday's high well above today's peak, and we are in the red on this. So this gap remains unfilled. And judging from this right triangle, this obviously got very, very lofty in here. So it's not a surprise that this is starting to settle down. And if tensions begin to ease further, we can well expect this to ease right back toward that blue trend line. XOP, the oil and gas exploration ETF, it is a little red, but still kind of hazardous on the short side. It's pierced that pattern quite deeply. But as I said, if oil starts to relax, continues to relax, we can fully expect this to follow suit. A lot of individual items like APA, COP, OXY, those have all gone into the red today. What else is cooking? Well, okay, so gold. This is an index chart that jumped out at me last week. XAU, the gold sector index. And as you can see from this very long-term trend line, and this goes back for a dozen years, we had pushed right up against it. So here's an anchor point, here's an anchor point, and here's the third tag of it right here, suggesting it's very expensive relative to its general price action. And so I shorted GDX based on that. So far, so good on that, because it's much more clear on here than it is just looking at an individual minor chart or a GDX or GDXJ. Here's GDX itself. And in this instance, I've just got my stop set to Friday's high, but we've reversed away from Friday. And if we continue to tumble, I think the first meaningful support will be down here at this price gap on GDX. I would also say OUNZ, which is an ETF that combines silver and gold. This too has been easing back. Let's just draw a horizontal on that to mark the lifetime high, which I believe was maybe on Friday. Might have a double top here. So here we have 33.23 on Friday. Yeah, 33.22. Okay, so we basically double topped on Friday, got within a penny of its lifetime high, but now we're starting to burn that off. And here too, first logical support would be the gap at 31.79. So it looks like, pretty easily has more to go to the downside. Getting back to the tech subject, there's some real leaders here. IBM is one. It's just gone vertical following this well-formed base. So we had this base here, big rally, this base here, big rally. And this one's certainly beaten the last time it based. It's been much more sharp and long-lasting. So IBM getting richer and richer priced there. Oops, hello. Not sure how that happened. Microsoft, let's get back to it. Microsoft also a lifetime high, as with IBM. So this is pushing above its former peak, that dashed blue line. And smaller, but more and more important, Palantir, whose PE is literally approaching 600, but that is not slowing the buyers down. Palantir hitting another lifetime high. One other one, Spotify, another lifetime high. This has been just, so we had almost vertical shoot up here, a little bit of a retracement, and then since then, hardly been looking back. So across the board, all these big household names in tech just doing amazingly well. In sharp contrast to this, a more blasé sector of just hamburgers and mustard and ketchup. This is a whole different world. You may remember this amazing Head and Shoulders top with Jack in the Box This is perfectly formed. This is a textbook pattern here. Left shoulder's higher than the right. We've got a break in the neckline, up back to the neckline, etc. And it just keeps falling. So this has been a real sea change in the fortunes of Mr. Box. Wendy's, it's not a singular exception. The Wendy's too finished this diamond pattern and it's been falling for some time as well. And I had mentioned last week these tops here, even things that seem quite cheaply priced, still can succumb to well-formed patterns. So here's Kraft Heinz, KHC. This is falling below its pink topping pattern, like so, down over 1%. And JM Smucker, also very well formed top on this, also in the red, in sharp contrast to the market in general. United Healthcare has been in the news a lot in recent months for obvious reasons, but it seems to have kind of settled down past its tremendous price break. Like so, what I find more interesting is a competitor of UNH's, which is Centene, CNC, which is kind of a la Smuckers and Heinz, formed this very nice top like so, and it's down today about 1.3%. But you can see this top is just as nicely formed as this bottom was down here. Quantum continues to be electrifying to the public. Here is ARQQ. Don't think we've discussed this one, but it's up today well more than 20%. And you can see how much interest the sector is attracted by. The volume used to be just nothing, maybe a few thousand shares a day, and now it's in the millions on this. And then also Quantum Computing Inc., Qubit, QUBT, same idea. Very little interest before, and now many tens of millions of shares and more each day. So this is busting higher with a gain of about 25%. So Quantum very hot still. Just to wrap it up, as always, bonds. Here's the ZB. We are down on this. This is looking weaker by the day. And watch that pink pattern. See if it can break below the base of that pattern. It will be, I think, a big deal. If it does, and I think we'll get some clarity on that by, say, Thursday, after the FOMC is digested. And then old RTY, we're back into the war zone here. We had slipped into the bullish pattern. Now we're back into this no man's land between the bearish setup and the bullish setup. So it's still great amount of uncertainty between those two levels. That'll shake out within a couple of days. Okay, that's it. Thanks for coming by. See you on Tuesday. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. we are ready for your presentation, me lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're going to be in Pilsen. I'm going to buy you a Rico Benny's after the show. I don't want you to buy me a Rico.
Well, that's nice of you.
It's very nice of him, but I don't need him to buy me a Rico Benny's.
I was going there when you were pooping yellow.
Oh, my God.
I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You got to stop.
No, you know that's true. Sadnov, you know that's true.
God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman, said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, "Well, thank you very much."
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny, since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She probably needed somebody to reach the top shelf to get something
and
to.
She picked Jim. There was nobody else in the store.
Exactly.
I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with the last call, Sadnov. Even the S&Ps, they're up 52. I mean, that would normally seem like a crazy move to the upside, up a little over, well, just under 1% now. But we were up a 1.25% not too long ago. NASDAQ is up 290.
4 hours ago.
Yeah, that's true. 297, still your leader in the clubhouse. Russell up almost 1%, up $20, and the Dow up 309. Volatility in by $1.31, about 30 cents off its lows, well off its highs seen last night at 22.10. Bonds, well, Sadnov, stick with me. I said sell 6,100 on the E-mini S&Ps. They're 60.84. You said buy bonds, Al. They're trading 2 ticks off their lows. 112.20. What do you have to say for yourself?
Don't you worry.
A coiled spring. Let's see what else is moving here. Bitcoin's moving big, up $3,600, 109,250. It was just seems like yesterday when it was down around 103. Sadnov. Well, that's because it was yesterday. 109 now. Oil down $1.44. Oil, big move now under $70. But about $2 off of its lows made today. That's down $1.44. Traded all the way up to $75.50. That was last night. Gold down $46 after being higher last night. Now down to $34.05, flirting with $3,400, a number it hasn't seen in 48 hours. Sadnov. Let's see what else is moving this market. When we look at the market to the downside, you got Lilly down 12, Costco down around 5, CVNA down around 4, Oracle down around 4, obviously gold products and UNH down 4, volatility products like VXX also down 3.5. Let's see, the upside is going to be a lot more. And there are Coin up almost $20 south off, Meta up 18.5. Goldman Sachs up 14, Netflix up 11, ARM making a big move up almost $7, Reddit up almost $6, and all the airline stocks like UAL up $4 and strong too. Sadnov, what do you have to say for yourself?
Well, I mean, I haven't, other than the bonds turning around today, it's been a pretty much kind of I feel like this is where we opened and we had a little rally up. We came back down. We've been sitting here all day. I actually thought we'd make a little bit of a run for the roses, the way as strong as they were this morning, but I think they got ahead of themselves early, I guess.
Sure.
And with the bonds down 20 now, I don't think they're going anywhere more to the upside near term. So I think this is what we both said. We're just going to be stuck in this range around, between 6,000, 6,200, 5,800. I think we stay in this range for quite some time. I think a lot of the fireworks are over. I think you could put a fork in crude oil. I think you could put a fork in gold. I think you could put a fork in a lot of things.
This does seem like, I'll give you this, in oil, it does seem like that capitulation kind of
I think you can put a
off.
fork. I think you can put a fork in the sell-off in the U.S. dollar. I think it's finally a little bit oversold, and I think it's a stock traders market. And I don't know that that any of that part is predictable. Like, I think all these other things we just discussed were at extremes. But the market itself, I mean, I'd like to say like Palantir is at an extreme. I'd like to say Meta's an extreme back to 700, but I have nothing, it's just, I'm just firing blanks in the sky, I still think Apple's cheap relative. I think it's got to get back up over 200. And
Well, you're looking at overperformers and underperformers.
Yeah, that's all I'm doing. Looking at overperformers, underperformers. I told you the only stock I really got short today was RBLX, and it hasn't slowed down one bit. But we only got short at about 50 cents lower than here.
And you did it with a vertical spread too.
Yeah, nothing much. I mean, I'm already short Meta. That clearly wasn't the move to 700 was not good for the good kids, but. Today is the day when, if Meta and Roblox are your two biggest losers, you've got a lot of good positions on. I mean, today, the only thing we gave back money on was crude oil, because this morning crude oil came in huge. By this afternoon, they took away all the money. But Apple came up big today. Lilly, gold was a big winner. Google, a lot of premium came in a lot of different places. SPY, Qs, So all in all, it was a pretty good day for people that are short premium. And I don't think the deltas, because the down move, on Friday we were down this much, and today we're up this much. So right back where we started from over the last 2 days. I expect this is the game plan for the week. Like, I think this is what we're going to see. It's June triple witching. It's going to be a tug of war all week. I sense. Let me see what the volume was like today.
Volume was okay. I mean, like average.
The S&P
type
volume was really good. 1.6 on a day like this. I think S&P.
You're talking about even the S&Ps, but that's about average volume. You got 8 million SPY options, 3 million Qs.
Yeah, I think it's busy.
Yeah, it's good. It was a good day.
Yeah, I think it is, and I think that you're going to see a lot of that this week. I think it's going to be a lot of churn. And I think, listen, the story of trading is what's good for equities is good for trading. So when stocks are moving around, like, Meta and Palantir and Amazon and Google and Apple and Microsoft and things like that, and Tesla and Nvidia, that's when trading is the most exciting, because that's what people want to do. They want to take their shots in Apple and Tesla and Nvidia, and Palantir and all those things. That's where it is. Nobody wants to take a shot in the U.S. dollar. Nobody goes to sleep at night going, man, I wish I bought dollars yesterday. And not that many people go to sleep thinking, I'm going to kill it in crude oil being on the short side, or I'm going to kill it in gold, or tasty traders want volatility to collapse, which it did today. And then and individual traders want individual stocks to go higher. And when you look at the board today, there's not a lot of stocks. I mean, you named a handful of stocks like Costco and UNH and things like that that are down on the day, but there is not a lot of
few and far in between of any of the stocks that we trade. Exactly. Like Humana down 2.5. Nobody gives a crap.
Yeah, I mean, nobody
Bristol
cares.
Myers Squibb down $1.30. No, nobody cares.
Bristol Myers Squibb. When was the last time you mentioned that stock? But
just a minute ago, just a moment ago, Sadnoff, Bristol Myers Squibb.
But like AMD up $10. Like, I mean, a lot of people like that kind of stuff. I wish I had a position in there. Taiwan Semiconductor making it more, just keeps going up. ABGO just keeps going up. MU just keeps going up. I mean, I will say that a lot of these tech stocks to me feel very, very, I'm not short them, so don't get me wrong here, but they feel awfully, these data infrastructure stocks, these AI companies, they feel frothy. Like anytime you see AMD up 10% in a day or MU up, 10% for 3 days in a row, that kind of stuff, or I'm sorry, 5% or whatever it is, you start to think, okay, this is awfully, awfully frothy.
Yes.
And so I'm getting to the point where I'm thinking that things are getting a little rich. But like I said, I've never been one that loads the flotola on triple witching weeks to the short side. Especially Tony and I are going away this week. We've said it 100 times. And when you're traveling and you spend, and you're lost in a tube loop in London or in a subway, you're lost somewhere.
Or if you're hanging out with Michael Jordan, you don't want to disrespect him by looking at your phone and stuff like that, which sounds off. That kind of reminds me, I'm so sorry. Did you ask me to make your haircut appointment with the King's Barber on Thursday or Friday? I can't remember.
Oh, that's a good one.
Thursday, because we have a less busy day.
No. Thursday's Juneteenth. I'm getting my nails done.
Oh, okay. We'll do it Friday then.
Thank you.
Be presentable. Yes. Okay.
Thank you. No, so we're going to be. So what I did is I tightened up. I got rid of a little crap that I had on. I'll tighten up a little bit more tomorrow, but I still have, 80 or something positions on, but I still getting rid of some of the loose ends, covered some short puts today. Didn't really open too many new trades. And that's pretty typical for me, by the way. This kind of market, that's pretty typical.
Yeah, listen, we're approaching highs. Are we not? I mean, and volatility
I'm just saying
to go lower.
It's typical when I'm going away to kind of flatten out a little bit. I mean, not really flatten out, but just like I just don't have that much risk on.
Tie up all the loose ends. I think you said it properly. Tie up all.
I don't get out of positions. I neutralize my delta. Does that make sense? That's a little different.
Yeah.
I don't close out positions. I just neutralize delta.
No, definitely makes sense. $75 expected move, Sadnoff. What do you think of that?
What, for the rest of the week?
Yeah, yes. I'm sorry. I should have been more clear.
Yeah,
you had a 100-point move today. So I mean, it kind of bodes for your whole things being a little bit more quiet coming up. I thought we'd be wrapped around 6,000 for most of the week here. So maybe we got a little bit of weakness coming.
It's entirely possible. Let's put it that way. I don't know. You know what? I don't know.
Of course, nobody knows. It's a 50-50 shot.
You do understand, though, that we have to maybe play a little bit of I go on the road and the market crashes type thing. I mean, there is some truth to that. But I don't see it happening this week.
Oh, my God. You had to say that part. That's so bad. You couldn't just keep it right where it was. You had to say you don't see it. Now it's a given.
Yeah, I don't see it. Let's see what else we got going on today.
Famous last words.
Yeah, I don't like. You don't.
I didn't see that. I didn't see that coming.
You don't say famous last words right before somebody gets on an airplane. All right, let's see what else do we got going on here. there were a couple turnaround stories last night. I mentioned crude oil because everybody was watching that, with all the conflict, the bombs flying last night and crude oil opening up and then turning around. But gold really also turned around. It had about a $70 reversal, which is a pretty big reversal from what I think is near a high. I think you can put stab a fork in gold. I've been saying that for quite some time.
Gold IV rank is 42. I mean, it's not near the 100 like it had been, go back into April. Oil, on the other hand, has the high implied volatility size enough. I think a better fork is already in oil than gold. That's my opinion, just given the two.
Could be, but I don't. I kind of.
When have I ever been right?
That's right. I mean, to be fair, plus, yeah. You make more money fading you than you do following you. Of course, listen, it's not personal because I could say that about any of my friends. I would say that about Scott, but he's not here.
Right,
I also think
does Scott still work here?
I don't know, but I will say another stock that I'm really close to. You might hate this, but another stock that I'm very close to leaning to get short this week is going to be NVIDIA. I mean, we are right on. I don't know if this is a new high in NVIDIA. I can't tell because I don't really remember. I don't count stuff that happened like a year or so ago, but I think this year, I don't remember it trading like 145 ever.
No, this would be a new yearly high. So I was not looking at 145 even was the last time it traded. Now 145.18. Oh, what's the difference? Yeah, sure, close enough. But I can't stand when you start to think about things. The IV rank is 2.4 in here.
That's why I don't have a position on in there right now. I literally do not have a position on NVIDIA. If I was going to do something in there, I would buy a crap load of put spreads.
Buy a crappy put spread or something here, or do something.
You got to give it a little more stretch. Like if I feel like it's time to get short today, the time to get short is going to be Wednesday.
Right. Oh, you're using your own 2 or 3 day rule against us. This is horrible. How are we ever going to trade this? Like, if you don't do it, then does the clock really start on Monday, or does the clock really start on Wednesday? I would have to think the clock really starts on Wednesday if we're going to go with the past performance. So now you ruined it all for us. We have to wait an extra 2 days.
There you go.
It's horrible, Sal. Horrible.
All right, let's see what else we have here I wouldn't say we're stumbling into the close because this is definitely not a stumble, but as we just make back everything we lost on Friday and bring it right back like nothing happened. Market is an amazing mechanism for normalizing every time you think there's a geopolitical event that's going to impact trading, the market normalizes it, within 48 hours, 24 hours, in this case, 24 hours. Incredible.
Definitely does it quicker than it's ever done it in my trading career than before. Every year seems to get quicker and quicker. I don't know if that's necessarily a good thing or a bad thing, but every year it seems to get quicker and quicker.
Well, I don't know if it's good or bad, but I think it's a more realistic thing because I think the market is, I think we used to overthink things and we used to give too much credit to to the story. And now I think listen, we've been saying it on Tasty for 14 years. The story's dead. The story's always been dead. The story is just near-term chatter. It's just noise. It keeps, it keeps the news networks in play. What would Bloomberg do if they had nothing to talk about? What would CNBC do if there was nothing to yak about all day?
Right. Right.
So, or their guests had nothing to talk about. That's what the story is. So, basically we create news just so, Bloomberg has something to talk about.
Are we givers this way?
Yeah, what would what's her face Maria Bartiromo talk about all day if there wasn't a conflict somewhere? What's Kramer going to talk about tonight if he didn't have a conflict somewhere? Like I don't know. Imagine Joe Kernan trying to pull off talking about a strategy or something. That would be really difficult. I don't know any of the hosts on Bloomberg. Otherwise, I would say something. I just don't know their name. Do you know any names?
No, I don't. I haven't watched it in forever. I don't know.
I know. I don't know any names either.
Yeah.
We'd have to bring in our Bloomberg expert, Mr. Dylan Radigan, and I don't even know if Dylan knows any names anymore. It's been a while.
So do you think the quick, not dissemination of news or just the quick move back in the market. You think that you not blame it on retail, but give retail the nod because they're one click away right now, and there's just so many more retail traders?
Well, I don't think it's just retail that's one click away. I think it's everybody that's one click away, and I think it's two things. I think it's the fact that everybody is one click away. That's number one. And I think the second thing is, back in the day, we don't have Tony Batista making markets anymore. We got some server that doesn't really. Sadly for the Batista family, but for the rest of the world,
as disappointing as that might sound to the audience, you are correct.
But for the rest of the world, it's a server that doesn't have any emotion, and the server doesn't give a rat's ass what's going on. So the server just, the server provides this crazy amount of efficiency all day and night, and that's the real reason. High frequency trading has changed the game. It's not really that. I mean, everybody is one click away, which is great, but the counterparty is one click away too, and so it's a different game today.
Yeah, definitely that.
And not to mention that the numbers are just bigger.
Sure.
There's a massive amount of money and massive amount of numbers, and everything's just huge today. But it's really high frequency. I don't know who to give all the credit for. I don't know if it's Ken Griffin. I don't know who it is, but whoever figured this stuff out first figured out, basically changed the way markets operate and changed the speed at which markets commoditize every single bit of information. It's amazing.
Very good, sir. Speaking of information, I got these guys waiting in the wings. Would you like to speak to our overtime crew?
Of course.
Beautiful. Let's bring in the three-headed monster, Dylan, Ilya, and my man Chris.
I like that, the three-headed monster.
The guy who invented HFT recently died.
Wait a minute. Sosnoff is right here in the flesh. He's fine. What are you talking about?
No, I think you're talking about from Renaissance Technology.
Yeah.
Yeah, I'm not so sure that's the same thing.
Jim Simon is largely credited with inventing HFT trading, from my understanding.
Do you want a fresh one, Chris?
The difference is that Jim Simon was not the counterparty. So Jim Simon invented carping the markets. There's a big difference. So Jim Simon invented basically retail market making based on edge. He was not the counterparty. So Citadel invented, along with everybody from Blair Hall to Citadel to Susquehanna, Wolverine, all those firms, not Interactive Brokers, but Timber Hill, they all invented the counterparty, which is what real high frequency trading is. Jim Simon was Jim Simmons, not Simon. Jim Simmons was he really invented carping markets. Like he would just get in front of every marketplace with theoretical edge. I think his business is very different. I'm not saying it was.
Did you just call this billionaire a carp? Because we used to call traders on the floor
a lazy Chinese fish.
Yeah, like we used to call traders on the floor carps when they would come by and make a better market than the one we were just.
I feel like that's a derogatory term. I feel like
it is a little bit of a derogatory term.
I feel like that's a slightly negative implication. If I called you a carp, Tony, would you feel like that was a compliment or an insult?
I would not. Why don't you ask Italian friends in Milan if they want to be called a carp?
If I said, hey, Batista, why don't you stop carping my market?
Yeah, I don't think I would take too lightly to that. Especially if I was the 55 richest man in the world, not the room.
Yeah,
he's dead.
God, son of man, you get one guy who's got more pennies than you, and you really gotta throw Sling in the mud.
I wouldn't say, hey, thanks for carping my market. That's not like I would never say that.
That's right. I wouldn't say that at all.
Okay.
Sadnov, maybe you want to say sorry?
How would you define what Renaissance Technology did other than carping markets?
I would say they relied on a high frequency trading approach, Sadnov, that allowed them to gain massive returns in milliseconds.
Oh my God. They were inside of every market. They let everybody else make the market. They jumped inside of you. When you always wondered who was inside of you before you figured it out, it was them. They were inside of every market.
I would say they had data-driven algorithms that combined with complex models to identify like potential investment targets. I would not call them a carp.
In technology and intelligent latest best practices. To
let me put it a different way, Dylan.
For their clientele.
Tony, if you could have a couple of $1 million more in your pockets, or you could say that they carped you, which would you say? They carped you, dude.
I'd say, nice knowing you guys.
Exactly.
See you later, suckers. I'm gonna carp my way away.
I think that the markets have been trained. I don't think the market is. I think it's almost impossible to spook the market at this point. I mean, it's just.
Well, we tried killing people. We tried making a king. We've tried everything, Dylan. They tried
to take it down on Friday. But I was going to tell you one story quickly. There is a restaurant in Omaha, I think, and all they sell is carp, fried carp.
Really?
Yes, it's the one of a kind in the U.S. and it's very popular.
I thought carp was sort of a bony fish at the end of the day.
It's very bony.
Yes,
it's very bony.
It's complicated.
The Batistas catch a lot of carp off their boat. When the Batistas are very big carp fishers.
Big carp fishermen. They just head over.
Big carp fishermen.
They head out to the Japanese tea garden with a fish hook and a piece of bread and just lay it in there and start pulling carp.
No, the only place that has carps that I know about is your fishmonger, Dirks Sosnoff. Dirks Fish has Asian carp. They sell it.
I'm going to tell you because there's a famous place in Omaha. But keep going. You guys can talk.
It's Warren Buffett's favorite fish house.
Is it Get and Go Fish or Joe and Tess?
I think is that the place you looked it up in Omaha? I think it's Joe and Tess.
I'm just looking up things here right now. There was a Diners, Drive-In, and Dives from 2017 that featured a place in Omaha that served deep fried carp.
That's exactly it. Joe and Tess, deep fried carp.
There you go.
Yeah.
It's real.
Yeah.
It's real.
I'm sending Tony out there though, just so he can do a review in his car. It's only a 6-hour drive, Tony. You can do it.
I'm gonna try that for you, Sosnoff. I'll do my best.
It's cheap. It's only like $10 a carp, and you can have. I'll buy you 2.
All
right, boys.
Okay.
It is triple witching. We're up 60 or almost 60, something like that. What are you guys thinking for the rest? Before we go, what do you think here for the rest of the week? This is our last. We should preface this. This is our last. For the next 2 weeks, this is our last moment.
The last time you're going to see these 2 carps.
So make it good.
It good. You're not going to see us.
The only thing screaming anything at me is the bonds. Everywhere else, I'm a little bit short stocks. I'm a little bit short dollar. I'm a little bit long gold, but I haven't changed anything there in a while. I'm just kind of letting those things marinate. They seem to be quietly working. But the only thing that's interesting out
long
there
gold
seems to
short stocks is not working, sir.
No. I
don't want to burn
your bubble.
Very quiet.
No,
very quiet.
Stocks is not working. No,
it is
stocks and gold are not working.
Thankfully, stocks is not going anywhere, which is halfway to where it needs.
Otherwise, you're going to
gold is creeping higher, dollar is creeping lower, but there's nothing exciting there. They're extended now, but the bonds still look attractive. The long end of the curve, I think, is possibly the most interesting thing out there, where you have some room to go.
It's the most oversold. I'll give you that.
Well, and it's been coming up since mid-May. It's kind of it's attempting to claw its way. It's higher highs and higher lows since about May 19th. So it's slow, but it's kind of seeing some life.
And you call me optimistic, Tony? You say
Listen, the trade of the week is short oil.
I agree with you there, Dylan.
I agree with you, Dylan. I hate the fact that I agree.
Call your neighbors, call your friend. Don't get carped.
Hide your kids, hide your wife.
Now, let me ask you guys a serious question. You said call your neighbors.
That's right.
If I talk to either of my neighbors, they're both in the trading business. Both my neighbors. Not traders, but they're in the trading business. Are any of your neighbors in the trading business?
None.
Of course not. This is a Chicago thing.
Yeah.
Chris?
Not directly. One of my neighbors works in, agroponics. So he's involved in like the food chain. So he's interested in commodity prices. We talk about that actually.
Man, I'll give you a partial on that. Dylan?
It's fine.
Are you kidding me? Milan is the secret stronghold of options speculation and gray market tasty trading. I'm surrounded by these people now.
I'll take that as a no. I'll take that as a no. I'll take that as a no, Mr. Batista.
A lot of VPNs over here, people. A lot of VPNs, okay?
I would say that is a no.
Well, your neighbors are all felons, so they're not allowed to trade, probably have accounts. I got that. So, all right, boys, have a good 2 weeks. We will see you 2 weeks from today. And I'll
don't worry, ladies and gentlemen. We will see you tomorrow morning, though, right, Saznoff?
Yeah, we'll see everybody tomorrow morning, but we won't see Chris and Ilya. We'll see Dylan this coming weekend.
Have fun, Dylan.
Truth or skepticism lives. We are going to do a little truth or skepticism. This
week.
Truth
or skepticism lives. But we'll
and
see.
Dylan, no takebacks. So if you have to keep him in Milan, so be it. We're going to take.
Believe me, he's not going to want to go.
We're going to take a quick. You believe me? You're going to want to keep his wife. You'll let him go. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the Overtime Boys. Peace.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Nothing matters. It's Monday, June 16th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan as we take you through the rest of this trading hour. Futures market closes at 5 Eastern, 4 Central. If you're joining us on the platform on tastylive.com, welcome back. Thanks for tuning in. Come over to YouTube. Tell us what you think of the dip buyers today in full force, completely round-tripping the stock market to where we were last Wednesday when I had the pleasure of seeing everyone last time. We settle in basically, Ilya, where we were during Futures Power Hour today. Nasdaq in at 22,168. This is effectively where we were at 1 o'clock, Ilya, when you and I were talking about how Wednesday's close was 22,125 or so. The market holds on here today, despite a torrent of headlines coming out of the Middle East, of course. Israel and Iran are continuing to go after each other, and all indications there could be some more launches here I suppose this evening, U.S. time, going into the early hours of Tuesday in Israel, Iran. So that continues to be a problem for the market, problem for people everywhere, quite frankly. But this is a market show, so we'll try to keep it focused there. The market doesn't seem to care today, though. Nothing matters, apparently. Doesn't matter if two countries, one that has a nuclear bomb, one that's close to achieving one, are lobbing missiles at one another. Not going to be a regional conflict. Putin saying that he's not going to interfere or intervene on behalf of Iran. You're seeing Hezbollah say they're not picking up arms against Israel. Market doesn't seem to care. So stocks here, basically where we were mid last week when we had a last chance to interface, Ilya. 60.89, a little bit more than that after the close here, 60.93, 1% advance or so for the S&P, 1.4% for the NASDAQ. Russell's up 1.21. Before I go to you, Ilya, because you and I talked at basically these exact same levels earlier, Dylan, we're now on the other side of this weekend. What have we learned here about this conflict? Because I could have gone to sleep since last Wednesday, and the market seems like it's pretty much unchanged.
I mean, this is sort of the greatest test of my hypothesis from last year, which is Middle East heat is an opportunity to get short oil and buy the dip. And I mean, this is the hottest I've seen it. I think anybody's seen it in some time, maybe ever, in the context of sort of the technology that they're using now. And it's really, you know, both nerve-wracking, heartbreaking, anxiety-provoking, all the non-financial emotions are maxed out. But again, whether it's Russian rhetoric, American rhetoric, NATO rhetoric, Saudi rhetoric. I mean, I think the only rhetoric that came in with any real the only headline I saw that was sort of not in their own way de-escalatory was Pakistan, who basically said if Israel uses nukes, that Pakistan will step in on behalf of Iran. But I think this is sort of the ultimate test of the, you know, fade World War III trade. Mm-hmm. But I think it's also a validation of the extremely improbable nature of World War III, even in the face of open missile conflict between Tel Aviv and Tehran.
There's open missile conflict. Ilya, oil gapped open higher to start the week. That's what we're looking at here on the screen, CLQ5. It top ticks above $75 a barrel. It settles in right now. It's at 69.80. We had some headlines over the course of the day where maybe Iran was looking to de-escalate. Netanyahu said on ABC that he's not ruling out trying to assassinate the Ayatollah.
Right.
So there's obviously still a lot of risk here. We're not going to see the missiles stop flying anytime soon, it appears. But the market, we see the volatility come in. We have a high tick of a 115 IVR here in oil, 115.89 to be precise. And now we're back at 98. So I know this is, I really don't like the overtime shows that we do. And quite frankly, I'll just admit something. I don't like doing the programming on air when we have these geopolitical flare-ups, because our job here is to provide as much objective insight to what's happening to the market as possible. And we're talking about ways to make money on death and destruction, which feels callous. So I would just say, as I said on Futures Power Hour, Ilya, if you don't like trading the Middle East headlines and you don't like trading these, you can't trade energy right now in any capacity. Okay. But if you set that aside here, you had a remark in October 23, shortly after Hamas attacked Israel, about how markets tend to benchmark these things. Even as the images on our screens get worse, even as they get scarier, as Dylan says, they induce anxiety.
Sure.
So has the market decided today that we've benchmarked this risk?
I think the market has decided that this risk is what they benchmarked when this same thing was happening last year, or at least they've decided that for now, last year and this year are the same thing. And obviously, as we said earlier in the day, wars are nonlinear. You never know exactly what's going to happen. In particular, in the case of Iran, you have a very significant network of proxy actors and a clandestine network that's very, very broad, and not only in the Middle East. I mean, certainly a lot of their levers, like Hezbollah, like Hamas, like the Houthis, have been meaningfully neutered. But the network is still significant. So we look at this and we say, okay, well, what kind of character might this thing take on ultimately? Difficult to say. But it looks like what the markets are doing here is basically saying, right, last year we had these two countries shoot a bunch of rockets at each other, and after about, let's call it 4 volleys, ultimately, that was it. It's looking like the market is essentially assuming that's the world we're in here. And for now, that's a tradable thesis. I think fading this move in oil looks increasingly attractive if you want to essentially presume that the markets are right about this. But if you're not prepared to sort of embrace the idea that wars are non-linear and nobody knows and dislocations can happen very quickly, well, then you probably don't want to be participating in the asset class in general, to your point. This is not something that's being motivated by this or that competing understanding of economic growth. This is headline by headline stuff. So at the moment, it looks like the markets have decided that this is last year. Will it stay that way? You never quite know with these things.
Here's the good news, though, Dylan. The way that we're talking about trading this means that we think there's going to be less death and destruction. Because if we're thinking that we're calling for a top here in oil and a fade off the move in geopolitics, it means things calm down, right? So we're not betting on the missiles flying. If anything, we'd be betting on the missiles stopping flying in some capacity, or just generally speaking, that vol is overcooked at a 98 IVR around these levels. I wonder how far they go, though, Dylan, because I couldn't help but notice the name of this operation is called Operation Rising Lion, which for those that have looked at an Iranian flag pre and post fall of the Shah and ultimately into the Ayatollah regime, you would notice that there is a lion on the original Iranian flag. And so this is kind of it feels like it's a call for regime change. Also, Netanyahu has called on the Iranian people to rise up in the streets and overthrow the Ayatollah. So it sounds like regime change. And I'm one of those, if it like walks like a duck and talks like a duck kind of people, I'll take it.
I'll even layer onto that. You got Musk tweeting out the Starlink beams are on rhetoric, trying to bypass the communications blackout in Iran and trying to sort of, basically doing his part to support a rebellion in Iran.
It'd be
as
an
well.
interesting play on words, of course, because the Jerusalem lion is a very sort of standby Israeli symbol, both in ancient times and currently. So it would be an interesting double entendre to say that, we're talking about the rising Israeli lion because that's symbology there, the Lion of Zion, as it were. And we're talking about maybe the symbolism with Iran and maybe some nod to a previously very collaborative relationship between Shah era Iran and Israel. They were allies at the time.
Dylan, I can't help but wonder if there are implications for the Ukraine war throughout all this as well, because we know that Iran's been supplying a lot of drones to Russia, which also I suppose is like an interesting twist about this whole thing geopolitically. For those that follow the contours of this perhaps the way that I do, the European Union was a lot keener on getting Israel and Iran to de-escalate in the past. They have been quite mum's the word this time around. They seem
I might say they're almost endorsing, almost.
Right, and would go to show perhaps they're just, Iran, you want to keep providing these drones to Europe and we keep up to spending money to keep Russia out of Ukraine? Like, you can send your drones to Europe. We are not going to tell Israel not to destroy your munitions factories because they may be taking care of a problem for us, right? And if Russia's getting less drones from you, then that's less death in Eastern Europe. So that's exactly what we want. There's a lot of contours here that are interesting to follow right now, but the lack of reaction here in the stock market is, again, I wouldn't even call it jarring at this point. We've seen previous episodes. Oil has certainly reacted more, and this is the great paradox of these recent events. The stock market took it harder on the chin in March and April of last year during a smaller rise in oil than it is right now.
I mean, don't you feel I feel like oil and the stock market have been pretty well disconnected for some time. I can't even explain why, but think about the tariff madness in April when it was sort of an economic apocalypse and to seizure of all global trade as a result of the mega tariffs. And oil was pretty indifferent. And now you have, World War, you have the sort of Middle East escalation. I'll just call it an escalation. And oil goes cuckoo bananas. And the stock market's indifferent. And to your point, even with the oil spike, the stock market gets unimpressed.
Well, look at the difference here, the reaction function. In April, this thing lasted, 2 weeks? We start declining in March. We really crest over in that second week of April by the Ayatollah's birthday on April 19th. I only know that because Ilya and I were up watching Iranian state TV when the bombs started falling in Iran.
As one does.
They didn't hit anything sensitive. And it was
I know that you do a special celebration of the Ayatollah's birthday every year.
Every April 19th, apparently, starting in 2024. But we see this as like a 2-week thing. And then you see here in October when oil prices spike again around this is kind of like a week-long thing before we ultimately get, I would actually say, may I reverse that? In April, it took us almost a full month to get back to where we were before the panic began. And then in October, it was like a week plus 6 days. And then we erased Friday's losses here today instantly. So I think just Ilya, you talk about the benchmarking. It's kind of, I hate to minimize this, but this is what we're doing here. It's kind of like what we talked about with the 5% on the 2-year yield, how someone who first moves to Florida with their first hurricane, it's really alarming. But by the time you've lived there for 10 years, you've been through enough hurricanes to know what to expect. The 2-year, when it was bumping into 5% those years ago, the first time panicked everyone. Everyone got spooked. And then the second time it wasn't so bad. And by like the third, fourth touches, we're like, okay, we can handle a 5% 2-year yield up here. And the market's kind of telling you the same thing right now with Israel, Iran, right? Strait of Hormuz being closed or bust, I suppose, right now, until that headline crosses our screen. Dylan, I think that your hypothesis is being proved correct. I mean, not that nothing matters, but maybe nothing matters right now, except for the fact that equity bulls are just going to continue to drive this higher until something really terrible happens.
Which is why, I
So
mean, at
one
the end of the
thing-
day, I like I like Ilya's long bond. I like short oil long bond for the week.
Yeah. There's one important thing looking at the price action before we kind of throw up our hands and say nothing matters.
Nothing matters, yeah.
Take a look here and realize we're not making headway versus the high that we've established, let's say, 3 sessions ago. We've erased the freak out, but that's it. We've essentially reset to what was there when U.S. inflation data came out last week. And that inflation data said, relatively benign. CPI, PPI, nothing to see here. Then, of course, nobody was paying attention to the consumer confidence data that came out on Friday because everybody was watching the missiles fall. But that consumer confidence data recorded a very significant improvement. So it was much, much better than expected. And that's largely around the one-year inflation forecast dropping from 6.6 back to 5.1%. So back inside the high from COVID. The whole major spook in April, the major spook in May was that one-year inflation expectations jumped to 6.6%, and the COVID high was 5.4. So it looked like the tariffs were really freaking people out. But that's not apparently where people were come the June survey. Inflation fears unclenched. So we've got this retail sales number coming up tomorrow. We've got the Fed this week. These things matter because what we're seeing is the markets have shrugged off geopolitics, but they're back to the starting line for where we were the last time we got a Fed relevant update. And that Fed relevant update said Fed probably needs to cut. And they're probably not going to. And they're probably not going to signal that they're any readier to do it. Because all of the same uncertainty that the Fed was facing in May when they had a 90-day tariff pause cliff in early July and another one with China in August. Lots and lots of noise here and there, but that hasn't changed. It's exactly the same thing. And there haven't been significant deals, but for a little baby one with the UK, which, let's face it, is barely in the G7 at this point, as far as the size of the economy. So when we're looking at the situation here, and by the way, also a country with which the U.S. has a trade surplus. So not exactly a thing to fix, not exactly a huge risk for the Fed's calculus as it comes to the tariffs. So from the Fed's perspective, they have no more certainty about what this thing means for growth and inflation, but break-even rates in bond markets are telling them they need to be cutting rates because inflation is likely to be lower, not higher. That's what we saw in the data. And consumer confidence is improving largely because even consumers are starting to think, yeah, this inflation thing isn't really what the business is. It's an economic downturn that would be a concern. And so from the Fed's perspective, they're probably sitting on their hands. It certainly doesn't help that the president is goading the Fed chair again. So you're in now this weird thing where, okay, yeah, maybe the local war doesn't matter because the markets go, okay, it didn't matter last year either. On we go. But the Fed clearly matters because the markets won't make any headway beyond the last point where they had a read on it. And we have some very relevant event risk to all of it over the next 24 to 48 hours.
Dylan, you mentioned that you like bonds this week. Oil lower, bonds higher. We have a Fed decision on Wednesday. Market's not expecting a cut. What do you think about the Fed this week? It feels like it's the third, fourth, fifth most important story. And if only to emphasize that, I did pull up all three major, we'll call it Fox, CNBC, Bloomberg here, just to get a check what the average trader is looking at right now if they turn on the news. There's nothing up here about the Fed. There's only one line item about Israel, Iran on Fox News. Bloomberg is a little bit more about Iran, but still there's nothing here on the front page about the Fed meeting this week. And same thing for CNBC. There's literally nothing up here about the Fed meeting whatsoever. It feels like the Fed is a complete afterthought in this environment.
Yeah, I mean, I was thinking about it, just reading the headlines when I woke up this morning, and just sort of looking through that dynamic. My perception is not only is the Fed irrelevant, that the Fed is a foregone conclusion this week. I won't say it's irrelevant. It's a foregone conclusion this week, and sort of a known. But increasingly, it's viewed as an ongoing neutral position until further notice. That sort of expectations of cuts are fading increasingly into the future in general, beyond this particular meeting. And so that the Fed is sort of becoming more, at the moment, more perceived to be just in a sort of holding pattern until further notice. The economy is strong enough, inflation is tame enough, blah, 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 which I think is part of the reason why I like the long bond position, actually.
Yeah, I mean, I think that's exactly right, because the event with this Fed announcement isn't going to be what they do. They're not going to do anything. It'll be what they say, and most importantly, what the quarterly update of the summary of economic projection says, and whether they change anything there. If they don't, which seems likely because they're still, we got these tariff cliffhangers, and just like Dylan said, the economy is strong enough. The unemployment rate is not like surging or anything like that. Inflation is coming in a way that makes sense. Everything's fine. They have all the reason in the world to assert that they're basically just going to keep doing what they're doing, which is waiting for the tariff calculus to review itself. Mm-hmm. Should they be prioritizing inflation or growth? But if they do that at a time when the market is very loudly now saying, hey, listen, it's time to cut, and the break-even rates are pointedly telling you that there is no argument as to what to prioritize in the markets. It's only an argument at the Fed, that the markets think that it's time to prioritize growth and not inflation. That's a vector for disappointing markets, especially if you consider that since the markets got the last update from the Fed, which was in early May, bonds bottomed and stocks changed their incline to basically a sideways drift. And the upshot here seems to be the markets aren't happy with the idea that the Fed is going to delay cuts because they think they should be coming, and are then pushing those cuts into the long end of the curve. So now, for example, the tally for this year and next, still 100 basis points in line with the Fed, but tilted. 42 for this year, 57 for next. So it evens out when you do the full tally, but the markets are very clearly leaning in, they'll be late, so they'll have to do more later. So if you get a Fed here that gives you the same SEP, the same wishy-washy rhetoric, there's room here for the markets to go, oh man, that's disappointing. And that ends up being a stocks lower, dollar lower, gold higher, bonds higher kind of a thing.
Today, the bonds were interesting because they were rallying all morning until we got those headlines that Iran is warning that we're going to get the largest missile strike that's occurred thus far. We have a We have an auction today, the 20-year bond auction. Note for that first 5-minute candle, it's a complete doji. Nothing happens. You start getting the headlines again that there are missile sirens going off in Israel. There's more missile attacks coming. Oil starts moving up off the lows. And so when oil turns higher and retraces some of its losses for the day, bonds at the long end of the curve ultimately turn up. I'm very much in the mindset this week that we're looking at a Fed meeting that really doesn't matter all that much. A while back, we talked about the lawsuit that was making its way through the course regarding Humphrey's executor because Trump fired some people, I think in the NLRB and from the FTC. Either way, though, the implication there for us, for market participants, was whether or not it would invalidate the provision that effectively keeps the Fed independent. But in that Supreme Court ruling, the justices, the majority, concluded that the ruling, quote, necessarily implicates the constitutional or for-cause removal of protections for the members of the Federal Reserve's Board of Governors or other members of the Federal Open Market Committee, because the Fed Reserve is a uniquely structured quasi-private entity that follows in the distinct historical tradition of the first and second banks of the United States. So we're going to get this dance now, I think, for the next few months. Again, first time Trump says he wants to fire Powell. Scary, can't do that. Okay, he's going to keep talking about wanting a new Fed chair, but we're also 11 months away from when Powell's going to leave office. And so this process has got to start sometime soon. I don't think we should pay attention to much of that. There's going to be quarreling between the executive and the Fed the next few months. Powell's not going to give us anything this week. Probably not going to give us anything next month unless the data continues to deteriorate. Another miss on the inflation prognosia and a weaker jobs report, below expectations and more downward revisions. Maybe that makes July live. Maybe. But right now, I think that if you're, not that it's the typical tasty way, but I know there are people who like to use their macro or their worldview and lay in the tasty methodology. If I'm facing any bond trades about the Fed cut cycle, I'm not doing anything without looking out to September. The next few months could just be really, really choppy. One way or the other.
That's right. They could be. They could be. I think there is room here for the markets, after already quite a bit of chop, to kind of settle into some kind of a bias because they're going to have this be the last kind of meaningful update on big data and on this big story for a while. And so even if the Fed doesn't offer much that's new, it still shapes up as an important catalyst because it tells the markets, right, so this is the last thing for a while. This is your baseline. Now you decide, are you happy with this baseline or are you not happy with this baseline? And who knows what we would have done with how price action would develop on Friday last week were we not to have missiles going back and forth. But here's what we do know. Stocks had an opportunity to rally last week on supportive U.S. inflation data and on the resumption of the U.S.-China détente. They went back to London. They hashed it back out. Cooler heads prevailed. Nobody even seemed to notice that the U.S. and China are back on speaking terms. So you're in this situation where, on the one hand, yeah, bad news doesn't matter, but neither does good news, apparently.
Nothing
because
matters.
stocks are kind of drifting. Bonds are kind of drifting. Dollar is kind of drifting. The ranges are volatile, but things are kind of unhinged here from any kind of macro narrative this way or that. That's not terribly encouraging. You don't want to see things happen for no reason because then it's very difficult to extrapolate follow through. So when you look at this then, I'm kind of looking for the Fed to be a point where the markets, if they truly don't care about the episodic stuff, if they don't care about a U.S.-China détente, if they don't care that Israel and Iran are shooting at each other, if all of that stuff is just kind of whatever, noise, more headlines, then the Fed presents you with something tangible.
Okay, but hold on. If in April things pop off between Israel and Iran, April 2024, the May 1st, 2024 FOMC statement has nothing about geopolitics, obviously nothing about Israel or Iran specifically, but that didn't move the needle. And for the sake of conversation, I'll tell you that they didn't do anything after the November meeting either, right? They have the September meeting, and then we get to November. And in the November meeting, they don't talk about
And the
Israel
markets,
or
by
Iran.
the way, did not like what the Fed did in May, because the Fed came out in May last year and was, woe is me, we can't cut rates, inflation isn't falling as much as we'd like.
But they said that they weren't going to hike. That was really important.
Yeah.
You went to that May 1st meeting where the market was pricing in like a 0.3% chance of a hike by the end of the year, and Powell came out and was like, listen, all you guys got to calm down. We're not hiking.
Yeah.
We may not cut, but that doesn't mean we're going to hike.
But then look what happened to equity markets in the middle of last year. I mean, that was the last kind of real spook.
Rallied in May, June. Right? Rallied May, June last year, right? Am I going crazy here? My memory, I'm crazy. I mean, I know I am, but we rallied in May last year. May, June. It was July that really we took that ridiculous Japanese yen carry trade or whatever.
I don't think.
In August.
I think it's easy to blame the unwind of the carry, but you do have to look at that thing as a symptom, because carry doesn't just unwind for random reasons.
But I wanted to play.
Much of that was the Fed is delayed.
Yeah. So one question I'm pretty sure you're going to do this with Victor tomorrow night, Elia. So I apologize for stepping on the content, but he usually does this game, for lack of a better phrase, with me if I'm on Tuesday before the Fed meeting on Wednesday. So Dylan, perhaps we could play it here together, which is to say that where do we think the Fed's going to move things this week? And I know there's the whole Sosnofian perspective of, even if I told you what the Fed is going to do on Wednesday, you wouldn't be able to make money on it. Okay.
Sure.
I like to have a framework for how things are going to work out. So we have our 2025 projections here.
Yes.
The top line is what was done in March. The bottom is from the previous meeting. So when we get this next update, you're going to see change in real GDP for the June, and then you'll see the March projection underneath. So Dylan, I want to start with you. We have growth, unemployment, inflation here. The Fed said last meeting that we're looking at 1.7% growth for 2025, which is decelerating from 2.1% in the December forecast. Do you think the Fed is likely to upgrade or downgrade growth for the rest of 2025?
Interesting question. I'm going to say they're more likely to upgrade it.
Interesting. Ilya, a growth projection of 1.7% for this coming year. Right now, the Atlanta Fed is giving us a 3, dare I say? No, I doubt to double check that. Yeah, 3.8% GDP reading for the second quarter. The New York Fed nowcast is 2.34%. Do you think the Fed upgrades its GDP forecast here?
No, I don't. I think what's likelier to happen is a hold, but with a bias to downgrade. But I think more importantly, the central tendency, the range, is going to widen out. And that will speak to the Fed's looking at this and saying there's more uncertainty around the outlook. The deeper we go, the closer we get to these tariff cliffhangers, the more uncertainty there is. The Fed very clearly said in May, they didn't have a summary of economic projections, but they came out and said risks to both growth and inflation have increased. And uncertainty around both has increased. So
Look,
I think
you can
if
see that
anything,
here, by the way. You can see that in the ranges here. You just going out in 2027, for example. That's a long ways away. I don't know why they had such a tight growth forecast to begin with, but in December it was 1.8 to 2%. So we'll call it 1.9 plus or minus a tenth. Now it's 1.6 to 2%, right? So that's
really, and that's March.
So you're seeing instead of like there being a 0.2% range. Now it's 0.4%. And you're seeing this happen here for 2026. Instead of 0.2% range, it's lower, and now it's 0.3% range. So
and the Fed
lower
told
growth,
us that uncertainty has increased versus this now, because this is March, and the Fed told us in May that it's even more uncertain then.
Yeah, that's the mathematical expression of the uncertainty. That range is widening out, even though you're getting closer in time to where we are. You could see it here too. The range is shifting down overall. So I guess I think they're probably going to keep it on hold, because if we're looking at a rebound this quarter, and from the data that's accruing this far, even the Port of LA data, we're not seeing a significant slowdown in shipments. We've had that big spike back where we're like 40% year over year, and now the Port of LA growth is like 1.6%, 1.8% year over year, which is a more modest pace in line with what we were doing prior to the tariffs being implemented several months ago. The unemployment one is perhaps the ace in the hole here, guys, or the wild card, because if the Fed thinks that the labor market is giving out, that's when they have their justification to look through that temporary one-off rise in inflation and instead focus on the longer-term impact of what a growth downturn may look like. Dylan, I have a feeling here that if the Fed wants to signal to the market that it's getting ready to cut rates, it's going to push this unemployment rate higher. The last non-farm payrolls report, we only got a 4.2% unemployment rate because of rounding. The actual rate was 4.244%. So next month, we're likely to see 4.3. And I think if they want to indicate to the market that they're leaning in the direction of a cut, they're going to give us a 4.5 here for the year end. So Dylan, we have unemployment here. We're going to get it Wednesday. Do you think the Fed's going to feel any better or any worse, considering you just said they might even upgrade their growth forecast?
I think they'll feel better. I mean, I think the only way you get an increased growth forecast is you have inflation continue to be sort of less and less relevant, labor market stable, and I believe, as you know, that between AI and transportation, that the technology drivers for growth are more profoundly powerful than people realize.
Ilya, I think you're probably on my page. You think that they're probably going to bump up the unemployment rate here, right?
Most likely, yes. And I think this sort of speaks again to their idea that the longer the tariff saga continues without some kind of a lasting resolution, the more risk there is to both inflation being higher than expected and to growth, and by extension, the labor market to be a weaker situation, that is a higher unemployment rate than expected. And we hear them say this constantly. Fed officials are constantly beating this drum that uncertainty has increased and risks to both objectives are rising. So it seems like they're kind of painted into a corner here where they're going to have to keep, or at least what they've done so far is they've kept the rates expectations unchanged, December to March. But how they get there has been increasingly diverging views on growth and inflation, where inflation keeps getting upgraded in the forecast and unemployment keeps getting upgraded as well. And so the Fed is saying, okay, well, if our objectives are going into opposite directions, we're not going to change the rate forecast because we don't know which thing to prioritize. So for now, it'll just stay here.
You know, when these policymakers do these meetings, they bring forward experts, right? They're actually like individual economists who work on very specific topics within each district. But one thing that Federal Reserve policymakers listen to are the surveys from their contacts. You see it through the Beige Book, right, Ilya? You get it through the regional Fed surveys. You get these comments from each little sector or little Fed district. The National Association of Manufacturers is one of those groups that provides this information. They collect industry data and they release it publicly, and they release some publicly recent days here. What's the impact of tariffs on business? 79.7% of businesses that are members of the National Association of Manufacturers are reporting that it's increasing costs. 57.4% are saying it's dampening business growth outlook. 39.2% saying it's reducing availability of inputs or increasing the cost of inputs. Only 7.9% are saying there's no impact whatsoever. Oh, wait, 7.6% saying they're going to consider relocating operations outside the U.S. That's not good. The point here is
and
that
by the way, it isn't
yeah.
just industries that are hit with tariffs directly. We've talked about this before.
Directly, indirectly.
That you're seeing these concerns pop up in the service sector surveys when the tariffs are mainly a goods sector thing, and even just anecdotally, people I'm talking to that are definitely not in a goods-oriented thing. I was staying at a little bed and breakfast in Guerneville in the Russian River Valley area here, about an hour and a half north of San Francisco. A little bed and breakfast says, you know what, as soon as the tariff news hit the tape, our bookings were cut in half. People just canceled immediately.
Mm-hmm.
Just because it's spooking people about outlays and what things may cost downwind. And so they go, let me not go spend any money on a vacation. Let me back up here. So in this context, the retail sales numbers will be really interesting. And of course, what ultimately the Fed makes of all of this will be interesting, because the market is already telling them, and I think that's the key. The market has made up its mind. The Fed's still resisting whether they should prioritize growth or inflation, but the market has made a call. So the Fed doesn't need to do anything. They need to do nothing for the markets to be disappointed.
I mean, I would even say, going to your question, Chris, I think my speculative position is probably slightly less likely than the others. But let's say the Fed does do what I think they're going to do. I actually think that would be terrible for the market. It would basically be a signal to no rate cuts anytime soon, is that kind of the worst case scenario.
Yeah. Mm-hmm.
Yes, and I think that's, forget the number themselves. Like, there's a message there. If the Fed were to, spike
even by a tenth of a point, that's what I'm saying. Like, even less than a tenth of a point, any marginal bias on the bump in growth without increase of fear of inflation, I think would be interpreted very badly by the market.
Well, there's a message here that they tell, right? Like, if the Fed were to come out and boost GDP and boost inflation and drop the unemployment rate forecast, I would think that they're expecting a booming economy. And if they cut GDP, but they sent unemployment rate higher and they sent inflation higher, I would think the Fed is having some stagflationary bent, which is what we concluded last time, because they cut growth, they boosted unemployment, they boosted inflation. There's that stagflationary flavor there. So if the Fed says that, no, this is just going to be like, the tariffs aren't a big deal. So you get unemployment going up, you get inflation on hold, maybe you get GDP higher. So it shows there's less of a tariff impact, but it's still going to filter through. All that matters for whether or not the Fed ultimately has the lane that it's carved out for itself to have July optionality or even September optionality. And then it goes into that bigger question for stocks then for the rest of the year. Are we getting rate cuts for maintenance reasons, for recession reasons, for emergency reasons? Yep. And all those things determine the near-term path of stocks, which, in fairness, last September, when we got our Fed cut, right? Okay, so that's September 18th. We're 9 months later. You got to chalk this up. 9 months later, we're higher, right? So following that path, cuts for maintenance reasons, 3 months out, 6 months out. April's a little odd. But for the most part, it's holding up in line with historical expectations that if you get cuts for maintenance reasons, the market's going to rally, and rally it has since September. I do want to pivot here one more time before we get into the end of the day, because there is one more geopolitical question I have to ask. I read a really interesting article over the weekend about how China interpreted 9/11. And their interpretation was that with American and Western eyes now preoccupied with the war on terror in the Middle East, China would have the ability to maneuver a little bit more freely as it tried to build itself up into a global power. Now, maybe this is a little bit of retroactive history writing here, but certainly if that was the plan from day one, China perhaps succeeded at that. Dylan, the U.S. is moving a second carrier group out of Southeast Asia and into the Middle East right now. if you're looking at the situation unfolding between Israel and Iran, forget the implications that China is Iran's largest customer for oil. But if you're China and you're looking at the situation in Iran, is it informing anything about what may happen with, say, Taiwan? Because it feels like Taiwan is the one thing that we never talk about geopolitically that's constantly the elephant in the room.
No, I don't buy it. I think I just don't. I don't understand. Like the cost benefit now, the Taiwan is, at least here's my perception. Taiwan for China is not that much of a problem. But making a move on Taiwan, if you're China, makes Taiwan a much bigger problem for China than it is in its current condition.
A huge problem.
Huge. And to what benefit?
Doesn't do
moral
anything.
Political benefit. It's basically some sort of empty moral political benefit of some sort of rhetorical aspiration to reunification.
Versus how much more does Taiwan do if you don't invade but threaten to invade and have that in your back pocket all the time and go, hey, you better not get chippy. I might invade Taiwan.
And you don't make yourself totally alienated from the global community. You know, China's position right now is really great, actually, politically, on the global stage, in part because of some of the benefits of the sort of U.S. focus on Russia. I think that the Biden focus on Russia as the enemy of choice was misguided relative to the threat of China, and I think that. All the ongoing activity and everything benefits China, even though I know China got sort of in the crosshairs of the Trumpian tariff rhetoric, but even that proved to be largely rhetorical. There's some financial consequences there, but it's on the margin at the end of the day, especially for China. So I just don't, I don't think it has anything to do with focus, not focus, this, that. I just don't fundamentally understand what reason China would have to do that.
Let's give the devil his due for one moment here and consider that at least one compelling argument for why Russia did what they did in Ukraine, which incidentally I didn't think that they would follow through on to this kind of an extent, because again, the calculus makes absolutely no sense. But at least in Russia, there is a sense that the demographic situation is so dire that if you were going to make a move on Ukraine, you kind of had to do it when Russia did it, because otherwise you're just not going to have the able-bodied soldiers to make any move if you wait, let's say, 10 years longer. It is also a dire situation demographically in China. And so I suppose you could say, well, if China was ever going to really make good on this Taiwan thing, they would have to do it at a time when they have the manpower and everybody's not 50 years old and unable to go and fight. But also, China doesn't have nearly the impetus to go and do it, and then it's just a question of timing that Russia did. Russia is forever attempting to conquer their near abroad. In fact, if memory serves, the concept of near abroad is a concept that comes out of the study of Russia's geopolitical strategy going all the way back to Ivan the Terrible. Russia is flat. It is forever attempting to prevent overrun through immediate geographic barriers, because the wars immediately in Russia's psyche are the Mongols, Napoleon, and World War II. Both cases where the heartland was easily overrun once immediate geographic barriers like the mountains and the forests, depending on which side of Russia you look at, were overrun and penetrated. That's why Russia is constantly attempting to conquer the countries that live in those areas.
Well, the Putin definition of near broad is very broad.
Well, that's the thing.
Germany's in there, Albania's in there, Slovenia's in there. These aren't countries that border Russia.
Well, Germany, take Russia's current president.
He served in Dresden, so I'm sure that Putin has some proclivities in Eastern Europe.
Maybe, but if you look at the broader picture, not just this administration, but kind of the general sweep of how Russia does it, they always, really since the Mongol occupation, which was a very traumatic and a very formative experience, it's the thing out of which Russia kind of coalesced as a state. It's always trying to conquer the Caucasus, Ukraine, up to the Urals.
By that measure, though, I feel like I could argue that. I guess I don't mean that has sort of a disagreeable approach, which wasn't my intention. But you could argue, well, they did it with Hong Kong. Why won't they do it with Taiwan?
With Hong Kong, they didn't do it with
a good argument.
Yeah, well, with Hong Kong, they didn't have to shoot anybody.
And nobody really cared at the end of the day. They just created a judicial alignment at the end of the day.
Yeah, they didn't have to go fight the U.S. over Hong Kong. They would have to go fight the U.S.
And Hong Kong wasn't independent in the sense that China or that Taiwan is. I mean, everything about it is not the same. So
right.
And Britain gave
similar kind of thing with Macau
exactly.
as well.
Right. What, 97? Yeah. When was the first Rush Hour movie? 1997.
99.
That was like That was the central plot of the movie.
Yeah.
So the return of Hong Kong.
The return of Hong Kong.
So the movie starts the return of Hong Kong to the Chinese.
Yeah, the entire
Rush Hour is a good movie, by the way. I like that film.
It's a very good movie.
Job. They did a good job.
The entire thing here is completely different. Taiwan is an island. It's not a bulwark against invasion of China. It's just a giant, massive headache.
And it's an economic superpower for its size. Why F with it? I mean, I don't know. I just don't see it.
Why not just threaten to F with it instead?
So
for
much
all
more fun.
time. And use it as leverage.
There's war between Russia and Ukraine. There's war between Israel and Gaza. There's war between Israel and Iran. There might be war between Pakistan and India. Just saying.
One might argue the war between Israel and Hamas is the same thing as the war between Israel and Iran.
Yeah, no, it's the rolling.
It's all one war
of one organization, right? It's all of Iran's tentacles in the region. So
yes.
Look, the headlines tonight
is that Larry Ellison. How about that Larry Ellison?
Second richest person in the world now after
hot dog.
The latest run up in Oracle. But we're gonna have to talk about this another time because overtime is out of time. Stick around for the news tonight, and volatility continues to fade here. So you know what that means. In any event, Ilya Spivak, he's in San Francisco. Dylan Radigan, he's in Milan. If you're going out there this week, by the way, this week, next week, apparently there's some things happening with Tasty Live in Milan.
Week from today, baby, I'm bringing Sosnoff in country. 1 week from today, live trading event at Fabrique. Did a big webinar this evening with my boy Andrea Vitturi, was rocking the Italian with the Italian crowd. I got to say, my accent is terrible, but
yeah, we know.
There's the graphic. And so if you're looking for an excuse to come to Italy, see me, see Tom, see Rich.
Perfect.
There's still time to buy an airplane ticket. I can recommend some hotels.
The Radigan hostel experience coming your way. I've been Chris Vecchio. We'll see you tomorrow.
Put you in my guest room.
Good luck trading. Ilya's back. He's up with Macro Money next here on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Well, we seem to have had a war sort of get paid attention to in markets, but apparently we're back to their usual scheduled programming here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we're looking at the week ahead here when at the start of this week, it would seem all of last week's worries have unclenched, at least as far as the markets are concerned, certainly not as far as the conflict now raging in the Middle East would have it. But the market's apparently not terribly bothered by what's going on. And we're going to take a look here at what might be the next thing to care about as the week proceeds, because it certainly doesn't seem to be missiles flying between Israel and Iran. And so we begin this week with a familiar kind of story. And it's probably the right thing that we are, because if we look at where for example, the S&P 500 is, it has recovered from Friday's sell-off, but not so much that it's run away beyond where it was left with last week's update on the Federal Reserve, and that was relatively benign U.S. CPI and U.S. PPI data. So the idea that the tariffs haven't as yet created the inflationary run-up that the Fed is so concerned about, that's the last thing that the markets are seemingly prepared to care about, having brushed off Friday's scare. So we'll start here with a look at the performance readings for last week, and needless to say, this is quite a bit skewed by Friday's action. So you can see on the week, we have modest losses for the major stock indexes. Yields are down as bonds find a haven bid. Crude oil prices up 13% on the week, which, needless to say, happens basically in 24 hours. Gold is up. The dollar is weaker against both the euro and the yen. And the story on display seemingly focused very much on what happened from Thursday to Friday with Israel's move to strike at Iran's nuclear program. About the only place where that isn't readily on display is, in fact, the dollar. You might expect that the dollar would do well in a risk-off environment. It does tend to have these kind of typical risk-off haven characteristics. And of course, its unrivaled liquidity as the cash of choice for global commerce. That's first and foremost. When people cash out because they're afraid, where do they cash out into? Mainly the dollar. And so when you look at then what seems to be going on here, the part that doesn't line up with everything else is this bit, this dollar aspect of the story. Because you do see that the dollar is a little bit weaker, and it was even weaker when you consider what's going on here. And by the way, that's supposed to say the week of June 9th, not the week of June 2nd. Sorry about that. But you don't see the dollar catch that haven bid, and much of that really seems to speak to the inflation data that you saw, and that inflation data being supportive of Fed rate cuts. And so as we change gears and as the markets reset back to where that inflation data left us, sort of have to ask the question, is the currency market, obviously because it is cash, overwhelmingly more liquid than pretty much anything else, is that telling us something here? Is that suggesting a path of least resistance? And with that, we'll take a look at a range of data outcomes this week. We start off relatively light with U.S. retail sales data tomorrow. Expectation is for a 0.7% decline in sales month on month. That's after we essentially got a flat result in April, 0.1% rise, basically almost zero. We saw a good bit of front running of the tariffs as the catalyst for rising sales in March at 1.7%, but very pointedly in April, that did not continue. And the expectation here is that consumers are going to be still defensive going into May. Now, what's interesting about this, of course, is that we just had U.S. consumer confidence numbers come out on Friday, not that anyone would notice with the Middle Eastern war at the front of the headlines, but it turned out that this consumer confidence report was actually much better than anticipated. A very significant upshift in consumer confidence, largely linked, not surprisingly, to a significant move lower in one-year inflation expectations. At one point, we can see here in April and in March, inflation expectations, or in April and in May rather, inflation expectations were north of where the peak was during COVID. And now, of course, we can see that we've come all the way back down and indeed inside that peak. So things appear to be normalizing. People appear to be less worried about inflation coming from the tariffs, at least for now. And so the story seems to be that this was perhaps a reason to expect that maybe this surprised on the upside, or at least maybe it wasn't as bad as these expectations suggest. And of course, the reason this is so important is because aside from all of this noise in first quarter GDP data around a brutal surge in imports, a massive surge in inventories as clocked inside the investment component of GDP. All of that aside, as a kind of episodic front-running of incoming tariffs, people trying to stock up their inventories as much as they possibly can before any would-be increase in tariffs materializes. This is first quarter GDP, after all, through March. So at that point, the markets hadn't seen Liberation Day yet. All of that noise aside, the real takeaway was that the increase from consumption was the weakest that it had been since the second quarter of 2023. So almost a 2-year low in consumption. And of course, that's the important part of GDP, accounting for 68.5% of the whole thing. Whereas what's going on in the export and import story is barely an afterthought. We can see here there's exports and there's imports. We can see imports are narrowly higher. Once you net them out in their contribution to GDP, because we can see exports detract and exports add, we end up with barely 5% of the total. Needless to say, consumption is a much, much bigger deal. And so if consumer confidence is improving and we see retail sales better than expected, well, that would tell us a story about the resilience of growth. And if we don't see that, if, like in April, consumption is weak despite the fact that tariff-induced goods inflation hasn't really materialized at the consumer level, well, then that would suggest that something much more ominous is in fact afoot. With that in mind, we go to the almost certainly biggest risk on the economic calendar, and that's the Fed monetary policy announcement. No changes in the headline rate range expected, of course. We can see here very clearly standstill in June, standstill in July. We start to edge a little bit in the direction of cuts come September. We can see the cut is pretty much fully priced in by October, and then we're looking at another one likely in December. So if we take the entire calculus here, we can see the markets are just shy of pricing in the full 50 basis points in cuts, 42 basis points on the menu for this year currently. So that basically tells you that you have one 25 basis point cut all the way priced in, and then 17 basis points along the way to the next one, which amounts to a 68% probability that you get that second cut. And that's not dissimilar from where Fed policy expectations themselves are sitting. In fact, you can see the tally here for both 2025 and 2026, 99 basis points. So, but for a bit of rounding, exactly what the Fed had in mind. Here's the March update of the summary of economic projections, where you can see we're expected to go from 4.4, which is the average current rate. See that right here. Of course, the Fed sets its rates in a range from 4.5 to 4.25 currently, but this is the median. And so from 4.4 to 3.9, that's 50 basis points. And to 3.4 the following year, that's another 50 basis points. So from 4.4 to 3.4, 100 basis points between now and the end of 2026. And again, market pricing is about there. But whereas the Fed is equal weighted, you can see here the markets are increasingly anchoring to where rates will be this year, but extrapolating out more easing into next year. So we have 42 and 57 as the split, with the bias seemingly that the Fed is going to be late. It's going to wait longer to cut, and you might end up in a place where they only manage to squeeze one out this year. And so you have more scope for easing next year. In other words, the markets are expecting the Fed to be biased towards standstill near term, and to pay for that with more aggressive easing later. Now, if we look at what the Fed last told us in May, we can see that the upshot here is continued worries about uncertainty. In fact, we can see the Fed here saying that although swings in net exports have affected the data, indicators suggest economic activity has continued at a solid pace. In other words, the economy is broadly okay. Unemployment is broadly at a normal level. Inflation is at an acceptable level given the circumstances. And of course, the most recent data last week suggested it's more benign than expected. But we can see that uncertainty about the economic outlook has increased further as of May, and risks to both unemployment and inflation have risen. We see that show up in the minutes from that meeting. Uncertainty features very loudly into these comments. Worries about having difficult trade-offs, because, of course, lower inflation would beckon rate cuts. But in this environment, we're looking at risks for higher inflation and higher unemployment, where the higher inflation would argue for, at worst, standstill, if not hikes, and higher unemployment would argue for sticking with the cuts idea and maybe even dialing it up. And of course, that leaves the Fed somewhat paralyzed. And so what we have here then is the makings of a very market relevant disconnect. Because while the Fed seems to be talking up uncertainty and saying we're not going anywhere fast, and of course that calculus hasn't changed between May and June, the Fed still faces all of the same uncertainty. The growth story hasn't really changed. Neither has inflation or unemployment in the kind of way that the Fed would care about. No major swings. And there are still cliffhangers as to the 90-day pauses in reciprocal tariffs. One coming up for most countries ex-China in July, one coming up for China in early August. All of these things leave the Fed in basically the same mode as they were in March, as they were in May, throwing up their hands and saying, we don't know what all of this means until we do. But the markets seem to have decided. You can see here that when the tariffs implementation was a growth scare at the beginning of the year, benchmark inflation expectations fell with stocks, the S&P 500 here in yellow, and it's the 5 and 10 year break-evens in the blue and red here. Those are the inflation expectations implied in bond markets. When this was a growth scare, not surprisingly, they moved together. Stocks have rebounded clearly. But inflation expectations remain anchored, as if to say the Fed doesn't need to be worried about inflation. What it needs to be worried about is growth, because that's what the risk is on the table. And so if the Fed does nothing and signals nothing and ultimately leaves markets with another vague, we don't know, wait and see kind of a message, at a time when the markets have increasingly decided what the message ought to be, well, that might leave them disappointed. And that's a potential risk for stocks. It may shift bonds higher as more rate cuts go into the long end of the curve. It may likewise weigh on the dollar and boost gold as that rate cut speculation starts to bubble. Now, after the focus on the Fed, we shift gears across the Atlantic to the UK, where there's some data of note as well as a policy announcement. We start with UK CPI. It is expected to dip a little bit after the surge in the previous month's data, in April's data. That was a 15-month high on headline CPI at 3.5%. We're expected to come in a little bit here to 3.4. Headline reading, the core expected to come in as well, down to 3.6%. If we look at the way that inflation was breaking down in April, we can see that there was a huge one-off increase to the price of fuel, which really represents some policy changes, new excise tax and a bunch of other kind of one-off elements. And you can see the knock-on effect from the change in the cost of fuel down to the cost of transport. And so you have that as the main kind of catalyst for a large increase, but these things should begin to fade over time. And the Bank of England is, at the very least, minded probably to stay steady here while that happens. We can see that the expectation is indeed that we remain on hold at this month's meeting, although we start to increasingly look at another cut between April and September somewhere as you get these influences waning and inflation expectations start to shed the risk of building out and anchoring. And so then you once again get the scope for rate cuts. And we can see here the expectation is that we're going to get 45 basis points yet this year and another 22 basis points next year. So altogether, you're looking at 68 basis points cumulatively. So almost 3 rate cuts on the menu, at least 2. So at least 1 this year and 1 next year. But the bias for this year to 2 1/3 in 2026. So that'll be interesting to track what the Bank of England says here. And most importantly, since the UK is the only country that's so far signed any kind of a trade deal with the US, how that echoes in their conversation. Are we going to have, for example, a Bank of England that says, well, now that we have a tariff deal, we don't really think about this. We have a benchmark, and we expect that benchmark to hold. Or if the Bank of England comes out and says, well, the global growth story is still so shaky and still so uncertain that we're really not going to make a call here, and we're not going to say that we know what's going on. We're going to use an abundance of caution with some of these one-off inflationary jumps and make sure they don't get out of hand and settle in an orderly fashion. So we're holding rates, but that's not because we are necessarily convinced that our easing cycle is over. Not, for example, like what we heard from the ECB, where the signaling was that although the easing cycle continues, it is almost at its end. And so this should be an interesting story to get the perspective on what the knock-on effects from the tariffs are, not just for the global economy, but also for a country that ostensibly has already addressed the issue, and how its central bank is going to think about next steps. Ostensibly, the upshot here is if inflation in the UK is indeed temporary and the Bank of England is no more hawkish, then you'd be entering a situation where perhaps the Bank of England's tone might make the British pound somewhat vulnerable. But we have seen, as we just said at the start of the show, a reluctance for the US dollar to make progress against its major counterparts. And this would be another test of its mettle. As ever for the Bank of England, there's a 9-person committee, 1 person, 1 vote. So to figure out where the central bank is leaning, looking at the makeup of the voting is very instructive. Last time they voted 7-2 to cut. This time they're expected again to vote 7-2, but to hold. And if the consensus to hold becomes any firmer than that, or less firm, if it's more like 6-3 or 8-1 or even 9-0, well, then you'd get a sense that maybe the Bank of England is more hawkish or less relative to market forecasts. And that is Macro Money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise on with Victor Jones for the Price of Truth on Tuesdays, on with Chris for Futures Power Hour Mondays and Fridays, writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when like you're in a pit back in the day that had like one or two market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm gonna buy your book, what did you mean?
If you're gonna buy the book, that means you're gonna buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, of course, Katie McGarrigle, the wizard, the Jedi, the assassin.
Yeah.
How you doing, Katie?
Well, I'm a little disappointed. I tried to hype up the chat and they left me on red. Come on, guys.
WTF, chat.
What's that about?
Shout out to the chat. If you were not streaming this on YouTube, I'll get your ass over to YouTube and type some crazy shit into the chat. That's what it's all about. We do have Edward, Grumpy Mike, Donaski. What's up? Yeah, there you go. Thank you, Edward. We're fresh off of the show in DC. A lot going on down there.
Yeah, for real.
Tasty Live was there last Thursday.
Yeah, it was a great time. I had never been there. We had some great food. I got to spend a lot of time with you. We talked quite a bit about what is happening both in what I would call the regular crypto world versus some more fun endeavors that are kind of popping off in the crypto and DeFi universe.
Yeah, like collecting rocks.
Like collecting rocks, yeah.
The rewards for the rock pool are no longer, unfortunately.
No, are you kidding me?
So rock
I missed
mining.
the boat?
Yeah, maybe for now. Maybe it'll come back.
What in tarnation?
But that said, yeah, we were talking Bitcoin in a portfolio. You guys being yourself, Mike, Nick, all talking options trading, of course. And then I wrapped up the show with a little BTC in your portfolio.
Yeah, I would. And I'm so excited that you're actually kind of bringing this to the show today because You know, it's still the most common thing we get from everybody that's been a longtime viewer here is like, I just don't know. You haven't made it compelling enough for me to do it, essentially. So I'm excited for you to kind of impart your little nuggets of wisdom that you have. You have more
Wait,
than
there's
nuggets.
no Bitcoin in your portfolio, Katie?
Oh, I have Bitcoin in my portfolio.
You're just saying this is what the streets are saying.
This is what the streets are saying.
Okay.
Yeah, you've converted me.
Got it.
I'm a grasshopper, but I'm a convert. So today it's all about converting the rest of the people that are watching into putting this into their portfolio. And I think you've got some very powerful justifications for doing so.
Yeah. I will not be able to, unfortunately. Fortunately, I'm having a child. My wife and I are having a kid towards the end of the summer, early fall. Due date is in September, beginning of the month. So I'm not going to be able to join all of the other awesome events that are scheduled. Won't be able to go on the road. So we're going to do the performance in some capacity. We're going to give the presentation more realistically here on the show and talk about what we covered on Thursday night, or a chunk of it at least, and that's Bitcoin in the portfolio, looking at this objectively. I think we've told a story previously here on the show about why it's a compelling investment. Today we're going to look at its returns, and we're going to look at the impact it does have, or at least has had historically, on a portfolio, depending on the allocation that you might make.
Love it. It's fired off.
And scramble everything. I do not have any position in SBET for the ETH treasury, but I do own some ETH, so I've got my own treasury.
Okay.
Long ETH either way.
Okay. But yeah, SBAT was down, what, like 75% in like a day or two?
I didn't see
Crazy like that?
Okay.
That's what I saw.
Little discount, maybe.
Yeah, maybe. Or somebody knows something.
Somebody always knows something.
Always.
All right, let's jump into this. Bitcoin in your portfolio, a little portfolio power up, if you will. To get started, Katie, these are the exact slides from the presentation. So if you weren't there, you're here now.
Yeah.
How has Bitcoin performed? How has BTC performed in a portfolio or over time? So objectively speaking, this has gone through a series of booms and busts. It's very volatile, or it has been at times. And so we look at the last 10 years, the average annual return, 84% for this asset. Last 5 years, 65%. 2024, total return, it was up 120%. And in the last year, on a rolling basis, it's probably a little bit higher now, given the price of Bitcoin is 108, and we were probably about 104 when we did the show. But it's up 56% year to date.
Pretty dang compelling so far.
Excuse me, not year to date, 1 year.
1 year.
Yeah, 1 year.
Yeah.
Actually, it's up 64% 1 year right now.
There we go.
But here's the thing, as everybody knows, this performance and outperformance relative to everything else at the time is not without serious bouts of volatility. So you have to be able to stomach some pretty large downside moves if you're going to hold this throughout these cycles. 2014, we had a drawdown about 59%, depending on how you measure it. Might have been a little bit more, give or take. You look at the intraday move or the daily move versus the weekly or monthly return at the time. Could have been a little bit worse, but down about 60%, 2014, 2018. You have the ICO boom and then subsequent bust, 27 to 2018. First time that Bitcoin really popped up on everybody's radar. It then had a drawdown of, it was closer to 80% towards the low, but on a monthly basis, about 73%. In 2022, FTX, we all know what happened next, down about 64%.
Where's time going? I can't believe that was 2022.
Right?
It doesn't make sense.
We're still talking about it. And maybe in some ways still kind of feeling some repercussions, or at least we were in the industry.
Yeah.
In terms of how it was approached by regulators. But yeah, down 64% after that. So we've survived some real serious bouts of volatility here. And I think, you weather the storm. You kind of grow accustomed to this, and you do have the returns on the other side of it that make it worth it at the end of the day.
Right.
But we can't shy away from the fact that when you do have an asset like this in your portfolio, historically, it's had some pretty serious bouts of volatility.
Sure. But you can also consider that we've also seen bouts of volatility just in general in the markets as a whole. I mean, yeah, sure, we had 2020 ended up being like a great year, but like if you just look at that March, April chunk of time, it looked pretty damn bad. And if you consider the fact that, like, if you were only in an equity exposed portfolio at that time, you were experiencing probably similar, if not worse, drawdowns in a lot of ways.
Yeah, absolutely. At least at that point in time,
Totally.
you had some serious fall. And I think when you look at this, it does have, considering it's a commodity, or maybe some people consider it a currency, I look at this much more as a commodity. I think that while it is a cryptocurrency, it's a commodity or has commodity-like characteristics. Right. This is similar to boom bust cycles you might see in energy markets, for example. We have years where oil goes up a lot, and then you have corrections in the oil market that last for months, if not a year or more at a time, where you can draw down 60%.
Yeah.
We've seen that historically as well. So it has, again, commodity-like characteristics in your portfolio. But if we just visualize that performance over really the last 10 years or so, going back to 2015, this chart is skewed by that 2017 performance or significant outperformance, up over 1,000%. And then the crash in 2018, drawdown again in 2022. But generally speaking, it's gone up.
Yeah.
Hopefully it continues to. Doesn't mean that it will, but we're near an all-time high here today. So it's been a pretty decent investment over a longer time frame if you can stomach the volatility, I think is the point.
All right.
Well, does it fit in your portfolio, Katie, is the question we're going to try to answer here today. So I think we'll find that there's an argument for including Bitcoin in a traditional 60-40 portfolio, given the resulting performance gain and the subsequent impact on volatility. And that's what's important here. We know it's volatile. We know there's a lot of risk associated with this.
Mm-hmm.
But are the returns worth it?
Mm-hmm.
And historically, I think we'll find that they are. It's also largely uncorrelated to equities and bonds in that 60-40 portfolio. For anybody that's not familiar, 60% equities, 40% fixed income in terms of that traditional makeup. I don't think anybody really adheres to that, though.
I don't think so. I think we've done also a lot of bit of research on how we kind of approach structuring a portfolio as well, where there's a little bit more, mostly more by like trading vehicle necessarily than by exact products or asset classes you need to utilize. But yeah, I don't know many people that do. I don't know anybody that does, honestly.
No. So this is more of just a benchmark, or, you know, the way that we've structured this to obviously kind of objectively look at the research. But when we did this or put these numbers together, included a portfolio of $100,000 and allocated 60% of it to the SPY, 40% of it to TLT, give you that long bond, U.S. Treasury bond exposure. And we looked at this over the last 5 years. Had to pick a window. Bitcoin hasn't been around that long. I think if you go beyond that, it just skews it way too much, because you have a year, and you have other periods of time where Bitcoin's up 1,000%, 500%. So it's maybe unfair. But looking at the last 5 years, you still have had decent returns, across the board for assets here. But when you look at that traditional portfolio, you've got about a 14% volatility.
Mm-hmm.
That's annualized. And I think that's kind of in line with what we see with an average VIX for the most part.
Sure.
Add a little bit of Bitcoin, 5% allocation, you jump, of course, 17%, 10%, 20%. And the more Bitcoin you have, the more the portfolio clearly reflects Bitcoin volatility. So you put 20% of your portfolio in Bitcoin, and you're going to see the volatility versus a traditional 60-40 makeup just about double.
Okay.
So that's the impact on portfolio volatility. But let's look at the returns here. And so here's the 5-year portfolio growth with those Bitcoin allocations, just using an arbitrary 100,000. You could do this with 1,000, 10,000, whatever. We'll just say $100,000 portfolio. And again, you've done pretty well over time being long assets.
For sure.
I think there's a case for owning stocks, bonds, forestry, I don't know, hard assets, gold, real estate, Bitcoin, you name it. The debasement of fiat currency tends to result in asset price inflation. I would argue that's ongoing. And certainly over the last few years, you've done well versus just holding dollars.
Mm-hmm.
It's not like you lost money.
Right.
Put it that way.
Yeah, for sure.
So we have the traditional portfolio here in green, which just eyeing this up gives you a return of, let's say, about 50%. You add a bunch of Bitcoin and you go up a lot more. And so here is the performance just for comparing these different allocations versus the traditional makeup 5%, 10%, and then that 20% in orange there. But when we look at the drawdowns, certainly, again, you would have some pretty serious losses on paper, at least, if you put a bunch of your money into this asset and you experience some of these drawdowns that we saw.
Yeah, and then you didn't, cover them along the way or close some of that risk off along the way.
Exactly.
This is assuming that you are just holding everything into perpetuity.
And so with the traditional portfolio over the last 5 years, you did have a drawdown of about 26.5%. Now that came from, at one point, we saw a lot of volatility in the market and we saw a ton of volatility in the bond market. That's the other thing to call out is you have this risk-free rate and you have treasury bonds that don't typically experience a lot of volatility.
Mm-hmm.
But during that period where the Federal Reserve hiked interest rates at really the fastest on record, you had pretty serious volatility in the bond market. So that thing that is supposedly the real safe asset that isn't all that volatile had historically extremely high levels of volatility.
Right.
And so when we look at this over the last 5 years, you still experienced a huge drawdown in this traditional portfolio.
Sure.
As a result of that. But you add a little bit of Bitcoin and you get that FTX 2022 collapse and you're down a bit, a bit more certainly here, whether you have 5%, 10%, or 20% allocation, which I think makes sense to everybody. But that said, the traditional portfolio still experienced a ton of vol. So you have this big upside that you get in terms of return. You have a slight increase in volatility when you go to 5%, but there was no way to, if you think, okay, it's all of a sudden it's just adding vol to my portfolio by having Bitcoin, not really, because again, the traditional portfolio, at least if we look at the last 5 years, had a lot of volatility in it. When we look at this as a diversifying agent, which I think is also important, you want to be aware of whether or not your returns are correlated. So we're adding Bitcoin to the portfolio, but is it just like adding more NVIDIA stock, for example?
Right.
And certainly there is a positive correlation between Bitcoin and stocks. That's in turquoise here. At the peak, we'll call it about 0.7, 0.75 back in 2022.
Right.
When
it was like 0.2.
Yeah, it's fallen a little bit. I think if you look at a longer term time horizon, you typically see about a 0.3 to 0.4 correlation. So 30 to 40% of the time, we're going to see these move in the same direction, whether it's up or down. And when we do see bouts of volatility in traditional equities, we've seen that a couple times now over the last year, and most recently in April at the beginning of the month, you do see correlations move towards one. Yep. They certainly strengthen. And so you could see that here as well. That's when we got our last kind of move in terms of that higher or stronger correlation between equities and Bitcoin. But when we look at bonds and Bitcoin, really not that strong of a correlation for the most part. Sometimes a negative correlation, a little bit of a pop at times when you have volatility in the market. But I would argue there's a low correlation.
Yeah, I would say like on the show, and something that Pete taught me when I was first learning how to trade pairs was that like anything between like a negative 0.5 and a positive 0.5 is like something we wouldn't really consider all that correlated. 0.5 and above, or negative 0.5 and below, like closer to those 1 and negative 1 is, like you're saying, a lot closer. So yeah, for sure SPY, but definitely not feeling that same sentiment correlation-wise with comparing Bitcoin to TLT.
So uncorrelated for the most part. Let's look at, again, the allocation and the impact on the portfolio. And I think the takeaway for me here is that if you're looking at investing in this and you have a longer term time horizon, you can stomach some of this volatility. So you have, you don't have a complete kind of risk aversion or aversion to Bitcoin. I would key in on kind of that 5% number arbitrarily. Is it 4%? Is it 7%? Could be around there, but that's where you seem to start to get the benefit in terms of not giving up too much with more risk.
Right.
And getting that increase in your overall performance. So if we look at the 60-40, your compound annual growth rate here over the last 5 years has been about 10%, which I think is kind of what you see. Hey, you want to be long assets, whatever the historical returns are of the S&P, kind of wrapped around 10%.
Yeah.
You had some volatility, as we mentioned, with the bond market, but you're going to return about 9%. You're going to have about 14% volatility, long run average, close to what the VIX is. You have a Sharpe ratio. So this is your risk adjusted return of 0.55. Now we've seen the Sharpe ratio of the S&P kind of bounce anywhere between 0.4 and 0.8, above 1, and it's pretty good, meaning that the risk you're taking on is well worth the return that you're generating as a result.
Sure.
So you got, you're long, like I said, you want to be long assets, you're up 55% in the last 5 years, just about.
Yeah.
But you add a little bit of Bitcoin to your portfolio, Katie, and your cumulative return jumps to 99%. Your Sharpe ratio goes to almost 0.8. Your vol is going to jump a little bit, but by 3 percentage points. And your compounded annual growth rate is not quite doubling, but it's at 15%. And so certainly you're going to see those returns go up because Bitcoin has done very, very well. It doesn't mean that it will continue to. It is at near all-time highs. It had a hell of a year last year. It's off to a pretty decent start year to date. And so the more that you've had in your portfolio historically, the greater those returns have been. But you're going to start to see like some serious volatility in your portfolio, right? I add 20% Bitcoin to that 60-40 makeup, and the vol more than doubles.
Yeah.
Sharpe ratio kind of starts to top out at about 0.8 when you start adding a bit more Bitcoin, because you do get that volatility, and you still could get a lot more volatility in the future. So I think if you're looking at this as just kind of a framework for how do I think about an investment, or how much Bitcoin should I own if I have a more traditional portfolio, I'm diversified across asset classes, I look at this as a commodity exposure and I want some of it.
Yeah.
I would say 1, 2.5, 5%, but like right around 5% is where you do have that noticeable improvement in performance with a little bit of volatility that's added.
Sure. Yeah. Is there a reason why, I mean, I think I know the answer, but like why we're talking about Bitcoin and we're not talking about any other coins? Is it purely just like Bitcoin market cap dominance and like having the most historical data to kind of pull from? Like of the coins, it's the least volatile of this volatile asset class.
Yeah, it's definitely the least volatile of everything that you can invest in crypto. For example, the realized volatility for Bitcoin right now is about 30%. Implied is about 40%.
Sure.
If I look at the implied volatility for ETH right now, it's 75%.
Yeah.
It's been lower, but it's also been a lot higher. At times, it can trade well above 100%. And that's because it can go up a lot more than it can go down. So you do have that asymmetry that's embedded in this. But it's definitely the least volatile. It's the biggest by market cap. It's the first. I think it's what people are most familiar with. It's very, very liquid. But for a lot of people that are just getting started, and you think about this as an investment, as a way to participate in this asset class, I think you start with Bitcoin.
Right.
To me, that makes sense. That's where I would point anybody if they're interested in it. I'm not going to say, oh, go check out X, Y, or Z token because I own some of it and I think maybe there's an opportunity for it to go up. It's more so, look, if you believe that there's real compelling reasons to invest in this space, in crypto, I would start with Bitcoin. Get comfortable with that. Have a small portfolio allocation. Let's see how it does. And then naturally, you kind of branch out and you learn more about some of the other assets.
Okay.
We should run the study, though, looking at a mix, right? It's not just 60-40. And then how does that shift if you add a little bit of Bitcoin? But looking at diversifying across crypto assets as well. And I think when you take it one step further, maybe gets back to kind of your earlier point around diversifying around strategies and different approaches, then it's, okay, I've got crypto as an allocation. Within crypto, what am I doing? Am I long Bitcoin? Am I generating yield in DeFi, trading options? There's a lot of different ways that you can slice it.
Yeah. I have one last question for you. So we kind of positioned this last couple of minutes around more or less a $100,000 portfolio. I love that we use that because it makes it easy to either like multiply or divide based on what your actual account size is. I'm still not in like a $100,000 account. So that being said, particularly for those like newer traders or smaller traders out there that are kind of in that Johnny account, something like $10,000, do you still feel like this 5% allocation still applies, or do the rules get a little bit more or less fluid?
I think it's always going to be fluid, right? There's no perfect kind of allocation here. We put the study together for illustrative purposes. When you have a smaller amount of capital, you're naturally going to have more concentrated positions. You have less capital to kind of spread out. And in some cases, when we talk options trading, right, the contracts are standardized. So you can do one, but it still is kind of big in terms of the overall notional size and allocation in your portfolio, what it makes up. And so I think if you have $10,000, you're getting into Bitcoin, maybe naturally you're going to have a little bit more than that 5%. Now, granted, you're going to see that $10,000 swing around by a lot more.
Sure.
But you probably want it to swing around by a lot more to the upside. You can only lose the 10,000.
Right.
Now you have $100 million, and you're probably not going to look at a 50% allocation to Bitcoin in that sort of institutional portfolio or how you might manage that. So I think, again, naturally, you probably are skewed towards having a more concentrated position when you have a little bit less capital. But I still think, like, if you're looking for a framework, 5% or $500 of that portfolio could be a good place to start. Or maybe, depending on the volatility, less goes a little bit farther.
Yeah. Well, and the thing, I think, though, that no matter what that I love is that, like, and I mean, we say this all the time, but just to make it abundantly clear, like, it's not like you have to put $500 if you're in a $10,000 account today in your portfolio. Like, you can buy $50 here, and $100 here, and $25 over here. Like, if you see a little bit of a pullback, so it's also nice to have like the ability to kind of layer into any type of core position. 5% in crypto being like one of those core positions. So I just wanted to like make sure that that was like obvious, as well as like, you don't have to go out right now and buy Bitcoin at 108. Like, you can kind of pick and choose your moments and times and cadences for that in a dollar amount.
Absolutely. I would dollar cost average into a position. That's what I do personally. It gives you maybe a better average price over time. It was $75,000 2 months ago. It's $110,000 here today. It could easily pull back below $100,000. That's as it's implied by the current spot price and implied volatility. So I think DCA is the way to go.
Good stuff.
Cool. Well, Katie, thank you as always for coming on and listening to me pontificate around portfolio allocation.
It's a good word.
And Bitcoin here. But I will be back on the show on Wednesday. Katie will be back with me next Monday.
I
guess if you have any questions for us, shoot us an email or go over and follow us at Tasty Crypto on X. But that's going to do it for our show. Victor Jones is up next with The Price of Truth. I'll be back on Wednesday. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I made a list of the 7 places in America that I've been to. This is my list. I don't care what anybody else says. There are 7 places that you would drive out of your way, like get off the highway if you're going somewhere to go get a certain food.
Okay. We are ready for your presentation, my lord.
In New York City, you have to go to Katz's. You get to Chicago, you have to go to Riccobenni's. You have to get off the highway in New Haven, go to Worcester Square, go to Pepe's. The original Pepe's. Some people go,
Pepe's Pizza, yes.
You drive straight up 95 until you get to Maine, and you go to Ken's in Scarborough. I was there this weekend. I put it easily among the greatest meals I've ever had. Then my 2 final stops are actually both in Texas. Pecan Lodge in Dallas, and then you go to Austin, and I'm a Terry Black's beef rib person. It's the best I've ever tried. We're gonna be in Pilsen. I'm gonna buy you a Rico Benny's after the show. I don't want you to buy me a Rico.
Well, that's nice of you.
It's very nice of him. but I don't need him to buy me a Rico Benny's. I was going there when you were pooping yellow. Oh my God. I introduced you to it. The first time you saw it, you were buying it from the truck outside the CBOE.
God.
Sorry, SIBO.
You gotta stop.
No, you know that's true. Sadlov, you know that's true.
God. There's not a chance.
My guys, that's the reason why you did what you did in the restaurants that you made, was because I showed it to you. You know that's true.
Do you know that I brought the chicken parmesan sandwich to Chicago?
What side of the aisle is Tom on? Is Tom stay in school kids, or is he more towards Peter Thiel? I'll pay you $100,000 to go start your own business, scrape your own knees.
I would chop my own off before I would say that I'm on the same side of Peter Thiel of anything in the whole world. I hate that more than anybody.
Absolutely on cloud nine. I was walking around the city yesterday, right? 3 different locations.
What
3
city?
different people all commented about how luscious and beautiful my hair was.
You're walking around St. Petersburg and a random person would ask you about your luscious hair.
They really just wanted to admire it. I was at church, I was at the gym, and I was at Publix. And so at all 3 different locations, had 3 individuals, 2 older gentlemen and 1 young woman said, "Man, you've got some beautiful hair." Now I understand the older men, they had, their great hair days were behind them. So I understand that. But I'll tell you what, man, I was feeling pretty good. That 22-year-old woman was like, "You've got some beautiful hair." And I was like, "Well, thank you very much."
Did she want to touch it?
No, not necessarily. I turned into the aisle, and she's standing right there, and she saw me. She did like a triple take.
Well, she probably thought you were a Manny since you were doing the grocery shopping, and she was probably looking for a Manny herself.
She
that could do her
probably
grocery
needed
shopping.
somebody to reach the top shelf to get something
And
to.
she picked Jim. There was nobody else in the store.
Exactly.
I mean, I'm 5'10", so it makes sense.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade, make your move.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your...
Oh, yeah. Tasty Nation, good morning.
Oh, yeah, it is Monday, a little bit after 5 p.m. Central Time. The best time, you know what that means. It's time for Tasty Live's evening show, a little podcast, give it, a little podcast called The Price of Truth, the show we like to explore the incentives that govern our world. And I swear, every weekend they give us a little bit more and more incentives to chew on. They're making us earn our money. More on that in just a bit. Shout out to everybody watching on tastylive.com. Shout out to all of you watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, this little guy, did I get it? That little chat box on the center of your screen. There's only one place that you can do it. That's on the evil YouTube. Google YouTube. So head on over to Tasty Live's YouTube channel, find it, subscribe to the channel, and all of your thoughts, both appropriate and otherwise, will be live streamed up on the screen here. And they're unmoderated, unfiltered. Just kidding. They're moderated. Don't give the guys a hard time. Let's keep it respectful in the chat. That said, shout out to everybody already in the chat that's typing out random ass characters. Just move those phalanges, move your metacarpals, smash the keyboard into your face, and spoof the Google algorithm into putting us in front of as many people as possible. Shout out. I sound a little better. I just realized no more sniffles. I promised you on Thursday I wouldn't have them, and I made good on that promise. Shout out to everybody already in the chat. Katan, Emmett, Donna, Mark, how are you? Emmett, did I say your name twice already? I did. Go buy a lottery ticket. Grumpy Mike, Brian, Cato, Jay, Soul Train, Lone, JDD. Oh, the whole gang is here. John, Betty J, and so many more. Shout out to all of you. I would sit here and just talk to you and about you for the next 90 minutes, but I'm contractually obligated to say something of meaning or that could be interpreted as something of substance. Let's get going. Apparently, everyone's gonna figure this out one day or another. That like those first order read-throughs, World War III equals bad. I guess that model doesn't necessarily work on a day-over-day basis. And I don't mean to make light of what's happening, but the S&P 500 up nearly 1% today in cash markets, that is. The NASDAQ up 1 2/5%, acting like bond proxies again. The Dow Jones up 0.75%, and the Russell did okay. The second best performing index on the day from a cash point of view, up 1.12%. The VIX, very interestingly enough, sold because the market's perspective, I don't know if I could say nothing ever happens. I would say everything always happens. And if that's going to be the case, the only thing that doesn't happen is the end. 1911 down $1.71 in the VIX. They smashed volatility today, down 8%. I hate doing percentages of percent, but we just did it. So VIX cash at 1911. We came into the week Sunday, something like, getting into that sweet spot. I think the people around here like that 20 to 22 range. You're getting historically elevated volatility, but perhaps nothing crazy in the markets. The only problem is that once you get into that range, the likelihood of outlier moves from those levels start to become elevated. Whereas the opposite is true for volatility, when it's low, it has a tendency to auto-correlate. In other words, low volatility begets low volatility. And then, a 22 vol range begets the potential for higher outlier moves or fat left tail moves. So we're getting a little sort of out of the data zone. /VX at 20, spot 21. Came in today, but if you remember, the VIX term structure basically been flat at 22 out for the rest of the year. And though we've been in contango, what really just happens is that front month drops by a couple of points. So it looks sort of like this sharp sort of curve from 18 to 20, and then it just flat lines out for the rest of the year. No real change in the shape of the yield curve. And bonds here, again, continues to be one of the world's most talked about, but most boring trade on the board. Yields move a little bit higher today. 112 and 22, 30 seconds. Let's see here. Nice background, Victor. I don't know. I'm in a new spot today. I'm in a new place. That's why maybe the lighting looks a little bit different this time around. I'm in Thailand. Thailand of all places. More on that in just a bit. But the long end at 112.21 moves just a little bit higher, but we're in a super tight range. Second session in a row. So Friday, we had a pretty big range to the downside on, what was that? The data we got last Friday down full range of 2 points. And then this session, a full range of 1 point, was still moving to the low side, backing off of 114. What a frustrating trade that has been. I guess it's frustrating only because the older I get, I think the more impatient. When I first started, I was super impatient. Then the longer I did this, the more patient I became in waiting for an idea to develop, the longer time horizon I was willing to wait. But then on the other side of like big vol spikes, when things are moving around, you get a VIX 30, 40, 50, 60 market. VIX 20 feels so boring, and you put on a trade and you get used to enough vol that makes that thing a winner, or have to either cut it or manage it inside a day or just a few days. Things that you put on and have to wait weeks to months for it to do anything. We were spoiled. Vol spoiled us for a while, and it's no longer doing so, especially the bond market. So we wait. I personally have slightly long deltas here. I would love to see these things grind up to 117. I think the data has to get real weak to do it. And even if it does, I'm not exactly sure that the market's going to really care, because I think the market, for the most part, expects the next month or two of the data to be so sloppy and might read through any weak data. Bangkok. No, not Bangkok. Koh Samui. Edward says, Cali is nice as of now, Victor. Tom Banjo says, I used to double down when wrong. Yeah, I think there's a difference between doubling down and diversifying entry. So the difference is, in diversifying entry, you're sort of planning to be wrong. So you're saying, okay, let's say this is my max trade size X, and I'm going to fire 5 bullets at this thing. So I'll divide my, let's say you do this equally. I've seen people that don't do this equally, but let's say you divide the capital by 5. So X over 5 is the trade size for each one of 5 trades. So you start layering in at different times and prices. I think diversifying entry price, the difference between that and doubling down is like you didn't really have a plan to begin with, and then it went against you. And so you throw double the capital at it or some percentage. Diversifying entry is you sort of had a plan going in as to how you would lay capital out over time and across prices. So I think doubling down isn't wrong. It just starts with a bit more thought up front about what you would do over various circumstances. But what do I know? I'm no guru. So we've had a backing off of that move. We had 3 out of 4 sessions where the 2-year rose. We've now had 2 straight sessions where the 2-year has backed off that level. So I don't know. So my opinion, maybe is if one, let's say theoretically, sort of missed this move with ZT, you might get another opportunity. But the problem is the narrative is completely shifted. After what has just occurred in the Middle East between Israel and Iran, and the crude oil spike, which was sold obviously around $6. I'll talk about that here in just a second. The action here, I should say it like this. The concern is that this creates sustainably higher energy prices, and if it creates sustainably higher energy prices, that could work its way into inflation expectations. And I think something is happening right now that's really interesting, which is the market itself is selling crude, right? It sold that rip to 75 in crude, and you had this really nice reversal here today, making crude oil making its way back below 70. Question is, what happens now? Do we have some sort of new range, 70, 75? Can we work our way back up to 80? Because if so, you will see a more meaningfully higher crude oil price start to work its way into inflation expectations. And I personally think that's what we're seeing in ZT in the front end of the curve, is that inflation expectations are rising slightly, as I think they should. So I think tomorrow's a pivotal day for crude oil. If it looks like it wants to establish a new range, I think this move in ZT is probably warranted. And you have to sort of change inflation expectations going into that meeting on Wednesday. But I think if it fails and you see another meaningfully a soft day tomorrow in crude oil, and I think probably this move in ZT is less warranted and would be an interesting short-term fade. So I'll be watching the crude oil tomorrow and the relationship I think that has onto how to think about the Fed moving forward. Not even what they will do, but just how the market perceives what they can do. Higher crude oil goes, the more the market is going to say the Fed is pinned and they can't really cut interest rates. That's what they're going to say. Powell's discussion, his Q&A and everything else on Wednesday could open up the range regardless. So we will see. Bitcoin back to 108.2. Some pretty decent headlines over the weekend. Firms buying up either Bitcoin or ETH, favorable legislation, favorable sort of institutional news flow. So it's not surprising to me. And I don't think this is necessarily a market you want to bet against Bitcoin yet. I don't think we're there yet. I don't think until we get to a number that just seems stupid, seems unreasonable. And if we get there with speed, I don't think consolidation, find a couple thousand points higher, consolidation, find a couple thousand points higher. I don't think that's a market that tends to indicate sort of a top in digital assets. I don't think we're there yet. Mark Aguilar saying EVTOL getting some traction. Flying taxis and Ubers is cool to go with drone package delivery. That's right, Mark. I think we talked about this before. But I think, if I'm not mistaken, the president either did or was going to, but I think he already did sign a executive order. And the executive order is effective something around flying cars, making sure we open up the possibility and the regulations to make those a reality. I own Joby Aviation, which is up 4.5% today. So this is kind of my EVTOL play. JOBY. There are a handful of others out there. I can't think of them offhand, but this is the one I'm betting. It's coming. The Robotech, at least if it's not coming, it's what people are currently betting on. Investors might be ahead of that world, but they're betting the CRISPR therapeutics, biotechnology, energy credits, flying drone, humanoid robot delivery services, AI, like that. The world is betting those outcomes right now. They might be ahead of themselves, but that's where the bet is. I don't know that world comes in like 9 to 18 months, which is what the betting window is of the markets. But that's what they're betting. Yeah, let me get back here. So we got lucky, I think, a little bit at trying to take a short little fade of the crude oil up move. I didn't get burned, stayed really small, and that move back today definitely helped. But I don't think that's a world I want to be in anymore. I don't think the stones it takes to bet against those geopolitical swings. It takes a pair to sit in there and see crude oil moving up to 75, footage of bombs being dropped across the Middle East, and go, I'm going to fade this. What's worse for markets? TDS run amok or murderous MAGA vendetta? Probably both. I don't think either deserve edge there. I will say that the event, I did talk about my thoughts I thought it's going to be weird to try to say this. On June 14th, given all the things that were happening that day, and rest in peace, the two people, I think, who lost their lives that morning. I believe it was that morning. So it's weird to say this, but I think all things considered, I thought there was going to be way more escalation on June 14th than we actually saw. And I'm really happy about that. And I'm not minimizing at all the two lives that were lost. What a wild world, man. But they didn't just fade crude oil. They happened to fade natty gas just a little bit. Some of the defense stocks, Palantir, an all-time high, up nearly 3%. Which I suppose makes sense, right? If you were looking for this thing to get tired, probably escalating tensions in the Middle East is probably not exactly going to be helpful for a rollover of the world's foremost sort of defense, quasi-defense company, Defense AI. Do they not just live in a category all their own? Am I mistaken? Is there a close competitor to what Palantir does right now? Can you think of? I mean, I'm sure there isn't another publicly traded one, but I wonder. I should take the time to figure this out. Who is their actual, even private competitor? Two lives in WW2 would make it not news. Fair point. Well, here's a different point, Tom. One Life, World War One, would make news, right? The Archduke Franz Ferdinand would make news, technically in hindsight. Before I go there, let's go here. All right, so gold at 3,400. Not really doing much. We're pretty well sideways in gold. Tight little range here. Like it's so hard because you kind of want to short gold. Kind of want to short it, given its sloppy price action and maybe getting rejected here at these levels 3 times in a row. You kind of want to sell it. It's just not an environment where you sell gold yet, right? You need a reason to believe in the U.S. and U.S. treasuries and global money flow being settled down here. And I don't think you have that reason. And for that reason, you can't sell crude. Gold. The day will come. It is very possible the day comes and you get a headline or a tweet or some agreement, a meaningful agreement that the market will take as a sigh of relief. It is very possible. And then with that sigh of relief towards U.S. financial assets, you get a rally in bonds. Maybe that creates some softness in stuff like Bitcoin and gold and silver. But you could very well see the opposite. Anything that, let's say it like this, anything that favors the U.S. is going to favor bond positioning and dollar positioning. Anything that favors China and this sort of global competition probably aids the demand for gold, lessens the demand for U.S. Treasury. I think that's sort of my simple model for now. I don't know if it's wrong, but I think that's been my simple model. Albert saying there is no competition to Palantir. Yeah. So that's kind of my point, that you have this pure play in a defense contractor that defense AI, sort of municipal control, predictive crime, that type of market. And if I'm not mistaken, they get like 40%. Is it 40% government contractor money? And they're the only place you can get exposure on the market, because even when Facebook was public, it wasn't necessarily the only competitor in the space, but it was the only one that you could get exposure to at one point. It was like between that and LinkedIn. And of course you pick Facebook. So it's not like if it was the only publicly traded instrument in this space, it would still get a ton of capital flow just because of that. Now throw in you don't have a meaningful material competitor at all. Just insane. And it's at a time of sort of this populist uprising, fear of a better word, where centralized control would be worried about how to maintain control and order. Therefore, your services have a premium valuation at an all-time high today, 144.86. Crazy, man. There's two things. There's two things I don't want to stand in front of right now. There might be more, but for sure is Bitcoin and for sure Palantir. There's only like I remember when I was young, there was nothing about the economy in any of the stuff that I studied. You know, I'm a public school kid. So like fourth, fifth, and sixth grade, early part of middle school, the one line I remember from public school about the economy is just war is good for the economy. You know, that's what they would say in your history books. That's all they would say about war. Ultimately, is somehow weirdly make it a positive economic incentive alone. Not that it's a humanitarian catastrophe. Say it's good for the economy. And that's the only thing I was taught about the economy till much later. So that line just like sticks in my head. Later, I'd find out why. Later, I'd find out why that is. But yeah, I would not bet against Bitcoin right now. And Palantir, I think, could have that rip lower a lot more violently and a lot quicker than Bitcoin, I think. They're both sort of high beta duration assets. But if I was going to bet against anything, I would bet using downside. Ooh, the vol's going to be super expensive too. But I'd probably bet Palantir because its options are a little bit more liquid. 10-cent wide at the money, 30 days out. Not great, but not horrible. Constructing a trade where you don't have to pay through the nose and vol, though, that's the tough part. Crude oil creeping up a little bit. And silver's kind of just fell into this new range, which I don't know. I don't know how to think about this trade now, because it seems like the beta of the silver move is probably over. And so now we're at just a structurally new range for silver, which might mean you could have a little bit more upside in this thing. But without a catalyst, we're likely range bound sideways now. So I think it's like a momentum trade, as trying to catch this quick swing. I don't know. Feels like we've taken a decent percentage of this move out of the trade. And I think I'm going to take off whatever futures, small futures contracts I still have on this. I think I take it off and then let some upside calls play out, see what happens. But it does seem like the beta of the silver move. I think we're done. What's this, 5 days in consolidation? Silver's usually just a one-way train, man. It's a one-way train till it got where it was going. So I think it's time to adjust on that one. Sector performance for a bit. Communications was the leader, helped by, I believe Meta is a communications company, not in tech. So this Meta being up 3%, nearly 3%, helps XLC. XLK, so technology, the second outperforming sector for the day, 1.6%. Financials up 1%. That's interesting. I don't think we've had financials as a top performer in a while. It's a pretty healthy sign, honestly. Consumer discretionary also up 1.1%. Materials, not a bad day, followed by all the defensives. Energy took a little bit of a breather, down 0.3%. So after, what was that, like a week straight of outperformance in energy, I don't think it should shock anybody that on a day where crude oil fades $6, that XLE is down 20 or 30 cents. I still think if they fade crude hard enough here, down 2.4%. Oxy down 2.4. Yeah, a lot of these took a nice little breather today. Let's see, Devon Energy, 1.4%. Oil services, not as much, down 1%. But look at the charts on all these things. For the run that they've had, and they have had a run, some of them around 10%, even Schlumberger 10% here. On a relative basis, these things are still cheap relative to themselves. If we're headed into a slowdown, then probably some of that's warranted. But I think when we came in post-November, there was sort of a Trump trade that was priced into the market. And that Trump trade was really pro-growth. It was tax cuts, and it was pro-energy. A lot of that trade, that momentum, has reversed. And the only thing that didn't reverse out or normalize, I think, was the pro-energy part of this trade. And that could be because the market just sees a slowdown, or it could just be because there's value to be had still in the energy stocks. And I guess if I was going to bet anything here, I'd bet there to start. I think they could get a little cheaper, especially if the market's going to keep fading crude. And you got a 2.5% discount off yesterday on some of these stocks. So I still kind of like that space. It did. Mark says, I buy every dip we dip on Palantir. Clever. At some point, Mark, how do you protect those gains, man? Just let it ride? Just let it rip, huh? You see, if you do what I do and just collar it up, then you have to make a decision at some point whether you get called away from the stock. And I got called away from the lion's share of my position. Kind of kicking myself now, but it is what it is. I caught a lot of that move. I think from $8 to $100. Somewhere like that. Somewhere in the either the high single digits or low single digits is where I picked it up. And then I want to say this gap here, when we gapped above here, is sort of where I got called away. I can't remember. Somewhere between somewhere around 100. But that next $40 would have been terrific compounding. Yes, we'll do it. See if we can live to trade another day. All right. You guys are saying before I take my next topic here. By the way, it was always, I've said this before, but in case you haven't heard me, Palantir was always an emotional hedge. I said, if this trade works, I'm probably not going to like the life. I'm not going to like the civil liberties I have at that time. It's sort of funny. As Palantir goes higher and higher and higher, the more I see Palantir in the news in a way that is concerning. People are concerned about data sharing, about privacy, about this database that Palantir is creating, what they're using it for. So we're slowly getting ourselves there. But this isn't real. Interesting. Not much for Microsoft. Microsoft up 90 basis points. They won a $200 million defense contract. Maybe Palantir will have competition. $200 million defense contract. I've seen a lot of situations where Microsoft wins government contracts. I can't remember seeing them winning a defense contract though. But I guess they have $1 trillion now to spend over the $800 and some billion budget that they had before. But somebody's got to get that extra $150 billion. I think that's Microsoft. Do the math. They just got all the bump in the budget. I also saw that Google was laying off people. I don't think they were laying them off. I think they were like paying them off to people in their search engine, people in their search division to basically take the severance package. This one finally moved. I thought for a while Apple was cheap too. To me, Apple's just like, they could do something, but they're not. They have a giant opportunity set, but it feels like they're not doing anything with it. Same with Google. But I feel like Google in this world has more opportunity for disruption. It seems like over the last couple of weeks to month, the market is giving them more credit for moving forward with their AI products and monetizing their gigantic network of users. They're getting more credit for it. But at a while, I thought they were like the cheapest potential AI play, which is an irony because they're the market dominating position. But I suppose it shouldn't be that much of an irony. They're the incumbent and they're being disrupted. So the incumbent is not really getting credit, and all of their lost market share is getting spread between these new entries, both private and public. But to me, they seem like at 150, this seemed like a steal. And I think we traded it. This in Microsoft, but I didn't like buy any stock. That seems like a mistake at this point. One of these days, can we get a rip? Nice little 2.5% mover here in Freeport, which outperformed all of materials, which was up around 80 or 90 basis points. One day, man, I would love for just a face ripper on this one. Give me a face ripper rally on Freeport McMoran. Wonder if it's time to ditch the silver miners. Have you thought more about the home builders, or are we just kind of not into it yet? Brian, I said this on last Thursday. I bought a little bit of 3 builders on that list. Not much. So it's not like, I don't think there's like this binary point in time where this trade just turns around, unless like the Fed starts to indicate in any way, shape, or form that they're going to implement something like yield curve control, or they're moving their way towards it. But I think they have so many steps between now and then. So, and until that happens, I don't think bonds move materially to the upside. You know, we had a war catalyst just a couple of days ago, and you would think there's a possibility that changes the demand for risk-off treasuries. It didn't. And so, yeah, I think I'm prepared. I think I've done more research. I think I will at some point do a deeper dive here on this show. But I think the catalyst to a lot of these home builders is still going to be borrowing costs or a change in strategy. You know, that it's possible that some of these higher average selling price models, I wonder, they move either into the Toll Brothers range, which is the $1 million homes plus, or they move down towards the lower end, like the legacy home average selling price range, down in the $200,000 range, which could change their demand profile. But I think without changing demand, which is what you buy, likely buying, or which is what you build, likely creating a smaller home. If you're not doing that, you're not increasing demand. Then the only thing that can change your demand picture is the borrowing cost of the consumer or their wage. Problem is, if their wages go higher on a real basis, inflation expectations should theoretically go with them, and theoretically higher borrowing costs. So really, the only thing in the very short term I see changing the demand profile, it's just a demand for the U.S. Treasury. Demand for long end U.S. debt. I don't see how anything else changes that. And so, yeah, I do think we're probably getting some of these things, some of these multiples are looking relatively attractive. I think we'll be here I think we could be here for a while. That's what I came away over the last week or so thinking. We just need a catalyst for bonds. If bonds are at 114 for the next 3 weeks, the home builders will probably be here too. I don't know that there's. I'm going to say that. I definitely don't want to say that. Brian said, I did buy a little Lennar, but I'm not so sure about it. And I did buy some of FCX as well. I wouldn't be so sure about it either, Brian. I don't think it's a short term. For me, it's not a short term buy. It's like I want to own these over time. And the way that I've sort of mentally thinking about this is long end rates could go to 6%. If they go to 6%, I will be buying home builders at a cheaper price. So I guess we started off the show saying the difference between doubling down and the difference between diversifying entry prices is if I start with the premise that I could see a 6% yield, then that would mean materially lower home builders, likely. And if so, what would I want my position size to be today, assuming what I'm saying is true? And so I have a very small position size. So if Lennar dumps, it's not really going to hurt because I'm just starting to build a position. So I can put myself psychologically in this place where a stock that just dumped is actually a psychologically good thing. It's like, oh, great, I get to buy the next tranche at a cheaper price. Speaking of buying tranches at cheaper prices, Boeing up 70 basis points here today. Oh, it's a sick world. It's a sick world, you know, when the first thing you see, whenever you see a plane crash headline, and again, I do not mean to minimize anything that happened with that flight, India, which all their families, condolences, of course. It's a sick existence when you see those types of things, and you immediately wonder what type of plane is it? And then you know, because of that, what the potential impact will be to a financial asset like Boeing. But the thing is, What everybody always what most people forget, same thing as Palantir. Boeing is effectively a complete monopoly. Could you buy an Airbus from Europe? Sure, but the current president is strong-arming half the world to buy more U.S. products. So do you think under that administration that a plane crash, and again, I do not mean to minimize it, do you think that a plane crash is going to somehow open up the opportunity for a domestic airliner to buy more, or excuse me, to buy less Boeing planes because of safety concerns? Not a chance. Not a chance. So the worry and the risk is well founded, you know, because people have to discount these things. They have to discount less future revenue, maybe tougher negotiating positions. But at the end of the day, this is a monopoly, man. Bro, they disappeared a whistleblower and everybody knew it. And the whole world just moved on. You remember that? Do you remember that? That's the type of power that this company has, and the ruthless willing to do whatever it takes to maintain that power and money. They disappeared a whistleblower, and you knew it, and everyone else knew it, and they hit all-time highs 2 weeks ago. Yeah, two of them exactly. I think one is a whistleblower, one was a witness, right? But what's the difference? Brian saying, I'm going long bonds here. I am long bonds. I like the risk reward. I just don't know. If I'm going to get paid or how I'm going to get paid. I don't know what that short-term catalyst is. I could see a slow grind to 117. I'm not all the way convinced that even if we do see slowing data, the market is going to care. And I wonder how much people still have to chase. You know, how many people, I've said this on Twitter, I said this on First Call, but how many people panic puked in April? Prime assets, and then watch those prime assets do this on a chart. How many people watch those prime assets do this? Microsoft is up $120. $120. It's up 30%. So if these giant positions in these giant benchmarks have rallied 30% up from the lows and you didn't, you're chasing right now. You're buying any little dip. Try to get back. That's why I'm sort of afraid. I don't say afraid, but that's why I'm very careful. There's no part of me that's itching to get short deltas here on stocks just yet. So I think there's a lot of money that's still chasing because they puked in April and stocks got away from them so fast. And I also think that's probably true for some retail. It's probably not true for all retail because retail was mostly buying that dip. And people were writing these horrible articles about how dumb all of that money flow was. Was it? You know, there's never the article that comes out after the move is over that says, hey, we're sorry. We're sorry for speaking with such confidence that these retail traders are making the dumb move. And the retail traders are the ones who actually went out, professional traders who had to puke and couldn't take that level of variance in a portfolio, or were overlevered or overexposed. Either of the three got punished. That article never seems to come out. It's unfortunate. Nasdaq fading a bit here, down 40 basis points. The weakness of the bond market is making the S&P the only viable. Oh, I see. The weakness of the bond market is making. Now it's kind of counterintuitive, because the weaker the bond market becomes, Jackson, the higher its yield. So that's kind of the whole point. The whole point here is the market's finding an appropriate yield, so an appropriate return for bonds, in order to take away the desire for risk from the stock market. And it just seems like we haven't found the yield that is appropriate. We haven't found that yield yet. Overlevered, Tom says, overlevered did get punished. Dollar-weighted returns probably look terrible. I agree. I'm starting to get the itch again. I feel like you should go see a doctor, Victor. No, I'm starting to get the itch again. Like, at what point? I think I would want more of a parabolic move here, but some part of me wants to fade this market again. But how ugly? How ugly for the U.S. dollar? So funny. Here's your economic policy plan. Keep the U.S. dollar as the U.S. reserve currency, but weaken its trust. So you'll end up weakening the dollar, but you kind of want to weaken the dollar, but you want to keep it as the U.S. reserve, or as the global reserve currency. Print trillions of dollars. So trillions of dollars and run a multi-trillion-dollar deficit, increase defense spending, not lower it, cut social services, increase the debt ceiling by $4 trillion, and just run the thing hot. Quit pussyfooting around, inflating your way out of the debt, and just do it. Get it over with. That seems to be U.S. economic policy right now. Crude oil back to 71.33. So some of that fade is coming out. If that keeps happening and we establish a new range, I'm telling you. All right, I'll do a few more here. I just won't trade until we have more vol. You know, the funny thing is, though, most of the time, if I gave you 20 vol, you'd say thank you. Boeing dropped to 140. Yes, it did, Catan. And every day here and on Twitter, I kept saying, I was sort of being very facetious back then, but every new headline that came out of some new plane problem, was like, I was buying every single one of them. Paid. You know, starting to make me nervous. All of you are long bonds too. We're all long bonds. Everybody at Tasty is long bonds. So either we're the only smart people and we're going to get paid, or God help us. Ken Griffin says playing defense almost always guarantees losses, even in turbulent times. I think that's true. No, I think that's especially true in turbulent times. I guess it depends on your age. But I guess I'm not yet 40. I'll be 40 pretty soon. And if there's anything I've learned is you don't get defensive in turbulent times. You get defensive in euphoric times. You get sort of aggressive at looking for opportunities in turbulent times. So I think the framing altogether is wrong, but I agree with the general premise that getting defensive almost always guarantees losses. I also think trading too large, and you almost don't know you don't know when a position is too big until it's already had some outlier move, and you've realized it's too big. So you don't realize until after. Any of these currencies. All right, folks. I wish there was some grand plan here on here's what we do with the defense contractors. Here's how, you do the if this, then, or else for all the geopolitical gamesmanship and where capital could move. I guess I don't think about it that in those terms. I think energy stocks are cheap. They got more expensive over the last week as crude oil led. If crude oil fades, you're going to get an opportunity to re-enter into those same energy names at a little bit more attractive prices, and I'll use that opportunity. I think you're starting to see a shift in leadership when consumer consumption or consumer discretionary companies and financials are starting to lead. This is only day one, but if it starts to become a trend, you can all but ignore the recession stuff, slowing growth stuff. You can ignore it. If the market starts to rotate into and think that they're starting to get a discount on consumer discretionary names like Nike, you can just forget about that talk. All right. Cough coming back, which means I'm going to end the stream here, folks. Get a little water instead of hacking into your ear for another 20 minutes or so. I hope you can appreciate that. If you want to follow me on Twitter, I've been tweeting up a storm for the last couple of weeks. You can do so at Victor Jones. The O in Jones is 0 because I like to be difficult. I'll be streaming out of here in Koh Samui. I think I'm pronouncing that right. Thailand for the next couple of days. Here with the fam to do a little summer vacation. Junior's out of school for this month. So we did a little trip before he's got to go back. And but if you want to follow me at Victor Jones, the Owen Jones is 0 because I like to be difficult. You can follow me on Twitter. I'll see you there. Otherwise, I'll see you back here tomorrow, same time, same place, same great network, only on Tasty Live. Till then, peace.